Today, some sobriety, but I must say at least we're still looking like we're opening up in the green.
Yeah, it's not, considering that the world markets are not giving any cues, this is a start that we could welcome with. Let's see what the GDP data throws today.
Yeah.
I think we've got some great conversations lined up. I want to know about what the potential for nuclear energy is and who benefits from the latest measures.
Yeah, that on the show, and there's so much more we're going to talk about this morning on India Market Open. Take a look at what we've lined up for you. All right, let's start with the global setup. Keep in mind that the US markets were closed for the Thanksgiving holidays, so no great cues coming in from there. US futures, though, have shown a positive trend. Obviously, you will have weak volumes coming in, but nevertheless, all indices up in the green. Bond yields have stayed soft as the anticipation of a Fed governor announcement by Christmas grows. Scott Bessent, the Treasury Secretary, has said you might have a new name by Christmas. It's largely anticipated to be someone who will favor lower interest rates and will be Donald Trump's pick, of course. 10-year at 4%. Brent prices have settled in at $63 range as all eyes on Ukraine-Russia talks. Meanwhile, let's pull up Asian markets. Tokyo inflation has come in a little higher than expected, so you could see some impact on the Nikkei. But I think the big story for India is the GDP data, which will be out today. Will it be a blockbuster Friday for us is the question after the smashing GDP data we got last quarter at 7.8%. I think that'll be one factor. Let's pull up the implied open, up 23 points. Of course, this GDP data will come out post-market, so you will see any impact on Monday if this is above what expectations are at this point. But all in all, I think the setup doesn't look half bad, and the fact is that we prevailed despite opening at all-time highs, very close to opening at all-time highs. We didn't see massive profit booking coming in.
Yeah, there was a base that formed. In fact, that's exactly what panned out yesterday. It hit all-time high, the Nifty 50 in choppy trade. The benchmark traded in a 170-point range. And from that high point, you dropped till about 140 or so. And you fell about 0.4% from the high, but you gained about 0.3% from the low. And so you ended flat on that choppy day. FIIs were once again net sellers, worth about 1,225 crore rupees. And the Nifty Bank actually displayed resilience when a lot of other sectors actually lost ground towards the end of the session. It gained about 0.33%. It came within 144 points of that 60,000 mark. It is pretty much at this juncture as well trading at all-time highs. Oil and gas, realty, energy as well as PSU banks led the declines, and the market breadth actually turned on its head. In fact, if we can get the advance decline ratio graph through the session, you will notice that we started off fairly wide between the advances and declines, favoring the advances, and that flipped towards the end of the session. Very close, the gap between the advances and declines. You had the small caps that underperformed with the index down about 0.4%, and that is reflective in the market breadth as well. Ashok Leyland, GMDC and Patel Engineering were among the key winners in trade yesterday. Patel Engineering, remember, gained on account of a significant order win that it got with regard to a coal mine in Chhattisgarh. On the other side of the fence, you had Whirlpool, that was the biggest loser, dropped about 11.4% after the promoter stake sale. But all told, really the highlight was that all-time high number, and we're not too far away even as we speak right now.
Yeah, we nudged the number. Now we may consolidate a little bit, go here and there, but at least we've done that. So, which is not a bad thing. But the good part about, and you described yesterday's trade very well. I was seeing some bit of India market close as well, and the buying that happened in the latter half of trades. The higher high, higher low structure was maintained even in such a volatile day of trade yesterday. And as Alex said, yesterday's trade was definitely volatile in a small way, but it was volatile. So that was interesting. An intermittent consolidation likely, but there are no telltale signs that we are, yesterday's hit at a high and then come off means that we are now in a corrective mode. Far from it, actually. The trend still seems to be higher. In fact, if you look at what the interesting thing that happened, and Puneet might speak more about it, but the maximum put writing, the fresh put writing that happened in trade yesterday happened at a very unusual strike. 26,250, and I call it unusual because usually the rounded off numbers get the higher strikes. Usually that's the pattern, but 26,250 got the maximum put writing, and it's the closest to the levels that we are averaging at. So which is why that was, to my mind, an interesting development at the start of the series, if you will. As we said, GDP data likely the short-term trigger for Monday. In the absence of global cues, largely, and Asia is also flattish, US might have a small trade today, the futures are marginally higher, but a small trade today. I wonder if too many people will take too many positions on the economy-linked sectors today. Maybe not. The expectation might be that based on what we've seen in Q2, can the GDP data surprise on the upside yet again? And do you want to take a risk of being on the short side if that were to happen? Likely not.
You know, we put out clips on social media of all of us welcoming the all-time highs yesterday, and I was just going through some of the comments. So yes, we read everything you send in to us, so please do. And a lot of people commented that all-time high to theek hai, but our portfolios are down. That was a lament across the board, and that is an important one to even look at more closely, because if you have a large mass of people or retail investors who aren't seeing any money coming back, so then the sustenance of this on a broader basis will be difficult.
We did speak about that though.
You will need one or two other factors to push up that sentiment. It's not going to be enough that you've reached there technically.
Yeah, I'm not surprised because, and this was last week's data, but we were looking at small cap actively managed funds, and the best performer is about 15% or 13% or thereabouts, and most schemes are actually single digit. They've underperformed the benchmark, which is also in single digits, less than 5%, small caps, right? So I'm not surprised.
Yeah. All right, some of the other factors to watch. Now, GDP, what should you watch out for? That Q2 number will be announced at 4 p.m. today. Would it be another blockbuster number? Now, the Bloomberg poll is looking at a possibility of a 7.4%. Remember, last quarter, you had a GDP growth number of 7.8%, which was a huge surprise. The range that most analysts are clocking in is pretty wide. It's between 6.9% to 7.4%. It's a bit like, your election outcome or your pollsters who have a wide range, so you can't quite go wrong. But nevertheless, any positive surprise is something that will give impetus to markets. The Nifty, meanwhile, is expected to continue its positive short-term trend, but is likely to face immediate resistance and consolidation after hitting a new all-time high of 26,310. A consensus strategy for traders is buy on dips, but analysts caution against chasing the index at these elevated levels due to the unfavorable risk-reward ratio. Resistance now has moved to 26,500, support at 26,000. As far as Bank Nifty is concerned, it is still the leader of the current rally. Immediate resistance at 60,000, upside targets at 69.10, 62,340, crucial supports at 59,500, 59,000, and a major support at 58,500. So those are some of the levels you should possibly look at. But let me go across to Puneet for more. Puneet, what's the F&O setup looking like? Are there signs of bullishness continuing?
Well, most certainly, and a couple of key levels that we need to watch out for, because the open interest distribution is giving a slightly mixed pattern, to say the least. But hitting an all-time high was a key one for the markets yesterday. What's been interesting that while the Nifty has moved roughly about 1.08% in the past month, it's been the Nifty Bank that has been taking the rally forward, up almost 2.62%. So a bulk of the positive sentiment has been carried by the Nifty Bank. A lot of PSUs are one of the key ones that are given that positive reaction. But when you look at the foreign investor positions, and for Nifty Bank specifically, a lot of targets moved above 60,000 level. So we are going to be continuing to see that level if we can continue there, because currently hovering just a tad below that. So that'll be something to watch. You've seen some kind of selling in the index in the future market for investors, but net OIPCR, the put call ratio, has maintained at 1.09%, while the index long has now moved to 18.5%. It's the most bullish that we have seen in the last couple of weeks, to say the least, but building on in reduction of the shorts in the system while also increasing and maintaining their long positions. When you look at the open interest distribution, and this is a key one because this is the first time where we've gone all the way to 26,800 now as the index has moved up, to get you a perspective of where the key levels are. And we did see some at between 26,200 and 300. So as Neeraj was highlighting, at 26,500 we have seen a build up essentially of the calls in the system. What's also interesting is that at 26,000 the puts have continued to maintain their position. So on the lower end, that's the key. But when you look at the upper end of the stream, 26,500 has seen some decent build up, but apart from that, not too much in those levels. So this essentially means that there is consolidation that's expected in the near term. And while we hit the high, came back to the position, a lot of traders have not built any positions meaningfully between 26,000 and 26,500, at least for the calls. In terms of stocks, there's only a couple of them with notable mentions. Something like a Kaynes Tech, we will be speaking to the management today on post their analyst day takeaways. I see some build up or short, but very limited to form a trend. We'll be continuing to monitoring that, while not too much to speak about the open interest losers. So largely, continuation of yesterday's rally will be something to watch, but a slow day expected, at least in terms of wild moves among key sectors.
Okay, 19 points up is the implied open. We'll see what it actually opens at, but expect a bit of a breather after all of the activity yesterday. Some of the stocks that will be on the watch list of investors and is on our watch list as well. I'm starting off with Bandhan Bank, and what they've announced is a cleanup, which is why a thumbs up for it. The bank looks to sell nearly 7,000 crore worth of bad loans. Board has cleared a sale of bad loans to asset reconstruction companies. Microfinance, agriculture and smaller business loans are on the block. These are NPAs worth 3,212 crores and written off loans worth 3,719 crores, which will be sold. They will be sold through the Swiss auction route and written off accounts through the normal auction route. So as of September 30th, Bandhan Bank's gross NPA were at 7,015 crores and it has already sold around 8,897 crore worth of bad loans to ARCs in December 2022 for a huge haircut at that time for 801 crores. In December, it sold 776 crores worth of bad loans for 280 crores. So the haircut will be sharp, but nevertheless, the fact that there is a cleanup afoot will be something that the street may look at positively. So Bandhan Bank on our radar with a thumbs up. Eureka Forbes is the other one. They put out an investor presentation after their investor day, and you have such positive commentary coming in from analysts who attended this investor presentation, who say the turnaround is now done and it's time for a takeoff. Turnaround to takeoff is actually some of the commentary which was coming in. Here's what the company is saying. They're targeting a 2x revenue and more than 3x, that's 3 times EBITDA growth by FY30 with 15% steady state margins. The industry TAM, that's the total addressable market, is rising sharply across categories. Water purifiers, softeners, air purifiers as well. Management is saying service is a major growth driver and boosts long-term customer revenue. SKU count is being cut from 60 plus to just 5 kits to simplify operations. I think that's important as well. Penetration is less than 25%, showing a big untapped monetization potential. That is in your annual maintenance contract. AMC is the annual maintenance contract, which you usually do, when you buy a water purifier and you have someone come in look at it every 3 months or so. Robotic vacuums is now 60% of vacuum cleaning sales and expected to grow 6 times. Air purifier seeing strong demand. I'm not surprised. Already stocked out this season. I mean, with Bombay and Delhi having the air pollution they have. They're seeing a rapid channel shift. Modern trade plus e-commerce is booming and D2C is up 9 times in 2 years. I mean, this would, an interesting thing, guys, very, very quickly, for some reason, air purifiers, not just air purifiers, but water purifiers have also become a huge vertical. Even Urban Company has launched their own in-house water purifier vertical. I thought people were done with those Kent RO times, but I think it's pretty much the need of the hour.
Why do you think that?
Because you have now, for example, your water cooler and your mineral packaged water at much cheaper levels now.
Yeah. And also in Eureka's case, I mean, you have the man who did so wonderfully well with Jubilant now at the helm. And I think everybody's waiting for the moment when Pratik Pota's magic starts showing on Eureka Forbes. It's probably starting to show. The targets are very stiff.
Yeah.
And the stock has rallied, but still stiffer targets. So it could be interesting.
But very quickly on that point, I myself tried it out, not buying a purifier, either boiling or buying mineral water. It didn't work out.
Yeah.
I had to buy a purifier because it's just more convenient to do that.
Yeah.
Maybe the economics doesn't matter, but then it's just more convenient.
Okay, so maybe that's the kind of market they're going in for. Anyway, that's the second stock. That's a thumbs up. The third one is Lenskart, with a thumbs up because of what Jefferies is saying. They've initiated a buy on Lenskart with a target price of 500 rupees. Now, I don't think there has been a more watched, reported and talked about IPO than Lenskart in recent times, as well as what has followed through, especially on the question of valuation. So I thought this was eye-popping or eyebrow-raising or interesting at the very least that Jefferies has set a target price of 500 rupees. They say Lenskart is India's largest tech-driven eyewear retailer, holds just 5% market share, offering strong growth potential. Its vertically integrated omni-channel model ensures cost efficiency, rapid delivery and superior customer experience. India serves as a bedrock with more than 85% contribution to EBITDA, while international segment offers optionality. Attractive unit economics and fast paybacks should drive 50% plus adjusted EBITDA CAGR. For FY25 to 28, they look at the EPS, that's the earning per share, to grow at 44%. The CAGR balance sheet is net cash with rising return ratios and free cash flow. So a very positive outlook there. I wonder if this is sort of the shot in the arm the stock needed post-listing. And in recent, very crucial news, they've tied up with the Labubu makers in Singapore and will be providing Labubu glasses options.
I haven't heard that.
You just came back from Singapore.
Yeah,
did you
but
pick
I
up
didn't
anything?
See, no, I did not see any Labubus. Some shoes I picked up, yes, but they didn't have any Labubus on them. I didn't see one either. I feel a little thankful for that, but that's just me. Let's talk about the three stocks on my list. Gail is the first one. And this is not the best update because the PNGRB, which is a regulator, has reviewed and approved its integrated pipeline tariff. And it has allowed the tariff hike of 12% to 65.69 rupees per MMBTU. The finalized tariff is much lower than what the company had claimed, of close to 78 rupees per MMBTU, and the street had actually pegged it at a range of 67 to 70. The next revision can only take place on the 1st of April 2028, and what that means is that in the interim, there is going to be a cap on what the company can earn. Now, there are reasons as to why this has taken place, and we'll get you more details on that in just a bit, but what are the implications? And this is why the stock might face a little bit of a headwind today. The tariff is now locked up till the end of FY28, and there could be, as a result, EPS cuts for FY26, 27 and 28, and that could be in the range of 3 to 6%. So watch out for this on the downside. It could be in focus. Zydus Lifesciences, this is a thumbs up. It has gotten tentative US FDA approval for a couple of drug formulation. Essentially, it is the generic of an existing drug that is marketed by Boehringer Ingelheim as well as Eli Lilly, a combination of those two. It's called Glixam-B. And this is used to improve glycemic control for people with type 2 diabetes only. A part of that drug is also used to curtail problems that people face with regard to cardiovascular problems while they're still having type 2 diabetes. So this is a product that has an annual sale of $215 million in the US as of the September 2025. But remember that the patents expire only in April of 2027, and this is the first step in the process for the company to get its sales there. That doesn't exist a generic at this point. The third stock on my list is Orient Electric. It's a positive update, simple one, but a reason why you should consult a tax expert to help you out if ever you're in a doubt about what the tax department has asked you to pay. The Tamil Nadu Tax Authority has reduced its GST demand to 31,904 from 51.6 crore. So it's quite the reduction in tax implication.
Well, Christmas came early. for one company at least. No, actually for a lot of them. I'm going to go slightly over in terms of the number of stocks. I'm bunching the block deals into one. But first, a brokerage note to kickstart. And it's an interesting observation that JP Morgan makes. They, of course, maintained overweight on LIC with a target price of 1200. But amongst all the reasons that JP Morgan has given in that note, the one standout reason for me is that they say company does not plan to pass on the cost benefit to distributors or customers. Well, LIC is going to make fat margins, so keep an eye out for that. Not good news for you, not good news for me, all of us who might be taking LIC term plans, and I hope people take term plans for protection and not necessarily investment plans. Sorry, Alex slipped in a financial advice while doing this. But yeah, that's a JP Morgan note on LIC is interesting. Watch out for that one. Whirlpool, I think we spoke about it just yesterday and this morning as well. Now the buyers are out. So Kotak AMC, HDFC, Franklin Templeton bought about 11, 10 and 8.6 lakh shares, and other buyers included ICICI Pru Life, Eastbridge, SocGen, etc. So large money, smart money has gotten into it. Does it mean that the stock will reverse necessarily today? Maybe, maybe not. Some more parity left. But watch out, this may... it's gone in good hands, so may reverse. Keep an eye out for this. And then just a word on the block deals that have happened. So I'm bunching them up into one. So 3 more stocks. MTAR, promoter has sold 0.8% equity. Usually that's considered to be a negative, but the entire equity is being placed with 2 mutual funds. And which is why it may be interesting, because this has happened in the past wherein a promoter entity sold stake. I think Dixon sold stake to Motilal Oswal. And I think the stock did well after that. I'm not saying the same will happen here, but Bajaj Finserv, MF and Motilal Oswal Mutual Fund bought that 0.8% stake that the promoter sold. Keep an eye out for that. Car Trade, Small Cap World Fund, which is an affiliate of Capital, has acquired 14.4 lakh shares, so watch out for that one. And Saregama India, no such luck, because Amansa, noted Akash Prakash Fund, sold about 1.2% equity. Maybe that faces some stick today. Let's wait and watch. So keep an eye out for these names in today's trade.
All right. The other big announcement which took place in the cabinet, and then there was a comment from Prime Minister Modi on this as well, and I think it's kind of slipped under the radar, folks, in terms of reform, is what has been said about the opening up of nuclear power for private companies. And some of the largest conglomerates in India have already started their own investments to tap into nuclear power for the use of their own operations. In fact, just listen in to what the Prime Minister said. He said this during the Skyroot's Infinity Campus launch. Prime Minister Modi signalled a historic shift, opening India's nuclear sector to private players. Beyond reform, the move underscores India's push for energy autonomy amid global scrutiny over Russian oil imports. Before we bring in my colleague Varsha to explain its sectoral impact, let's hear what the Prime Minister said.
रिफॉर्म्स का हमारा दायरा भी लगातार बढ़ रहा है। जैसे हमने स्पेस इनोवेशन को प्राइवेट सेक्टर के लिए ओपन किया, वैसे ही हम एक बहुत महत्वपूर्ण सेक्टर में भी कदम उठाने जा रहे हैं। हम न्यूक्लियर सेक्टर को भी ओपन करने की तरफ आगे बढ़ रहे हैं। इस सेक्टर में भी हम प्राइवेट सेक्टर की सशक्त भूमिका की नींव रखने जा रहे हैं। इससे स्मॉल मॉड्यूलर रिएक्टर, एडवांस रिएक्टर्स और न्यूक्लियर इनोवेशन में अवसर बनेंगे। यह रिफॉर्म हमारी एनर्जी सिक्योरिटी और टेक्नोलॉजिकल लीडरशिप को नई शक्ति देगा।
All right, this major policy reset is aimed at hitting the 100 gigawatts nuclear target by 2047, boosting energy security and accelerating new technologies like small modular reactors. The government will table this Atomic Energy Bill 2025 this winter session, clearing the way for private participation. But what does this mean for the sector and for listed players as well? Varsha, joining in for more.
Well, thank you so much for that. Yes, as you rightly said, that India will soon open the nuclear power sector to private players, and this announcement was made while inaugurating Skyroot's Aerospace Infinity Campus. Now, talking about the India's nuclear power goals, the target is 100 gigawatt nuclear capacity by 2047. Current, if you see, the capacity stand at around 8.8 gigawatt. The uniform, aims to boost energy security and technological leadership. Now, talking about the opportunities created, there's scope in small modular reactors and also growth in advanced reactors and nuclear innovation. Now, let's talk about the new law which is going to come up. So, government will introduce Atomic Energy Bill 2025 in winter season on December 1, and bill will allow private participation in nuclear power. Budget also proposes changes to nuclear liability law. Now, what changes from the old law, if I were to talk about the Atomic Energy Act 1962, blocks private and state participation. Only the central government and its companies could run nuclear plants, and new reform will remove this restriction. Now, which companies will benefit from this? You have MTAR Technologies, you have Tata Power, you have Adani Power, BHEL, Walchandnagar Industries as well. Now, why will they benefit? The key reasons, one is the nuclear plants, if you see, require heavy electrical equipment and assets private, and these assets is with private companies. Also, if you see, private participation will likely lead to many new reactor projects, and this will boost demand for orders and long-term contracts. Also, the use of small module reactors means repeated orders for these companies. And lastly, if you see, this is a diversification away from traditional, that is coal or thermal power. So overall, yes, a big benefit when it comes to overall sector and all the listed companies as of now.
Okay, very well put, Varsha, and explained. So we talked about which companies would benefit. We actually have one of them on our show right now, Walchandnagar Industries. This is an exclusive conversation. It's one of India's key strategic manufacturers, a nearly a century-old company. We're speaking today about what could be the impact of this new move. Chirag Doshi, the MD and CEO, is joining in for more on this. Mr. Doshi, thank you so much for speaking with us on NDTV Profit. It's an absolute pleasure. Just your first thoughts of what is the kind of appetite once this actually goes through, and of course it will go through the whole legislative process, winter session of parliament will be discussed, etc., etc. But if and when it goes through in this form, what is the appetite in the private sector for nuclear power, and what does it mean for you as a company?
So thank you first of all for having me this morning. I think it'll be a game-changing decision by our country when this legislation goes through. I think the appetite is very high. We've been in conversation with many of the large private sector players who would be keen on getting into nuclear power. And I think their appetite seems to be, everyone seems to be very keen on this. There's a whole renewable energy angle to it. There's a hydrogen angle to it. So notwithstanding the entire peak load requirement of our nation, if we are to get into large-scale manufacturing. So I think the appetite is great. We've been in touch with a lot of the private players. I think we just need the legislation to go through, and then we'll be ready for what will probably be a multi-fold ramp-up of nuclear power execution in our country.
Mr. Doshi, can you give us, and good morning to you, this is Alex.
Morning.
I was wondering about certain technical aspects as much as you can explain it to us. My understanding is that fission relates to these large reactors, something like a Fukushima or various other places in the world, right? What we're talking right now is small modular reactors, which might just be opened to the private sector, where you have fusion technology. Is there a difference in the fuel? Is there an availability of that fuel and technology here with us? As I understand it, this is currently only done in the US.
No, that's not accurate, in the sense that whatever we are going to open up to the private sector will not just be what is known as small modular reactor. It's a term that's been kind of thrown about a little bit. I think as far as the private sector is concerned, they would want access to us for them to build even the 700 megawatt PHWR, which is really the mainstay of our country. That is nuclear NPCIL's domain as it stands. I think that is what is going to create the scale for us in this country. Small modular reactor, Bharat Small Reactor, which is actually our old 220 megawatt, which we've manufactured in the 1980s and the 1990s, also working on uranium, is an option which is being worked on to see how we can modularize it, make it easier to manufacture, easier to put in smaller areas that require maybe sort of captive energy requirements. But for the country's 100 gigawatt play, I don't think we're getting away from the 700 megawatt PHWR. And then if you go sort of 5 years on in technology, what we talk about small modular reactors, maybe 30 megawatt, 50 megawatt, 60 megawatt, that is a technology that the government is funding through their R&D initiatives. We're also working on developing our own capability and technology. There is no small modular reactor actively working in the world today, right? There are maybe 60, 70 companies all over the world who are experimenting with it. Maybe one or two in Korea, Russia, maybe one in the US are in trials. But I think small modular reactor is an area that will play out in 5-7 years. I think the private sector will want to first get an economies of scale with the 700 megawatt PHWR and then evolve that over time. That's the way we see this play out.
Mr. Doshi, good morning, Neeraj here. And that would be the question. A lot of people say that the nuclear space suffers from the NIMBY effect. It shouldn't be in my backyard, right? Do you believe that scale can come in the next 5-7 years? And is it profitable relative to the other sources of power to do it at subscale?
Yeah, so I think that's actually been the challenge that we've all faced, even as a manufacturer of core equipment. I mean, as you know, Walchandnagar makes the most critical equipment for every nuclear power plant that goes into the dome or in the nuclear island. But we've also faced that problem that because there's been an inconsistency of order booking, you have a hard time sort of creating profitability and even keeping manpower from that perspective. I think what will happen now, and if you look at Prime Minister Modi's desire, which is we want to put up 90 gigawatt in 22 years, right? That's 4 gigawatt a year. We haven't done, I mean, it's taken us 25 years to do 8 gigawatt. So that kind of scale, even if you tone it down and say, okay, we don't get to 100, we get to 75, that gives manufacturing companies and private sector the opportunity to build out on a regular basis with scale. And that gives us economies of scale that allows them to bring down the sort of levelized cost of power and don't forget, as far as nuclear power is concerned, the levelized cost of electricity is spanning 45, 50 years, not 10, 12 years. And so when you take that into account, and for us as manufacturers, it allows us to bring our costs down substantially. I think at least the numbers that we've seen with some of the private sector players, it's meaningful and can be brought down to as much, if not lower than thermal and solar as well.
That's very interesting. Mr. Doshi, so I'm just trying to get a sense in the conversations that you've had, are these large companies and private players talking about usage for their own purposes, like captive power, or are you talking about selling that power out? Because ultimately a nuclear plant, you wouldn't have the issues of not dealing with peaks and troughs, right? It's available at all points of time.
Yeah, so it's definitely not just for captive. I think this is a pure play supplying electricity to the country opportunity. I don't think it's financially viable for it to be a captive play. And I think everyone is looking at it as part of their power generating portfolio, combined with thermal, solar, hydro, and all other areas. So, and this cannot be a captive play. The country needs this. It requires nuclear power to be a very, very large contributor to our country's base load requirement. And I think that's the play that I think all of the large conglomerates that will get into private nuclear power plant ownership will focus on.
You know, Mr. Doshi, just last question, and one part of it is broad and one is specific to Walchandnagar Industries. A lot of policy sounds great on paper, but the implementation becomes a key task. What is the kind of timeline you see for any of this actually coming to fruition, and what does it mean specifically for your company?
Yeah, so you're right, and obviously we've depended too much on policy to drive business, and you get through these unfortunately years of gaps which cause problems. But today, the way we see it, with or without, even without the private player participation, we've seen NPCIL, NTPC now already issuing fleet mode reactor orders to us as a manufacturer. So we're already executing nearly 300 crores worth of nuclear orders today as we speak. Those orders will get executed in the next 2 years. We expect NPCIL and NTPC to give us more orders next year, or let's say the year after, which will continue India's sort of investment in nuclear power. And if the private sector comes in, I expect private sector orders to start flowing in maybe by 2027, which is about a year and a half to 2 years from now, keeping in mind if they are approved in the winter session, land acquisition, technology development, and then sort of issuing the order. So I don't think the private sector will issue orders to us till 2027, 28, but we expect a fairly large number of new reactor orders from NPCIL and NTPC, most likely over the next 12 to 18 months. So we're fully geared up and ready to go. We're in fact making a new investment at our Walchandnagar facility that will create a new dedicated brownfield facility only for nuclear power expansion, which will sort of triple our capacity to deliver over what it is today.
Oh, that's fantastic. Mr. Doshi, so very quickly, what is the value of the investment that you're making there? At what point will it be completed? How is it being funded? And also, no, the purpose of our chat, so we got sidetracked a little bit because we were so excited about the announcement yesterday, but we have to ask you about the lockout at your Satara plant, which is ending, and what are the implications of that?
Yeah, okay. So just on the nuclear side, we are kind of putting in our plans. We think the investment in just nuclear will be somewhere in the region of 150 crores. We're not clear how we've not kind of closed on the funding mechanism, but it will be done in the next 6 to 12 months so that we can start investing the money by the end of, say, December 2026 to be ready for whatever increase comes by 27 and early 28. So that's the plan as far as nuclear is concerned. As far as the lockout is concerned, the foundry is a decent sized business for us. It constitutes nearly 1/10 of our revenue, if not a little bit more. But it doesn't really fit. It's not a supplier to our existing defense, nuclear, aerospace business, but it is an important cog in our wheel. There were some labor issues there. We had to do a lockout. We've spent the last 3-4 months negotiating with the workforce. Obviously, as a group and a family, we do believe that our businesses need to start rather than be shut. So luckily, the union has been fairly receptive to our conversation. The factory will start in the next month once maintenance is done. And we should be back to sort of 100% capacity in the next 3 months. And we've also agreed with the union that the manpower cost, which is obviously our largest cost in that business, will also get brought into the company on a phased basis as the business goes up, and not have sort of that liability from day one. So I think the union has been great. I think our management has been good, and right. I think I'm glad this problem is over.
Absolutely.
But focus on defense, nuclear, and aerospace as our sort of growth driver.
Absolutely. Mr. Doshi, thanks so much for a lovely conversation. I think you painted a lovely picture for us, and heading into 2030, those ambitions sound incredible. Let's see how they get executed. We have to slip into a very quick break, stock-specific action on the other side. So do stay tuned.
this is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first. You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing in?
Welcome back. You're watching India Market Open. Now, before the break, we spoke about Gail and the implications of the regulator's move to announce a tariff increase. This was not what the company desired. It wasn't the amount of increase that the company desired, and it's locked till April 1, 2028. What are the implications of that? Why did this lower value come through? Somit joining in to explain all of that. Somit, first of all, why were they expecting what they did? It's quite a gap between what they were expecting and what they got. And why was it that it was capped at where it was?
So the difference between the expectation by Gail and the tariff that has been set by PNGRB is largely because Gail had factored in a lot of capital expenditure and operational cost, which is something that PNGRB has not factored in, and that is the major reason why these tariffs have come in much lower than what the street also was anticipating. In fact, the tariff has come in just 12% higher at around 65.69 as against 58.61, which is the current tariffs. And Gail was anticipating this or expecting this number to be 70, close to 78, and street was anticipating this number to be anywhere between 67 to 70 rupees per MMBTU. And as I mentioned, PNGRB at this moment has not factored in the the capital expenditure and the operational cost, and that's the reason the tariffs are lower. But there's a clause here that this tariffs will get again revised from 1st of April 2028, and that is when PNGRB will consider this actual or the future capital expenditure that Gail needs to do and the operational cost. And the reason why they have not increased or considered it right now is because they do not want to pass it on to the end customers this higher rate at one go. So they will do it on tranches, and that's the reason this hike has not come in. But because of the fact that this hike has not come in, there will be EPS cuts. There will be EPS cuts for FY26, FY27 and FY28. To understand more about this, we are joined by Mr. R.K. Jain, the CMD of Gail. So firstly, to start off with, the tariffs have come in much lower than what the company was anticipating and the street was anticipating. Are you convinced with PNGRB's argument that at this moment will not consider the higher capital expenditure or the operational cost that Gail is expected to bear?
Good morning. First, let me correct you. I am Director of Finance on the board of Gail. And the tariff order has only been issued yesterday night. And our submission of tariff was around 78 rupees per MMBTU. And we were expecting the tariff should be around 72 rupees per MMBTU. But that was supposed to be a final kind of order. But PNGRB, we are experiencing first time I issued an interim relief kind of order, which is saying the tariff is 65 rupees 69 paisa. In fact, they have not moderated our claims. They only said that as interim relief for two parameters, that is system used gas and the pipeline capacity determination they are giving, and the balance will be available to us from April 28, and we will be filing tariff in 27-28. In fact, deferment of tariff is if you see from Gail's point of view, we get 15% return on deferment because the tariff is calculated on discounted cash flow methodology, and any delay in processing of tariff or any delay in considering the parameters which are not being considered will give Gail 15% return. So from our perspective, you can say the it can be a deferment, but it is not the fact that we are eligible for that and it is not available.
I understand that there could be, because of this deferment, you might get some additional 15% return that you were talking about. But you are also expecting these tariffs to be applicable from the 1st of Jan 2025. But then that is also not happening. It is going to be effective from... Right.
Yeah, that's what we have been telling or following, that we submitted tariff in August 24. Normal tariff processing takes 6 months to 8 months. Then this tariff has been processed in more than a year's time. And any delay certainly hurts customers, because on net present value basis it actually increases. So whatever moderations have been done, if it also delays, then as a pipeline entity we are eligible for that. It will be available, but certainly it will increase burden on customers. So from our perspective, the interim relief of 66 rupees is given, almost 65 rupees 69 paisa, and we are studying the tariff order where all moderations have been done, and certainly we will be appropriately taking up wherever we feel that these moderations are not in line with the regulations.
So, are you saying that you could make an appeal with the PNGRB if you find that this moderations that PNGRB has considered is not in line?
Yes, certainly we have not gone through the order yet. It was posted yesterday night. Certainly, if there are some issues in the tariff order, we certainly will request PNGRB to look back.
Say suppose PNGRB goes ahead with considering the capital expenditure and the operational cost that the company is expected to bear. Do you expect the tariffs to be revised to what you had asked for 70, that is 77.9?
It will be more than 78, because now on net present value basis it has further increased.
Right.
Mr. Jain, can I just come in here? PNGRB on its part, when they have spoken to media, is saying that Gail's ask is too much. So you may anticipate with your plea that the number could be as per your ask or higher, but PNGRB doesn't seem to be believing. So I'm saying this only because you haven't read the order, but we've heard from PNGRB already.
The ask is in terms of the law, in terms of the regulations. Ask means something which was supposed to be available to us in April 23. April 23 we submitted tariff of 68 rupees per MMBTU. At that point of time, PNGRB moderated the tariff to 58 rupees 60 paisa, and they considered gas price.
Sir, can I just come in? So you are saying that this is as per law, in which case PNGRB should already have acceded to your demand. The fact that they haven't, and they believe that the ask is too much, which means that that number is out of question already. Mr. Jain?
Yeah, there is signal. You maybe for a minute you have to wait.
Okay.
Okay, we will...
No, so Mr. Jain, can you hear me? Mr. Jain? Yeah. Okay. So my question is that this is now for all purposes, this is locked till April 2028. Do you see this impacting your capex plans in any way? Do you see this as a problem, and do you see raw material prices or input cost escalations which will be a detriment to you, because there are some estimates of how this will hit your earnings per share, etc. Do you see this as a pain point?
First of all, we do not feel immediately that it is locked up till April 28. We need to go through the tariff order, and if we feel that some moderations which has been done are not in line with the regulations, certainly we will take up with PNGRB. That is first thing. Second, this moderation does not impact in any way our capex plan. Gail's debt equity ratio is quite comfortable. We are highly unleveraged. So we have ability through internal generation, certainly through borrowings to take up capex plans. That's not a worry for us.
Right, sir. Just wanted to understand at this moment, post this hike has come in, what will be the actual realized tariff for Gail? Because at this moment, I believe Gail is getting a premium of around 6 rupees per MMBTU, given the fact that you have been allocating volumes very smartly, and that has resulted into a higher realization of tariffs. So post this hike, what will be the actual realized tariff for the company?
We'll review and come back because this has not yet been done. So we will be doing our distributions. It is difficult to comment at this point of time.
It will be at a premium given the fact that you are earning a premium right now also?
There is nothing like premium. Is it in terms of regulations? We submit our tariff on locations, and that is in terms of regulation it is allowed.
And lastly, sir, the zonal tariff decision, by when do you expect that to come in?
The order itself says that we have to submit within 7 days. We will be doing our job, and hopefully the PNGRB will also do maybe before 31st December, because order says that it will be applicable from 1/1/2026. So hopefully in December both the things will happen. We'll submit and PNGRB issue the journal order.
Okay, Mr. Jain, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. Sumit, quick 20 seconds. Sum this up for us. Impact on Gail.
Well, it will be definitely negative downtake of around 3 to 6% because the EPS cuts will be that much. Street had estimated 20% hike. It has come in at just 12%.
Okay. Well,
that was less than 20 seconds.
That was less than 20 seconds, fast and furious. Okay, that is the interview of Gail that you should watch. You'll find it on our socials in a short while from now. Meanwhile, this is one of the big stories that we're tracking, but there's so much news flow. The thing with companies like Gail is the regulatory headwind that is always there. There's someone else who's determining your rates, and if you look at the reasoning for the regulator, PNGRB, to also come in and fix its tariffs, is because they do not want that much burden on customers at one go. That's always going to be the case. Now, what happens till 2028, frankly, is unforeseeable. Whether there will actually be that sense of an increase or not is not something that you can be sure about one way or the other. But we have a power-packed show today. You've already heard from the newsmaker of the morning on NDTV Profit. We've talked to you about nuclear power coming in, and now we have Manav Chopra in, ED Technicals, Nuvama Institutional Equities. Manav, so great to have you in here. Thank you so much for joining in. Was it a long trudge from the top floor to here?
Not at all. I think it's always great to come at your studio. It feels nice and very convenient. I mean, we have to manage that, right, at the end of the day.
Yeah. No, let's start with how you're looking at the markets right now, because we finally hit that. Sometimes it's just you need to hit that target, at least to know that you can. So the markets can. It has it in them, and it seemed like a very long 14-month journey to that point. What next in your view?
So I still remain very constructive on the markets. There is no second thought to it. But the factors which are also going to give us some macro tailwinds, which something which is really shaping up well for us. I remain constructive that the markets will continue its trajectory on the upside. The Nifty along with the mid-cap hundreds. But the important part is that within the emerging market as a basket, right, India still remains underweight across the foreign institutions. And if we see the kind of a rally that the KOSPI has seen or Taiwan has seen, which has rallied 70% to 50%, I strongly feel that there will be the traction where the money shifts from those spaces, come back to India, and very difficult for within the emerging markets, India being still underweight with getting to all-time highs. So the traction will definitely flow in back. And we have already seen early bouts of short squeeze which have started to play at all-time highs. So I think something that I was voicing at an early stage, we did see short squeeze, then again come back, but we are climbing a wall of worry. But I strongly feel this will continue on the upside. We still hold with the perspective that we are going higher. Now, on the upside, what my thought process would be, it would be a combination of shorts and under ownership which will take the markets higher. So on the sectoral front, very constructive on IT, where there is still reasonable shorts and under ownership. And I'm quite confident for the infra as a pack to do well, which includes your Reliance, which is still under owned in terms of weightage with the institutions, the Larsen, Adani ports. So, this pack is going to do very good vis-a-vis the consumption story. But yes, I think the traction remains quite constructive, very positive on the markets.
So what are the targets that you might have? And your report says 27,500 on the upside in the medium term.
Right.
How do you define that?
So my report is already active since September. But from here, obviously 27,500 would be the initial zone that we expect the markets to go from there. Like I mentioned, it will be a pack of IT and infra along with some beta names which will do good. The breadth of the market continuously improves. So, there is no second change in that perspective.
Got it. But, that's the point. I saw your note and it seemed to suggest that small cap leadership will be there. Right. The complaint for 2025 is that even if the Nifty is back to all-time highs, portfolios aren't.
Right.
Does that change starting December itself, or is it some time away?
Right. So small cap has been one of a massive underperformer in past many months, right? The kind of base formation or the breadth improvement we've seen into the large caps, into the mid cap 100, slowly, steadily on the bottoms up approach, I'm seeing that kind of an early setups visible. Certain sectors from the small caps which are coming up is like the tire space. We are seeing the crude and the international rubber prices coming up. Auto sector is quite bullish. Like I mentioned about the infra, even the small cap infra stocks are really setting up well. And when we dive down even the BFSI, we see the smaller banks, the Ujjivan, the City Union, there are some traction which have already started to play. But the template going forward would be a bottoms up into the small cap, but the construct still remains quite positive. I think eventually we don't expect a gaga kind of a rally that we witnessed in 2023-24 where everything the small cap does well. It is going to be a little more concentrated, but more bottoms up in small cap, but I think all good for the next few months.
So PSU banks, for example.
Absolutely.
We're very constructive in that, right? On the PSU banks.
Absolutely.
So what's the trajectory like, and what do you like within that pocket? I'm presuming they are a part of the small cap bucket.
Yes, they are part of my mid cap, but yes, very constructive on the PSU banks. My bigger thoughts have been that the PSU banks will strongly outperform the private banks. I think largely that space has played out.
Yeah.
But going forward, it's going to be a big play which is not going to stop at least for the next at least 6 months from here. Obviously, there might be a bot of pause. It has given a massive alpha, but within the PSU basket, my stop bet still remains on Canara Bank and PNB. I will not be surprised to see in a very good bull case if these stocks are still 30 to 50% higher from the current level. So I remain very constructive on that space. All the way from 7,000 levels, this index could rally closer to 10,000, 11,000, the PSU index I'm talking about. So if I see a 10-15% upside in the PSU as an index from the current levels, the Can Bank, the PNB still have a strong alpha move from the current zone.
Manav, stay with us, please. You're, of course, in our studios, but we have to get to our regular segment this morning and then come back to you. Sumit Sarkar joining in with all the chatter from the dealing room. Be quiet. Sumit, what's on your radar today?
Three stocks that remain firstly in focus is Swiggy, Zydus Life and J&K Bank. Now all these three companies have already taken their board approval for fundraise, and now dealers are indicating that these three companies might start their QIP as early as next week. So keep an eye out for these counters. For Shriram Finance, there are buy flows on DII desk is what dealers have indicated, and the delivery volumes are also on the higher side. For Indraprastha Medical, there are buy flows on large HNI desk, and dealers are expecting some positive corporate development to be announced very soon. They're expecting Apollo Hospitals to buy out government's stake in the company, which could also lead to an open offer for the public shareholders. And lastly, when it comes to Devyani and Sapphire, these two counters have been buzzing on the dealer desk for quite a while now. The expectation is on for the merger between these two companies, and dealers are expecting this announcement to come in anytime soon.
Right, interesting names, Sumit. Thanks so much for that. Dharmesh Kant with us this morning, Head of Equity Research at Chola Securities. Dharmesh, thanks so much for waiting by. It's been that kind of a morning where we've been dealing with things and we've been speaking to companies, interesting conversations we've had as well. But the last one that you might just have heard on Gail, our research analyst Sumit thinks that this would be negative to the extent of 3 to 6% on EPS over the next year and a half to 2 years, right? What is your own view on the latest development on the GRB?
Yeah, good morning, Alex. Thanks for having me for the show. I mean, just no point breaking your head into companies like Gail, where, the top line has been regulated and you don't know how much of it will translate. At the same time, they have to manage the input prices. The gas prices may go up and down. And the benefit always comes with a lag effect. If at all, it comes through in totality. So I have been seeing Gail, last 10 years, if you look from 2018 to 23, the stock price did nothing. And from 1 year, it jumped up almost 100%, and then again it's languishing. So normally any public sector utility companies, the government has a mandate of maintaining ROE for 13-14%, and that is the bandwidth in which they operate. So this is a negative news. So the way PNGRB has regulated the pricing, the ask was too high. At the same time, what has been delivered is too low for Gail. You have seen the operating margins decline for the last quarter from 12% to 10%. It has come through. Today, there may be a knee-jerk reaction of 3 to 6%, whatever it is there. But I don't think structurally this augur well for companies like Gail from the investor point of view. If you are looking for wealth creation perspective, there is no point investing in such companies. It's at best a cyclical trading place. So maybe a few more decline, and then I think they have done this ad hoc mechanism. I mean, January they are again setting PNG ROE, and there may be intermediate, I mean, in between term revision of pricing as well. So how much that happens, how much that comes through. So this is all subject to speculation. So our sense is stay away from these kind of companies, if at all. If you want to play a cyclical trade or technical trade, then Manav is sitting there. He is the best just to advise on that.
Definitely. We're all excited about Manav sitting here. Dharmesh, thank you for that. Manav can't quite hear you, but we will convey to him. Okay. So Dharmesh Khan said that the best person to talk about cyclical trades at technical levels is Manav, who's sitting there in the studio. So quite the reputation. No, so, just with you, of course, we look at broader picture, Manav, and we are entering into December almost. I mean, you pretty much finished the month. I think it's time to start talking about the year ahead and a bit of a recap. Would it be safe to say that next year's winners will look a little different from this year? In the sense, maybe you will see small caps making a bit of a comeback, private banks back again. Do you think that's the trend, or you'll see more of the same?
I will definitely agree with one part, that the template for the markets have changed. And more so, like I mentioned, I strongly feel infra could be the going theme for the early 2026. A lot also identifies that, the classical, very contrarian thoughts of riding the consumption. I strongly feel that it's going to be infra. And a lot of names like a GMR airport, your Adani ports, from a Nifty 50 stock where I'm quite convinced that a 30% upside in a Nifty 50 names, where I'm very convinced about. Reliance being an under-owned across the domestic institution is where, any rally, eventually when the FPIs also come in and any move in the markets, one cannot be under-owned certain names, So this is where the infra themes will be taking a lead. We have already seen a strong setup in names like GMR, Hoodco, and Bail for that matter. I've released multiple strong reports on that. I think this is the space where 2026 will belong, along with certain segment of PSUs. So it's not going to be an easy bull phase until unless you're a stock pickers market. Also, there is a segment where it's going to be certain 4-5 sectors which will do good, and that is going to deliver the best alpha. I am not of an opinion that it's going to be a very strong everything does good where more than 70% stocks are making alpha. I don't think that is the phase, but yes, it will be a slow and rise, gradual move towards 27,500, but certain sectors and pocket remains the key. So infra is going to be one of the bets, which I'm very constructive about.
And couple that, sorry, just one last question. Couple that with real estate. You were constructive, the sector is done well, now kind of plateauing. Can it do more?
So within the infra pack, I think the segment of cement and real estate might just be like an kind of tactical trades. I'm not very constructive on that. But yeah, taking certain specifics from the large caps and the mid caps, I think that is where the more traction would be.
Interesting. Any of the platform companies or the internet companies, internet companies you would look at? I mean, if you're really looking at winners of 2025.
Right. Not necessarily. See, they are in a good trend, right? But what I'm looking at, possibly getting into a more structural bull market scenarios, and where even the ownership or under ownership will be adding as a tailwind. Yes, names like Eternal, Swiggy's, they have a fair bit of a setup, nothing negative about it. But if I have to choose few with limited amount of funds we have, I would rather stick with some certain sectors only.
Okay. Who is this we you're talking about? Is you limited funds?
It's me here.
Right. Okay. So leave us with top 3 or 4 favorites before we let you go.
Fair. From the large cap infra, my top favorite would be Adani Ports and BHEL from the mid cap 100. From my PSUs, it will be Can Bank and PNB as a basket. So I'm quite confident that these 4 will be the levers. From the IT, it will be LTI Mindtree.
Okay, Manav Chopra there, keeping it straight and simple this morning. Thank you so much for speaking with us. So those are some of the picks that Manav has talked about. Some of the movers today, Dharmesh, we spoke briefly about Gail, but another one that we should talk a bit about is Bandhan Bank and what they have announced yesterday, which is a mega cleanup that they want to undertake of their NPAs. Would you look favorably at Bandhan Bank right now?
Yeah, if somebody is a very high risk investor or trader, they can definitely look at it. But the entire BFSI space, you have multiple strong, solid options to look at. So, I mean, as a trade, if you are aggressive trader, you can, because the valuations are comfortable if things gets, settled down. But historically, if you see Bandhan Bank, it operates in such a geography where it's plagued with problems, be it flood-related problems, and their entire customer base, almost 80%, is from microfinance kind of a division. So they have been, Bandhan Bank has been catering to mainly, and that's the problem area where it is still to sort out. So first is the geographical penetration has to increase, and the profile of the customers has to change dramatically, or at least the composition has to change significantly for it to be a stable performer. So that's the caveat out there. But I mean, benefit of doubt can always be given to such companies, and high risk traders can always benefit because BFSI itself is in a very sweet spot. So we see a structural tailwind playing out for next 1 year for the entire space.
That's a view on Bandhan. If you missed the earlier piece that and Tamanna spoke about it in detail, it has to do with a cleanup of their book. They've sold quite a few of their non-performing assets. Kush Bora, founder of kushbora.com, in studio with us. Kush, very good morning to you. And Friday mood, do we hit fresh highs today? Is that what you're looking forward to?
First of all, very good morning, Alex. पहले ये बताओ Friday इतना पैक्ड कौन रखता है?
We like to make sure that you feel like you deserve the weekend.
See, I had to wait, but truth be told, I enjoyed all the conversations, including the last one that you had. I'm sure the viewers did too. But on to the markets. See, India would have had a second whitewash by a foreign team on home soil, but one area where the domestic players are outpacing and outperforming the foreign players is the Indian markets, right? 2.5 lakh crores thereabouts of selling by FIIs this calendar year versus 6 lakh plus crores of buying by DIIs, certainly keeping the market there. And now we can say we've come out on top because of the new high that we hit yesterday. From a very near-term perspective, after hitting the new high, there could be some consolidation, some profit booking here and there. And if I were to argue on the side of caution, I could do that as well with some data points, which is, there is a second peak of negative RSI divergence setting up on the daily charts. The PCR is still at 1.16, close to that 1.22 overstretched territory. But I think these are times when you have to keep these conventional reading aside and take a more nuanced view. Just to give you an example, just a day prior we hit the all-time high, which is on Wednesday. PCR was at 1.55. I think we mentioned that on the closing show as well. And yet we went on to go and hit that new high. So when there's momentum, then when there's liquidity, you have to take a more nuanced view. I still remain constructive on Nifty. I think 26,500, 26,800, very realistic targets, perhaps can be achieved in month of December itself. As long as the 20-day moving average now at 25,900, that is held, you stay long on the Nifty. Closer to 26,100, risk-reward ratio for long positions becomes favorable.
Nice. So we bounced off from the low point yesterday, also ended flat. But specific stocks, Kush, that you're liking today?
So going with both the long trades, first one is on Glenmark. We've seen a good recovery, a good revival on this one. The stock cleared the 20-day moving average 3 sessions ago, 50-day moving average yesterday. Volumes in the last 3 sessions have also been very healthy. So a good recovery play on Glenmark. 1985, 2025 are your targets. 1900 is where you keep that stop loss. The other one from the realty space is Mahindra Lifespaces. This too, from a medium to a long-term perspective, is actually a recovery play. But if you see from April onwards, the stock's been in a very healthy rising channel. 20-50-day moving average is taken out just about a couple of sessions ago. Again, volumes here too, very healthy. So 425, 436 near-term targets. 405 is where you keep that stop loss.
Okay, let's go across to Sharath for our big brokerage call of the morning. This morning we're talking about what Nomura is doing on Anthem Bio. Take it away, Sharath.
Tamanna, the small cap space is showing much more interest now. Initiating reports have started coming in. Nomura on Anthem Biosciences, they have initiated a buy rating and a target price coming in at 740 odd rupees. They have stated that the company is a high quality CRDMO and this is a long-term bet coming in. It's an integrated platform and the overall strong track record is also coming in. Look at the sales growth, how it has actually moved out. Over the next 3 years, they're expecting that to jump to almost 6%. It's 14% in FY26, that's the expectation. And going ahead, it can go as high as 22% in the future. Also, looking at the earnings, that also is a significant growth coming in the next 3 years. That's what the estimation is. So we'll be looking at these important numbers as well. And overall, the growth expectations, especially will be there in FY27 and 28. 26 is having high base in this product. But two important triggers for the stock includes growth in base products and new product launches.
Yeah. Okay. All right. So that's the view on Anthem Bio. And very interesting. Manav Chopra, by the way, was talking about an infra theme heading into 2026. And I wonder what Dharmesh Kant has to say about the top picks that he had in the space. So he named 3, right? He talked about GMR Airports. He spoke about the big one, Reliance Industries, as well as Adani Ports. Dharmesh, any specific views on any one of these 3?
Yeah, Alex, I mean, in our, large cap model portfolio, we are having Reliance Industries for, last 2 years. We have been carrying that, and this year the stock has performed very well. So that remains the topic out there. Adani Ports, again, I am also on the same page because fundamentally, this is the strongest, company, be it on the valuation numbers and the way the business has been spending in the entire Adani Bank group. So that remains out there. Larsen, from the infra space, specifically speaking, L&T has performed well. But I think going forward also, it's going to do well. Seeing the kind of order book inflows they are getting, both India and overseas. Margins may be a bit subdued for L&T, but I think that would be negated by the kind of order execution comes into play. So these are the top 3, infra plays from the large cap space. And you can have a look down the line and maybe their NCC is now, shaping up well with the kind of order inflows again started trickling in. The only problem has been the UP state, where most of the infra companies got stuck because of the payment not coming from the government. But I think that's also getting resolved.
We were speaking yesterday about the metals pack as well. And the point that a few of the experts that were on the program told us was that they might just say that taking profits off the table is a good idea in some of these counters. I wonder if Kush believes that that is the case based on the technical levels that he's looking at, and specifically what counters would he look at this moment to book profits?
So, Alex, on the contrary, we know that the metal space per se, by nature, by design, is a more volatile space, right? And the medium-term trend for the metal stocks, at least for this calendar year, has been bullish. So every time you get those big cuts and big gashes, from a trading perspective, at least they should be taken as an opportunity to go long. Now, that is true for the next 2 stocks also that I'll discuss, which is JSW Steel and Hindalco. Now, every time you've seen these stocks dip, close to the 20-day moving average or the 50-day moving average, or some of the key support zones, they've rebounded quite well. And if you've bought them near the support levels, then you've been rewarded in that trade. Similar is the trend here. I don't see a major trend reversal or a trend change in some of these names. So if I were to pick, I think JSW Steel and Hindalco on these declines and now turning a corner on the way up for the last 2 sessions are actually good, interesting ideas for a long trade.
Okay, let's take a look at some of the movers in the pre-open session as it settles. I mean, Gail is, of course, stands out for the pain that it's enduring, which was to be expected. I mean, if you heard all of our coverage this morning and we spoke to the management as well, we knew that there was going to be pain. We said 3 to 6% is where the stock would be down at 6.5% in the pre-open session. We'll wait to see how it opens up going ahead. There is, let's see what Eureka Forbes is doing. A very, I would say, ambitious targets that they have set and some good notes to support it. That's about 1% up. Meanwhile, on the winning side, not too much excitement, I must say. It's okay. Paytm having another good day, at least in the pre-open session. Zydus Life, because of those US FDA approvals that they have got for those 2 glycemic controlling drugs. Let's take a look at what Voltamp is doing. Some of these have had order wins and maybe that's going to help out as well. Reflex as well will be in that category. I wonder what Car Trade is doing today. Car Trade, of course, after all of that buy coming in or big blocks coming in, car trade is seeing a bit of pain, or actually nothing, it's completely flat at this point. So not too many movers this morning. Would you hesitate or look at a Gail at all?
Oh, no. This entire space doesn't.
No.
I could have added a couple more actually. That's the kind of conviction. No, the entire space doesn't really warrant too much of an investor interest, perhaps even trader interest. Not mine for sure. So if there are any cuts, I wouldn't really be keen on going out and buying. These are not buy on dips kind of stocks. So not really keen on the dip that I'm seeing on Gail right now.
Okay, let's take a look at some of the other movers, and I wonder if there are positions, Dharmesh, that you take in any of the auto pack, because you're going to see their sales numbers coming in over the next couple of days.
Yeah, Tabla, I mean, we have been very, very clear as a strategy. We initiated the entire auto pack way back in the month of May, not knowing that this GST thing will come through. But it was a structural thing which we are seeing that seasonality will built in, and they were, trading much at a lower valuation multiple. So, but we booked out completely in the last week of September itself. Couple of auto counters went well above those highs. Maybe M&M went up above the highs, but marginal gains we only see M&M and Hero are the two companies. I think I will wait to see the numbers. My sense is the numbers won't be that pleasing to the market to go by. There you can see a bit of a decline, except the MSCV segment where, heavy vehicles can see a bit of uptick out there. But four-wheelers and two-wheelers are going to be on a muted side. So I think profit taking will set coming Monday. So, but that's my take. Let's wait and see how the numbers pan out.
Fair call. Dharmesh, we'll leave it at that. Thanks so much for joining in today and giving us your thoughts. Really appreciate your time. 8 seconds left for the markets to kickstart trade. The question is, after the volatility yesterday, and we start off flattish today, what do we do post that? But the opening rates, absolutely flat, no moves whatsoever. Look at those rates. The Nifty is just not moving at the open. The Nifty IT flat too. Bring up the mid caps and the small caps and see what they are doing in trade today. Absolutely flat. Oh my God, this is very interesting. The banks moving a little bit, but otherwise it's absolutely flat. Let's get the heat map up on the screen and see what is moving. Well, okay, virtually nothing. The top gainer and the top loser are less than 1%. Lights, some more red than green on the screen. So let's start with the green. Wipro, 0.5%. M&M, 0.25%. Hindalco, 0.25%. There's a Titan, SBI, Reliance lending its helping hand, but that's about it. Not too many winners per se, except for a Wipro, which is now nudging that 1% mark, if you will, almost there, right? On the losing side, Asian Paints, less than 1%, then Max, Eicher, Axis, well, virtually no movers really. Literally, Tamanna, I'll hand it over to you, because aside of the volatility, nothing else is volatile.
Yeah, the volatility is actually very positive. 4% down is what the India VIX is looking like. Now, okay, it's okay, a bit of a breather. People are in Kush Bora's mood of, thank God it's Friday. Ki kaun itna kaam karta hai Friday morning. 1% up, not even 1% up on the biggest winner, which is Wipro. Wipro has an order from a company in Netherlands. Maybe that is boosting it. They, though, of course, typically don't give out order size and other details. Let's pull up the broader indices very quickly. The small cap and the mid cap. Mid cap is 0.25% down. So this is not flat. This is a bit painful, actually. 250 is small cap. 250 is also 0.25% down. Let's pull up the sectoral heat map for you this Friday morning and look at all the action there. Realty stocks showing a bit of green. So is auto, but barely so, actually. If you look at the breadth, this is not a very positive market. Oil and gas trending down. Maybe it's the Gail impact, because nothing much is happening with crude prices, frankly. Nifty Energy about 0.5% down as well. And then you have this middle ground sort of coming in. A bit of spark in FMCG stocks, but nothing to write home about at this point. Let's go stock specific and see if there's any action there. We were talking about Gail, and there will be action, not positive action. Let's see how big the cut is on opening. 5.5% down as Gail opens up for trade. What has happened here? The regulator has set tariffs till April 2028 at an extent lower than what Gail required. And we've heard from both sides. We've heard from the regulator, we've heard from the company, and they both clearly have very different ideas of what those tariffs should be. So this is going to be pain point extended. 5% down as it opens. Bandhan Bank on our watch list because of the cleanup that they have announced, about 1% up. Ashok Bilkon, they will have no NHAI tenders for a month. It's only for a month as of now, 5% down in trade. Car trade was something that we were looking at. Details of their block have emerged and good buyer names coming in, 1.5% up. Order wins, Reflex, a pretty big order, a 100 crore order for Reflex, that's why 7.5% up. Voltamp also looking decent on order wins. Eureka Forbes has put out an investor presentation. They had an investor day. They presented steep targets. You have brokerages saying that their takeoff time has come. Well, the stock is not really taking off, but it's 2.5% up. The price at least. Zydus Life has US FDA approvals for 2 new drugs. That's about 0.5% up. And I want to see what's happening with Lenskart. Jefferies has initiated a buy on the company with a target price of 500 rupees, 1% up on the stock in opening trade. But not too many movers, I would say, Alex.
Yeah, that's absolutely right. In fact, I want to ask about a couple of stocks that you mentioned, and not too many movers at all. In fact, from the broader markets, apart from Gail, you have the worst loser that is only about 2% or less than 2% lower. So not too much in the way of big movers either side. Lenskart is what I want to ask about, but of course we'll take a look at that down the line once we have more data on it. Before we do that, let's talk about something like a Welspun Living, something like a BLS International and Paytm. Of course, the regulatory approval that came through for them finally, this was par for the course, and so it didn't see too much of action yesterday, Kush. But I want to ask you about it today because the stock is up 3%. Is this the start of a longer rally?
Yeah, could well be, Alex, because the stocks already had a very sharp, very smart run, from those 650 odd levels early March. So it's already doubled since those levels. But up until a few sessions ago, there was mild profit booking. Now it's starting to move up again, support at the 50-day moving average. You could perhaps see some supply pressure at the 1350 mark, which is the recent swing high, and then there could be a mild resistance around those levels. But once that is taken out, I think the stock's geared for 1400 plus 1450 kind of levels also from a very near-term momentum trade perspective. So keep your stop losses at about the 1280, 1285 zone, and you could still consider a long trade on Paytm or 197 communications.
Okay. I asked about Welspun Living as well. The stock is now one of the top gainers in the broader markets, up about 3.5%, which is saying something of the day that we're seeing today. Now heading higher actually, closer to 4% than not. What would you say about this one, Kush?
So mild caution here. The near-term trend is bullish, but the stocks actually spent some time at the 140 mark, a few sessions ago. And then if I dial back the clock, then somewhere, around June, July, that period as well. So anyone who's been holding on to the stock with, those prices at the entry, as the entry level, they would come in and perhaps offload some. So I would wait for the 140 level to be taken out, that closing to be taken out for taking a fresh entry. But if I had a position, would I continue to hold? Yes, because once the supply pressure is over, stock could head to 147, perhaps 152 as well. So yes, I would, hold, but fresh position should be taken above 140 only.
I'm looking at the Nifty Bank and it's absolutely flat at this point. I wonder, Kush, what your opinion is on this. Is that 60,000 mark a major hurdle to cross?
A psychological one more than a technical one. I think from a technical standpoint, our next target on Nifty, having achieved the 59,500, is 60,200 and then 60,900. So very constructive. Again, from a near term, because the rally is stretched, PSU banks have already done quite a bit. Private banking stocks now starting to pick up. I think there is room on the upside. If there is a pullback again closer to 55,300, 59,300, 59,500, I would consider long trades for a better risk reward ratio. But on the whole, the trend seems intact for Bank Nifty even now.
Great. Kush Bora, have a great weekend. Thank you so much for joining in today.
You too. You too.
All right, that's Kush Bora with his thoughts and his ideas. Monday morning, he'll give us the weekly calls as well, so keep an eye out for those when we come back. But right now, a very special guest, Aditya Suresh, Managing Director, Head of India Research at Macquarie Capital, joins us right now on the show. Aditya, great having you. As always, thanks for taking the time out. And Aditya, tell me if I got it wrong, but I got a hint that the tone and texture of the note that you recently wrote a day ago seemed a lot more constructive than what you may have been for a better part of this year. Is that fair assessment?
Yeah, good morning, Neeraj. And yes, there has been a shift. And I think, yes, the tone has kind of turned a little bit more positive from our side. Now, just in terms of contextualizing that note again and kind of the framework, just taking you back in time a little bit, was that the concerns which we had going into 25 were around earnings, what is already kind of in expectations, point one. Consumption, as you know, has been kind of really weak. Foreigners have been selling. So these type of aspects, right? And even in terms of the on the supply side, you could see a lot of this kind of primary activity, which is at least in our mind problematic. The domestic liquidity, a lot more is going to these thematic kind of funds. So those are some of the aspects, right? But I think through the year, what has really kind of played out is that we have seen earnings cuts across the board, right? Across sectors, which have kind of come through. So forward expectations at the start of the year too high, and across sectors we've seen that moderation in consensus estimates. Because that what had happened was that from a broader emerging markets perspective, for most of say 25, what we've seen is that typically India's growth premium to emerging markets is about say 500 basis points, like 2 year forward. That had shrunk to basically zero, right? So we're trading at this kind of high multiple despite this no growth premium. Where we are today, Neeraj, and that I guess the main point of the note was that we do feel on a bottom-up basis that this entire kind of process of cuts is largely now done. And therefore, to the extent that India were to actually deliver on, let's say, a mid-teens kind of pace of growth, and some of the other parts of emerging markets are going to see who had seen kind of a big kind of bump up in earnings expectations due to cyclical aspects, that does not kind of play out, then our growth premium starts to re-emerge, which wasn't the case for the past 12 months. And that, I guess, is a specific point which keeps us excited here, or the reason for the pivot. And in turn, I guess the dynamic which we're thinking about is, one is this growth premium starting to re-emerge, point one. And because that foreigners coming back to the market, whether it be because of that growth premium or even if it be just that India as a beta to global markets now say 0.4, right? So maybe it's just as a hedge, we see some inflows as well. And also kind of the other piece on foreign flows that when you think about fund flows to market cap, more as a technical aspect, that's now, whenever you've been at these levels, we've seen a fairly meaningful bounce. So I guess the broad theme, I guess we should be thinking about is that earnings growth coming back and then growth premium kind of starting to re-emerge. Foreigners kind of coming back to India as a market, domestic liquidity remaining supportive. And a combination of those three aspects is the reason for that pivot towards a more optimistic stance on the outlook for India as a market.
It's a dramatic change from when we last spoke, Aditya. Hi, Tamanna here. And, you've entailed the reasons quite clearly. One of the things in your note that really struck is that the base case for the Nifty now shifts to 30,000 at the end of 2026, by the end of 2026. What do you think powers that move, or which are the spaces that you think power that move?
So we don't really call out a specific target here, Tamanna, on any of these indices, but the broader theme was that we're feeling more optimistic that we go towards that kind of level in the next, say, 12 months. In terms of the what gets us there, for us, it's still a very bottom-up driven answer, rather than it being saying that it's going to be driven by, say, financials or consumer discretionary. I don't think it's more than that. I think it's still going to be more bottom-up driven. So when you think about some of the larger companies, we're optimistic on, say, Reliance. We're optimistic on, say, a Bharti Airtel and the outlook there. We're optimistic on, say, an HDFC Bank. And so it is going to be fairly specific bottom-up kind of ideas. But we're feeling more optimistic on the path here incrementally.
Hi, Aditya, Alex here. And I was looking at your note as well. So 152 companies that are in your coverage and 40% beat, 40% miss. So therefore, glass half full is the way that I'm reading it. And you've described that you're more optimistic. But I'm just wondering, you've seen companies on a blended basis miss your revenue estimates. So I'm wondering whether you are shifting your forecast for the second half higher in any pockets. And you've described also the sectors that you anticipate will continue to outperform and those that you think will lag. But on a blended basis, what is your expectation for the second half? And does it move up materially in the next financial year?
Morning, Alex. So I think the broader theme, first to take away, is that when you look at the first half and the prints in itself, when you look at revenue growth for, let's say, MSCI India, which is a broader kind of list of 160 stocks, revenue growth in itself was about, say, 5-6%, right? So if you look at trailing 12 months year on year. Underneath that, you had seen margin erosion. So PAT growth was underneath that 5%, right? So I think the first thing just to acknowledge is that the first half was pretty soft. And that's kind of excluding all these kind of one-off kind of items. The point though, and in response to that weak print in the first half in the past couple of quarters, forward expectations, which I think is a more relevant metric rather than being just the second half. So what we tend to look at quite closely is how rolling 2-year forward expectations are moving across the different sectors. But in response to the kind of weak numbers in the past few quarters, we have seen meaningful cuts to forward expectations across these different sectors. And so the real crux of the kind of the message is that we're feeling more optimistic in terms of where the forward expectations now sit. That wasn't the case, say, 12 months back. And where forward expectations now sit still points to, in an aggregate sense, about a 15% kind of growth for India as a market over the next, say, couple of years, which would be a meaningful premium to emerging markets to the extent that some of these kind of cyclical kind of recovery in earnings does not kind of play out.
Aditya,
So I would still think about the 2-year forward,
Yeah.
not the second half in itself here.
Okay, a 2-year forward. Okay, that brings more clarity. Now, of course, in that report, you've mentioned, buckets of stocks that you find interesting. I want to talk about, and you have the bottom-up best ideas. I want to talk about your rising stars. Tata Communications, Make My Trip, Lemon Tree, LTTS, Delivery, Aditya Birla Capital. What have been the reasons for choosing some of these?
So our bottom-up ideas, again, we call this the Super Sixes. And we have these 3 categories, right? We have a core list of 6 ideas, a tactical list, and then the Rising Stars list. The Rising Stars list is where we think these are stocks which have a credible path towards doubling on a, say 2 to 3 year perspective for fundamental reasons, right? Now, one of the themes, Samana, which you'll kind of see across those 3 buckets is that there is no obvious theme or sector conclusion, right? So it's very specific bottom-up ideas. There is no commonality, if I may, in the investment theses for these companies. So it's very specific and bottom-up, right? So for example, in the case of Make My Trip, it's more about you're dominant in that online travel space. It's a good thematic. There's growth, returns, free cash flow for the platform. And we think the multiple is cheap. So therefore, that's a Make My Trip. That's also kind of a proxy on that entire kind of consumer discretionary thematic as well. Delivery, in contrast, is a very different dynamic, right? So delivery is more about these guys are in third-party logistics. We do think that there is a very strong consolidation opportunity here, which could help deliveries kind of economics. They've already kind of consolidated market share towards about 50% of what goes to third-party logistics, with that further expands. Tata Communications, on the other hand, is a completely different story, right? So that's a story about, so think about this as, this is a digital backbone, right, for our entire kind of India enterprise data kind of story. So when you hear about any data center announcements, so for example, when Brookfield and Reliance speak about their data center project, or Google speaks about the data center project, you need the plumbing, right? And so think of TCOM as the digital plumbing for that entire ecosystem. So whether it be connecting data centers, servicing kind of enterprises with large and growing kind of data requirements, as enterprise kind of expand their footprint as well, all that TCOM is at the intersection of that, right? Plus, they have some other things going on, which I think is really interesting in terms of their cloud business. But again, so just within those 3 stocks, there is no commonality. So specific bottom-up, Tamanna, was kind of the main point.
So that's an interesting point that you highlighted, that there's no one theme. It's very specific. And those, of course, are the bottom-up ideas that Macquarie is talking about. Aditya, thank you so much for giving us the time. Always a pleasure speaking with you, and hope to catch up with you soon.
Speak soon. Thank you.
Yeah. All right. We're talking about companies now in this leg of the show. Thermax in focus after a string of order wins. Before we hear from Ashish Bhandari, Managing Director and CEO of the company, about their order pipeline and outlook, let me get in Anushi, who tracks the company, to set up that conversation.
Hi, morning Tamanna. So for Thermax, what we are looking at is a 580 crore worth of an order win, and this is a particularly comforting one considering that it's a strong H2 that Thermax is now anticipating. But just a bit on this order win, what we are looking at they have secured a 580 crore of order from the Africa side of the business, and this is for a refinery and petrochemical complex in Nigeria. This pertains to with a delivery timeline of around 22 months as well. Do note that the order book position at the end of the second quarter, the order balance stood at about 12,300 crores, while order booking, that's the new orders, were up 6% at 3,551 crore. In terms of the second quarter results, now there was a bit of a weakness. This is for a second quarter that we are seeing for the company, showcasing a revenue downtick of around 5%, while margins were at 7%. But it's the outlook which is interesting, considering that they're expecting a 20% of a growth in terms of where the order book is concerned, and this is based on a strong inquiry pipeline that they have. So what's the kind of inquiry pipeline currently, and how much of that has translated so far is something that we should be asking about. Along with that, execution for the second half is also an important one, considering that they're seeing a bit of a revenue catch up in the third and the fourth quarter onwards, with the legacy issue now behind. So that would be another interesting area to play out for.
All right. Anushri, thanks so much for getting us those details. Ashish Bhandari, Managing Director and Chief Executive Officer of Thermax, joining us to talk about some of these aspects. Mr. Bhandari, thanks so much for taking the time. And we spoke not too long back after the second quarter numbers, and I appreciate that. And I remember quite a bit of what you were talking about in terms of some of those legacy orders ending in the end of this financial year. But specifically on this new order and the picture for the international businesses, how does that look? Does that look materially better compared with what you saw in the first half?
Hi, good morning, and thank you again for having me. Yes, it does look materially better. I've been saying this now for 3 quarters now, that our backlog of large projects is now, in terms of the opportunity pipeline, was looking better and better. It has taken maybe a quarter longer than what I would have expected, but you will see not just this, over the next couple of quarters, more wins as well. And this will be a mix of not just international, domestic as well. And these are all in sectors that are areas that we think are places that align with our strengths, with our capabilities, are limited in terms of, like in this particular example of the Dangote order. This is a repeat order for us. It is for a customer that we know and have worked with extensively. There is no civil, no construction. It is a modularized piece of equipment, high-end engineering, but all delivered out of our factories and our modularization plants.
And the margin profile, Mr. Bhandari, since a large part of the conversation over the last couple of quarters has been about those large orders with the margins being scrimped, what is the margin profile here?
So like I've shared it previously as well, there were a set of orders, especially government orders involving longer periods of execution, things like FGD, the NRL project that we are going through, with significant civil and construction. And those are the kinds of areas that we have been cutting back on. Most of the wins that you're seeing right now are more with the private sector, very well-defined terms and conditions, very well understood delivery periods, limited civil, practically no civil construction supervision. These are things that we know how to do well. The last couple of wins, Q1 and Q2, were both international. In the remaining part of the year, you will see the domestic portion coming back strongly as well.
That's interesting. Mr. Bhandari, hi, good morning. Tamanna here.
Good morning.
You know, when we last spoke, you were very candid that a rough quarter was a rough quarter. That was very well appreciated. Now, the issue with all of the legacy orders, do you see that winding down and resolving in Q3 and Q4? And you also mentioned that domestic orders will take center stage maybe in Q3 and Q4. Can you give us a little more color on that?
I can't give you color. You'll just have to wait. In terms of the orders, in our analyst presentation, this time around, we actually shared the orders where we think, which are these legacy orders that you refer to. They're about 450 to 500 crores of our backlog. About half of it will clear through in Q3 and Q4. Half of that will carry forward to next year. And next year is the last bits of it, and then we are done with it.
Okay, and what is the kind of sort of relief in terms of margins you expect when you're done with it?
Look, I think we've been showing our industrial infra business, which is where a lot of this, in fact, all of this is showing up, and we've, as part of industrial infra, we've got one entity which is large enough, which is called TBWES. We've been sharing TBWES's financials as well separately, and you will see those are significantly accretive to the financials of industrial infra overall. All these new orders that we are getting primarily under TBWES. And so you can use that as a rough rule of thumb. But within industrial infra, which is right now 4 to 5%, I think at least 2 to 3% improvement in profitability is the minimum I think we can expect.
Right. Ashish, good morning. Hiral this side. In the last con call as well, what you'd mentioned is that your large international orders for boilers from the Middle East were likely to flow in the second half of FY26. So your current order from Africa, what does that take you to in terms of the international market pipeline? And the recent large order from Dangote as well, what does that mean when you want to scale up your international business? And the impact you see on margins, how margin accretive will these international orders be?
See, the international orders are accretive to the business, plain and simple. They come with significant execution. In this particular case, the customer, if I may just take a step back, Dangote and Mr. Dangote is building the world's largest refinery in Africa. The first half of it resulted in what was at that time Thermax's single biggest order. It was north of $150 million. He's looking to repeat what was the first part of the refinery again. And in addition, there's a large fertilizer plant also that is envisioned. What we have received is just the first part of this project. There is a lot more to come as an opportunity pipeline. Of course, it will be competitive. The customer is somebody that we are working extremely closely with on multiple counts. Even beyond this, the international pipeline, as we continue to break into Middle East oil and gas companies and get qualified and increase our capability in pipeline, continues to improve. It won't be like suddenly a big thing shows up. It'll be staccato, but with each year, our capability to address that market gets better and better.
Okay. And Ashish, in terms of the projects that I spoke about that were supposed to come in the second half, have they been on time? Or is there any delay that has come in on the industrial infra side? What's the progress? And number two, the order book that you're picking up in terms of data centers, refineries, and the petrochem business.
So has there been a delay? Overall, I said when we started the year also that we had a big backlog. In fact, I've been saying it from Q4 of last year. So I would say there is a quarter's delay. Nothing that has moved out like for several years, and we had one loss, but that was all because of price, and we didn't want to lower our prices, and very, very, very determined on making sure that we do business that is accretive. And so with that, I would say, and of the questions that you asked, refinery and petrochemical, Q1 and Q2 are both refinery, petrochemical wins. Data centers, we have had some small wins. Data centers will not be large, and we won't report them. Both domestic and internationally, we have a reasonable pipeline of data centers that we continue to get success from.
Mr. Bhandari, I completely take that if you've not disclosed to the street or to the exchanges specific order wins, you cannot give us details on that. But directionally, where do you anticipate that you will end the year in terms of order book and the mix of export versus domestic?
I think both would be good. Yeah, the order book growth, very confident of. And you can see Q1 and Q2, it looks like we didn't grow as much. But last year in Q2, we had a single 1,000 crore order. And in Q3 last year, which was our weakest order year, we had order book, we had 2,300 only, and Q4 wasn't that great either. So Q3 and Q4, you will see substantial strength in our order book, which then will start to get the revenue number to start going up as well. In terms of export and domestic, right now looks like on the project side and even otherwise, the export percentage is higher, but Q3 and Q4, we have a very strong domestic pipeline as well. So I won't comment on the export and domestic mix. I expect both to be good.
Mr. Bhandari, you talked about data centers. I'm just wondering, as a revenue source and as a vertical, what is the growth that you see in data centers for you?
It's look, we're starting from a very low base. Yeah, it wasn't an area that is. And in terms of the three sets of products that apply out here, domestically, our cooling solutions and our water solutions are the ones that are relevant for data centers in India. Internationally, some of the boiler and the power portion also comes into play. When we have something distinct to share and report, we'll come back. Yeah, but right now, I would say reasonable pipeline. And again, here, there is a domestic pipeline and an international pipeline, both of which offer interesting opportunities. I hope before the end of the year, we'll share some interesting bits on the data center side.
And we look forward to that conversation as well, as we did today. Mr. Bhandari, thanks as always for taking the time, and we appreciate the candor that you share with us.
Thank you.
All right. We're bringing you a lot of corporate action this Friday morning. And we've got Kaynes Technology that we're talking about next. The company has reaffirmed its FY26 outlook. And its outlook essentially is for a 60% revenue growth, while it's also signaling that it could hit its $1 billion milestone ahead of FY28. Puneet is here to talk about some of those key numbers, and then we'll talk to the management about why they are so bullish about the future. Puneet, what should we focus on?
Well, as you likely said, Alex, these are a couple of key points. 60% growth reaffirmed. While there was, for FY26, of course, there was a little doubt that the company will be able to do it. They've reaffirmed that they will be able to do it. The other new update that's come in is the $1 billion target could be achieved much earlier than the FY28 target in terms of revenues. That's going to be the other key thing. What's the management looking at and giving them that confidence? And the third key thing will, of course, be in terms of ECMS. They have already gotten approvals for some projects. What is the revenue potential from that? And also, what are the further approvals in the second round that they are expecting and they have applied for will be the three key things I'll be watching out from this conversation.
Let's begin. Jairam P. Sampa joining in, whole-time director and CFO at Kaynes Technology. Mr. Sampa, thank you so much for your time to us here at NDTV Profit. I would say that some of the statements made at your investor presentation actually stirred up a lot of conversation because of the size of the ambition. What we're trying to understand in this conversation is how much there is to back that optimism. So let me begin with what you have targeted for your OSAT plant. 100 crores in FY26 and 1,000 crores in 27. How is that going to happen?
Yeah, good morning to you all. Thank you for having me. The size of the ambition is essentially the size of the goal that you're talking about. Ambition is beyond these numbers that we talk about. In a journey, what happens is that when we are a little far away from the goal, we make an estimate, and then when we come closer, then we reaffirm saying that, yeah, these are the things that are going to happen. So what gives us confidence in at least semiconductor is that we have three major international clients already tied up. And we have many more once the plant gets fully operational. We have many more who have promised to come and take a look at the plant and then, of course, give us some more business and so on. Also, I think we were the first to ship out the assembled chipset from India. So that also given us a bit of a, let's say, a lead in the entire race, if it were, as it were. And in addition to that, our plant is also coming up. The pilot plant is ready in semiconductors. The main plant probably this year will get completed. And technically, things are working. We have people on board. Customers are there. So we just have to put a little bit of effort to make sure that our ambitious targets of next year and the year after next get done.
It's doable from what you're describing. This includes the target or the statement that the $1 billion revenue goal will be achieved earlier than planned?
Yeah, so on a 12-month trailing basis, somewhere during FY28, we will achieve this number, obviously. And if everything goes right and if the environment is not too volatile and something major doesn't happen, then I think we are posting towards this $1 billion mark, which is like a 9,000 crore number in FY28, which includes all the three businesses. And the two new businesses will probably bulk of their capexes will be done, and then we probably have a reasonable number of clients also onboarded. So whenever we do new clients, what ends up happening is that a lot of effort goes in, and then we cannot really, it's not a linear progression to the finish line. But we are quite confident that with the kind of traction that we have, we will end up at these numbers that we have estimated earlier on.
Okay. You talked about if everything goes right. Mr. Sampath, is incumbent that I ask you that in your own calculations, what are the factors that could go wrong that you're planning for?
Yeah, when I say if everything goes right, essentially I'm talking about non-company related parameters.
Yeah, I mean, obviously environmental, like what? What could be the possible headwinds?
Yeah, see, one of the possible things is that this tariff and these kinds of things and those kinds of issues that come in, and also if which is unlikely, but those are some of the things that keep happening. And then also from what we see now, the economy seems to be picking up and a lot of activity seems to be happening. And we think that should also sustain, because many of the supply chain changes, etc., happen on the back of political realignments and also economic assessments by some of these OEMs, etc. So I am only referring to these three factors, which may contribute towards dampening any such demand of anything that you are trying to do new. As you know, so semiconductor supply chain is a new supply chain that we are building up. As of now, all the things are positive. All the major OEMs, other than, of course, China, all the other countries, they are looking at India as a big source. And we see a lot of, not only in semiconductor, but in other electronics too. So if this continues and if nothing goes wrong there, I think we are in for a good, let's say, strong growth in new areas and as well as existing areas for next 5 to 10 years time.
Okay, Mr. Sampath, good morning. Alex here. And so you've painted what I think is a very optimistic picture. And there's no reason for you to not be optimistic, the direction where this country and your company is going. But I want to understand, you've talked about the top line. I want to understand about the margin profile, because you're both backward integrating as well as improving your mix and you're moving up the value chain in certain pockets, right? So what are the implications for the return, for the margin profile? Where does it go, and explain the trajectory? So one would assume that this is a journey, as you've pointed out. Talk about the second half and then heading into next year.
Yeah. Absolutely. Good morning, Alex. And see, fundamentally, this margin is a result of blend of business and also the onboarding of new customers and so on. So in the same area too, there are different customers with different margin profiles, etc. In our assessment, based on our order book as well as whatever we are expecting to get in the marketplace, we think that the margin profile is likely to be stable and probably it will keep increasing on the consolidated basis, maybe 30-40 basis points each year. And if you are lucky, then maybe a little larger too. So we are quite confident that margin profile, because of the actions that we have taken and because of the blend of customers that we are getting, and also the newer businesses like the semicon and the PC board, they are margin accretive. So from that perspective, we can be confident about the margins going up over the next, let's say, 5 years time frame.
But forgive me for being a stick in the mud, but I would like to push you to give us a range, if at all you can give us. And I don't doubt at all that it can go up. Yeah.
I can. So, as of H1, we were at about 16.3% in terms of EBITDA, and then that would probably be sustained, if not bettered, this year. And in the next year, when at least some significant amount of business, maybe 15 to 20% comes from newer businesses, that will go up correspondingly, let's say about 100 basis points or so. And post that, it depends on how well we execute the new projects, so that in new projects also there are clients which can be onboarded with a better margin profile, especially in the advanced arena. So next year about 1%, and thereafter maybe about 50 basis points you can expect increases for the next, let's say, 2-3 years time frame. What happens at the end of it is that once the margin goes up, then we also incur costs and all that, and so they may be deleveraged in operations. So between 16 to 18%, the margins will go up and down.
Understood. And thank you for that. Mr. Sampath, I do want to also ask you about the efforts that you are undertaking on your working capital. I believe the direction is that you're bringing it dramatically lower. What is the guidance for the second half, and what are the implications on the efficiency of your capital management?
Yeah, so working capital is a moving target. So what happens is there would be some environmental things, there will be something related to business which causes these working capital plans to go awry sometimes. And we think that we can bring it back under control, maybe less than 80 days this year, due to some specific business-related reasons. And coming years, maybe we can probably target a little lower, between 80 and 70 days. And we think that beyond that, of course, we need to do improvements, but they will come in smaller chunks. So less than 80 days this year, and between 70 and 80 days for the coming fiscal, let's say FY27.
Jairam, good morning. Hira this side. I'll take that question from working capital forward with impact on the operating cash flow. Confident that the company will become cash flow positive, and this is without continually straining your working capital, because your order book is really large when it comes to execution. So if you have to look at executing a large order book without straining your working capital and then becoming cash flow positive, how is that dynamics going to look like? Because you have large government-like projects like smart meters as well.
Yeah. So just an overall comment, we have a healthy business profile. We have cash coming in. It's just that last year we probably did not have too much of positive cash flows on our operating cash flows on our P&L. But this year we would probably end up doing this. And this year it will be significantly positive cash flow, maybe 100 crores plus of OCF is likely to be generated. So we have to make a choice between looking picture perfect and harnessing the growth. So we have chosen the latter, that is harnessing the growth, because right now next 5 years time frame, 5 to 10 years time frame is maximum that Indian companies have to grow and then take it to scale beyond, say, $1 or $2 billion, right? And so obviously the overarching goal, or if we were to kind of rack and stack the goal, the first goal is to grow profitably with good clients and in areas which are high tech. And then, of course, closely followed by improvement of efficiencies, so that we can put in some reasonable amount of OCF in our financials. So you can expect this year, of course, positive cash flows, so maybe more than 100 crores or so. And the coming year, of course, this number will increase. Our eventual target is at least 50% of operating cash flows are generated, so that they can be reinvested into business to create capacities. As you know, growth has to be funded. So in the EMS sector, we think that we have enough of traction to make sure that we don't have to put in some more money from outside for achieving this 40-50% kind of growth in the EMS sector.
So, Jairam, an important point you made over here is that growth needs to be funded, and some portion of that funding needs to come in from the government side as well in the form of subsidy, right?
Yes.
If you have to look at your total capex very high in terms of FY26 to 29, what is the clear timeline that you have when it comes to the government subsidy disbursement? Because it's almost about 40 to 50% of your capex is going to come in from the government. And how will this phased funding be synchronized with this operational ramp up that you're talking about?
Yeah, so we have done this math. We have laid out a detailed plan now that we are very close to execution of the new projects. So we are a little more clear about the unit economics, and we are a little more clear about when we are going to get customers onboarded, how much business is going to come. So what our assessment is that we have given sufficient buffers for any of these government subsidies if there are some marginal delays, And we also have lines of credit from the banks ready with us, sanctions ready with us in case we require. But our preference would be to generate cash. So once we start doing business, let's say 40-50% capacity utilization, the new businesses, we'll start generating cash there too. And so and we also have raised some funds in the marketplace. QIP1 is there, QIP2 is there. So we think that this is not a big concern actually as far as execution of the capex with the monies that we have on access is concerned, and it's not going to in any way affect our existing businesses, which is the EMS business. So we have taken sufficient care to make sure that there is insulation of or rather appropriate usage of these capital monies that we have raised for different capexes and so on. And our experience with whatever government subsidies so far under the new schemes, for the sunrise sectors, it has been positive. And we have not seen any delays from the side of the government so far.
So that's a positive. Just one very last and quick question. I have to ask about the space tech business because that truly sounds fascinating. Dummy satellite in 2026 May and operational satellite in December 2026. This is on track?
Yeah, I think it is on track. Hopefully we would, these are adjacent technologies and we have some other ambition also. It's not just the satellite that we want to build. We want to do other things, which may include things like drones and all that. So hopefully we'll get there. See, these beginnings have to be made now if you are to become a big player in these kinds of areas in a couple of years time frame. So our focus is, like I said, our focus is to get to harness the growth that's already available in the economy and make sure that we get into good clients, high-tech areas, and profitable, let's say, businesses. And then, of course, a little bit straining of resources is expected, but we don't think that's going to affect our day-to-day working of existing businesses.
Okay, thank you so much, Mr. Sampath, for that extensive conversation with us. And, we'd love to come and shoot at your manufacturing facility if that's ever possible, because we love showing people what actually happens. To come. Great,
sure.
Great. We'll definitely set that up. Kaynes Tech, there in that extensive conversation. We'll take a very short break, but you don't want to miss what's on the other side. We have a blockbuster Friday, at least on India Market Open. CLSA's Vikas Kumar Jain speaking about his India strategy when we come back.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first. Right. You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from.
Turning out to be a good Friday, at least for the primary markets, even though the markets have recovered to some extent, not as dull as when we started. So the Pharma's had a good listing. Remember, this was an issue which was subscribed 93 times, a 24% pop on listing. It's a manufacturer of pharma ingredients, food grade minerals and nutritional ingredients as well. And it has had a decent listing this morning. So this was one to watch out for as well. The primary market train continues unabated no matter what's happening in the secondary market. But has the mood really changed for the secondary market as well? Has the outlook changed? Our FII is going to have a change of heart. Vikash Kumar Jain, Managing Director, Head of Research and India Strategist at CLSA India, speaking to us on all of that and more. Vikas, great to have you on NDTV Profit. Welcome as always. Let's begin by saying if you are also seeing a change in mood as far as Indian markets are concerned in 2026 versus what has relatively been quite a dismal 2025.
Thanks for having me. So yes, you're right that there is some change of mood and there are some reasons for that change of mood. Let's just take a step back and look at what happened in 2025. And in 2025, Indian markets in terms of the perception game took quite a hit. I mean, particularly in the second half of 2025, for the simple reason that initially, of course, 2025 started with the worries around what will happen with President Trump coming in and the tariffs. Even as early as late April, there was hopes, and these hopes come from commentary from people from the US administration and President Trump's administration, the most senior people over there, that India would be the first one to sign a trade deal. From that point onwards to now, India looks like India could be amongst the last few countries to sign a trade deal. So that was a big relegation. There is now a period that China possibly has lower tariffs than India. And in the interim, there was, of course, the sudden geopolitical worry which came in. All of this happening in the middle of a global AI bull run, where India was not at the forefront of AI discussions. So the theme of the bull run, the global bull run, it's been a very powerful global bull run. In fact, we'd look at some 20 to 25 top large markets in the world. These make up nearly a large part of global equity market capitalization. If we were to take a count right now, then the percentage of markets that have made a record high in this calendar year is the highest in this century, almost equal to what we last saw in 2007. So it's been a roaring global bull market on the back of an AI. India did not really offer much onto that. Yeah. Our valuations were uniquely expensive when we started the year. So a lot of complaints. What happens from here on is many of those complaints have got addressed. They have got addressed by the passage of time, if I may call it so, because global markets have rallied. Indian markets haven't really done much. We celebrated a new high yesterday, which basically meant that in 13 months, we are back to where we were 13 months ago. So that is essentially what it means, is that we've had our derating. And the underperformance that we have seen during this period, where global markets rallied, in fact, our underperformance was the highest on record in this century versus EM versus Asia X. Incidentally, the side effects of all of that was that our relative valuations have become much better. And with passage of time, many of those those bad headlines have got digested, and there is hopes of better headlines. The Indian policymakers themselves have pushed in the positive effects of of the initial income tax cut, then the interest rate cuts plus the GST cuts. So all of that have been the incremental positives. So some positives to look forward to. Headlines improving, relative valuations becoming more palatable, basically makes the long list of complaints against India a shorter one. And that is where interest is slowly coming back.
Long list against India, shorter one. I think that's an interesting way to put it. Is one of the things on the list, and I don't know if it's a complaint or not, depends on how you look at it, is that this is the non-AI trade. India is the non-AI trade. I don't know how convincing you find that argument.
I mean, see, I would not. So there are ways in which people want to put it. Some of those ways are the ways to catch attention. Some people can call it non-AI trade. Some people can call it anti-AI trade. You know, honestly, if I were to be a more accurate description of that, would be a trade where you reduce your portfolio factor risk of AI. Let me explain that. All the best markets of the world, where people would be involved, where we see highest of momentum, the US, China, Korea, less so Taiwan now, but even Taiwan, a large part, all of them are actually markets where we see the bullish factor comes from AI. So if you own all of those, the factor risk in your portfolio from AI is very high. Now, if you want to hedge against that factor risk and you want to bring in other areas to balance the risk in the portfolio, that's where I think India could stand out very clearly as the most promising story, not depending on AI for its growth itself. I would not call it an anti-AI market or a non-AI market per se. It's just that I would still believe that in the longer term, India could be, the beneficiaries of AIs would be the ones who adopt it in the right spirit and to gain out of it. When you have a relatively young population, average age of well under 30, then essentially the ability to adopt to new technology is always very high. We've shown that with our digital payment adoption. We've shown that with our 4G, 5G adoption. So eventually in the medium term, I do believe that India will find ways to gain from AI. But in this period of, attempting to test and in that process put in a lot of money, of course, Indian enterprises and Indian, policy, Indian finances do not allow you to put in $1 trillion just to try something out. So when there is a clearer case of a use case of AI in terms of the way a broader adoption could come in, I think that's the point where India can come in and adopt very quickly. India has been great at adopting, great at cloning things and making it work, tailor-make to its own use. I think at that point of time, I really don't think that India has lost the AI battle to call it a non-AI trade or an anti-AI trade. But yes, it doesn't really have the immediate AI options to kind of fuel the global AI-based rally.
Vikash, good morning. Point well made. Alex here. I want to ask about earnings. And I was looking at your report, and the fact is that a significant number of companies did beat on expectations, but several didn't as well. And I see the point that you've made on the PBT, right? If you remove Tata Motors from the equation, then there would be a beat on the PBT on a blended basis. I'm just wondering whether this bodes well for the second half, particularly because there would have been in some manufacturing pockets some implications of the disruption on account of GST 2.0. Does it look materially better than you thought at the start of the year in the second half?
So Alex, there are two parts. That's why, the way I put it was complaints reducing. There is another report that I did just following that report where we talked about how consensus estimates have moved. And to my surprise, for large caps other than Nifty and for mid caps, there were upgrades during the quarter. Even I did not expect that. Small caps have continued to see downgrades. This is for consensus overall. I'm talking about the breakup of NSE 500 stocks. And overall, the top 100 stocks have seen an upgrade and the mid caps have seen an upgrade. It's the small caps which have seen a downgrade. Now, using that as a read through, I am still not convinced that I can extrapolate that to a point that we should see further upgrades in estimates, for the simple reason that when I look at current expectations of mid caps and small caps, in terms of earnings growth, that is somewhere between 23 and 24% EPS CAGR expected over the next 2 years. At a time when nominal GDP is growing by, struggling to go by even more than 9%, because of relatively lower inflation. And mind you, earnings are not real, they are nominal. To get to that will require far higher revenue growth, clearly double-digit plus revenue growth to get to those kinds of earnings numbers. I still do not get the confidence to call for further upgrades to those estimates, and that's why it's been a good quarter. There is hopes that the October-December period should be a good one due to the GST cut. But does that give me? I am still not finding myself in a position to call for a large upgrade cycles in earnings, because earnings are still quite elevated in my. So the large cap earnings have got more reasonable. Their expectation is more like 10-11% growth over the 2-year period on FY27 over 25.
Yeah.
So that's where I see more reasonableness. So all that I'm saying is that the way to look at it is that we had a long period of downgrades. That period looks like has largely behind us, and we are at a point where things look a bit more manageable in terms of earnings estimates.
Okay. Vikash, I wonder what you think about this India relative to the globe and the several markets that have outperformed. There has been significant concentration, right? And we've not seen that in our markets here, despite the fact that large caps of late have outperformed. I'm wondering what you think. Is it going to be broad-based, if at all we see a gain from this point or a rally from this point? And I know, I take your point on the revenue side, right? 6.8% is what the companies that you track delivered, and you were expecting 8.8%, so it's an underperformance. And so even if inflation picks up next year and nominal picks up as a result, we're not going to see tremendous earnings growth. But do you think it's going to be a broad-based gain, if at all?
Well, I think, there are segments of the market, and in particular small caps in general, where earnings have continued to see downgrades, but multiples and premium versus Nifty has continued to kind of stay expensive, and it's still well above, it's nearly at +2 standard deviation to historical average premium. So, and delivery has continued to lag. So just to kind of a simple example to say that is, when I look at estimates, the distribution of estimates, since you talk of how broad-based the rally could be, small cap estimates for FY25 to 27 earnings growth, more than 50%, almost 55% of companies are expected to grow earnings at over 20% EPS CAGR. If I were to compare that to trailing 12-month delivery of earnings, only 1/3, that's more closer to 33% earning companies have actually delivered 20% plus EPS CAGR. So there is a gaping hole when you compare the expectation versus what actual delivery has been. So I want to be careful that I do not see this as broad-based. You need to basically be careful in picking stocks where expectations are not out of whack. I think that's something which remains, and there are still quite a few sections of the market where I do see that as the case. So, and I do not really expect a big absolute upside of say 15-20% in the market, because that we've already come to a 21x multiple. It's more that negatives are lesser. We see some kind of an upside possible if the global bull market continues. And for people who believe, and all of this doesn't really create any worries on the longer term India growth story. So people who want to focus on that longer term should come back to stock picking.
Okay, so stock picking should be the key from here on. Vikash, good morning. Hira on this side. Interesting point that you made, that you have to identify a couple of pockets that will show growth. Now, you do have the India Bull Bear Index, which is CLSA's proprietary. What is that telling you about, one, the investor sentiment, and two, if you have to tie that up with stock picking, sector picking that you're alluding to, that combination, what is that leading you to right now?
Okay, so the proprietary India Bull Bear Index has been made in a manner that it is useful only once or twice in a year at max, because I track sentiment on it, And how you should think about sentiment is you should worry about sentiment only when one side of the sentiment becomes consensus, like everyone gets bullish or everyone gets bearish. If the market is divided, then sentiment is not something which gives you a very clear, useful signal. So that index gave us an extreme bearish signal, which means a contra buy signal at the end of September. And that's when we turned more positive, and in our reports we started calling out for a potential new high in the before the end the calendar year, which luckily played out yesterday. But we've had a good 7-8% rally from that point of time, and the index is now neutral, so it's not giving any incremental signals. So we are not really at any extreme sentiment. But see, that index is an overall view on the market, and when you take an overall view on the market, there's always an influence of large cap stocks which would be there. But in terms of sectors, we need to try and do a little bit of crystal gazing, where of course that's always fraught with dangers. But if I back myself on how I see the next year to be, then the key areas that we would want to focus on.
So Vikash, to add to that, key sectors that you're placing your bets on right now, because you've recently made consumption and rate sensitive stocks a tactical preference. To add to that, the investment capex cycle coming in as well. So top 3 sectors that you would advise investors to look at from here on.
So you yourself mentioned the one that you missed. Let me start with that.
Okay.
We expect the headlines to turn positive with a potential deal with the US as well as EU. That India-US relationship headlines turning positive, and recently we've also seen President Trump get a little easy on H-1B visa and acknowledging that there's a requirement for that, in certain places, should be positive for IT in our opinion, which has been a sector where we have an out of consensus overweight. So we are playing a few themes. First, India-US related and trade related headlines improving. IT is a sentiment trade on that. Secondly, at the same point of time, we believe that any incremental push from policymakers is likely to be monetary, very unlikely to be fiscal, which means that easier rate environment could very well continue. And that is where we are trying to play rate sensitives for. Third is we could sometime in 2026 get to a point where policymakers have believed that they have done enough through income tax cut, GST cut, rate cuts, and more rate cuts coming. Then all of that should flow in its stronger consumption numbers. And that is the other area that we are looking to kind of be positive on. So those would be the areas where we would want to place our bets.
So much, Vikash, for speaking with us. That's Managing Director and Head of Research, India Equity at CLSA India. And, all said and done, I think one big takeaway from there is that the mood has shifted. Two statements come to mind. One is that, yes, we all cheered the all-time high on the Nifty, but basically it's back to where you were 14 months ago. And the second is that the list of complaints against India from an FII perspective have shortened. The fact is that as far as domestic investors are concerned, who fueled us for the last 14 months in terms of the Indian markets, those list of complaints are very less. I mean, it's a time to look Swadeshi because that's what's happening in the world. I don't know if you've seen this, guys, but look at what President Trump has posted on Truth Social. And we'll just put that out for you. I'm going to read parts of it. So we'll give you the key highlights of it. Saying, even as we progressed technologically, immigration policy has eroded those gains and living conditions for many. I will permanently pause migration from all third world countries to allow the US system to fully recover, terminate all the millions of Biden illegal admissions, including those signed by sleepy Joe Biden's auto pen, and remove anyone who is not a net asset to the United States or is incapable of loving our country, and all federal benefits and subsidies to non-citizens of our country, denaturalize migrants who undermine domestic tranquility, and deport any foreign national who is a public charge, security risk, or non-compatible with Western civilization. These goals will be pursued with the aim of achieving a major reduction in illegal and disruptive populations. Quite a stunning statement coming in there. Let's see if we can get the the next plate on, because there's more to go. It's not ending over here. Because he goes on to say in the end, only reverse migration. It's not just about stopping new people. Only reverse migration can fully cure this situation. Other than that, happy Thanksgiving to all, except those that hate, steal, murder and destroy everything that America stands for you. You won't be here for long. I mean, okay. So two things. One is, what is a third world country? What is those who do not adhere to Western civilization?
So this is actually a continuation of certain statements have been made by senators and or other people from his party, and frankly there's been debates as idiotic as, do you eat with a fork and a spoon? If you don't eat with a fork and a spoon in this country, then you're not American. If you eat with your hands. And the funny thing is, the senator that was saying all of this, his wife is a D'Souza whose family is from India, and who
once you have that from across the world, those who have naturalized there, then consider those from their origin country as additions. I mean, I don't know how much of this can get enshrined into law and actually be put out there, but the fact is that when the tallest leader speaks like that, then it gives a message to the rest. So that's a bit of,
I think it's political as well. Yeah, it's very clear.
No, it's absolutely political. It's pandering to the base, but then the base gets emboldened to act on this. Then there is no law in place. So that becomes an iffy one. All right, let's take a quick look at the markets. We had that interesting chat with Vikas Jain of CLSA. Nifty is just middling along. Making it to lunchtime at this point, as far as the Nifty is concerned. Completely flat, nothing major happening over there. The Bank Nifty and Nifty IT have dipped mildly into the red. I would say if you pull up the advanced decline ratio, you won't see anything which is too alarming at the very least. Look at that. It's neck and neck through most of the day. What's not working? Capital market stocks seem to have slid to some extent. So are oil and gas stocks. So there's a little bit of pain coming in over there. On the upside, is there any kind of relief coming in? Well, a Nifty Auto. Nifty Auto actually moving sharply. Let's pull up some of the constituents of the Nifty Auto, about 0.5% up. So auto stocks might be in focus in some time. M&M there, up and center. All right, it's also the morning for upgrades. So Goldman Sachs on Paytm, they've upgraded 197 to a buy with a target price of 1,570. It's been upgraded from a neutral, and that target price has been hiked from 705. So a sharp one there. That's why you're seeing that 3% bump up in the stock. What's the reason? They say EBITDA margins to more than double over the next 3 to 4 years. Paytm's cost control has been a big positive surprise, and they see further recovery in market share. But they're not the only one. Lenskart has had a buy initiation today as well. Yeah, absolutely. And it's Jefferies that initiated that buy call. And the brokerage essentially talking about the fact that the market share that the company currently has is not very large. It's in single digits. And so therefore, the potential to grow is quite significant. Let's bring in Soumya to tell you about what exactly they're saying about the company scaling that omni-channel model. Soumya, what are they saying?
Well, they have initiated this coverage with a buy rating and target price of 500. Now, the brokerage here is quite bullish on the company. They say that Lenskart is India's largest tech-driven eyewear retailer and holds just 5% market share, which offers a strong growth potential going forward, given the fact that the total addressable market in India is quite large. It says that its vertically integrated omni-channel model ensures cost efficiency, rapid delivery and superior customer experience, something that stands out for Lenskart compared to other eyewear retailers. They say that the India business serves as the strong rock bed for the company, given the fact that 85% of its EBITDA contribution comes in from the Indian operations. Strong cash flow generation also happens from the Indian operations as per the brokerage, and the international segment will offer a good growth optionality going forward as per the brokerage. Now they're saying that the unit economics are quite attractive for Lenskart, and there is fast payback period also, and this should drive a 50% adjusted EBITDA CAGR over FY25 to FY28 for the company. And when it comes to the earnings per share, they're expecting the EPS growth to be close to 44% over the same time period, The balance sheet will be net cash. There won't be much debt despite the expansion plans of the company, and given they're also expecting the company's return ratios to grow and free cash flow also to increase going forward.
Thank you for that, Samit. We've been talking about defense stocks in focus and HAL among them after the very unfortunate crash of the Tejas, and I thought it was important to play up this bite. You're seeing a small spike in the stock after the statement coming in at the National Security Summit from the CMD of Hindustan Aeronautics, Dr. D.K. Sunil. Here is what he's saying. He's saying there's absolutely no problem with the Tejas.
There's absolutely no problem with the Tejas. Let me declare it from this forum. There is no problem with the Tejas. It's a wonderful aircraft, and it is absolutely safe, and its safety record is the best in the world. We've had a couple of them, and what you saw in Dubai was an unfortunate incident. I think as countries evolve and develop their own technologies, they go through phases. And today we've made this 4.5 generation aircraft with the latest capability. It's a resounding success, and we should all be proud of it. So I think there will always be naysayers who are talking about this and raising questions, but it will not deter us from going from strength to strength. So I can assure you that it's an absolutely safe aircraft, and there is no question that it will have any impact on the future of Tejas. We have an order for 180, and I'm sure it will go up, and we will definitely even have an export market for this.
All right, so very reassuring words coming there from the HAL Chairman and Managing Director, and that's a fact. Tejas does have a stellar reputation, and sometimes these things happen. It's only that when they're so rare and they're so dramatic and so unfortunate that it also becomes a top
first time in 20 years where they face something like that.
Well, nevertheless, this is all the time we have on the show from everyone here and everyone behind the scenes. Thank you so much for watching India Market Open. We'll be right back with Ask Profit.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first. Correct. You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101, go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education, my mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her.
No.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
Hello and welcome. We're watching Ask Profit right here on NDTV Profit. My name is Puneet Zaveri. With me is Anushi Vakharia, and over the next hour or so, we'll try and solve all your stock-related queries. So do start sending them on the number that's flashing on the top of your screen. That's the WhatsApp number. You can also call us, talk to us directly, and give us what your query is, and we'll try solving it with our guests as well. But before we do that and a lot more, let's first look at how the markets are doing, because we did hit the all-time high yesterday. Was a key level that we had been evading for the last 14 months to say the least. But currently, at least in the green, the implied open did indicate a 20 to 30 point open at the start of the trading session. We've continued to maintain that, some buying seen in the last 15 odd minutes, but largely positive. When you look at the Nifty 50 heat map, it'll give you a perspective of some of the big gainers. I think Mahindra & Mahindra continues to be the biggest Nifty gainer. We were at the launch yesterday of the 9S, all variants priced under 30 lakhs this time. So market positively taking that. Adani Enterprises also now become the gainer, and it's the biggest one of the Nifty in the top two right now, up almost 2%. Hindalco, Kotak Mahindra Bank, and Reliance, some of the other big gainers. On the losers though, just some on Power Grid, something like an NTPC also dragging the index down, but largely a positive. We are very neck and neck around almost 25 stocks in the Nifty in the green, so in the red as well. When you look at the advanced decline ratio, it gives you a perspective of what's happening in the broader markets. We have been speaking about it relentlessly, that a lot of investors are sending us the queries and mentioning that while the Nifty has hit an all-time high, their portfolio is not doing so, and that's largely because of what you see on the screen right now. The broader markets, mid-cap and small caps, and the higher concentration of retail investors there is not performing as well as the large cap peers, and you're seeing the divergence there. But Anushi, amongst the key individual names, there are a lot of movers on the back of news flow, a lot more on the brokerage side as well.
Right, so what's been happening is that while the benchmarks continue to do relatively well, broader markets have been under that pressure. It's a mixed picture that we are looking at that, and that's what we are seeing with regards to where the mid-cap 150 is currently. We are looking at flattish moves, but in red is what we are seeing for mid-cap 150, while small-cap 250, deeper cuts over here, about 0.1% or odd. So let's pull up BSE 500 to get a sense in terms of which are the stocks which are in action today. Right here at the top, Poonawalla FinCorp makes it to the top. 4% is the kind of an up move that we are seeing. Along with that, we have something like a KSB and 5-star Business Finance also in focus. 4% of an uptick for there as well. Eureka Forbes, now that is buzzing on the back of the key takeaways about them reanalyzing about their guidance as well. So it's 4% of an uptick is what we are seeing for that. While what's not doing so well is something like a Gail. 6% is the kind of downtick that we are seeing. Along with that, KIOCL and Credit Access also under pressure. But that's on the markets that we are seeing. But with that, let me also welcome in our guest who's will be joining and taking all the stock queries today. Sameer Dalal of Natwarlal and Stan Stockbrokers joining. Along with him, we also have Gaurav Bisa, Senior Vice President of Incred Equities also. Thank you, gentlemen. Thank you so much for taking out the time. I'll start off with the first question now. So if you just look at the first query, now this is Sunil writing to us from Noida. He has about 35 shares of SKF India at a price of 1,305. Wants to understand whether to hold or continue to add for a long term. So, Samir, let me come to you on this one. What's your view with regards to SKF India?
So I think you can continue to hold on to SKF India. Look, the Apex industry, auto industry, all of them are going to keep growing, which means that the bearings business is going to keep gaining traction. The stock's valuations are not very expensive if you look at it. Actually, it's closer to, if I'm not mistaken, 13 or 14 times trailing earnings and maybe about 12 times forward earnings. We believe the opportunity still remains good. One can even add on at these levels. This is one of the few stocks which is available at a decent valuation multiple at this point of time.
Got that view, Samir. But we have another stock query now on GMDC. And our viewer, Venkat Konani from Andhra Pradesh, has been holding roughly 5,000 shares at 430. He is in the profit right now of almost 5 lakh rupees. So good on you, Venkat. He's asking what he should do. He can hold for the next 3 to 6 months. Gaurav, welcome to the show. What would you recommend on GMDC?
Good morning. So GMDC for one has been a very strong outperformer, and right now what we are seeing is even when the markets have not been that kind, GMDC has been holding ground quite well. It's made a small retest on deal in the weekly chart. So in my opinion, the gentleman can hold and it can again make a dash towards first lifetime high.
Okay, so that's with regards to GMDC is what we are seeing. But quickly moving to the next one, Sushila Billari is writing to us about Bharat Seeds. She holds about 373 shares at a price of 232. Wants to understand the short-term targets on this. Gaurav, your view?
So if you look at on a very immediate perspective, I think it's going to be some more of a time correction as such. So either you move out from this particular stock to something that can move a bit more, a bit faster, or rather you increase your horizon. So at the current juncture, I think the time correction will continue a bit more.
Got the view, Gaurav. But let's quickly pull up something like something that listed today on the exchanges. Sudeep Pharma, and look at what that stock is doing, because it has been a strong IPO to say the least, almost 28% returns giving as of now, and a key one to say the least, because amongst the bigger names that came through to the primary markets over the last couple of months, something like a Lenskart, Pine Labs, amongst others, this one has actually been a silent mover, and all those who participated did get that benefit as well. The company largely manufactures pharma excipients, food grade minerals, and specialty nutrition ingredients as well. But let's quickly hear in the conversation that my colleague Varsha had with Sujit Jaisukh Bhayani, and he was speaking about the margin picture, as well as now that the company is listed, what could be the revenue potential as well. Let's quickly listen into what he had to say.
From a growth perspective, there are a couple of levers that we are very, very excited about. One is the acquisition that we've done overseas in Ireland to further strengthen our capabilities in the to serve the infant nutrition market. That happened earlier this year and has integrated very well into the business. Again, even though it operates in Europe, the business delivers very strong margins similar to our existing business. So we see that as a significant growth contributor. In addition to that, our diversification in the battery materials ecosystem, again leveraging our mineral chemistry expertise. So that greenfield will come live in 18 months' time, and that will be a sizable opportunity that the business is focusing on. In addition to these two opportunities, our core business, especially specialty ingredients, has grown at a 30% CAGR over the last 3 years. And looking at the project pipeline that we have and the expansion we're doing in the US and Europe through our sales teams, we believe that I think the business is well positioned to sustain the growth rate of 30% that historically we've achieved in this category.
Understood. So 30% revenue growth that we are targeting for medium term. And what about margins? Because I see the margins have increased sharply from 2023. What's the sustainable EBITDA margins that you expect in FY26 and also in FY27?
So I think the margin expansion happened primarily because of two reasons. One is again the specialty ingredients, which as a category has a much stronger margin profile. So from 22 is when we started the business vertical. Today it's a third in terms of revenue contribution. So that has helped expand the margins for the business. In addition to that, our strength and our penetration in the infant nutrition segment has grown significantly in the last couple of years. Some very critical customer approvals came, which typically take 5 to 7 years to achieve. So that has also contributed to the growth of the business, which has also led to a expansion in the margins. I think again we are today very comfortable to say that I think the business will continue to deliver a very similar margin profile, going forward as well, if not further strengthen.
Understood. And also, Mr. Bhayani, Shanil was just talking about the specialty ingredient business, which forms, if I'm not wrong, almost 33% to the overall business, and that has grown at a 30% CAGR. What is the expected target share that you want to take of specialty ingredient, and this 30% growth, is this sustainable growth when it comes to specialty ingredients?
Absolutely. I think it is going to grow at similar levels, and I think we foresee similar growth in the specialty ingredient category. Along with that, we have a technical team in place, technical sales team in place in Europe and the US. I think which will also further help us to be in direct contact with the customer and customers, and which will help us to maintain this growth rate.
Understood. Also, Mr. Bhayani, when it comes to export, what proportion of your revenue comes from export, and which global markets are seeing the fastest growth when it comes to your products?
So I think of course the biggest market for us is North America. Again, we foresee that Europe will also come to similar levels because we have a newer team there in place, being in direct contact with the customers, and also warehousing. We started warehousing our products recently in Europe, so that will also contribute towards being closer to the customer, just in time delivery. I think that will also help us to further our growth in Europe.
Well, that was the management of Sudeep Pharma. Definitely a strong listing to, for its shareholders who invested and got allotment. Sameer, let me come back to you very quickly. Any chance you were tracking this particular company during its IPO? And if not, how would you view this particular space? Because we have seen something like Anthem also list a couple of, a few months ago, a 40% EBITDA margin business. Profits has doubled over the last 2 to 3 years, similar to what Sudeep Pharma is doing. Any view that you have on this one?
No, I don't cover this one, so I don't want to comment.
And do you have any coverage on in the pharma space, in terms of margins profile, anything that investors can take away from this conversation?
Yeah, so pharma space, we've always discussed that we have a slight positive view given the fact that the opportunity from both domestic and international markets still remain very strong. We discussed this, I think, when I spoke on your channel on Wednesday itself, that in the US, the only sector which was given, well, two sectors, one of the two that was given a reprieve from any sort of duties was the pharma space, given the fact that India is able to generate these same medicines at a much lower rate in the generics market, bringing down the cost of medical requirements in the US. And I still believe there are lots of drugs which are on patent where we have filed for replacing those patents with generics, which will come up, and this will open up a huge opportunity for Indian pharma. Then also you have companies that are doing specialized chemicals, not exactly generic, but branded generics kind of, like Sun Pharma, where they're creating value. So there is an opportunity. The positive stocks that we've been recommending for people, the top one at the moment for us is Dr. Reddy's, followed by Sun, and third is Lupin in the large cap. And in the mid cap, we continue to remain quite bullish on Torrent Pharma.
Okay, so Torrent Pharma, the preferred pick in this particular space or the view coming from Sameer. But with that, let's also welcome in our first caller of the day. It's Pradeep, who's calling to us from Visakhapatnam. Hi Pradeep, how can we help you today?
Yeah, good morning and thanks for taking the query.
Good morning to you as well.
It is regarding Arvind Fashions. I have 400 shares at 532. Can I know the short-term outlook for this stock?
Okay, so you're looking for 2 to 3 months. Is that it?
Yeah.
Okay, Gaurav, let me come to you on something like Arvind Fashions. Now, the stock has not done so well relatively in the past 1 month or the 6 month. It has seen about a 14% of an uptick. But for the next 2 to 3 months, what would your target be?
If you look at the stock since July, August 2025, it has been stuck in the range. It's a stock which has been in a consolidation, and it is anybody's guess when it will come out of consolidation. So in my opinion, if the view is for 2 or 3 months, better to exit at the current levels and let the breakouts happen, and probably then you enter. Because when you say it's up X percentage from March this year, April this year, a lot of stocks have run up. But if you look at last 2-3 months, because the projection is for next 2-3 months, so in that perspective, the stock is in a tight range, and I would not recommend holding it.
The next query that we're getting is on something on Cipla, and Akash from Calcutta is asking a short-term view. He hasn't mentioned if he's got into the stock. So Gaurav, any view on Cipla?
So Cipla, again, after a very sharp correction, it's trying to find its ground. For risk takers, probably you can keep a 1490 stop loss. I'm talking about a very short-term view, and you play for maybe 4% kind of gains. But if somebody wants to have a 2, 3, 4, 6 month view, then I think compared to Cipla, something like Pharma would make more sense, where the breakouts have been retested, forming a rounding bottom formation at the breakout retest area. So the risk reward is much favorable in Pharma as compared to Cipla. But if somebody is more keen in taking a bet on Cipla, then 1490 can be the stop loss.
Okay, so those are the levels that you can watch out for Cipla. But coming to the next query, now this is from Shashi. He's writing to us from Dehradun. He's purchased 100 shares of Shriram Finance at the levels of 718 a month back. Wants a fundamental view on this one. So Sameer, what's your view with regards to Shriram Finance?
Yeah, so we still continue to have a long-term positive view on the entire banking and NBFC space, and Shriram Finance is one of the top few NBFCs in the country. They managed to borrow money at very decent rates, which allows them to be competitive in the market. We think the growth opportunity for India and the lending business remains very strong. Shriram caters to the second-hand market for commercial vehicles, and I think that is going to keep seeing traction. They also have gold loans. They also have some of the other, and we think the entire space is going to keep seeing traction. Problem we have is valuations are a little rich. So hold on. If you want to add closer to 730 or 750 levels, one can add more. But right now we've seen quite a bit of a run up. If you look at the last, say, 6 months, I think one can hold for the timing and buy on dips.
अगला सवाल जो हमारा आ रहा है वो गाजियाबाद से है. विजय डायल करे, स्टॉक क्वेरी करे. विजय, वेरी गुड मॉर्निंग. आज प्रॉफिट में आपका स्वागत है. कैसे मदद कर सकता हूँ आपकी?
सर, मेरे पास न्यू इंडिया इंश्योरेंस NIACL, हाँ, ये 1800 शेयर है, 200 रुपए के रेट पे मेरे परचेज किए हुए हैं.
ओके.
मैं 6 महीने से होल्ड कर रहा हूँ और ये निगेटिव जा रहा है, ऑल टाइम हाई पे ऑल टाइम लो की तरफ बढ़ रहा है, जबकि कोई बुक वैल्यू भी 176 रुपए है, इसकी पी भी अच्छी है, लेकिन लगता है कि तेजी सिर्फ कुछ ही शेयरों में आ रही है.
सही बात है.
कोई मतलब
विजय,
अच्छी कंपनियों के शेयर भी नहीं पूछ रहा कोई, तो क्या करूं मैं? घाटा का बुक करूं या होल्ड करूं, कुछ समझ में नहीं आ रहा.
विजय, समझ गया आपकी क्वेरी. आपके पास कोई स्टॉक्स है पोर्टफोलियो में?
मेरे पास में एक टाटा मोटर पैसेंजर व्हीकल है, वो भी लॉस में है.
अच्छा, ठीक है. तो और आप थोड़े टाइम के लिए होल्ड कर सकते हैं विजय न्यू इंडिया एश्योरेंस. तो मैं आपको समीर के पास लेके जाता हूँ, बिकॉज मुझे पता है समीर हैज अ व्यू ऑन टाटा मोटर्स ऑल्सो. तो आप थोड़े टाइम के लिए होल्ड कर सकते हैं न्यू इंडिया एश्योरेंस, अगर वापस आने की संभावना है.
हाँ, वापस आने की संभावना हो तो मैं होल्ड कर सकता हूँ. 6 महीने तो मुझे कोई दिक्कत नहीं है.
गॉट इट. समझ गए विजय. समीर, विजय के पास न्यू इंडिया एश्योरेंस है 200 रुपए पे, करेंटली 170 पे चल रहा है. क्या आपको लगता है ये इसमें थोड़ी तेजी आ सकती है? एंड आई थिंक आपने पहले टाटा मोटर्स पैसेंजर व्हीकल पे बात किया है, तो उस पर भी थोड़ा कुछ बोल दीजिए ताकि विजय को थोड़ा और एश्योरेंस मिल सके.
जी बिल्कुल. तो 6 महीने पीरियड बहुत शॉर्ट है, पर अगर आप न्यू इंडिया एश्योरेंस की पहले बात कर लेते हैं, मैं यहाँ पे काफी पॉजिटिव हूँ। मैं काफी टाइम से बोल रहा हूँ कि ये जो जनरल इंश्योरेंस स्पेस है उसमें ग्रोथ अपॉर्चुनिटी बहुत स्ट्रांग है। अभी गवर्नमेंट ने जीएसटी निकाला था ऑन हेल्थ इंश्योरेंस, तो मेरे हिसाब से हम क्या शायद देखेंगे कि पीपल में अपटेक देयर पॉलिसीज, यानी कि अगर मैं पहले 10 लाख का पॉलिसी लेता था एंड आई वाज पेइंग, से आई एम जस्ट गिविंग अ नंबर, 20,000 जिसमें 18% जीएसटी लगता था, आई वाज टोटली पेइंग, मैं टोटली भर रहा था अबाउट 23,000 या 24,000 के बीच में। अभी क्या होगा कि अगर मैं 20,000 भर रहा हूं तो आई कुड प्रोबेबली अप माय वैल्यू ऑफ द इंश्योरेंस पॉलिसी, तो ग्रोथ अपॉर्चुनिटी उसमें अच्छी है। अभी भी हम बोल रहे हैं कि टोटली इंश्योरेंस स्पेस में पेनिट्रेशन बहुत कम है, तो ग्रोथ अपॉर्चुनिटी स्ट्रांग है, तो वो वजह से फंडामेंटली सब ठीक है। उनकी एम्बेडेड वैल्यू भी देखे ऑफ द इन्वेस्टमेंट्स जो होल्ड कर रहे हैं, तो इट इज फार हायर देन द मार्केट कैप जो ट्रेड हो रहा है। प्रॉब्लम इज कि ये 6 महीने में रियलाइज होगा कि नहीं, वो मुश्किल है बताना, बट हम लॉन्ग टर्म बहुत पॉजिटिव है। और टाटा मोटर पे मेरे हिसाब से 6 महीने में ही मूवमेंट आ जाएगी, तो होल्ड ऑन फॉर श्योर। क्योंकि टाटा मोटर अभी फिलहाल क्यों गिरा है इज बिकॉज जैगुआर लैंड रोवर की वहां एक प्रॉब्लम हुई थी यूके में, जहां उनकी साइबर सिक्योरिटी इश्यूज हुई थी, जहां प्रोडक्शन कट डाउन हो गए थे और उनके सेल्स नहीं आए थे। Q3 में भी उन्होंने कहा है कि रैंप अप स्लो हो रहा है, बट दे आर गेटिंग बैक टू नॉर्मलसी एंड दे आर ऑलमोस्ट बैक टू नॉर्मलसी। और Q4 में दे विल बी वर्किंग एट फुल कैपेसिटी अगेन, तो वहां पे प्रॉफिट अपटेक वापस हमको देखने मिलेगा। तो मेरे हिसाब से व्हेन पीपल सी थिंग्स आर बैक टू नॉर्मल, उनके सेल्स बढ़ रहे हैं, उनके प्रॉफिट आ रहे हैं, पीपल विल स्टॉप लुकिंग एट द पास्ट, क्योंकि मार्केट फॉरवर्ड लुकिंग है और टाटा मोटर पीवी में री रेटिंग आ जाएगा एंड द स्टॉक कैन मूव अप इन द नेक्स्ट 6 months। तो न्यू इंडिया डिफिकल्ट टू से 6 महीने में बढ़ेगा कि नहीं, बट टाटा मोटर डेफिनेटली आई कैन से 6 महीने में ही बढ़ेगा।
Well, that's Sameer's view on a couple of stocks, and thanks so much for that, Sameer, giving a comprehensive response on that. Hopefully, Vijay, aapki query solved हुए. But viewers, it's time for our first round of the rapid fire. Sameer as well as Gaurav, you know the drill. Keep your answers on buy, sell, and hold, so that we can take as many queries as possible. The first one is coming on JSW Energy. Somaya has bought at 610, asking what's the near-term price that he can expect. Gaurav?
We can hold.
Okay, the next question is from Vaisak. He's holding 4,000 shares of Suzlon Energy at 65 per share, currently facing a loss of 42,000. Wants to understand, should he continue to hold for next 1 to 2 years? Sameer, your view?
Please hold, please buy more. Very positive on the renewable energy space. Suzlon and the wind energy will do extremely well.
Titan bought at 3,100 by Rohit. He's asking if he should add a little bit more right now, Gaurav?
Yes, he can.
Okay, next is from Ramya. He's writing to us from Chennai. He's holding 377 shares of Jamna Auto at a price of 103. Wants to understand the target for 1 more year. Should you stay positive on it or add more? Sameer, your view?
Sorry, don't cover Jamna.
The next one, something like Motilal Oswal, our viewer has bought it at 984. Mohan is asking, what's a short-term view, Gaurav?
He can exit.
Okay, Venkat is holding 1,000 shares of NCC at a price of 220 and is facing a loss on this. Should he continue to add or book loss? Gaurav, your view?
Keep a tight stop loss of 165. Don't add.
A 1 to 3 year view on Castrol is what Navendu is asking. Sameer?
Hold on to it.
Okay, Tata Tech is the next stock in focus. Vinay is holding 60 shares with an average of around 500 or so. Wants to understand, should he continue to hold or sell? Gaurav, your view?
Hold.
The next one is NTPC Green. He also had Suzlon, so I think Sameer's answered that. But on NTPC Green, Sameer, average price 104 for Mohan. What would you recommend?
Hold on. I think prospects are very bright.
Okay, Abhishek is asking regarding Wonderla holding 512 shares at a price of 530. Wants to understand the next 1 year target for this one. Sameer, your view?
Sadly, throw to Gaurav. I don't have a view on this one.
Gaurav, your view for Wonderla?
I think I should exit. It's clearly information of lower bottom on the weekly charts.
Indian Overseas Bank bought at 65, 300 shares were Balaji holds. Gaurav, what would you recommend?
Hold.
Okay, the next question is from Parag Malhotra. He holds 60 shares of 361 VAM at an average price of 1,070. Wants to understand for the next 8 to 12 months, can he see more upside on this? Should he continue to hold? Your view, Gaurav?
He can hold.
Varun Beverages bought at 480, 39 shares what Dagdu holds. Gaurav?
For VBL, he can hold.
Okay, the next question, if you're looking at, is from the viewer. He's asking about PFC and is facing a loss in this one. Wants to understand whether he should switch to some of better names in this one, or should he continue to hold PFC? Gaurav, your view?
PFC, again, keep a direct stops of 355, exit below that.
Okay, so well, that brings us to the end of the first rapid fire. Thank you so much, Gaurav, for staying with us, and also with that, Samir, to continue to answer those questions in the second part as well. But with that, it's time that we take a short break on this edition of Ask Profit, but we'll be there right back, so keep watching NDTV Profit.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first.
Right.
You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101, go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her.
No.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to
Welcome back. You're watching Ask Profit, a show where you get all your stock-related queries answered. You can either call us or even text us on WhatsApp on the numbers that are there on the screen. But before we move on and solve more of these queries with our experts, it's time to take a deep dive into the F&O market setup and the queue shaping up for today. Let's bring in Sharath for a more detailed snapshot for the trade today.
Anushi, it seems like the bulls are actually resting and volatility has taken a long weekend off. Not much of action coming in, but looking at the numbers, they are in a very tight range. Sensex also, there's a movement happening in the auto space and the banking, and largely not a major losses also, they're in a very small range. Also, let's see the overall contracts where the moves are happening, and largely the PCI number, that's on the higher side. That means the pull side, the put side, the contracts are on a heavy congestion levels coming in as well. But it is still very healthy for the markets to maintain their technical setup and even the liquidity as well. BankX also, let's pull up the stocks which would be in focus. We see largely they are also stuck in a small range, but SBI, that is doing well, giving support from the PSU banking space. Let's pull up the HDFC Bank and IndusInd Bank, that's where the divergence is also coming in. Let's focus on the stocks, which is very much important because the stock specific market today. Varun Beverages and SRF, we're seeing a good long build up happening, and sectoral rotation also going on, short covering in Paytm and Hindustan Zinc counters, silver prices up, long unwinding MCX and 361, both of them are exchange related players, and lastly short build up coming on Gail stock specific news flow and Angel One as well, that's down almost 3%. So these are the important stocks which are in focus in today's F&O setup.
Okay, well, thank you so much, Sharath, for giving us the cues for today. That's the F&O space that we are looking at. But it's time that we go back to the queries. But before we do that, let me welcome on board Rajesh Bhosle, Equity Technical and Derivative Analyst of Angel One. Along with that, we also have Sameer Dalal with us. Okay, first of all, welcome to the show, Rajesh. I'll take up the first query, and it is regarding Mankind. Now, Parichay Arora is writing to us from New Delhi and wants to understand the lookout levels for this for a medium-term horizon. So what's your view on this?
So this counter has been an underperformer despite Nifty trading at all-time highs. This is trading at 52-week low. So as of now, I would suggest him to avoid, but it's placed around key support levels somewhere around 2200. So as of now, hold on to it on a bounce back towards 2450 levels. That it's a 200 DMA. He needs to recheck the chart. So as of now, hold, but to exit around somewhere around 2450.
Got the view, Rajesh. We have another query on Ashok Leyland. The stock was up almost 7 to 8% yesterday, and Narsimha is writing to us. He holds, roughly about 700 shares at 143, asking for the long-term view. Sameer, a key winner in the CV upcycle, what would you recommend?
Yeah, I think you can definitely continue to hold on to the stock. I think not only the CV, but also the bus segment, I think the business is continuously growing. We're going to see a lot of traction coming on going forward. Yes, valuations are on the higher side when you look at a vehicle business, especially commercial vehicle business. But given the kind of growth opportunity for the next 3 years, I don't see a major correction coming in. So, I wouldn't recommend selling it and trying to buy it back at better valuations. I think stay put with it. You will get good returns over a 2 to 3 year period.
So that's with regards to Ashok Leyland that we are seeing. But next we have Dheeraj, who's calling to us from Hyderabad. Hi Dheeraj, how can we help you today?
Good morning, ma'am. I purchased 40 shares of HAL at 4526, ma'am.
Right.
Today, actually, regarding the positive statement given by HALCs regarding the order book and tariff. So could I hold it for the next 2 months, ma'am?
Okay.
What sort of targets could I expect, and is it the right entry of which I had?
Okay. So just before I go to Rajesh on this one, just want to highlight that HAL, the stock, if you just pull up the last 1 week or so, it has been under pressure, especially after that incident which took place at the Dubai Aerospace. So that's with regards to HAL, that is what we are looking at. But Rajesh, coming to you for a 2 month of an outlook for this one, what's your view regarding HAL?
So technically, if we see the prices are placed around key support levels, the stock is hovering around its 200 DMA, and also in the past around September month, the stock was trading somewhere around 4400 levels, and from there we had seen some positive traction. So as of now, it's on a support, so hold 4400 is a strong support. On a bounce back, 4750, 4800 can be expected. So as of now, hold on to it.
And you know, we also had the management at the speaking at the ANI Defense Summit as well, where they confirmed that this is a one-off event and no such issues are currently there with the Tejas, is what they are reaffirmed. So that's coming in on HAL. The next one's on Pearl Global. It's a key stock in the textile space, and Murli from Bengaluru is asking if he should continue to hold on to the shares. He's bought 50 shares at 1698, currently sitting at a slight loss, and asking what he should do for the next 6 to 9 months. So Rajesh, let me come back to you. Any view on the charts for Pearl Global?
So during the month of October, we had seen some strong traction in this counter. Then in the last 1 month, the prices are consolidating with low volumes. So bias remains positive somewhere around 1500. We see a strong support, key averages and key retracements are there. If we consider a period of 6 months, possibly the stock can move back towards 1830 to 1850 levels.
Okay, so that's in the textile space that we're looking at. Pearl Global is a stock that we were talking about. But the next question, and it's regarding the power space, is what we are seeing now. Satyan is writing to us regarding PFC, Coal India and Power Grid, both, all three of them, which are under loss of in the range of 10 to 15% or odd. So wants to understand whether he should switch and move to some better performing sectors for the next 1.5 period. Samir, what is your view regarding this?
Okay, so there are three completely different kind of businesses. So the first is PFC. Let's take that up. We remain very positive on PFC. We think the financing of the power sector is going to constantly keep being needed. This green revolution that we are seeing happening in India, it's capital intensive upfront. So the funding is going to come from likes of PFC and banks and things like that. Valuations for PFC are rather attractive. So continue to hold, in fact, add more. Now, Coal India is more of coal mining kind of business where, you know, with the replacement with this whole green revolution happened, the uptake in coal is not going to be as fast as we want it to be. So it's a good dividend kind of safety kind of a stock. I'm not expecting fantastic returns, but from a dividend angle, you could earn a 6 to 7% dividend yield plus maybe 3 to 4% upside. So that is the kind of return. Not the most interesting stock for me as an investor. So I would not invest in it, but it's a very safe stock to be in. And Power Grid, again, similar kind of, but they're doing the distribution of power across, and the kind of capex that is going to be needed over the next few years. You're going to see a lot of investments going in, which will allow them to increase their profitability because the amount of power transmitted over these lines will keep increasing. Utilizations will get better. More grids will get set up. So very positive on Power Grid. Only thing is wait for maybe, he's already bought it, so not much, but I would have said wait for 240. If it comes to 240, average down.
Got the view, Samir. But we have another caller dialing in from Hyderabad. Chandu has a stock query for us. Chandu, very good morning. Welcome to Ask Profit. What's your query?
Very good. Yeah, very good morning. Are you able to hear me?
Yes. Go ahead, Chandu.
Yeah. So I have like PNB Housing Finance, 550 quantity.
Okay.
It average price of 962.
Okay.
So I want to know long term and short term. So shall I sell some quantity and I want to move M&M Finance? Is it right decision or not? And in short term, any momentum will be there in PNB Housing so that I can sell some quantity.
Got it, Chandu. Rajesh, let me come to you. First on PNB Housing, what's your view? Because Chandu is bought at 962. Any momentum, if it can, should he sell right now, buy M&M Finance?
So yeah, I mean, we can expect some positive momentum towards 950 to 960. The stock has started moving in a higher top, higher bottom since August month, and higher bottom was seen last week itself. So possibly 960 to 970 is what we are expecting, and definitely M&M Finance look more stronger. The stock has already seen a sharp rally from the levels of around 260 to 360 in just a couple of months. So bias is positive, possibly 400 can be expected. Any dip towards 355 to 360 can be bought in M&M Finance.
So that's with regards to M&M Finance is what we are looking at. But the next question is from Nagendra, who's writing to us from Tokyo. His query is regarding Clean Science, which is down 30% from the levels that he's bought. Wants to understand whether he should average or continue to hold. Rajesh, what would your view be?
I would suggest him to exit on a bounce. The stock has already seen a sharp fall from the levels of 1600 to 900. Even in this market, the stock is not performing and there is no signs of reversal. So I would advise him to exit somewhere around on a bounce towards 1000 levels.
Got it. We have another query on something like an Oswal Pumps, and Sheetal hasn't mentioned if she wants to get in or she holds the stock. So let me take a tech check first. Rajesh, on Oswal Pumps, stock's seen a correction from the highs for quite a bit. On the charts, any kind of view? I know it's a recent listing, but would you suggest Oswal Pumps could have some up move from here?
So, I mean, it listed around June, then it from the levels of 600, it rallied to 880, and that entire gains has been fizzled out, and the prices have now slipped below the listing prices. So, rounding top formation is there, so possibly further weakness is expected. So, only thing is the counter is in oversold zone, so maybe some bounce back can be expected. Possibly 620, 650 will be the levels that can be retested, but around those levels one needs to be very cautious and need to reassess the charts.
Okay, the next stock that we are focusing on is under pressure today. It's Gail. Now, what's happening here is that Ramanan, he's holding about 410 shares at the levels of 235 and is currently facing a loss of 27,000 on this one. Wants to understand the outlook for this, whether it could be held for a longer term or so. What would your view be regarding this, Samir?
Yeah, honestly, you can continue to hold on to Gail. Yes, I agree the stock is down today for a valid reason that the increase in the pricing of gas that they distribute has not come in at the level that they had wanted. But look, in India, the gas requirement still remains very strong, and the distribution of gas that happens over the country happens through the pipelines that Gail has laid. The utilization for that pipelines are still kind of low and still need to see a further uptake. And I believe that this will keep happening. And as that happens, the margins and profitability will keep increasing. So one can continue to hold for a longer term. In the near term, probably the stock may be under some pressure and remain in this lower level because the review of the pricing happens every 6 months. So maybe for the next 6 months, you may see kind of like a dull situation. But I believe that eventually things will start looking better and looking up. So hold on to it.
Got it. That's Samir's view on a stock like Gail that is in the news today on the downside though. We have another caller right now coming in from Bengaluru, and Colonel Srinivas Rao is dialing in for a stock query. Mr. Rao, a very good morning and thanks so much for joining in today. What's your query?
Very good morning. Very good morning.
Good morning. Good morning, sir. Please go ahead.
I have 70,000 shares of Vodafone Idea purchased at 9.63.
Okay.
Do you want me to add further to this 70,000 in the present situation, or you want me to hold, or you want me to sell?
Okay.
I need your expert opinion on this, please.
Got it, Mr. Rao. It's definitely a huge quantity that you hold and you want to add more. That's your query. Do you hold any other shares? Because this one position is almost 6.
I have 19,000 shares of Yes Bank.
Yes Bank.
At 22.23.
Okay, at 22.20. Got it. Samir, let me come back to you actually on this one because the tech chart on Vodafone is quite tricky to say the least. Mr. Rao already holds 70,000 shares, wants to add more, and with the smile on your face and on Rajesh as well. So let me take both of your views. Samir, go ahead. What would you recommend Mr. Rao to do?
I would advise him to take his money and run for the simple reason that, look, this is going to be... It's a trader's delight, this stock, because you can buy it at the lower level, it bounces up on some positive news and then you can make some money. But from an investment point of view, a company that is not going to be earning a positive ROE for the next 3 years, as a fundamental analyst, it's a definite avoid. I would say if you're making a profit, take your profit, reinvest this somewhere else. From a longer term view, you will make money. Expecting this turnaround not going to happen.
Well, that's Samir's view on Vodafone Idea. I wouldn't expect anything else, Samir, coming on this stock. But Rajesh, let me come back to you. give you also a chance. What would you say on Vodafone Idea?
So this question is asked on all Fridays. So I have a same view that exit on a bounce. The stock is underperforming. Some uptick is there, but exit. In fact, if we see Reliance, it's coming out of a long consolidation breakout, and it's expected to outperform even in the near term. So exit from Vodafone and switch to Reliance.
Okay, so that's the fundamental and the technical view for something like a Vodafone Idea. I hope that answers your question. Now, the next query is from Karthik, who's writing to us from Tamil Nadu. He wants to understand whether it's the right time to buy Phenotex chemicals for a long-term period. Sameer, not sure if you have a view regarding this one, but just want to check with you. What's your view? What's your take on Phenotex chemicals?
Sorry, no coverage on Phenotex, but on the chemical space, I can give you a broader view. Right now, all of these companies that are there in the space are struggling. There was a question on clean sciences earlier as well. Till prices start seeing an uptick globally, these chemical companies cannot increase their margins. But what is happening is they're putting in more capacities, and some of these companies are putting in capacities for a replacement market in India. In the sense, we are importing a lot of these chemicals. They're going to start making these chemicals now in India and substitute the import. So companies that are doing that, like a Balaji Amines, like a Clean Sciences also, of course, works on exports, but also like a Deepak Nitrate. All of these, once the capacities come on and they start getting adoption in India, I think the chemical space will start doing better. You're getting them at bottom pricing. Everyone chased chemicals 2 years ago when prices were 2x, 3x, 5x. I remember Balaji Amines had gone up to 5,000, which is now I think at 1,150 odd. So this is the time to be buying it, not chasing it when the bull rally is happening, when it is happening.
Okay, just want to take your view also with this, Rajesh, what is your view?
So last month we witnessed a corporate action in this counter, but if we see the long-term chart, somewhere around 23 to 24 levels, we are seeing a strong support. So as of now, with a stop loss somewhere around 22 can be held, and on a bounce 28 to 29 would be the resistance levels.
Let's stick with the chemical space, and the next caller also has a question regarding Deepak Nitrite. It's Kalyani who's calling to us from Hyderabad. Hi Kalyani, how can we help you? Not sure able to hear you properly. Can you just be a bit clear? Okay, there seems to be some audio issue with that, but if you have the query, just Kalyani wants to understand the long-term outlook on something like a Deepak Nitrite. So Sameer, let me take this up with you. What is your view regarding this?
Yeah, so this is also one of the other chemical companies which be a positive one from a longer term perspective. If you look at the chart, if you look at like a 3 to 5 year chart of Deepak Nitrite, you'll see it have corrected from 3,000 odd levels down to where it is today. So you're getting it at like a massive discount, a 50% discount, right? Look, they put in a lot of capacities. They're putting in more. Prices are down. So operations, I mean, the gross margins have come off a bit. But eventually, chemical prices will rebound. China has a lot of pollution control norms, which luckily India doesn't have. So we're able to do a lot of things which they're not able to do and keep our prices competitive, which will allow us to become even more profitable. Once the Europe and US trade deals get signed, I think there will be a surge that happens in chemicals. You're getting these stocks at very good valuations. When you look at it from a long-term perspective, I would buy into it.
Well, that's amazing view on the chemical space and Deepak Nitrite. But we have another caller now from Mumbai itself. Hitesh is dialing in for a stock query. Hitesh, a very good morning to you and welcome to Ask Profit. What's your query?
Good morning. Yeah, I have Solar Industries buying price at 650,000 quantities.
650 did you say, Hitesh?
650, yes, I bought in 2015.
Oh, wow, Hitesh, you're sitting at a profit of almost 1.2 crores. So many congratulations. Give us, before I take your query as well, give us some perspective of what you saw in the company, because I'm sure it was at a nascent stage at that time. What led you to the confidence in Solar Industries?
So I just look at the industry outlook. Basically, at that point in time, the solar industry was booming. So I just took a bet on the solar industry. That's it.
Well, Hitesh, firstly, many congratulations. And, you've held on for such a long time because the last 2-3 years has been especially very strong for the company. So hats off to you on this one. Can you hold on for some more time? So actually, you know what? I'll just get both the technical and fundamental view on this one. Rajesh, let me start with you. Solar Industries, what would you recommend on the charts for Hitesh? He's bought it at 650. Stock's over 13,000 right now.
So as of now, I would suggest him to hold on because the stock has been in a correction phase, but it has now approached its key support levels. Like it has approached its 50 weekly moving average, and after a consolidation, it's likely to resume its uptrend. So possibly the stock can bounce back towards the levels of 15,500 to 16,000 levels. So as of now, hold on to it. The stock has approached the key support levels.
On Solar Industries, would you have a view?
Yeah, so we have looked at the company and we look at the end of the day, what are the two good things about the company? One, they're in a space that has a lot of demand, which is the explosives and the dynamite and all of that, which goes into defense, industrial, mining, all of these spaces. So the growth has been very good for the company. Second, the ROEs, if you look at, I think if I'm not mistaken, they're well over 30%. That means for the equity investor, you get your money back quite quickly, right? For any capital that you put into the company. But the problem is valuations. I think it's trading at 85 times earnings, trailing. Even if we factor in a 15 to 20% growth, which it will bring us to a forward PE of about 70. And then one more year forward, about 52. Which is rather expensive and difficult for a re-rating. In fact, if anything were to slow down or if competition were to increase in the space, it would affect the profitability. So for me, as good as the company is, given where the valuations are, I would ask him to book his profits at least partially, take some money off the table, find some other investments. He's done a fantastic job, probably better than most investors in the market. So most experts in the market, I would say. So congratulations to you, but take some money off the table.
Okay, so that's with regards to Solar Industries is what we are seeing. But viewers, it's time for the second rapid fire round. So I'll request the experts also to keep their answers short. Let me start off with the first query, and it's from Piyush. His question is regarding Heidelberg Cement, holds 235 shares at the levels of 216, wants to understand whether to continue to hold, exit or average. Let me go across to Rajesh for this. Rajesh, your view?
Can hold on to it. We are expecting bounce in this space.
Radhe ko kheta, in the next 1 to 2 years, Sameer, what would you recommend for Khurshid?
I think it's all factored in, priced in. Valuations are rich. Competition is going to increase for exports. Sell.
Arnab is holding 375 shares of transformers and rectifiers at an average price of 382. Should he continue to hold? That's the question he wants to ask. Rajesh, your view?
Hold on, exit or bounce towards 350.
Anthony Waste, bought at 700 by Mohan. What would you recommend, Rajesh?
Which counter?
Anthony Waste.
Not tracking.
Okay, Inox Wind is the next stock in focus. Naresh is holding 297 shares of this one. Wants to understand the long-term picture, whether he should continue to hold. Sameer, your view?
Absolutely, hold on to both the wind companies, Suzlon and Inox.
NSDL bought at 1117. Good to hold for Mohammed. Rajesh?
Yes, hold on to it.
Okay, the next question, if we are seeing, is regarding Praj Industries. Ashok is holding 350 shares at an average price of 610. Should he continue to hold this one? Sameer, your view?
Average some, buy more.
IOC, is it a good time to enter, Rajesh?
Buy around 150 levels.
Suresh is holding 15 shares of Apollo Hospitals at 75.60. Wants to understand the long-term perspective, whether he should add at current levels. Sameer, your take?
He's just bought at this level, so hold on. Wait for a deeper correction if you want to buy more.
PFC, a long-term view. Apollo has been holding 10,000 shares. Sameer?
Hold on.
The next viewer is asking about Braintree Solutions, holding through 200 shares at the price of 336. Who wants to understand whether to hold or exit with this one? Rajesh, your view?
Can hold on to it.
Railway stocks, any quick view, Rajesh? Any good time to enter right now?
Titagar looks positive. We are expecting strong move towards 950 to 1000 levels.
Okay, Avara is holding Concord shares for the last 5 years and seeing no profit. Wants to understand whether she should sell this one. Sameer, your view?
Sadly, I don't cover it. Rajesh, just take a quick answer.
Rajesh, Concord?
On a long-term support of 500, so hold on to it. Exit somewhere around 550 levels.
South Indian Bank for a short-term view, Rajesh?
Yeah, very positive. Hold on to it.
Okay, the next one is Sudhir from Dubai. He's holding Torrent Pharma. Wants to understand whether to hold it for a long term. Samir, your view?
Yeah, I told you it's one of my top picks in the mid cap. Yes, hold on.
GNFC at 660, Rajesh.
Yeah, hold on to it. It's on a strong support.
Well, that's all the time, on the second round of Rapid Fire as well as Ask Profit. Viewers, we have answered 51 queries yet again today. We've answered over 50 queries, Anushri, for 4 out of the last 5 days. So it's been a stellar week to say the least for Ask Profit. Over 280 queries answered. So viewers, thanks so much for dialing in, writing into us this week. We'll be back with Monday. A lot more queries on the other side. Stay tuned. More action on NDTV Profit.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first.
Right.
You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101, go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her.
No.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, where this show we get you in the next 30 minutes all details about the company, why we are getting them, and also the management as well. Of course, we will be talking to this company which is Pearl Global. It's of course a textile player, but the question remains is why are we actually calling this company in our segment? Textile industry has been in focus, especially of the US tariffs, the exports which we will talk about. There is an overhang and the commentary has been coming from the industry players, and even the industry is trying to help this sector. So this is the most important talk. Is the overhang of US tariff agreement with India going to be over, and if that happens, will we see the depressed sentiments for the textile industry go up? The second question of course will be that what's the relevance on company's global business model? Is it surviving the stress which is coming in from the tariffs, and if yes, how it is doing it and how it is different from its peers? And that's my third question as well. What is the moat? Others are also bleeding, they are also bleeding, but lesser. Why? Is there a moat to it? Is there a kind of a support coming in the back end? Also client concentration risk. They are having some revenue concentrations to the bigger clients. Is that a risk or actually it's a favor? Why? Because of the customer stickiness. Also lastly, the further expansion of capex plans which the company might be having going ahead once the clarity comes in for the US tariffs. Also let's look at about the company, why it's important. We discuss the questions with you. But about the company, this was founded in 1987 by Deepak Kumar Shah. That's where the history starts. And the key focus areas being sustainability, quality and innovation. Apart from this, Gurugram is where their headquarters are. It's an NCR based company. And let's look at the core business of Pearl Global, what it actually is. It's into apparel manufacturing and supply chain. Also, it's a partner for global fashion brands as well. That's where the high margins also kick in if you compare them with its peers. 25 units, 93 million pieces capacity. And there's a tech advantage also where they include new things. That's 3D design tools and QR tracking. But most of the industry players are also doing it. It's not very much new also. FY25 revenue, that is good numbers, 31% up. Look at the numbers. They are walking the talk when it comes to delivering the number 4506 odd crore rupees. But you must be wondering what's the product breakup looking like. This is a roughly, you could say 72% is from knits and 28% is coming from the woven fabric segment. Also the other products, lesser contribution, design services with 75 global designers, and when you have services that means your margins are on the heavier side. Activewear, sleepwear, denim and children's wear. Upcoming areas where you see imports, the exports going very high, and OECO Tex certified. These are the sustainability numbers, not that important, but the revenue model, that's the most important. And there's a concern also, 99% of that is exports. And that's the major overhang which the industry wants to ask us, this company is that over, or if it is fighting it, how it is fighting it. Also, the overall numbers, if you look at the revenue, that's coming 73% rest of the world, 27% India. So that one question we'll be asking the management is, will you have an hedge when it comes to the exposure in the domestic markets? So enough about the company and why we actually want to get the company. But before we start the parameters, I'll just explain you what are the important parameters which are important when we judge a company in KYC. So we have 8 rating parameters. To start with, income statement, balance sheet, cash flow. This is the holy grail of financial statements. This is the first and the most important thing when you should judge a company in fundamental basis. Then comes return ratio. Have the stakeholders actually made money or not? Shareholding, street cred, that's also important. And valuation, comparing it with its historical averages and also nearest peers. And lastly, but the most important, the future looking statements, the outlook. That's where the stock market gives you your value. So these are the important rating parameters where we'll judge the company. So let's move on. First one is income statement, and net we see there's a very strong growth coming in. Look at the numbers, FY24-25 and the 3-year CAGR. Top line 18 odd %, but the magic is happening in the EBITDA segment. That's 42% CAGR coming in. Margins net are stable, and net profit, that's a significant jump coming in. But you must be wondering, these are the FY25 number. What's the most recent number? And that is the Q2 numbers. Q2 numbers did have some impact on the tariff impositions, but it was not that bad as what the street had feared. And that is why I liked the company's performance in Q2 as well. Our revenue was 9% up, not much, but EBITDA and net profit. That is where the cost efficiency programs might have kicked in for the company. And during trying times when a company achieves operational efficiency, that is where the margins start going up, going ahead. So that is something which I really liked, and that's why that reason we see a 120 basis points up move coming in, and margin trajectory is going towards that aspirational 9.5 to 10% mark. And for a player like this or an industry thing, this is industrial higher average margins coming in. So net, I will be giving a thumbs up to the income statement aspect for this company. Up next, balance sheet. Balance sheet, the numbers, they are stable. Not much changes happening, but you should be looking at the borrowing numbers. There's a significant spike coming in. Company is looking at expansions as well, but those expansion plans are, of course, subject to what happens globally, because you remember 73% revenue comes globally. So that's a very big moving factor when it comes to this export play in the textile space. Cash and bank balance, that has significantly gone up from 366 crore. This amount is at 566 crore rupees. So it's a wait and watch. It's not that shareholders might be getting rewarded for, non-expansion policies, but if the company expands, if the capacity comes back, if the global demand comes back, then the company will have a good cash reserve to deploy as well. So that is a very good strategy coming in from the company, but the debt levels are a concern to me a bit as well, and that happens. So there is a push and a pull, so I'll give a neutral rating for the balance sheet. Cash flow, that's also very much important. Net, we see there are divergent trends happening here as well. The cash flow to PAT, that has come down significantly, and that at times hurts the liquidity ratio of a company, and you can see that on the screen as well. Net cash flow, however, on the other side, that has gone up almost 174 odd crore rupees. It's just not the operating part, but there are other ways also where the cash flows go up from investing and financing, and that is why you're seeing a very high number. So divergent trends coming, so I'll still give it neutral because it hasn't passed that cash flow test. And of course, this won't be able to do also company because of the current geopolitical scenarios. That's why company is doing their liquidity management works as well. A return ratio we'll focus on now after giving a neutral rating to cash flow. The return ratios, looking at these numbers, they're pretty healthy when it comes to the FY25. Generally, when you have a barometer of 15% plus ROC, ROE, that is where the magic happens. And let's just pick up both ROC and ROE. That has been a significant value creation for the long-term shareholders as well for Pearl Global. Avoid the short-term aberration. This has been a good multi-bagger as well. So from the return ratio perspective, for both capital employed and ROC, I will be giving a thumbs up to the company. 4 parameters are done. We are halfway through our ratings. Fifth one is the shareholding pattern. Shareholding pattern largely has been stable. Promoters have been stable at roughly 63 odd % coming in, but FIs, slight selling coming if you compare that with March numbers to the September numbers, and the DIs, they have lapped up. So any sale which has happened in the market, DI lapping has been very strong, be it from the public counter or even the FI counter. Look at that number from 11.6%. A value buy increase is coming in at almost 14% stake by September quarter. For shareholding pattern, I will be giving this a neutral rating. Up next is street cred. Street cred is nothing but way the stock has moved from the long-term perspective and short-term perspective. 1 month, it's up 27 odd %. Maybe the market is digesting in that the India and US trade agreement is near the counter, and the 6-month share price and year-to-date has been decent. 1 year, it's 40%. So the medium-term shareholders have actually benefited from this company, and this is despite the volatility coming in the global markets. 5-year share performance has been a big multi-bagger for the investors, 110%. This looks like a birth date if you look at that 5-year share performance, but it's very interesting. But net, this has kept all sets of shareholders happy. So I'll give this company a neutral rating for this as well. But let's move on to valuations. Is it very expensive yet, or a minor correction has made it attractive? That's the question you will be wondering. And also they have a peer that's called Gokuldas Exports. Just look at the valuations. it looks like it's on the cheaper side. FY27 is just 22 times the price to earnings. Industry ratio is roughly around, you could say 30, 28 to 35. And currently Gokuldas Exports, look at that, that's their peer. That is almost double when it comes to the valuation. So it's certainly looking cheap when it comes to the valuations front. So I will be giving this company in this rating a thumbs up. So we have done 7 KYC ratings and our last rating, but it's very much important and it's very forward looking. That's why I say outlook is the most important thing going ahead. Over here, we see there is a diversification happening in manufacturing and sales. So that slowly company is trying to reduce their US dependency going ahead. And value add mix, that we need to understand the company also, that which are these products which will give you higher margins going ahead. Also the question is Australia, Japan, UK, EU and Spain. These are the categories which generally becomes a hedge against the US markets. So that will be something which we'll be watching out for as well. And H2 growth numbers, generally they are always on an upward trend. That means there's a lumpiness there for these textile export players, and generally it is on the positive side. And lastly, FY26 margins slightly better despite India tariffs. That means company is doing something. Despite so much negativity around their export play, they are able to maintain their margins. That means there must be some kind of an internal process set up or some cost efficiency moves happening, and that's why the margins are actually going up. And maybe it can touch that 9.5 to 10% marks, and that's one of the key questions we'll be asking to the management. But before we go to the management, I have compiled the entire KYC ratings for you so that it becomes very easy for you to understand how we have gone through the show. Let's pull up the KYC ratings chart for you. Income statement has been good. Q2 numbers on the good side, despite what we saw, the tailwinds coming in from the US-India trade tariff issues. Balance sheet cash flows, nothing much to share right now because the company is holding up the cash flows for deployment. And lastly, we can say the shareholding street cred has been neutral. Valuation still attractive because of the cheapness compared to Gokuldas Exports. And lastly, outlook also, we say you could say it's a kind of a positive to neutral impact coming in. But net, despite the company being in a tailwind sector right now, it's expected that this will go up going ahead. And I've given this company 5.5 out of it. That's on the higher side of the ranges and the averages we generally give in our show in Know Your Company. But now we know a little bit about the company, whatever we could get. Let's get a little bit more about the company, and for that joining us is Pallab Banerjee. He's the MD at Pearl Global. A very good afternoon to you, Pallab. We can see the entire industry itself is waiting, not just from the government, that they'll be getting some kind of incentives because of US-India trade issues, but the burning question is, how do you first survive? Because you have a history of thriving. So how will you be surviving this sector, issues which are coming in, and later on what happens next? Good afternoon, Pallab.
Yeah, good afternoon, good morning. In fact, so I think, yes, US tariff is a concern at this point of time for the India market. But overall, as a company, we have about 27% exposure in India, as you just mentioned in your charts. So the rest of the markets that we are manufacturing and exporting from, there we're not seeing any disadvantage. In fact, we are seeing some advantages.
To make this into more, kind of a more information for viewers, because most of the viewers who have messaged me, they have stated that Sharad, the entire discussion is overhang coming in the tariff issues. So company must have made some safeguards during this time. You are trying to reduce your dependency in US as well. Can you give us, in a brief setup, that how have you been doing that? I'm sure last 4 to 6 months there has been a change in strategy. So what is that?
So you see, this journey is not started in 4 months back, but it's been continuing for some time. In 2021-22, we found that our US exposure is very high, almost about 86% plus. And that's the time we started developing the other markets as well. And today, when we look at the data, it's our US exposure is less than 50% as a group. And that doesn't mean that US has shrunk. In fact, our business in US has grown from $180 million in 2021 to almost about $300 million, as the running rate for this year. Whereas the other markets have also come in, which used to be about $15 million. Now it has gone up to almost close to about $300 million. So that's the kind of change that we have been undergoing since 2021-22. And yes, this particular year is a completely roller coaster because, first of all, US implemented this whole tariff across all the countries of the globe. So that means the US customers, the brands and the retailers, they have to shell out more tariff as the goods goes into US. So that has got some kind of repercussion in the US market. And especially after August, when we got to know that India has got almost about 50% tariff, additional tariff from what used to happen during the MFN duties that we used to pay. So that's resulting in some kind of, change in strategy. India, if all of us are hopeful that this tariff situation will resolve very quickly, and if it doesn't resolve, then we have to have a backup plan. So this is something like we are undergoing at this point of time. In India also, the exposure to the US market was close to about 60% till last year. This year we are seeing a significant drop in that. And the other markets like Japan, Australia, Canada, European Union, UK. So all these markets are taking a major share in India as well.
And Pallab, the word which you have used is the backup plan, and everybody needs to have that in life, be it stock markets, but your industry has been taking the brunt a lot. Could you just give us some strategic views, not number necessarily, but what's the backup plan looking like? The dependency angle is also there, but is there anything else to it as well?
So first of all, like if you see the industry, we are in garment industry. So we manufacture garments and fashion for all the major retailers across the globe. Yes, US has been a large market. They import almost about $80 billion plus of garments from across the globe. But there are other markets like European Union does about $90 plus billion dollars. And then, of course, Japan, UK, Australia, Canada, these are also good markets. And Asia region, like, for example, China, India, they are also growing significantly. As human beings, all of us wear clothes. And whatever is the scenario, like this is a consumption that doesn't go down. In fact, if you look at it, even US market is growing at the rate of almost about 4 to 5% annually. I'm talking about the apparel or the garment sector. Now, keeping this in mind, how you built up the business. And mind you, one more thing, this India has not been playing a very major role in the garment or the apparel sector. If you talk about globally, the largest players have been China, which exports almost about $180 billion of garments few years back. It has come down a little bit because of all the geopolitics that is going on at this point of time. Followed by, and the top gainers from China reduction has happened in Bangladesh and Vietnam. Those are the two countries have significantly grown in the last 5 to 7 years. Followed by Indonesia, Germany, some European countries which makes a lot of manufacturing, and India comes in the rank of almost about 7 in terms of garment exports number if you're looking at. So if you talk of Pearl Global now, Pearl Global also we have a global strategy. We are present in some of these major garment manufacturing and exporting markets. We have a big setup in Bangladesh. We have a reasonably big setup in Vietnam, Indonesia.
Yes, Pallab, one more question is there on this margin front. Value-added product is something which the company is adding in their product line as well. Yes. What are these products, and on a blended basis, what we can expect for the margins? It's currently at 9% on the higher side, and it's still maintaining despite the issues in the trade tariff segment. So what are you doing, first of all, that these margins are going up? Is it some internal efficiency measure, or is it the value-added product?
Absolutely. See, as China continues to lose the market share, and the countries which are also gaining are like, Indonesia, Vietnam. Those are the places where the high-value product we have been focusing upon. And, one more fact that I must tell you is that if you talk of the global consumption, there is a huge amount of almost 70%, 75% plus comes from the man-made fibers, where India has been lacking, but these other countries like China had the biggest share, and now also Vietnam and Indonesia are gaining. So that's where we are seeing a huge advantage that is Pearl is getting, as we're getting those high-value items in the synthetics, like the high-altitude outerwear jackets, or the fashion jackets in terms of down jackets, or polyfill jackets. So those are things, a big number that we produce, and for better quality of brands. Like if you have the market pyramid, the top end like Polo Ralph Lauren, Tommy Hilfigers, and of course there are Walmarts and the Targets of the world. So if you go up the ladder, and if you are servicing those customers who are paying higher value, that's something like we do quite a lot out of our Indonesia, Vietnam kind of facilities. So that's where you're seeing this change, that our value is definitely the margins. Our goal has been to be in the range of 10 to 12%. We are almost there. We are just crossing that 9 to 10% mark at this point of time. If you take out the effect of the tariff that we paid in the Q2, some kind of discounts and some sharing that we had to do with the US clients, and a couple of our new projects which are just taking off. So there have been some initial losses that comes in. So if you take out those, then we are almost touching 10 or going beyond 10.
And Pallab, yes. And Pallab, there's an important thing. We spoke with some of the industry peers of yours also, and they stated that your company's business model is a bit different, and there's some kind of a moat to it. Now, it's very technical at times, so if you could just give us a kind of a simplified version for our viewers, what's your exactly moat, when it compares to your Indian peers here?
So compared to the Indian players, we are, as I say, like 5 different countries of manufacturing. We have almost 7 different categories of product, including right from synthetics, the outerwear jackets, activewear, athleisure, sleepwear, then of course the denim wear, so children's wear. So like those are the kind of various categories of products that we do to the customer, and we have a huge design offices across US, UK, Spain, where we are almost negotiating and designing together with the clients. And also the diversified market, I would say, is another strength of Pearl Global. Almost, as I told you, 50% of the business, or just below 50% of the business, is coming from US market. The Spain and Japan has gone up to almost 34-35%. So like that, this diversification is also very important, followed by the UK, Australia, Canada, this kind of markets as well. We have not been in the domestic market so much, but this is one of the instances that happened in which we are now exposing ourselves to the domestic market in India as well. So that number also will go up in future.
So right now it's around 25 to 27%. So I can expect 35 to 40% in next 12 to 18 months, Pallab?
So of the total turnover of or the sales of Pearl Global, around 25-27% is coming from India. And there also we had zero exposure in the domestic market earlier. So that is one thing that is, I think this is one of the tipping point when US pressure came in. So that has started also happening. We are supplying to the domestic brands as I speak. And overall, the growth that you will see for Pearl Global will be across all these regions. So
yes.
Countries like Vietnam.
Yes, we are a little bit of short on time. Just need your fast answer to it. There's a concern regarding the concentration risk in the revenue terms for even large clients. How will you address that?
So I think we are in a very good position out there. If you see today, our top 5 or top 6 customers is close to about 40 to 50% of our sales. Now that is, if you look at it from one side, it looks like a risk. But we are not only there, they are not only our top customers, but we are also their top suppliers. So we have a very strategic relationship with those. And that's where like we come in with a plan of, 2 to 3 years in advance with this kind of customers. So that's the stickiness, or that's the kind of very strategic, strong relationship that we have been able to build up.
Thank you. Pallab, thank you very much for your time on that. And that was a concern which a lot of investors have asked me to pose these questions to you. Thank you very much, Pallab, for joining in, and best of luck for the future. But to wrap it up, there were some important key considerations for this discussion in KYC. And the first and foremost, the management has stated that overall, the repercussions are still there in their US business due to the tariff. So that's the major overhang, and it still remains until and unless India-US tariff agreement, we don't get much clarity, because 50% tariffs is something, it's still hurting the company. And now, the second important thing which the management has stated is, of course, there's a divergence happening in newer markets they are going in. but there is a big scope of growth. India is not playing major role in garment supplier sector. There is a huge potential there, and the high margin products demands have started coming in. Green shoots are coming in Asian markets such as synthetics, which are basically your wears in the wind cheaters and sports jackets as well, to simplify it. But this is the entire picture of Pearl Global, where the company is putting up a brave face in the adversity and hopefully a turnaround video there, and that's why DIs are also supporting the counter. That's all for today. Thank you very much for watching KYC and NDTV Profit.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first. You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101, go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her?
No.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world
Markets volatile post a stellar rally. Nifty currently trades flat near 26,250 levels, while Sensex is up 150 odd points. Metals as well as auto zoom ahead. Oil and gas pack lags behind today. Prime Minister Narendra Modi says that India will open its tightly regulated nuclear energy sector to the private players. In fact, a key beneficiary in an NDTV Profit exclusive, that is Walchandnagar Industries, is looking at investing 100 to 150 crore rupees in the nuclear energy space. Gail's integrated pipeline tariff has finally been approved by Petroleum as well as Natural Gas Regulatory Board. Increase is far lower than what the company had sought and even below the street expectations. HAL's chairman says that the safety record for Tejas is the best in the world. This after Defense Secretary flagged issues with delayed deliveries, added foreclosure of deliveries could be on the cards. Eureka Forbes soars after bullish management targets. Management eyes 2 times revenue and more than 3 times EBITDA growth by FY30 with 15% steady state margins. Delhi wakes up to even worse air quality levels across 500 in select areas. Neighboring cities fared no better. Other metros like Mumbai still grapple with poor to severe AQI. Hello and welcome. You've joined us on Market at 12. I'm Nisha Podar, and yes, markets after a record smashing day yesterday, today is taking a slight bit of breather. So tepid movement and a very choppy trade today is seen when it comes to the key indices. So Nifty 50, but holding on to crucial levels. Remember, it's still on a tepid day, just 60 points away from the record levels that it had touched yesterday. When we talk about certain pockets and areas that are really performing well, metals as well as autos are the ones which zoom ahead in trade today. And when we talk about the laggard in the space, it's the oil and gas space. But if you really look at the heat map, a large proportion of the contribution is really coming in and is wide-based. But also remember, when we talk about the markets, the biggest talking point for this particular year, where the year 2025 as a calendar year could be one of the best years when we talk about the IPO momentum. So let's shift focus on this particular primary market sales and that particular theme that we have been tracking with so many large IPOs really hitting the market. And even at the fag end of this particular year, there are many others still lining up. Let me welcome on the show Nipun Lodha, the head of investment banking at PL Capital, to talk more about this. Nipun, always a pleasure to welcome you on NDTV Profit. My first question, the way we have seen the IPO momentum, and there are a few other large IPOs that are still to hit the market at the fag end of this particular year. How have you seen, what is the biggest theme and highlight for you as an investment banker when we talk about the market appetite, depth, as well as the investor approach?
Well, thanks, Nisha, for having me on this show. I would say the liquidity in the market at this point of time, what it offers in the Indian market is one of the most fantastic liquidity. Yeah. And this basically keeps the IPO momentum on, and it will continue to go on for quite some time. If the liquidity in the secondary markets is good and investors are able to churn their positions post-listing, I think that makes the IPO market to be a very successful market, and it as well as it offers good amount of exit and liquidity opportunities to the investors in other markets who invest into this market. Second thing, what you should ideally look at is that the rate of interest coming down going forward, it further provides impetus to the equity markets and the IPO markets going forward.
That's right, Nipun. But one of the most recent phenomena that we have seen in some of the IPOs and startup IPOs, of which the valuations were considered on the higher side by the investors before the issuance and still floated through the listing pretty well. But after the first day pop, there has been a substantial downturn and a lot of profit booking and a lot of selling pressure. What do you make of the valuation sustainability, being an investment banker, and this particular theme really playing out?
The way we look at it is that definitely valuation is one of the factors which is always to be looked at while investing in any IPO, be it retail investor or be it institutional investors. And at times, case-to-case basis, if out of 4 IPOs, 3 are priced higher, 1 is priced moderately, definitely you will see a sustained price momentum on the IPO. But as a matter of fact, IPO valuation is a matter where everybody has to decide judiciously that should we consider investing or not. But there are other factors while investing in these large IPOs is that what kind of market position do they enjoy and what is the size of the market in which they are operating right now and where do they stand vis-a-vis the competition. So these are few factors which any large institutional investors also considers while investing into these companies. And these are companies where the market cap ranges from, I should say, that 50,000 crore to a lakh of crore. And it makes an obvious choice for every institutional investor to invest into these companies. So, and thereafter post-listing, definitely there is a liquidity in the market where it doesn't become a hold stock for them. So, I believe definitely the pricing takes one part of it and which definitely all the investors consider while investing into the company at that point of time. But the momentum continues to remain in the IPO market, I should say that. Valuation is a thing which everybody should look at it carefully, I should say that. That's where it is.
And the theme, yes, Nipun, why rethink probably on the valuation? And as I just spoke to Misho, and they were saying that we did take investor feedback after the way a lot of outrage and social media outrage really picked up on certain startups' valuations recently. But this year, to put out the data that we've got, positive on listing day were 76 IPOs and negative on listing day were 20 IPOs. This particular phenomena of first day negative has been quite on the higher side compared to all the other years that we have seen, and must also bring in one aspect. The kind of growth capital versus the investor exit. How do you see this particular proportion? Because in the year 2021, when we had seen the highest number of IPOs and a lot of money being raised, a large part of it was also investor exit. In this year also, a large part is going towards that. How do you see this particular trend continuing?
See, IPO is a market where the companies come when they are matured enough to list and they are in a position to give investor the right performance, right, and deliverables. And while these investors have invested into these companies when they were at the startup stage or a stage when they were just starting the business, and investors have been into these companies for past 7, 8, 10 years time frame. And every private equity investor or venture fund has a fund life cycle. And they obviously look at exit at certain point of time. And IPO is the last life cycle of any growth equity investment. And thereafter, the companies have to perform and deliver and raise capital at that point. That's the stage. So it's a fairly mature stage. The companies come for the public market debut. Prior to that, there are various options for companies to raise. This is the venture capital, private equity, through M&A. All these options are there. Well, M&A also remains going forward. So obviously, IPO markets do remain one of the top choices for any investor to take an exit. The point which should be considered by everyone is that are promoters also taking an exit, significant exit from this IPO route? What is the skin in the game for the promoters currently in the post-listing? Are they at, I should say, 25%, 30% upward? Because all these venture companies, if you look at Misho also, I believe founder's stake is sub 20%, something like that. So that is a call of concern which I should highlight rather than exit by the other investors, because these investors are investors at the end of the day. They also need to churn the way mutual funds also churn their positions in 1 or 2 years time frame post listing. That's how one should look at it.
Right, that's a fair point. And of course, we have seen many startups come in the market in the past also, Nipun, which have been considerably lower than their IPO price even after 2-3 years. So in terms of the valuation, do you think that they are baking in the growth propensity of 5 to 10 years, and therefore also the very intel for the retail investors on how they should assess each of these IPOs for their investment, because the opportunity cost of investing into some other growth momentum which will show returns in 1 or 2 years also is an important aspect to watch out for?
Definitely what you're saying makes sense, and it's correct that I don't know that will they be profitable in next 2 years, 3 years time frame, right? And retail investors or any other investor should definitely consider that if they are baking in next 5 years growth, I think then one should avoid those IPOs because if you are investing in public market and you have more than 5,000 scripts to be invested into, so we should look at the investment choices much more better than any other rather than an IPO itself. But IPO market is a different kind of market. Few of their investors have a good churn option available, and the cost of financing for an IPO is also lower for investing in IPO than any other product. So that makes a business sense for them to invest in the IPOs. And post listing, definitely I should say that one should consider investing in these new age stocks post listing and 3 to 4 months after that when the price becomes normalized, and one does get an opportunity to buy these stocks at a lower than the listing price as well.
Right. So my final question and very quick answer there, Nipun, which are the sectors which are seeing maximum number of IPOs in the pipeline, and any particular trend that you are catching for the next year from your vantage point currently?
I would say defense, aerospace, these are the good sectors. Electronic manufacturing will come up. Health tech will also come up big time. A lot of good issues pipeline is there, right? Med tech, health tech, these are the sectors which one should look at it. Government is building a lot of thrust on these sectors, and healthcare systems are being improving. So these are sectors which look promising for us going forward.
All right, Nipun, many takeaways from this conversation. And of course, IPOs have been a big theme with large amount of money being really raised up through the IPO process. Thank you so much for joining us on NDTV Profit. All right, moving on to another big theme that we are tracking here on Market at 12. For the first time since the 1960s, India is really moving to rewrite the rules when it comes to governing the seed sector. Now, we have 3 important aspects which are going to change the game in this particular space. A new seed bill, the second, changes to plant variety protection law, and third, the global talks on seed sharing rules. So let's put all that into perspective on how it's going to impact this particular space. We have an expert joining us right here. Tejas Anil Singrekar from Angel One is right here with us. Tejas, a pleasure to welcome you on NDTV Profit. My first question, given the various changes, what's your view of the direction of this particular space, the seed space going forward?
First of all, thank you very much for inviting me on your show, especially when we see certain particular the bills raised in the parliament and how exactly the ministries work on background of that. We should be very much focused about when these SIDS regulations was started in 1966, and then especially when the quality bills keep announcing, and especially it's making the sense how exactly the transport is there, and as well as the culture of the SIDS growing in a future perspective. If you see the larger number, the players are still winding about the how exactly the World Trade Organization is working over there, and the bills keep passing over there. and especially when it's keep about the climate change in all drastical changes were happening, how the PPB and FER are working over there, and in the production of the plant varieties, and as well as how it should be protect for the future reference. It's more cautious should be taken a step ahead.
Right, and especially with this particular bill now, Tejas, what will be the impact and which companies stand to get impacted? How are we analyzing that? All right, so Tejas, we'll have to hold on to this particular conversation. In fact, I caught up with the top management of Meesho ahead of the IPO. Take a listen. We are in conversation with the management of Meesho. We have with us Vidit Atre, who's the CMD and CEO of the company, and Dhiresh Bansal, the CFO. Gentlemen, so good to have you on NDTV Profit. Now, Vidit, first question to you. When we talk about the business, e-commerce with delivery and logistics inbuilt, how is your model likely to differentiate and also gather momentum against the many peers and competition that you see in this particular market?
I think we have a very differentiated mission. Our mission is to democratize e-commerce for everyone, all consumers, businesses, people in the logistics ecosystem. And that's what we have done over the last 10 years. We have grown at a very good pace. If you see some of the numbers in the last 6 months of this financial year, our NMV grew by about 44%, orders grew north of 50%. So we're still growing our base really fast, while we are already the largest in India in terms of orders as well as annual transacting users. Last 12 months, we had 23 crore customers transact at least once on Meesho, and we did 230 crore orders, right? Like both of these numbers are the highest for anyone. So I think all these numbers point to a very, very differentiated story. We have been very focused on making most of e-commerce affordable for our consumers. How do you help consumers achieve or like afford a lot more of products than what was possible earlier? And we have done that across price points, across categories, across products. And that's what we will continue to focus on. Logistics, we have basically built our own platform, Valmo, over the last 3 years and scaled it now to basically have the highest amount of volumes for any e-commerce logistics platform. And it has been a big contributor to creating this lowest cost logistics, making stuff more affordable and getting more consumers onto a platform. So I think that is a very, very differentiated story and will continue to be even going forward.
Right. When you said across all categories, what is your sweet spot there with it when we talk about the price points as well as the category, where most of the earnings are really coming in from?
So I think when we started with a few categories. In the early days used to be more fashion. But the beautiful thing is the appeal of affordability works across all categories and all price points. Like people want to save money not just in one category but everywhere. And you see that happen more and more. So every year we have become more diversified in terms of our category base. One very good case study is home and kitchen. So 2 years ago it used to be 10% of our orders. Now it's almost 20%, right? Because it's a category that people buy very frequently. And as we became more efficient in serving that category, it has grown really fast. And more of such categories are growing really fast. So I think it's the appeal of affordability is everywhere. So I would say sweet spot is not just focus on one or the other. Our goal is to basically solve the problem of affordability across all retail categories.
But there's also that aspect of discretionary as well as discounts. So I'll come to that. But first to the valuation, Dhiresh, you're the man of numbers here, 50,000 odd crore rupees when it comes to the valuation of the company. Now, what is the rationale for this? What were the key drivers? And let me also put across the investor feedback that a large part of your valuation is being attached to your logistics business and in-house logistics Valmo.
Yeah, so I think the framework that the board had set for us, was to get the highest quality investor base into the IPO. People who are aligned with our long-term vision, who understand our story and will continue to be good long-term shareholders. So like we have done even with our private investors who have continued to be our shareholders over a period of time, the same was the objective function set for us. I think at the valuation level at which we are kind of speaking, we expect amongst domestic investors, foreign investors, sovereign wealth funds, etc., we should have good traction coming in. And that's kind of the
Was the investor feedback and the market sentiment around the various startup IPOs we have recently seen and how their prices collapsed or there was outrage on valuation, had that anything to do with rationalization when it comes to valuation and also the OFS pocket being also cut down?
So I think from a overall market environment perspective, if you look at it, yesterday I saw that Nifty hit one of the all-time highs. I think generally the sentiment has been quite positive. I think investors obviously are looking for the first horizontal e-commerce company to kind of become public as a very differentiated sort of equity story for them. And a lot of them, again, take a very long-term view and not just kind of the next, few days or months of kind of trading that might happen in the stock. So again, like going back to, the objective function, get as many high-quality investors who are kind of aligned with our vision. And that's been the rationale for valuation. And,
the key drivers which are going to sustain these valuations even post-listing?
So I think what Vidit spoke about in terms of growth, we continue to exhibit very good growth, one of the highest in the horizontal e-commerce space. We have also been free cash flow positive. So not a lot of other companies in our space are free cash flow positive. Last year, if you look at it, we generated close to 1,000 crores of free cash flow if you include interest income. And even excluding interest income, about 600 crores of free cash flow. So as our business grows, we will keep on becoming more and more efficient, unlock many more monetization levers. So that's the rationale on which this is built. Most of the investors, at least those we've had close interactions with, forecast our business for like the next 3 to 5 years, look at what this business could be in the overall size. And then those future prospects, they kind of come up with some valuation to kind of...
Right. So as I said, a large part of SOTP with it is being ascribed to your in-house logistics business. Now, tell me, this is a pivot and you have been a big disruptor in the business as well with another company getting acquired with whom you had the largest client concentration as well. So it has disrupted the market and it could really potentially disrupt the market further. Now, I wanted to understand the market is expecting that this business to be not just in-house, but pivot as a separate business as well. Is there any thinking on that? And also, when we talk about the Valmo business, what is the potential that you're seeing? And investors are ascribing a lot of value. So what are the drivers there?
First of all, there's no plan for us to kind of externalize Valmo as an opportunity. Valmo is a very core strategic asset for us, helps our entire ecosystem become very efficient. So it will continue to kind of serve the Meesho ecosystem, and we have no plans to kind of externalize it. But if you just look at the value of Valmo within our entire business, in affordability, having the lowest cost is very, very important. And we have built Valmo as the lowest cost logistics ecosystem in India. And hence we are able to offer the best affordability proposition to our consumers. And that will continue to be focus area even forward. If you look at where India is today, India still sits on the lower end of e-commerce penetration among major economies globally. And one of the big reasons for that is India's cost of logistics as a percentage of average order value among the global benchmarks is still very high. So Valmo has a lot of opportunity to keep innovating around the cost structure, make more products, more categories affordable for our consumers. So I think that will continue to be a big focus area for us. So in that sense, yes, I think Valmo is a very core part of our value proposition, core part of the company that will continue to drive growth for us in the coming years.
Any other pivot expected from the company, from growth proposition?
No, I think as a company, we have continued to innovate, right? From day one, we have never followed playbook of someone else in the country. We have charted our own path. Valmo is a great example of that. Something like this never existed in India before. Content commerce in the recent past is also another example where we have enabled influencers to monetize their following for the first time. Now they're able to promote products of our sellers and basically drive sales. Over the last 12 months, 50,000 influencers are making consistent income on our platform. And for the first time, our sellers are able to get like their products promoted from influencers, which they never imagined. They always thought that only brands could afford influencers, but not mass merchants. We have seen that change. So that's also driving a lot of growth for our ecosystem. Over the last 12 months, 1,200 crores worth of NMV came via content commerce on the Meesho platform. So I'm saying there are many things that we will continue to invest in even going forward. We've also talked about our Horizon 2 bets in our RHP document. We are investing in financial services for our consumers and businesses. Again, a lot of people are trying to offer financial services products to top 30, 50, 70 million people in India, but not many are doing beyond that. Right? But we are in a unique position to have a lot of data on these consumers and businesses, so investing behind it. So there are lots of these opportunities that we continue to focus on, innovate on, and we'll keep doing that even in the future.
All right, but one important concern in the market again has been the overhang of certain entries, accounting entries. Also, the reverse flip has had a huge impact. But all is gone now, Dhiresh, or is there going to be some recurring or spillover post the listing as well? Because this is going to be very critical for showing profitability after getting listed.
Yeah, so I think from our perspective, all of the restructuring which required us to kind of move from US to India has been completed. All of the tax payments have been done. So we don't expect anything further to kind of emerge out of it. I think whatever contingent liabilities, etc., that we needed to disclose have been kind of disclosed in the RHP document as well. But I think all of the restructuring related to redomiciling from the US into India has been done and is on the account of the existing shareholders versus the new ones that are now coming in.
All right, so all the matter over there is closed and no other tax reversal, anything expected in terms of accounting entries in the near term?
Nothing that we can foresee right now.
Right, and with it, my last question to you. The proceeds of this particular IPO, 1/4 of that is going into brand enhancement and marketing. Now, that's a key lever for either looking at profitability versus growth. So give us a sense a little bit on that and also the CAPEX requirements and how is this money going to drive growth for the new investors?
So first of all, we have been an asset-light company, very, very capital efficient, and we will continue to be so. So we don't see needs of any capital expenditures coming up anytime in the future. You're right, like we're going to invest a lot of our proceeds into marketing because, as I said, like our annual transacting user base is still growing at a very good pace. Like over the last 12 months, we had 23 crore consumers buying on our platform, and that number is still growing at about 30% year on year. And a lot of people in India still haven't come online and become part of e-commerce. So a lot of those investments that you kind of cited are focused on bringing the next 100, 200, few hundred million people online for the first time, create the right customer journeys for them, get the right kind of products for them. So that's a big focus area for us, and that's where some of these investments will go.
So your path to profitability is clear on that? Give us a sense on.
Yes, so we today monetize using our logistics platform as well as advertising. And as our platform keeps scaling, we continue to kind of increase the contribution margin from both of them. And we expect that to continue even forward. We today have very, very, I would say, attractive payback periods. Over the last 2 years, we've been able to like improve LTV of a customer while our cash, like CAC, which is cost of acquisition of a customer, has gone down, and which is why we feel it's the right financial decision to basically invest in acquiring more consumers because we're seeing good payback period. So I think we will keep doing this. We are very disciplined in terms of how we allocate capital towards growth in our business, and we will maintain that discipline even going forward.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first. You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101, go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her?
No.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one.
Hello and welcome. You're watching Profit Buzzers right here on NDTV Profit. I'm Anushi Okharia and with me is Puneet Zaveri. So it's an interesting day of markets that we're looking at. Now, off the day high is what we are seeing for Nifty 50 as well as for broader markets also. It's a mixed picture that we are looking at. In fact, if we just look at the Nifty 50 currently, about flattish moves is what we are looking at that. Nifty about thereabouts. It's also just a tad bit up the day's low is what we are seeing. While for Bank Nifty, if you take a check at that, that's also not doing particularly so well. 0.1% of an uptick is what we are seeing with regards to that as well. In terms of the point contribution table though, we'll see some of these auto names right at the top. M&M is in focus along with that. Reliance Industry and Kotak Mahindra Bank is there in green. But what's not doing so well is something like a ICICI Bank. Along with that, even Bharti Airtel and Larsen & Toubro are under pressure. But in terms of the sectoral picture also, it's a mixed day is what we are seeing. Nifty Metal is right here at the top, about 0.7% of an uptick is what we are looking for that. Nifty Auto not so far behind, 0.6% is the kind of an uptick that we are seeing for that as well. But what's not doing so well is something like a Nifty Oil and Gas, which is down about 0.7% as well. Along with that, even the energy pack is under pressure. This is after the tariff hike also, which was lower than expected. We are seeing some bit of an impact on a couple of these counters. Nifty Realty back in red now after one to trading sessions of relatively the sector showing some strength. It's back in red is what we are seeing. So it's a mixed sectoral picture that we are looking at. But let's pull up the advanced decline ratio to see how the broader market is doing as well. In terms of that, it declines is outpacing the advances number is what we are looking at, about 1274 declines versus advances of around 1100. So it's a fair 1:1 ratio is kind of what we are seeing. But apart from that, what we are also looking at in terms of broader markets, Puneet, let's talk about that also, because that's one part where we are seeing some bit of that pressure, right?
We are, and definitely a lot of individual movers today in trade. If you can start to pull up a few of them, the likes of Gail, the likes of Eureka Forbes, amongst others, and we will be putting the focus over the next hour or so on all of these stocks, to do stay tuned. Gail's down 5.2%. We'll tell you why. And Eureka Forbes, on the other hand, is up 9.1%. Before we go to Eureka Forbes, let's quickly look at the BSE 500. You will see a lot of individual movers, as Anushi rightly highlighted. And stocks like Welspun Living is also up in trade. Varun Beverages, after an underperformance period over the last 12 months, is starting to see some traction. We will see indeed some more evidence, to say the least, because it's very early. But the likes of MCX, Credit Access Grameen, Nuvoco Vistas, among other, that are also in focus on the downside though. But let me get my colleague Varsha now, because Eureka Forbes is buzzing away in trade after a bullish management target. Now, management is eyeing almost 2 times the revenue, but let me stop there. Let me get in Varsha to get us all of this perspective and a lot more on the company. Varsha, over to you.
Yeah, absolutely. So, it's the investor day key highlights wherein the management has said that they want to double the revenue and to have 3x of EBITDA by FY30. Now, if you see the total industry total addressable market of industry is also rising when it comes to your water purifiers, your vacuum cleaners and air purifiers, and service is a major growth driver which boosts long-term customer revenue. SKU count is being cut from 60 plus to just 5 kits to simplify operations, and the AMC penetration, if you see, is less than 25%, shows big potential. The robotic volumes is equal to 60% of vacuum cleaner sales, which is again a very good thing, and they expect vacuum cleaner sales to grow 6x by FY30. Now let's see what MK is saying on the key investor day highlights, wherein they say that the turnaround is behind and the growth acceleration is ahead. Now what they're saying that the heavy lifting and the cleanup which the company's been doing in the last 2 years has been now behind, and this sets up the business for accelerated growth, which I just told you about, that company wants to have double the revenue and 3x of EBITDA by FY30. This FY30 ambition will, because of this FY30 ambition, the company sees, rather MK sees upside potential of 17 to 18% of revenue CAGR guidance from FY25 to FY30, and because of this they've reiterated buy and they've unchanged target price to 775. So this bullish commentary which is coming from the management of Eureka on their investor day is what making the stock buzz as of today.
Well, thanks so much for that, Varsha. But let me welcome in CA Tapan Doshi as well, research analyst at catapan.in. Tapan, very good afternoon and thanks so much for joining in today. Let me first start off with something like a Eureka Forbes. Stellar commentary from the management. What do you make of the stock? Do you think it's slightly more expensive now, given the run that it's had over the last few months? Your quick view?
Yeah, good afternoon, Puneet. Yes, Eureka Forbes, I'm quite positive on that stock in last few months also, because their sales is going in a double-digit growth. Even from here also, maybe double-digit growth they are planning. Again, if you see, their ad spend is going to normalize. So I think there the cost may go down and margin may improve. OPEX, they are going to reduce, slowly and gradually, maybe 5 to 10% quarter on quarter. But the main thing is AMC and service revenue is slowly, gradually going up. So maybe if it is going up by 15-20%, the margin may increase. I see the debt reduction progress is slowly and gradually coming for this company, and as the debt reduces, the interest cost will go down. So I think that is where the margin improvement will be there. So of course I'm quite positive in the prospects look good, but as you rightly told, that it is on expenses are almost trading at 70p. I think it will be buy on dips, but yes, long term I'm positive on this stock.
Okay, so that's with regards to Eureka Forbes, that's what we are seeing. But a stellar run today, 9% is a kind of an up move that we are seeing. But let's put focus on the Nifty 50 stocks once. And if you just look at the heat map there, we'll see Adani Enterprises right at the top. It's passing today, in fact. And this is, it's in fact the top gainer, seeing an uptick of around 3% or so. And this is after the arm Adani Defence System and Horizon Aero Solutions have signed a pact to acquire about 73% of stake in Flight Simulation Technique Center. Now, this acquisition cost has been at an enterprise value of around 820 crore. The key rationale being that if you just look at the target company, it is India's largest independent flight training and simulation provider as well. If you just look at the facility, they operate about 11 advanced full flight simulators and 17 training flights as well. So this acquisition is lined for the company to build their overall aviation services platform and to strengthen their presence there in both the civil and defense related pilot training is what we are looking at. So it's a strong update, a strong acquisition that is on cards for Adani Enterprises. So Tapan, just want to get your perspective as well with regards to this acquisition and your view on Adani Enterprises as well.
See, Adani Enterprise overall, it's a holding company, and that's why that is one of the reasons why it is not able to go up. And if you see, of course, now if you see from last 6 months, lot many positive things are happening for this company. And overall, the energy capex is going to peak by 27, and mining volumes also going to normalize from here. Of course, the leverage will stabilize from you can say from 27 onwards. And if you see the new coal trading recovery is also going to be there. Data center, that is a new business they are going to start. That is also a positive thing. But I'm little bit concerned about, because it's a holding company. I still feel, I think if anyone wants to go, better to go like Adani Port or Adani Power. Still here, because as so many subsidiaries are there, so there will always be up and down. So my take is better to go to other companies in Adani Group rather than Adani Enterprise.
Got the view, Tapan, and viewer standard disclaimer. The channel that you're watching is also part of the Adani Group, and so is the stock that we just discussed as well. But let's quickly pull up Paytm, see what that counter is doing, because Goldman Sachs has come out and upgraded the stock to a buy from neutral earlier. They've almost doubled their target price from just 705 to 1,570 rupees per share. There are 3 key points that they make in this report. The first one's, of course, on EBITDA margins, expected to more than double over the next 3 to 4 years, with cost control that has been a big positive surprise according to Goldman. They are also seeing some further recovery in market share, and with the new initiatives amongst others in terms of giving out new loans in new verticals, a story that's similar to Grow. They see Paytm as one that will participate and give a lot of upside even from the current levels. Tapan, on Paytm, what is your quick view on the stock, especially since now that Grow is listed, there is focus on this particular space? We're also seeing that the capital market players are also starting to see a lot of moves for those counters that had not performed. Your quick view on either of those?
Yeah, talking about Paytm, yes, I'm positive because so many things is happening on the positive side now for Paytm in last few months. Again, if you see, they are getting now license also. Again, the lending mix is now getting a more margin from here. See, of course, UPI monetization is not so great, but I think their broking business and their slowly engaging lending business and is bringing more margin. Again, the double-digit credit growth will be there from here. Of course, if you see the lot of things, new customer addition now slowly and gradually they are adding, and operating expenses are also down, maybe 3 to 5% on quarter. So loan distribution, if you see, it is up by almost 22%. So that's a good jump. So yes, I'm positive, but I think this stock is on a higher side, still valuation on a higher side. So I think I'll wait for at least 10% dip to get into the stock. But yes, long-term prospects look good.
Okay, so further 10% correction is what Tapan would watch out for Paytm. So that's his view with regards to this counter. But let's put spotlight on something like a Gail now. If you just pull up that one, we are looking at a downtick of around 5%. And this is after Gail's integrated pipeline tariff has finally been approved by Petroleum and Natural Gas Regulatory Board. But the concern here is that the increase is far lower than what the company had sought for, and even below the street expectations as well. Somit joins us with more details on what's happening on this front.
So the difference between the expectation by Gail and the tariff that has been set by PNGRB is largely because Gail had factored in a lot of capital expenditure and operational cost, which is something that PNGRB has not factored in, and that is the major reason why these tariffs have come in much lower than what the street also was anticipating. In fact, the tariff has come in just 12% higher at around 65.69 as against 58.61, which is the current tariffs. And Gail was anticipating this or expecting this number to be 70, close to 78, and street was anticipating this number to be anywhere between 67 to 70 rupees per MMBTU. And as I mentioned, PNGRB at this moment has not factored in the the capital expenditure and the operational cost, and that's the reason the tariffs are lower. But there's a clause here that this tariffs will get again revised from 1st of April 2028, and that is when PNGRB will consider this actual or the future capital expenditure that Gail needs to do and the operational cost. And the reason why they have not increased or considered it right now is because they do not want to pass it on to the end customers this higher rate at one go. So they will do it on tranches, and that's the reason this hike has not come in. But because of the fact that this hike has not come in, there will be EPS cuts. There will be EPS cuts for FY26, FY27 and FY28. To understand more about this, we are joined by Mr. R.K. Jain, the CMD of Gail. So firstly, to start off with, the tariffs have come in much lower than what the company was anticipating and the street was anticipating. Are you convinced with PNGRB's argument that at this moment will not consider the higher capital expenditure or the operational cost that Gail is expected to bear?
And the tariff order has only been issued yesterday night. And our submission of tariff was around 78 rupees per MMBTU, and we were expecting the tariff should be around 72 rupees per MMBTU. But that was supposed to be a final kind of order. But PNGRB, we are experiencing first time I issued an interim relief kind of order, which is saying the tariff is 65 rupees 69 paisa. In fact, they have not moderated our claims. They only said that as interim relief for two parameters, that is system used gas and the pipeline capacity determination they are giving, and the balance will be available to us from April 28, and we will be filing tariff in 27-28. In fact, deferment of tariff is if you see from Gail's point of view, we get 15% return on deferment because the tariff is calculated on discounted cash flow methodology, and any delay in processing of tariff or any delay in considering the parameters which are not being considered will give Gail 15% return.
Well, so that's what the management of Gail had to say on the outcome of this PNGRB tariff hikes. But in fact, even PNGRB came out with their own statement to NDTV Profit, wherein they say that these Gail tariffs, this is an interim tariff that we are looking at. And usually these tariff revisions happen in a gap of 5 years. They gave this interim relief out of turn to Gail, and Gail is also open to go ahead and appeal to this. So this order that we are seeing is very explicit in nature, and there's no revision in order which will happen before April 1st of 2028. So that's the overall update that we are seeing on this particular front. But before we go to Tapan, let's also address the flashes that are there on the screen below on what's happening with IEX as well. The stock currently is seeing flattish moves, about a 0.9% of an uptick, wherein Kapil Sibal for IEX is saying that whatever allegations are there or corruption, we have addressed it. Certain officers made over 173 crore. This is all as per the SEBI report that is going on. There's more that we need to keep assessing. There's 3 CREC officers also which were named in the SEBI report regarding what's happening with IEX. So that's the update, and more of this that we should keep on our radar. But Tapan, coming to you on something like a Gail, wherein now the street is penciling in some EPS cuts after this tariff hikes, which were lower than expected, came through. What is your view with regards to the update, with regards to these tariff hikes, and your view on Gail as well?
See, Anusha, this is not a good news for Gail. No, of course, they were expecting much more and the tariff came much lower. Of course, they can appeal. But if you see in last few quarters also, last quarter also, the result is not coming good. Of course, this is tariff an issue. Again, there, if you see the EBITDA margin is remaining lower side, the petrochemical margin volatility already there. LNG price fluctuation is there, which is impacting their cost. Again, there is higher OPEX which is impacting their profitability. See, the slowly and gradually transmission volume and all that going to improve, and even the LNG sourcing is going to improve, but still I think it's a long way to go. And the marketing expenses also, now if you see slowly and gradually they are trying to improve, but it's not impacting the profitability too much. So still I feel that no, it will take some time to Gail to recover. So yeah, it's an avoid from my side at this level.
Okay, so avoid is what we are looking at for Gail for current levels. But let's focus on the primary markets now, and the new IPO in radar is Equus. Now it's set to open its IPO on the 3rd of December, and this is with an overall issue size of 922 crore is what we are seeing. The price band also has been fixed between 118 to 124 rupees per share. Now this offer is going to include both fresh component as well as offer for sale fresh issue being over 600 crores or so. But to discuss more on that, we're joined in by Arvind Milagri, the Executive Chairman and the CEO. Sir, I just want to start off this conversation firstly by understanding the business model. You operate in the aerospace segment, but over the years, you've also expanded to include consumer electronics, plastics, and consumer durables as well. So this makes your focus more towards the AMS side as well as the aerospace. So just want to gather your perspective on the overall business model.
Equus has been established to be a diversified, ecosystem builder. We are a engineering-led, vertically integrated ecosystem for aerospace, and also we are expanding into consumer electronics, and we already have a consumer business which is going on. So we always, look at how do we bring in highest level of in-country value add in any of the verticals we enter. So we are, currently operating in 2 verticals. Aerospace, as I said, it's been last 15 years. This journey has been 15 plus years, and we have built one of the foremost vertically integrated, manufacturing ecosystem for aerospace, and we are able to do this, consistently investing and understanding the industry challenges and bringing the solution to our customers. This has helped us bring in customers, 15 plus year relationship like Airbus to do this, and that has been, we are performing very well with these customers. And we believe we can continue to do this for consumer side also. So we just expanded into consumer electronics to bring a similar ecosystem.
So what I'm seeing is that aerospace is contributing to about 82% of the mix, while consumer segment about 12%. Now, how will this change going forward in the next few fiscals?
As you can see, we have been investing in aerospace for last 15 plus years, and we have significantly matured business in there. And consumer, in the recent times, we have invested significantly in last 2.5 years or so, close to 600 crore capital has gone into this business, and that is yet to generate the potential revenue growth that's going to come out of that, because we're in early stages of this vertical, and that's obviously going to help us scale this business based on the investments what we have done. Typically, the manufacturing is about investment led. It's a capital intensive, and we have done these investments over the last 36 months.
Okay, so you're raising about 922 crore via this IPO, of its 670 crores for the fresh issue. Now, this will pertain to repayment of borrowings and other costs as well. Can you give us a more detailed outlook in terms of these IPO proceeds?
Number one is we're paying significant debt, repaying bank debt using this primary raise, and then we're investing in capex for further growth. So those are the 2 large objectives. We're keeping certain amount of for general corporate purpose and investment into subsidiaries and potential new initiatives we'll be taking. That's the general corporate purpose. So because ultimately we continue to expand our ecosystem to bring in more capabilities and increase the in-country value add, and a lot of components we do, and we do more than 5,000 unique components in aerospace industry, and that continues to expand the quantum of those components we add, and as we add, we need to bring in more capabilities also same time. So that whole idea has been to build a 100% in-country value add, products as many as possible. And we continue that journey.
So just on the first point, where is the current debt level at, and how after the IPO will this debt go down?
The majority of the debt, close to 90% of the debt, is going to be paid down. Over 560 crore worth of debt is going to be paid down, significantly, and because primary raise has been towards that. and that should help us overall reduce the interest cost of the business.
In terms of financials also, if you look at the FY25 figure, revenue was down about 4% while you sustained losses in the last 3 fiscals. So what led to this decline? Want to understand that, and going ahead, what would be the path to profitability?
Look at it. You need to look at our business as two businesses. One is a aerospace, which is a matured business, which has been historically profitable and continue to grow at 20+% over the last 4 years, and that has been EBITDA and PAT positive. And only that business had an impact last year due to the Boeing issue, which was shut down for 2-3 months in the Q3, and that impacted our profitability in that business. Overall, it impacted overall profitable growth also of the business. So the consumer side, we have invested significantly. That is the one which is going to generate profitability, and that's where the losses are coming from in the past. And with the investment, what has happened, and you can see the improvement overall in our profitability in this business, and that should help us to continue overall as a business also to be profitable.
So what would be the guidance be for FY26 in terms of both revenue and margins?
Well, as you know, we cannot be giving any kind of guidance at this stage, and you can see how the improvements have happened on year-on-year on H1 to H1 over H1, FY25 to FY26. That should use that as a basis.
Okay, but if you look at the margin guidance, in FY24, that number stood at 15%, which then came down to 11.7%. So will consumer segment be the driver, or how are margins across both of these segments are different?
Aerospace segment, historically we have, delivered close to 20% level, EBITDA level, somewhere in that bracket, high teens to, 20% level. So we expect that business to perform in that fashion, and that's what it has been. And consumer is, obviously in the path of, going from negative to the profitability, and as it continues to do that, as the capacity gets utilization to continue to increase, and we'll get there. And we are confident that we are able to do that.
Sir, in terms of your overall presence, now India contributes about 11%, while it's USA and France which have a higher contribution of 24%, with even manufacturing units set there. So just want to understand the overall current order book, and if you can give us a breakup in terms of these key regions as well.
If you see aerospace side, aerospace side is predominantly two geographies, right? France is Airbus, and US is Boeing, and those are the two geographies dominate our business in general. And so that's what it is. India, whatever we do is also predominantly further exported out, and so that's an overall basis what we have. And order book perspective, at this point in time, we're not disclosing the order book value. We are not prepared to do that, but the aerospace industry or contracts are typically 5 to 7 year contracts. Typically, we have a good position in most of these 5,000 part numbers we have. Everything is under contract, so that's how I can leave it at this stage.
Another question is that due to the nature of the business, the working capital cycle is also typically higher. Will this improve post-IPO? And also, I was looking at the capacity utilization levels that are at 42 to 44%. So what's the kind of ramp-up that's expected here?
So which typically, guide around 120 days of net working capital on the sales for our industry, for aerospace industry, and we have, it's a fairly good number in our view. We can achieve that number. And the other question with respect to utilization you mentioned, again, it's a combination of where our aerospace is 65 to 70% level utilization we have, and then combined with the lower utilization in the consumer. As I said, earlier, my consumer utilization is going to increase as we start shipping to customers, and utilization will improve. With that combination, our utilization, overall utilization will increase. But aerospace is already fairly up there in the utilization perspective, because we have to continue to invest, keep some capacity to bring in new work and industrialize new work. So that's why we would maintain, and if you see our objects, we are investing more capital into the aerospace division, and that is what part of the growth is also going to come from, because the utilization is almost to the level where it needs to be.
Okay, well, thank you so much. That was my final question to you. Thank you so much for taking out the time and speaking to NDTV Profit. Well, that was the management of Acres that was on radar, the listing, or rather it will open for subscription on 3rd December. So do keep that on your radar as well. But it's time that we slip into a short break. We'll be right back. Lots more lined up on the other side. So do stay tuned in.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first.
Correct.
You had the career that a lot of people aspire to.
The corporate world was not for me. And I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101, go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her.
No.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है NDTV के साथ वो बहुत
Still tuned in to Profit Buzzers, and thank you so much for staying tuned in. Well, nothing as exciting as yesterday in terms of the market, and you do have media, metal, auto leading the gains. But let's also put the spotlight on Lenskart, because there's a big call on Lenskart from Jefferies. The brokerage has in fact initiated coverage with a buy rating, and a 500 rupee target is something that they're looking at and working with, citing strong growth runway, solid unit economics, as well as a rapidly scaling omni-channel model. Now, India remains the earnings powerhouse, and that's also what they're saying and talking about, while global markets add optionality. Let's also get in all of those very important details. Of course, the stock is buzzing away in trade. Amit is standing by with all of those very important details.
Well, they have initiated this coverage with a buy rating and target price of 500. Now, the brokerage here is quite bullish on the company. They say that Lenskart is India's largest tech-driven eyewear retailer and holds just 5% market share, which offers a strong growth potential going forward, given the fact that the total addressable market in India is quite large. It says that its vertically integrated omni-channel model ensures cost efficiency, rapid delivery and superior customer experience, something that stands out for Lenskart compared to other eyewear retailers. They say that the India business serves as the strong rock bed for the company, given the fact that 85% of its EBITDA contribution comes in from the Indian operations. Strong cash flow generation also happens from the Indian operations as per the brokerage, and the international segment will offer a good growth optionality going forward as per the brokerage. Now, they're saying that the unit economics are quite attractive for Lenskart, and there is fast payback period also, and this should drive a 50% adjusted EBITDA CAGR over FY25 to FY28 for the company. And when it comes to the earnings per share, they're expecting the EPS growth to be close to 44% over the same time period. The balance sheet will be net cash. There won't be much debt despite the expansion plans of the company, and given they're also expecting the company's return ratios to grow and free cash flow also to increase going forward.
All right, then, thanks, Amit, for getting us that update there. So 2% uptick coming in on Lenskart, and that's also something that we should be discussing with Tapan Doshi, who's been with us. Tapan, thank you so much for being with us, and I also wanted to get a sense of what you think about Lenskart. Are you perhaps as bullish as Jefferies is? Because they're talking about a bunch of growth verticals, they're talking about the market share as well, and that still seems to be a little bit of a concern. What is the view that you have when it comes to Lenskart?
Yeah, thanks. See, of course, Lenskart valuation is on a higher side, and Jeffrey is quite bullish, but still I feel we have to see 1 or 2 quarter result whether they are able to deliver or not. Of course, from here the store expansion is going to be there in next 2 years. Again, premium products will come which will improve their average selling price, and margin may go up little bit. The problem is for Lenskart is the cash burn is higher than the estimates. Again, the competition is there from Titan and other small players also. So yes, addressable market is big, but we have to see at what pace it is going to grow, because valuation, what currently it is driving, is also on a higher side. It's good that Lenskart is able to hold after IPO. Everyone thought it will come down, but still I think one should wait, don't rush. I think maybe in a SIP manner one can invest, wait for 1 or 2 quarters, then better to get it.
That's Tapan's view on Lenskart. It's an expensive stock to say the least, but a lot more perspective once the company starts to release its results. So that'll be something to watch. But let's quickly look at the Nifty IT, because there are some key brokerages that are focusing on the sector as well. We have something like an L&T Technologies, which is doing well, but Jefferies, Nomura and CLSA actually have a note where they're talking about some key triggers for 2026. Jasmeet is now joining in to give us perspective and some key highlights from all of these reports. Jasmeet, over to you.
Well, thank you for that. IT has been in focus in the last couple of weeks. We see the up move coming in IT on the back of various fronts. Now, if you look at the brokerages, they have also come down and given their view what to expect going forward for FY26 and 2026 altogether. Well, first one is Nomura on IT. Now, what they say is they expect revenue growth to improve marginally. They see a very modest revenue growth. Now, they make a note saying AI-related opportunities to open up for next 12 to 18 months. That will be in focus. Apart from that, they also make a note that macro environment is the key to sharp revival in the discretionary spending going forward. While they remain selective on the stocks, Infosys, Coforge, Eclair are the top picks. While I also have CLSA on IT sector. Now what they say is, with an AI narrative changing each year, EPS growth still linked to the macro environment. While they also make a note that what to expect for 2026 would be the US midterm election results. That's something to watch out for. Apart from that, the tariff in base and then the Fed rate cuts. While the few structural headwinds for the sector remains intact, the narrative around the H1B visa is something that will be in focus, and also the India-US trade deal. Now, what they prefer Tech Mahindra and Infosys in large caps, while they look at Persistent and Coforge when it comes to the mid caps. Now, lastly, I have Jefferies on IT as well. Now, they see the valuation reset underway and selective opportunities. We see most of the brokerages are doing a selective picks on the stock, then focusing on the entire sector. Now, what they notice, stock performance have correlated well with the EPS revision. Now, they see the PE de-rating has taken place on the back of the macro and AI environment, but also on the back of the IT pack was at a premium in the start of the year with a 15% premium on the PE ratio. Altogether, they also prefer in mid-size Coforge and Sagility compared to other large caps. Now, we see that mid caps have grown really well in the Q2, but the large caps have still done a modest growth and hardly beaten estimates. So, all in all, it's a wait and watch how the IT turns out for the 2026.
Well, thanks so much for that, Jasmeet. But, let me also welcome in Raja Venkatraman. He's the co-founder and neo trader. Raja, on the IT pack, any picks that you have on the charts that's just getting into them right now for a better 2026 compared to this year? I'll also get Tapan's view, but you go first.
Yeah, so when I take a look at the entire scenario of Nifty IT, I feel that Infosys is giving me a very good setup here. And what I see in Infi is that the entire post the news flow of the buyback, I'm seeing that the Infosys is giving me a good setup right now. And I would say that the large caps were staying behind the mid-cap, the mid-tier IT like Coforge, LTTS, Emphasis, they were all in the fore. Now the large caps are showing some promise, and with the re-rating of the brokerages of the IT sector itself, I think that Infi could be a big bet for the coming months. And I'm saying that because it has come out of its shadows, and like you rightly said, it is getting into the groove right now. So this is a good point to get into Infi. Infi is always a preferred name amongst IT, but then they have not been performing just like in the banks, HDFC and ICICI. So I think it's time for Infi to perform.
Tapan, very quickly, we have seen that the focus has largely been on AI, but both Nomura and CLSA highlighting that macros continue to be trumping AI right now, and that's the focus of their picks as well. Would you concur with that view, and what should we watch out for? Is it mid caps over large caps for you?
Yes, Puneet, AI, of course, it's a big threat for all the big companies. I'm not too much bullish on TCS, Infosys, Wipro and all that, because they are going to face a lot of issues. Again, the margin will go down. Again, lot of, you can say that attrition is there at TCS level, Infosys level also. And maybe some contracts may be renegotiated at US level. There the margin may go down. So guidance also is around 2 to 6%, which is not so great. If I am little bit positive, then it will be a mid-cap, Coforge and Persistent, where you can see they are focusing on niche products, much more AI related, and they are in a niche sector also, and that is where the margin can expand in future, and they are able to perform well. So yes, if someone, I am talking about long term, of course, if someone want to go for IT, it should be much better to go mid cap, that is Coforge and Persistent, rather than large caps.
All right, then. So time now to sharpen your focus when it comes to IT and take a look at some of those other counters as well, barring your large caps. And that's the view coming in there from Tapan as well. But tell you what, let's also take a look at some of these other buzzers that are up and away in trade. So perhaps the Reflex Industries, 10% uptick coming in on that counter, Voltam Transformers, All Cargo Logistics as well, buzzing away in trade. In fact, tell you what, let's also go across to Jasmeet again to help us out with the triggers, and then we'll get you the view coming in as far as all of these counters are concerned. Jasmeet.
Well, thank you for that. I have three counters and newsmakers as well as buzzing in trade today. Starting off with all cargo logistics. While the company's share has seen deflation in last 5 to 6 trading sessions, but the stock is down. But today the stock is buzzing in trade and it's nearly 11%. Well, this comes on the back of the new filing the company has done. Well, the company clears in the official document that all cargo logistics keeps 87% of the business value post the demerger. While the newly formed entity, all cargo global keeps roughly 13%. While this particular clear announcement clears the confusion in the trade, while that's the reason the stock is buzzing in trade, it's nearly 11%. We look at the next counter, that's Voltam Transformers. Well, the company receives letter of intent of rupees 85 crore from Gujarat Energies and Transformer Corp. While this particular LOI is to supply various ratings of power transformers. Now, this particular order to be completed in next 6 months. If you look at my last share, that's Reflex Industries. Well, the company receives an order worth rupees 100 odd crores, and this order is for transformation and extraction of the bottom ash. While timeline for this particular order is 4 odd months, but in terms of the order book as of Q2 stands at 1200 odd crores. These are the counters buzzing in trade on the back of the news.
Alright, then thanks Jasmeet for getting us that update there. So there you go, bunch of those counters buzzing up anywhere between 3 to about 10% for some of those counters. But let's also focus in when it comes to all cargo logistics. Tapan, I wanted to quickly get your view when it comes to this counter before we move on. You did have the stock rising after falling for over 5 days straight. What are you looking at when it comes to this particular company?
See, overall, this company has not performed over the time now. And if you say there is always a fluctuation on the profitability side. Of course, the global freight rates also remains volatile and EBITDA margin is not coming up as such. Europe demand is also quite weak and freight yield pressure is always there on this company. So working capital, if you see, no, it's little bit stretched. Of course, if you see the margin stability is going to be expected in next 1 or 2 years and steady global volume will be there slowly and gradually as the trade war gets end. But I feel no, this is the company you can avoid. No, still I think 1 or 2 better quarter results should come. Then one can think about long term for getting into this stock.
Got the view, Tapan. Raja, very quickly on Reflex, on the charts, it's been a stellar mover. Any quick view that you have? It's a stock we don't talk about that much, but any view?
Yeah, this particular stock has been going through its phase of decline, and the decline continues to persist. So the reaction which you're seeing on the upside today, it's clearly some bit of value buying or low opportunity which people are trying to encash. But then I would say that this move is not going to last long because the higher time frames are also continuing to say that the stock is under pressure. So there is going to be some profit booking at higher levels. So I would say that this is not a stock which I would pursue, and it's best to avoid this stock for now.
Well, avoid on Reflex is what Raja's view is. But speaking at the ANI National Security Summit, Hindustan Aeronautics CMD, Dr. D.K. Sunil said that there is absolutely no problem with the Tejas. It is absolutely safe, and whatever has happened in Dubai, while being unfortunate, it is only a one-off event. Let's quickly listen to what he had to say.
There's absolutely no problem with the Tejas. Let me declare it from this forum. There is no problem with the Tejas. It's a wonderful aircraft and it is absolutely safe, and its safety record is the best in the world. We've had a couple of them, and what you saw in Dubai was an unfortunate incident. I think as countries evolve and develop their own technologies, they go through phases. And today we have made this 4.5 generation aircraft with the latest capability. It's a resounding success, and we should all be proud of it. So I think there will always be naysayers who are talking about this and raising questions, but it will not deter us from going from strength to strength. So I can assure you that it's an absolutely safe aircraft, and there is no question that it will have any impact on the future of Tejas. We have an order for 180, and I'm sure it will go up, and we will definitely even have an export market for this.
All right, and there you go. That's the word coming in from the CMD of HAL. But let's also quickly listen into the commentary coming in from the Defence Secretary Rajesh Kumar, who talks about how HAL has a tendency to overpromise and underdeliver. In fact, what he's also adding is that any delivery not done within 1 year by the company is going to be foreclosed. So this is a very important disclosure that he's in fact talked about. Let's go across and listen in.
There is a tendency to overpromise and underdeliver, and we will need to start cracking down much more, apply LD clauses much more, and in the current round of emergency purchases that we are doing, we've actually taken a very tough stand that any case where delivery is not done within 1 year will all be foreclosed, and I intend to sort of ensure that that is done. So irrespective of who it is, which company, which country, we will foreclose every contract after 1 year. Hopefully those kind of decisions will start bringing in some level of accountability when it comes to delivery milestone.
Well, that's, stern words coming in from the Defense Secretary there. And, they have been speaking about, how important it is that the deliveries happen on time. But Raja, let me come to you again on HAL. It did see that dip of almost 3 to 4%, and a lot of it got bought into on the day of the unfortunate crash. Anything on the charts that suggests a continuing up move from here?
Yeah, the crash did, bring about a crash in the prices as well. And the gap which has got formed based on the news flow, it's purely a knee-jerk reaction. And I would say that the price looks to have made an immediate bottom right now. And the strong rebound from there on clearly says that there is more room at the top. And this buying could sustain and see levels of around 4,700, which is very much possible, that has opened up. And with the market showing some momentum, and defense stocks also in the play, I would say that HAL would definitely be one of the preferred bets. So it's definitely a buy, and one should use this opportunity to buy into at a lower risk right now.
All right, and so there you go. That's the word coming in as far as HAL is concerned. And that particular counter will, of course, remain in focus after that very stern commentary coming in from the Defense Secretary. But Aptel will hear IEX case. And that's a matter that's going to be discussed on January 6th. We do have Danish Anand, who's joining us with all of the latest updates when it comes to the hearing. Danish, over to you. Tell you what, let's also quickly take a look at some of the key takeaways when it comes to IEX, right? Because, Puneet, these are definitely in focus, and in terms of the market coupling impact, that is also key to focus in on, because the company is losing its key moat of superior price discovery. That's something that we're seeing. Other than that, it may also lose part of its 85% spot market share, and that's also key to highlight, isn't it?
Well, most certainly, and we seem to have, of course, lost Danish, and we'll get him back to get that perspective. But with the kind of market share that IEX had, the growth largely was expected to come from the increase in power demand. Now that the market share is under threat, you could see IEX continuing to be under pressure. So this is a pivotal moment for the company. They have, come to us in the past as well and talked about how they will be able to, signify and properly get over this market coupling reform as well. But Danish, if I'm audible to you, give us some perspective of why it is so important for IEX today and what are the key takeaways.
Well, first of all, I would like to tell you that Apple will be hearing the matter next on 6th of January. And as far as the whole matter is concerned, IEX in the hearing today said that they are the largest market leader right now, and they are the first power exchange ever to be formed in India. And later on, as we progress over between 2022 2023, at that time there were 2 more power stock exchanges that have come up. And so they say that they have this expertise and their algorithm is really great. So that is why they have a lot of customers on their platform. But as far as the order of the year is concerned,
there seems to be, some kind of, a lot of background noise coming in from Danish because he's reporting live from the ground. So we'll probably get back to him once we get a lot of proper connection as well. But Tapan, let me come to you very quickly first on IEX. Considering the older reform, and we'll probably get Danish back on the new one, how do you see this issue? Because at 85% market share, if the decoupling happens, how would you view the stock?
Yeah, but that's a big threat. No, that is a threat to for the market share, and I think that's a high risk. Now, if you see now slowly and gradually, their volumes are coming down, and again the lower DAM prices also pressurizing their yields. Again, clearing price volatility is there, which is impacting their fees also. So slowly and gradually, if these things goes on, I think that is where things will get worse for IEX. And we need clarity here. At the end of the day, if the core business model get impacted, then there is a big problem. So I'm not too much positive. Again, the power dividend may come up in future, but still I think lot of issues are there with IEX. So I think better to avoid at current price.
Well, absolutely, thank you so much, Tapan, as well as Raja, for joining us on this show and taking time out and explaining to us what are the key triggers when it comes to some of these counters. But tell you what, with that, we're completely out of time on this edition of Profit Buzzers. Thank you so much for tuning in.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first.
Correct.
You had the career that a lot of people aspire to.
The corporate world was not for me. And I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101. Go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her?
No.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
जान रहा है दिल ये तो जान दी है तू
मेरे तू।
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
और रहमान।
सोनू निगम के लिए जोरदार तालियां।
The NDTV Profit has come a long way since it was relaunched.
I hope you're watching NDTV Profit a lot.
Absolutely, you can come to my office and you can see.
Neeraj, Tamanna and the entire Profit team is also working super hard on building a world-class financial news product, and therefore it's good that you're watching, and I hope you can see some churn and improvement as well.
No, absolutely. I think the NDTV Profit has come a long way since it was relaunched, and so I'm pretty pleased that what we require for the investor is the correct advice, correct information, and in a right way.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Anush, if you look at the benchmark today, not much of an action. In fact, at one point of time, it seemed like we were trying to regain the yesterday's life high. But then again, market gave up on those gains, and largely we are trading now flat at close to 26,230.
Yeah, absolutely. So it's a flat picture in terms of where the Nifty 50 is concerned. In fact, if we just pull up that, you're looking, it's right there in the last 1 hour of trade, about it's 0.06%. Flattish moves is what we are looking at. In fact, for Bank Nifty also, we are looking at an uptick of around 0.1%. That's the kind of level that we are seeing for Bank Nifty as well. But in terms of the point contribution table, just want to pull that one up as well. What we are seeing is something like M&M, Reliance Industries in focus. In fact, Adani Enterprises is the top gainer in the pack as well. And this is after they've signed a pact to acquire 72% of a stake for strengthening their overall aviation-related platform is a positive that we are seeing on the street. So that's a strong mover in terms of the Nifty 50 is concerned. But if you take a check in terms of the sectoral picture also, it's a mixed bag is what we are looking at that. While Nifty Media is the top gainer in trade today, we are looking at an uptick of around 1.5%. Auto and metals are somewhere in the lines of 0.4 to 0.5% gains. However, what's not working out well in today's session is the defense pack. Flat moves is what we are looking at for that. Realty also, after seeing that some bit of an uptick in terms of how the market momentum was, now it's down again. 0.3% is the kind of a decline that we are seeing. Nifty oil and gas also seeing cuts of over 0.6% as well. But in terms of the broader markets, it's if you just pull up the mid cap 150 and the small cap 250 indices, what we are seeing is a decline of 0.1%, while small cap 250 also we are looking at cuts of over 0.2%. Just off from the day's low is what we are seeing for both of these indices. But let's take account of all stocks that are buzzing and are in action here. In terms of the top gainers in the small cap 250, what we are seeing is all cargo logistics right here at the top. Other than that, even Wellspun Living and TVS Supply Chains are in focus. About 9% of an upside is what we're seeing for all of these counters. While on the losing end, what we're seeing is correction for Sirma, down about 4%, while MCX and Credit Access are also seeing cuts of 3% as well. But on account of higher volumes and a couple of stocks that we'll be addressing on the show as well, Reflex, 10% of an up move, and this is on the back of an order win. Along with that, Agritech is also seeing higher trading volumes in today's session with something like a 63 moons also, which we'll be talking later on the show. 16% is the kind of a up move that we are seeing for this particular counter. Other active securities, if you're talking about that, Sigachi, the Jindal stocks at Jindal Poly and Jindal Photo, both are seeing an up move of over 8% in trade today. While for Patel Engineering and Ashok Buildcon, we are seeing correction, and Ashok Buildcon, what we are seeing is that NHAI has also not allowed them to bid for next 1 month or so. But let's bring spotlight to Cosmo first. And if we look at the core film business, that continues to face tariff-led margin pressure. But what's on focus in today's announcement is their JV. They formed a 50-50 JV with Filmax Corporation in Korea. The JVs to carry out distribution, sale and marketing of flexible packaging is what we are looking at. So to talk about this quarter gone by, about the recent JV and even the outlook forward, we are joined in by Pankaj Poddar, the Group CEO of the company. Hello and welcome to the show, Mr. Poddar. Thank you so much for taking out the time. Just want to understand more about this recent announcement that you've made in terms of where the JV is concerned. In terms of the second half also, how have things been progressing after the second quarter that we've seen?
Hi, good afternoon.
Good afternoon.
So with Filmax, it's a strategic partnership with an established Korean film player to sell their specialty films through Cosmo Global Network, as well as move some of their production for their local South Korean sales to Cosmo India. So this will be a great win-win for both the companies and should lead to profitable sales. The profit should increase year over year, and in FY27, we expect to accrue incremental profit of 10 crores, and it should easily scale to 30 to 40 crores over the next 3-year period. As far as the outlook is concerned for H2, we expect that the demand supply situation is very stable right now, and margins should, if at all, should go up from here. And normally, what we have also seen is that from December till June, July is normally the season for our industry, especially from January to July. So we expect a stronger H2 in the coming months, especially the Jan to March quarter.
Right. The 10 crore profit number that you just spoke about, that is specifically from the JV?
That's right. That's right.
Okay. Now, if you look at the second quarter numbers, the revenue number that you reported, in fact, the EBITDA number also that you reported, that was the highest quarterly number that I've seen for a very long time. Solid 20% growth on a YY basis. So for the second half, will the growth number specifically on the revenue and EBITDA front be more than 20%? Given that it's really strong?
Because we had put up capacities in last 1 year, and they are to ramp up. So in fact, in the coming quarters, the revenue number should grow even better, especially in the quarter 4. And the other thing is that raw materials and the sales prices are, because of raw material, the sales prices are lower because it's a pass-through of the raw material, which, is actually one of the lowest in last 15-17 years. That is, again, something which should take our revenue numbers higher, but irrespective, the volume itself should go up, which should uplift the revenue numbers in quarter 4.
So just want to understand on this ramp up of these new lines that you're talking about, what's the kind of utilization levels that we'll be seeing in the beginning, and what would be the peak levels? I think you're in the next 2 to 3 years expect to reach the levels of 70%. So what's the kind of growth potential that we are seeing? Because if you look at the second quarter, there was some bit of an impact that we'd seen in the segment because of this.
Yeah, so again, vis-a-vis quarter 2, quarter 4 numbers should go up by around 15 to 20%, quarter 4 or maybe quarter 1. So there is a potential to grow these numbers by another 15 to 20%.
Right. Earlier you did mention that your specialty chemical subsidiary, that was on track to achieve the highest ever EBITDA margin. So any timelines on that front and any numbers that you could give us?
So even if we see the last quarter, we did a revenue of 50 crores and with a 20% plus EBITDA. So it's going on track. Quarter on quarter, we are seeing a growth, both in the margins as well as the revenue numbers.
What is the target here?
So this year we should close 200 crore plus with a 20% plus EBITDA, and we would like to take it even higher next year for sure.
Be the target for next year, because I'm assuming that all of these capacities, additional capacities, are going to flow through FY27, and the peak levels is something that we'll anticipate from FY28 onwards. So I know that it's a relatively longer time frame that I'm asking you about, but if you can give us a guidance for that front as well.
So see, most of the capacities have actually been added in film or Cosmo Consumer or Plastic. We haven't added any capacity in the Cosmo Specialty Chemical. Having said so, we still have a potential to increase our sales by 50% more from the same capacity, especially in the coatings and master batches. So there is a lot of potential, and we need to find the right set of customers for these products. There's a lot of developmental activity which is going on. And, we are into the business of specialty where once you get the customer approval, then the revenue potential is much higher. So we are in I would say, growth phase, a lot of approvals that we are trying to take from the customers. And once we have those approvals, then the scale up will even be much better than what we have done till now. So next year, we expect 20-25% growth. But then year thereafter, once we have more approvals on board, then we can build on that.
Right. US was one of the strongest growing market for you. But post this implementation of the 50% tariff, what has been the impact? What has been your conversation with your clients there? How much of this impact is something that you're taking on your books, and how much of it is something that you've passed on?
Yeah. So the good thing is that we have not lost any revenue. With almost all the customers, what we have done is we have absorbed the first 25%, and because of the Russia impact, the other 25%, the first 25% impact has been absorbed by the customers, and the remaining 25% because of Russia has come to us. We have fully absorbed it. So there is a profitability impact of close to 60 crores, and we are watching the things very closely. We do expect that at least the 25% duty should go away sooner than later, and that will again positively impact us once that is removed from the picture.
60 crore profitability impact, but in the second quarter the impact was just for 1 month. So given that Q3 will see the full quarter impact, any internal estimates that you have on what could be the exact impact here for the full quarter?
Yeah. So 1 quarter impact in Q3 itself will be 15 crores.
Okay. And assuming if the tariff rates come down by to 15%, then I guess your margins could have a much more upside from the current levels?
Oh yes, absolutely. And the other thing is, we were going in a great phase of growth in US. Right now, that has slowed down quite a bit because of this tariff. A lot of customers are saying that let us have clarity again. So what we feel is that once this tariff comes down significantly, then a lot of those discussions which are right now on hold will restart. And given that a lot of trialing, sampling, all those stages are over for us, we can see again a very positive momentum in both the revenue growth as well as the profitability.
Okay, so well, that's with regards to the overall US trade deal is what we're going to be watching out for. But other piece that I want to focus on is the pet care business. Just want to get your outlook in terms of your diversification from this packaging films to a completely unrelated segment like that. What's your strategy there? Because even if you look at the profitability numbers, you're like 3 to 4 years away from break even or so. So give us perspective on that front as well.
So see, first thing that we had told the investors and the people at large was that by FY27, we'll put this into a separate subsidiary. We are on track of that. Within next 6 to 9 months, we will take Zydus to a separate subsidiary. And then once we do that, once we reach a reasonable number of, let's say, 100 crores of run rate, then we will be open for at least the first level of bringing funds into the company, into the Zydus subsidiary. So we are on track. The way we had projected month on month, quarter on quarter, Zydus is growing well. There's a close to 3% month on month growth in this business. and we are happy with the progress that we have made. We have launched a lot of private labels of late. The vet care practice has close to tripled in last 1 year. So all the basic fundamentals of the business that we had looked at are tracking very well. We have started omni-channel at close to 10, 12 centers, not just for marketplace, but even for our website. So all the basic pillars of growth are in place.
So this pet care business, 13 crore is something that we generated as revenue in the second quarter. Could you give us a target, say for FY27 end? Where do you see the revenues to be?
So see, we want to, first milestone for us is to touch a net revenue rate of 100 crores. And what we are planning is that within 9 months from now, we should be touching that run rate for us. Next year, for sure, we intend to do more than 100 crores full year revenue. We will be sitting somewhere between 110 to 130, 140 crores of net revenue next year.
Okay, so just a two-part question. Considering that, overall ramp up with the Ziggy business, which is there around the likes of 100 crore for FY28, what's the overall growth potential that you see in terms of revenue growth? What's the kind of sustainable growth number that we are looking at? Along with that, the margin profile as well, and even the net debt number from the 1200 crore, which is there at the peak level also, how would that reduce going forward?
So see, as far as Ziggy is concerned, a lot of it is dependent on the external market growth. Pet care, as we all know, that is growing very nicely at 20%, and the years to come, it is expected to even ramp up at a faster pace while the base gets bigger and bigger. What we also feel is that 27 will be a year where the momentum will pick up even further for Ziggy. Very difficult to project numbers, but things should only get better from here when it comes to the pet care industry as such. Coming to the second thing in terms of the debt, what we have decided is to consolidate at this stage. We have done a lot of capex in last 5 years, close to 1600 crores. So now we are going to consolidate for next 18 months, not do any major capex as such, and we easily expect to reduce our net debt by 400 crores over the next 2-year period.
Right, sir. Thank you, sir. Thank you for joining us and giving us the way forward for Cosmo First. Well, with that, let's also welcome in our fundamental guest for the show today, Raghavendra Kedia, founder, Prosperity Advisors. Sir, you heard the management, strong growth plans going forward, 20% growth is something that they are saying they can easily achieve. Plus, also they have this pet care business, which could at later stage, could be demerged as well. How are you looking at Cosmo First as a company?
Good afternoon, Somit. Broadly, we have seen the earnings and the revenue has gone up in the last 2 quarters. That's a positive. But few yellow flags in the company's balance sheet are its high debt. This is a 2000 market crore company and with the debt levels of 1000 crore plus. So that's an elephant in the room, which the management has to address. Another yellow flag for us is the contraction in net profit margins, where we have seen that the revenues going up, but at the cost of shrinking net profit margins. So we would be more happy to see for the next 2 quarters, there kind of some margin expansion in terms of the net profitability. But until then, even the mutual funds and institutional investors have exited the stocks of lately. So that's not very comforting. So considering high debt levels, contraction in net profit margins, and exit of institutional investors, Cosmo First at levels of around 732 is an avoid on the fundamental metrics as per us.
Okay, so that's the perspective that we have for Cosmo First for you. So keep that on your radar. But before we talk about more small cap stocks, it's time that we take a deep dive into the F&O market. And we have Sharath standing by to give us perspective on what the Qs are suggesting for the trade today.
Well, Anushi, the Sensex overall looking at is almost flat coming in, and also there has not been much change also since the last time we spoke in BSC's F&O snapshot. M&M and Adani Ports holding the fort, the top 2 gainers in the Sensex list, and minor cuts coming in across the counters, but Power Grid, that's where the selling has increased as well. Net the action, the Sensex PCR, that also remains, you could say, towards the larger put writing numbers, and it's still flat, just 86,300 odd levels. The markets, maybe the bulls are taking a pause going ahead action in the put segment. BankX, of course, we see the story is also showing divergence. Net we see, let's pull up the important banking names. Yes Bank and IDFC IDFC First in the red, but SBI is still holding up. Last time also in that session we saw a significant up move coming, but a reversal in HDFC Bank. So divergence coming in BankX. Overall, their contracts is also something which we'll be looking out for. Let's look at the stocks right now. Key long build up. There are some counters. They include Varun Beverages and SRF. And this movement has been strong when it comes to this counter. Also, apart from this, a short covering, let's pull that up as well, where we see Paytm and Hindustan Zinc making it to the list. Also, long unwinding, these includes MCX and SBI Life. And lastly, the important short build-ups which are coming in, they include Gail and HFCL. So these are the important stocks which are buzzing in the FNO space.
Thank you, Sharad, for that snapshot when it comes to the FNO segment. With that, shifting focus to Reflex Industries. That counter is one of the top gainers in cash market. The stock has gained after it won a 100 crore order on ash handling from a large Indian conglomerate. And the execution time period for this order is nearly 4 months. Let's get into Varsha with more details on what does the company exactly do and what is this order about.
Well, thank you so much for that. So yes, this order has been given by a large Indian business conglomerate worth 100 crore, wherein the scope of work includes excavation, loading and transportation of bottom ash, which needs to be executed in the next 4 months, and one of the reasons why stock is buzzing. But deep diving into this company, let's see what is their strategic portfolio update looks like. One is power trading, which they fully exited, and the margins, because the margins were too low and not aligned with the strategy. Talking about the refrigeration business is into liquidation process, and mobility business has been being demerged from Reflex Mobility, and which is being classified as discontinued in financials. Now, talking about their active businesses, one is wind turbines, wherein manufacturing of 5.3 megawatt turbines has been done, and 2 turbine orders have already secured. The revenue will start from H2 FY26. Talking about their core operation, which is ash and coal handling the activity is improving after extended monsoon. Several new projects have been starting, and around almost 1200 crores of revenues therein when it comes to ash and coal handling, and the sustainable EBITDA and EBIT range stand at around 8 to 11%. Q2 margins were 10 to 12% due to better mix and lower range. Talking about the revenue mix going forward, what will look like for this company. So a near-term revenue is mainly from ash and coal handling, and the wind turbine revenues to start from H2 FY26, and the mobility revenue has been removed post demerger. But also look at what are the key risks when it comes to this company. So weather impact will have an impact on execution and margins, and the working capital intensive this company being a working capital intensive may have a pressure on that. Delays in PSU certification cycles, wind revenue back end execution risk in Q4 are some of the risks that this company faces.
Right. Raghavendra, any view on Reflex Industries? The volatility is quite high on this counter, but this 100 crore order win has led to a sharp up move in the stock.
So, Swamit, we believe that the order book was healthy, and with this 100 crore order win, it's getting healthier at 1300 crore order business visibility for the next 6 to 12-month horizon. We believe that on a very moderate basis, the company is on a very good track record in terms of earnings. We believe an 18 rupee EPS on a full year basis, and giving a moderate P multiple of around 25-26 times. We come out with a 30% upside even at current levels at Reflex Industries for a price target of around 470. So good order book, good visibility, moderate P multiples gives us a very good headroom for upside of around 30% in a 12-month, 1-year investment horizon. Reflex Industries is a buy at current levels.
The next stock that we are going to talk about is 63 Moons. Now, the stock has been gaining after the National Spot Exchange Limited, which is one of the subsidiaries of 63 Moons, has won the approval from NCLT, that is National Company Law Tribunal in Mumbai, for one-time settlement with close to 5,682 traders. So that is one of the biggest reason why the stock has gained nearly 63% from the current levels. This was a big overhang on the share prices, and given the fact that now a one-time settlement has been allowed, the stock has gained nearly 17% in trade. But let's get in Jasmeet here to give us other factors on what could be the reasons why 63 Moons has been buzzing in trade.
Well, thank you for that. Firstly, the stock is down to 22% in last stock is up 22% in the last 5 days. If you look at the annual performance of the stock, is down nearly 7%. And as rightly said, stock is buzzing on the back of the clearance or the NCLT news today. If you look at the performance of the company operates in the computer programming, consultancy and related services, while the company also provides end-to-end solutions to the broker. Now, if you look at the investor criteria of the company, most of the shares are held by the promoters and public, and they divide them among the ratio of 55% of the promoters, 45 are the public. Now, in last 2 years, we have seen that FIIs have come down from 1.1% to from 8% to nearly 1.1%. So we are selling pressure on FIIs as well. Now, in terms of key financials, we see that the revenue is down 87% for FY25 compared to what was in FY24 at roughly 368 odd crores. And company also reports an EBITDA loss. Now, while this particular news comes on the back of cancellation of an order from MCX, which were the major clients of the company, post the cancellation of this particular order, company has the same cost maintained. That's why it's impacting the profitability as well as the EBITDA. If we look at the key profits of FY25, the company reported a loss of 40 crore compared to a profit of rupees 215 crore. And this particular order accounted to roughly 300 odd crore of the top line for the management. That's why we see the pressure in terms of key financials. If we look at the Q2 numbers, the top line is at 21 crore versus 30 crore in the previous quarter, while in terms of the net losses, they have increased to 45 crore from 3 crore in the previous quarter. So we see pressure coming in from the financials, but the stock is still buzzing on the back of the similar NCLT news, given the overhang of this particular news is over from the company.
Thank you for that, Jasmeet. Raghavendra, coming to you, now that this overhang is largely behind, what do you make of this development that is there for the company and your overall perspective on 63 Moons?
Good afternoon, Anushri. We will continue to look at 63 Moons as a company which has 5 quarters of consecutive losses, and the key financials, as what your colleague reflected, are very confusing or volatile. So even with this positive news, where a one-time settlement is offered, we believe at levels of 9-10, we would avoid 63 Moons, have the company come into profitability, a steady order book, until and unless that happens, where the balance sheet improves, we would still continue to avoid. Look at the employee cost, which is more than the revenue of the company on a full year basis. So that's also a yellow flag. So they have to fix a lot of points on their valuations and operational and execution metrics. Until then, wait and watch.
Okay, well, that's the view for 63 Moons that we have for you. Thank you so much, Raghavendra, for joining and sharing that perspective on all of these small cap stocks that we've discussed on the show. But that's all that time that we had on this edition of Small Cap Buzzers. But do stay tuned. India Market Close coming up next.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first. Correct. You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101. Go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her?
No.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है.
रहमान
सोनू निगम के लिए जोरदार तालियां.
Hello and welcome to India Market Close. I am Sharad Dubey and with me is Hiral Daria and you are watching NDTV Profit. Yesterday we had seen the Nifty touching its lifetime high levels. Today the bulls are taking a rest. Not much happening in the benchmark indices. Nifty is still flat. Earlier we saw in the day as well, but the important level of 26,200 level is still there. Remember, last two closings have been above this 26,200 mark. And Nifty Bank, also the story is remaining the same as well. Let's pull out what the stocks have been doing in the Nifty 50 constituents in the day's trade. What has kept all of us busy? Of course, to top it, Adani Enterprises, the top gainer in Nifty, followed by M&M and another Adani Group company, which is Adani Ports. Net we are seeing almost between 1% the oscillation is happening across the sectors, but some deep cuts are also coming in from some financial names. Look at the life insurance stocks. Shriram Finance, HDFC Life and SBI Life. So there must be something brewing in the life insurance space, and that's why we are seeing some kind of a sell-off happening. India VIX also nothing much there for the overall trade, as the options data also is suggesting that the put side the action is very much more. Based on that we will get you some more details, but let's look at how the sectors are moving, which sectors are showing gains. This includes auto, especially ahead of the November auto numbers, which we'll see, and by Monday we'll give you the entire picture. Pharma and healthcare also some buying is happening, but net we are seeing gyrations of flattish moves are happening as the markets are looking for the next important trigger. And of course next week's RBI meet is something which we'll be looking at. Oil, gas and the PSE index is also kind of volatile as well. Advance decline ratio, let's just pull up and see how the changes have happened from the starting of the day. No much major trend coming in, but slight increase is coming in the declines, roughly 1296 declines as we compare advances with 11.3 stats as well. But Hiral, the entire setup, of this broader indices, because till now the question is Nifty has reached its all-time high levels, but a lot of people have complained their portfolio hasn't reached their lifetime high levels. So the story remains the same.
Ghar ghar ki kahani is what you're looking at right now in terms of everyone's portfolio. But what's interesting is, I think, with the life high levels that we saw in terms of markets, literally you're seeing profit booking that's coming in, and I think people are taking off money, from the large cap space. Now, the question is going to be, is this money that is being booked from the large cap space going to be deployed to the broader markets? Because everyone is expecting that action to be back in terms of broader markets. Let's pull up the small cap index and the mid cap index. There you go. It continues to trade under pressure in today's session as well. No major moves coming in there, but a lot of individual stock specific action is what you're seeing. Let's pull up NSE 500 to see, what are the stocks that are actually hogging the limelight. Welspun Living, now is that an indication that there is something brewing when it comes to India-US trade deal and tariffs? Because that's where the action is right now. Apart from that, if you look at Z Entertainment, Ipca Labs, KSB Pumps, these are a few of the top gainers. What's losing is Gail. We know the reason why Gail is under pressure on the back of the PNGRB ruling on pricing. MCX also seeing cuts in today's session, 4.5% downtick coming in there. Is SEBI coming behind MCX is the key question that media reports are indicating. SIS, KIOCL, Credit Access are a few of the other top losers in trade today. Apart from these names, let's just pull up a 63 moons, a positive ruling when it comes to 63 moons when you talk about the NCLT, and that's what is actually firing a 63 moons in trade today as we speak. 16 to 17% upside coming in on this counter. Apart from a 63 moons, a few of the other names that we need to look at is a Reflex on the back of an order win seeing smart moves. Eureka Forbes, All Cargo Logistics, IIFL Capital, and on the losing end, Yatharth, Patel Engineering, a few of the other names. So that's what the markets are looking like. But let's understand the key factors that one should be watching out for in this last 1.5 hour of trade. What is that closing setup looking like, Sharad?
Well, Hiral, the closing setup looks kind of benign, and remember, there is a long Thanksgiving weekend also, so global flows are also less. And right now, still the story remains the same, what we saw in the morning. The Nifty is flat. Either way, we are not getting important triggers going ahead. Overall chart setup is fine. Put call writing is on the higher side, but the problem is Indian VIX also. That has also actually come down. That's the volatility reduction coming in. But if you are having positional setup in the medium term, then buy the tips strategy still holds. That's what the analysts have said. But there are lack of triggers. Of course, next week RBI MPC meet is definitely there. But most of this information is already factored in. Global market setup, they are ending the week in the strong gains of 4 days of rally ahead of Thanksgiving, which we saw. So a little bit of minor profit booking and technical sell-off could be there if you can just see the European markets as well. So there's going to be a volatility in their opening as well. But net Hiral, nothing much here, because the markets, I'll just still suggest, are still flattish, be it domestic cues or even the global cues.
Absolutely, and US markets are also shut for a holiday, were shut for a holiday yesterday, so no major takeaways that we got from that front. But let's get it, Mr. G. Chokalingam of Economics Research. And we have Richard Jain, who is joining us as well to talk to us, about what the markets are in for. Richard, let me come to you first. Clearly, there is that little bit of profit booking that has come in again in the last 2 trading sessions after achieving those record high levels. From here on, what is that next level that you would be tracking in terms of Nifty 50 and the participation when it comes to BFSI? So Bank Nifty, the PSU and the private banking space, how important is that according to you in terms of levels?
Yeah, hi, very good afternoon. Well, if you look at the broader trend for the markets on the index front, then has been positive recently, and we believe that although some sort of profit booking or minor dips are there, but this should not result into a change in the trend, because what we can see that in last few weeks the entire buying interest has shifted to large caps or the index heavyweights now. The small caps are underperforming. If you look at month-on-month change for Nifty, Bank Nifty versus the small cap space, then there's a huge difference between the small cap returns. In fact, they have negative returns while Nifty and Bank Nifty overall have seen a good uptrend. So because of that leadership from the heavyweights and because of the buying interest in the index heavyweights, we believe that this uptrend is likely to continue on the index front. And going ahead, we expect levels around 26,400 to 26,500 in the short term, whereas positionally 26,800 are levels as per the retracements which could be tested going ahead. Yes, definitely banking NBFCs have been one of the space where this leadership has continued. So that is likely to continue. Apart from this, we believe that pharma is one sector where the risk reward ratio looks favorable. Is one is looking for next couple of weeks or next 1 month's perspective. Then this could be one space where we have seen a huge consolidation of last 6 months, and the risk reward ratio seems to be favorable. The momentum has just started picking in some of the pharma names such as Sun Pharma, Lupin, or even some mid cap names like Granules or large cap like Landmark Pharma. So the trend for the index is likely to continue. 25,900, which is the 20-day EMA, would be seen as the immediate support. And on the higher side, 26,500 followed by 26,800. I think this should be seen in this leg of uptrend itself.
Okay. So, Ruchit, those are levels. What would your top picks be in this market lull?
So a couple of recommendations where we are just looking to ride the trend with stocks that are showing outperformance in this kind of market. As I said, the small cap is not the space where you need to be now because there is no outperformance coming in there. But from the large cap stocks, Adani Ports is one stock which we are recommending to go long on. The stock has just hit its 52-week high today. Recently, when many of the Adani Group stocks corrected, we did not see any correction, price-wise correction in Adani Ports. So within the group itself, we have seen that there is a good strong buying interest, or we can say lack of selling interest in Adani Ports. So that uptrend, since the stock is at 52-week high, there are good volumes and the price up moves. That uptrend is likely to continue. So one can buy Adani Ports with stop loss below 1465 or potential targets around 1633 on the upside. Whereas my second pick is by recommendation Lupin. As I said about the pharma space, that the entire pharma space seems to be poised for an up move going ahead because of the favorable risk reward ratio post the recent consolidation. So Lupin, I think, looks good on the weekly as well as the monthly charts. So short-term traders can go long on Lupin as well, with stop loss below 2,000 for potential up move towards 2,220.
Ruchit is giving recommendations for Adani Ports and Lupin as well, and both of them are long trades. But joining us is Mr. Chokalingam as well. A very good afternoon to you, sir. Ruchit was speaking about the pharma space, but there's another space which is very important, especially when it comes to the export and the tariff, which is the changes which are happening. And the textile space is something which is coming to my radar. Hiral had pointed out Welspun Living. Let's just take that chart out as well. And we had a important commentary with Pearl Global as well today on their commentary, and most of the textile stocks are buzzing in trade also. Maybe, and the expectation is coming that there might be a relief in this space in the tariff segment. Mr. Chokalingam, what will be your views in this textile space? And if yes, will this be a tactical bet or a strategic one?
Can be only tactical, but again, I would be cautious because definitely the trade agreement would be signed. The aggressive tariff will not last, and it has to be taken back. But however, ultimately against all the major economies, US will have higher duty than what it was before the trade war started. That's my understanding, because otherwise US economy would be in deep trouble. The deficit is going close to even $1 trillion. So therefore, there are two possibilities. The revision in the tariff should lead to the tariff on par with other Asian economies. So if that happens, yes, I would be bullish. But by any chance, if it is even 500 basis higher than other Asian economies, then we will have a lot of concern. So therefore, I would not go too bullish on textile industry at this point in time. Rather, I would wait for more clarity, and then I wouldn't mind paying even 5% extra to buy the stocks.
Okay, so that's with regards to a Vardhan textile that one should be watching out for. But an important announcement that's coming in from the RBI. They are holding a press conference at 5 p.m. today. Let me first head across to my colleague Vishwanath to understand what this press conference could actually be about. Vishwanath, 5 p.m. is the RBI press conference. Any indication in terms of what is the announcement expected to be?
Hiral, the only tip that is given now to reporters is that this is going to be about consolidation of regulations at the Reserve Bank of India. This press conference will be hosted by S.C. Murmu, Deputy Governor at the Reserve Bank of India. He's, of course, in charge of the Department of Regulation at the RBI. So therefore, his viewpoint on the consolidation of the regulation is something that is going to be important, and we'll find out more about it at 5 p.m. But let me give you a little bit of background about what actually has been happening at the Reserve Bank. The RBI had just last month, in October, released a statement that it was consolidating about 9,000 different regulations and creating 238 master circulars out of them. And as part of this, of course, they were repealing a lot of old norms and were bringing in regulations that are consistent with the modern regulatory approach, but also keeping in mind the spirit of the regulation. So this process has already been undergoing, and that is why the Reserve Bank of India announced this back in October that they were going to undertake this exercise. The RBI on its own has also actually been creating this Regulations Review Authority, the RRA. This was created back in 2021. Since then, the RRA has been consistently recommending to the RBI the kind of regulations that need to be repealed and the new regulations that need to be brought in or consolidated wherever the needs might be necessary, because a lot of rules were actually made maybe over a decade ago and they may not be relevant today. So that is the approach with which the RRA as well as the Department of Regulation had been working. We'll of course find out more about what specific regulations are going to be consolidated or removed at 5 p.m. when S.C. Murmu speaks to us.
Okay, thank you so much for that. I think, Vishwanath, we will be watching out for the announcements that do come in at 5 p.m. and anything important that needs to be tracked because it is the weekend and all the reactions then in the stock markets will actually happen on a Monday itself. But moving on. Atlanta Electricals has secured fresh orders worth nearly 300 crore rupees from the Gujarat Energy Transmission Corporation. The stock, though trading under pressure today, my colleague did have a conversation with Neeral Patel, Chairman and Managing Director. Let's listen into a slice of that conversation.
This order that we received, it's from a state transmission company in Gujarat called JETCO. It's an order where we have to manufacture 220 kV class transformers, about 21 numbers, and certain small rating transformers. This order is likely to get finished within coming 18 months. That's the usual visibility of the orders that we have in 220 kV class. The best part about the order is it is a routine product that we make, hence we'll be able to achieve economies of scale.
How should we look at the 2,000 crore order book now? So it has increased from roughly about 1,600 crores. Give us some perspective that where does the current order book stand? Because I'm guessing that this order will join into the 2,000 crore order book. So what is the current order book as said, and what is the execution timeline for FY26? How much do you think that'll get consumed this year?
The order book currently stands close to about 2,500 crores. This order book will be, a certain portion of this order book will be spilled over for next particular year. In the segment that we are for 220 kV class transformers, usually we have 18 months to 24 months visibility. In future coming times, when we go to a higher kV class range, meaning 400 kV class, when we start making order books or say building order books of 400 kV class, we would have a visibility of close to 3.5 to 4 years. We're looking at about close to little more than 40% of increase in the revenue that we did last year. So close to about 600 to 700 crores of orders would be executed from the current order book in this particular rate itself.
Got it. So you were roughly at about 1,240 odd crores in terms of revenue. You are mentioning that you are expecting a 40% growth for FY26. Is that correct?
We've done that in the past, and that's the growth trend that we would like to continue. Yes. So that's the target for this particular year.
Give us some perspective on margins as well, Mr. Patel, because it has been inching up quite well between 13 to 15% over the last couple of years. You actually were at 16% for FY25. Does this make that, since you will go to roughly about 400 kV orders as well as you mentioned, can we expect some upside on the margins going forward?
Well, yes, the margins in the larger KV class are always better. We face little less competition there. So the margins are always better. However, for a company like our size, when we are entering into a new transformer technology, there are certain tech type costs, there's certain technology development costs, the research and development costs that comes into play. So the first couple of years, we may see seeing major upside in the margin. It'll be consistent as to what we are. But yes, in coming times, the margins will be significantly better than what it is as of today from the 220 kV and 132 kV class segment.
The management of Atlanta Electricals speaking to NDTV Profit. But let's pull out Adani Enterprise. That stock has been one of the top gainers in the Nifty index, and that's been throughout the day. We can see, and today also we see it's on the elevated levels as well. But to understand this, there's a special segment of our stock of the day, which Anushi is getting us. Anushi, the stock has done well in the trade, and what are the key takeaways coming in? Recently there was a broking report also, and some announcements also coming in.
Right, a lot of factors are playing in favor for Adani Enterprises. Now, if you just talk about today, the latest spec that we are seeing is the acquisition news for the company. Now, here, Adani Defense System, that's the arm of the company, and Horizon Aero Solutions have signed a pact, and this is to acquire 73% of stake. This is what we are seeing in Flight Simulation Techniques Center is what we are looking at, and this will be done at an enterprise valuation of around 820 crores. So that's the acquisition cost that we are seeing. But what's the key reason behind this acquisition that we are seeing? Now, the target company, it is India's largest independent flight trainings provider. In fact, if you look at the kind of profile that they have, they operate 11 full flight simulators, along with that 17 training aircraft as well. So the acquisition is in line for the company to build a fully integrated aviation platform. Now, this is one of the most emerging areas that the company has been focusing on. In fact, it wants to create a strong opportunities in both the civil and defense pilot training as well. This is the space that the company has been increasing their focus on, the defense side of it. So that's an important rationale that we are seeing for this particular acquisition. Now, apart from that, the other aspects that we've seen in the recent news flow is the company also coming out with the rights issue of around 25,000 crore. So that's a bigger piece of it, and this is also for the strengthening its balance sheet further. Along with that, even if you look at the next phase of incubation growth, that is expected to drive growth for that as well. We also had a Ventura note coming out recently to talk to us about this fundraise which is there, wherein they've also placed a buy recommendation with a target price of 3,433, seeing out 43% plus of an upside. They see that this equity will monetize stock's strong recovery. This fundraise would help them do so. In fact, the other factor also which is driving them is that the fresh equity that we are looking at is done in a timely manner and is in a strong monetize the stock strong recovery also. And given the stock's substantial headroom in current portfolio, they see that this rights issue was also done at an attractive pricing. Now they are anticipating that over FY25 to 28, revenue and EBITDA is expected to see about a 17.4% and 18.7% of an uptick. So it's a healthy growth trajectory also that we are seeing in terms of financials. Along with that, growth in airports is something that the street would be watching out for, with the ramp up in data centers also eventually playing out well for the business going forward. So that's the overall piece that we have for Adani Enterprises on why the stock is in focus today and in the previous sessions as well.
Thank you so much, Anushi, for that. That's an interesting move that you're seeing on Adani Enterprises, one of the top gainers on Nifty 50. And a disclaimer, NDTV Profit is a subsidiary of AMG Media, which is also owned by the Adani Group. Mr. Chokalingam, your view with all the various businesses that probably are firing for Adani Enterprises, as you know, Anushi was mentioning, what would you advise investors to do?
Yeah, definitely. If you look at the track record from 2019, very consistently the operating profit has been growing, and companies also building a lot of capacities. So therefore, even though it is little stretched in valuation, one can definitely hold it. Even if a small correction comes, one can buy for medium to long term. That's my view on Adani Enterprises.
Okay, so that's with regards to Adani Enterprises. But moving on, some of the other newsmakers that are really buzzing in trade today. I have my colleague Jasmeet who's standing by. Jasmeet, which are the stocks that you've picked which are buzzing in trade on the back of some news flow?
Well, right, starting off with Grow, while the Grow had a seller listing and we saw uptick in Grow share as well. But if you look at the overall stock is seeing a pressure today. Well, this pressure comes on the back of the insider selling. The employees have so far sold 11.4 lakh shares in the market, which is creating the pressure on the overall stock. If we look at the next counter, I have 63 Moon. While the stock is buzzing after they received an NCLT approval for closing of the debts. While this settlement is summing to rupees 2,000 odd crores. While after the settlement, the company's overhang of payment to the trader is reduced and it's gone. So that's why the stock is buzzing on the same positive news. If you look at my third counter, it's Seagull India. While the company's arm receives an order worth rupees 1,000 odd crore as they be the lowest bidder for the L1. Well, this particular order is from Madhya Pradesh Road Development Corporation, and this order is to develop the 4 lanes of Madhya Pradesh, Indore, Ujjain, Greenfield. While this particular order will be completed in next 24 months. While the last counter in my stock, which is buzzing in on the back of news, is MCX. While the SEBI is reviewing trading data for commodity market as well. After the stricter rules for derivatives, now even commodity market might have similar stricter rules, and that's why the stock is in red today. If you look at what would this impact on the stock would be, this could reduce the retail participation. Further, this could lower the company's overall top line going forward, and that's why we see the pressure coming in to this particular stock. So these are the 4 counters buzzing on the back of the news.
Thank you so much for that. In fact, a couple of other names, we need to talk about, Sharad, is Voltam Transformers. Constantly in the last couple of trading sessions, exactly, it's got recurring orders. Right now also we're talking about an order worth around 85 odd crores. The stock is up nearly 2% in trade. Let's just pull up a 1-month chart of Voltam Transformers and see what that stock is doing or has done so far. There you go, almost a 16% up move coming in on that subsequent order flows that have come in. Ashoka Buildcon. That's a negative because the NHAI has actually barred the company for bidding for the next 1 month till investigation concludes. Stock down almost 3% in trade today. And a similar thing had happened with the KC International as well, where the company was banned from getting new orders. KC International also trading under pressure. All cargo logistics, I beg your pardon, is another one. The stock is down for 5 consecutive sessions and now it's up nearly 11% in trade. Actually, from the day's highs of 11%, receded slightly. They've released an official document when it comes to demerger as well as cost split, and they've kept 87.94% of the business value. Only 12% has been moved to All Cargo Global. And that's the reason why you're seeing some buzz coming in terms of all cargo logistics. Ruchit, from the names that even Jasmeet mentioned and the other 3 that I added, anything that you like on the charts?
I think most of the names that you have mentioned, the overall trend remains down. Today we are seeing that the KC International and of late also we have seen a decent correction from the highs in stocks such as KC International. So we believe that small cap space as a whole, we can see that overall the underperformance is there and still there are no signs of end of this price-wise corrective phase. So I think we should keep a wait and watch approach, and hence we are also focusing more only on large cap names rather than doing any bottom fishing in small cap names now.
Chokolingam, the capital market play theme stocks, of course, Grow is something which we are talking about. There was a news flow also of employees selling things out. Still now the clarity is not there. Will this justify the valuation or not? Yet they had a very good pop, listing pop was there. And also MCX, on the other hand, it touched its 10,000 rupee mark in terms of share price yesterday as well. So kind of a profit booking also coming in. What would be your important stock to be picked if you had to choose one of them?
If you give me option of these 2, then I would choose MCX because I firmly believe that the business in which Grow is operating, there will be a lot of competition because it is very easy to build this kind of digital business. There will be a lot more competition. I'm not comfortable with the valuation. Even if you look at September quarterly profit on year-on-year basis, which doesn't justify the current PE ratio. So therefore, I would prefer MCX.
All right, but just get the markets in. Nothing has much changed. It's largely been a stock-specific or news-specific news flow coming in. And right now also we're seeing a slight downtake for Nifty, but still that 26,200 level is offering a major congestion level, and the closing would be very much important. Let's just pull up the small cap and the mid cap indices also to see whether the pain is there as well or not. And yes, the pain is there, and it's actually more if you compare it with the Nifty index. So the story might be there of a little bit of cooling off for the bulls, which we saw in last trading session. Let's take a break. Stay tuned to NDTV Profit.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first. You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101, go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her.
No.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम के आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Welcome and welcome back. You're watching India Market Close on NDTV Profit. My name is Alex Matthew. Of course, on my right is Sharad Dubey. On my left is Hiral Dadia. And we'll take you through the next 1 hour of trade. It is as flat can be. Flat as a pancake.
Opening
You could
session,
say that.
closing
Flat
session.
as a chapati.
Exactly.
Flat as a pizza.
Flatbread.
Flatbread, pita bread. You want more things to talk about that are flat?
I think everyone's getting hungry, Alex. I mean, I can't even call it lunch hour, but everyone's hungry
It
now.
depends on the culinary experience that you're looking for. Long story short, it is flat.
And he's the one who's getting the red, and we are the ones who are getting the green.
Yeah,
and
why
that's the reason why it's balancing
there you
it
go.
out.
Let's pull that chart up. Let's pull up the Nifty 50 and see where it's at. And it's been another choppy session. We are more or less at the low point of the day, but we're holding out. And if you are to take one silver lining from this, it's that you aren't seeing heavy selling. And you're seeing those levels above 26,200 being defended pretty well for the benchmark Nifty 50. Pull up the constituents of the benchmark and see what is happening there. And maybe we can look at the contributors later as well. But an interesting screen, close to half, and even Stevens, more losers than gainers at this point, but no massive losses. Pull up the contributors as well, just to see who's moving the needle. And you have Mahindra & Mahindra, State Bank of India, Reliance Industries on one end, being weighed on the opposite end by Bharti Airtel, ICICI Bank and Larsen & Toubro, as well as Axis Bank. So quite a few of the private banks in the red as things stand right now. We're joined on this side of the show by Nirav Ashar of Latin Manhalraj Securities, and we've also got Ruchit Jain of Motilal Oswal. Gentlemen, as always, thanks so much for taking the time. Nirav, I want to come to you on these private banks, because there's quite a bit that is brewing here, right? So on the one hand, you have a lot of brokerages that are coming out and saying Axis looks attractive based on valuations and prospects going forward. And you have also an instance of a Bandhan Bank that cleaned up its books today. And suddenly maybe you need to look at it in a slightly different light. What do you think?
Good afternoon and thank you for the invite. Well, I think with the banks, we have seen after the jumbo rate cuts that the public sector banks have started outperforming. And after that, of course, now it is the turn of the private sector banks, which are slowly making a comeback. And of course, we have the front runners, that is ICICI Bank and HDFC Bank, which have been doing quite well. But as you rightly pointed out, after a strong and a meaningful outperformance by these stocks, it is going to be the turn of Axis Bank. Because the valuation, if one were to look at the price to book, it is far more attractive as compared to HDFC Bank and ICICI Bank. So there is a good possibility that Axis Bank can play catch up. Of course, they need to improve on certain parameters like their CASA ratios and their asset quality issues which are there. But definitely there's a good chance of catching up in the forthcoming quarters.
Okay, all right. So point made on the private banking pack. Let's talk about Eureka Forbes though. The company sent out a press release, or rather it was an investor presentation that talked about the prospects going forward. And there's a lot in there that's quite exciting, right? Something about a robotic vacuum cleaner that's going to bolster their revenue growth going forward. You know anything about that, Hira?
I think, to add to that now, vacuum cleaners, all of this is there, but the new thing that's in the market is the air purifiers with the AQI going this high.
AQI in Mumbai is close to 190.
Yeah, it's 200 plus.
Usual, yeah, it's gone 200 plus. 250 was the last that I saw, and again, it's hovering in that 145.
Visually, also we cannot actually see. I think from my house also, just even at 50 meter, the visibility issues are there. It's just like Delhi.
Sharad, have you checked your glasses?
But
I don't have that.
You have Delhi, which is still above
Delhi
500,
is,
so I think we can't complain as against Delhi. But just before we go to Eureka Forbes, a couple of things that I want to mark with the trade SECI. That's Rajesh Agarwal, who's been speaking at the FICCI event, where he's indicated that they may finalize the framework in 2025 in order to address the US reciprocal tariffs. And they're hoping to finalize the framework to deal with US reciprocal tariffs. They're working with the US as well on the same right now, and they've been engaging with the US on the trade agreement. In fact, he said that India-US talks on virtual basis are happening on a regular basis, and they're expecting a visit from the US trade official in the near future. So probably there is some bit of indication that is coming, that the progress is going well, Alex, when it comes to trade talks. This is the only overhang that the markets are watching out for right now, in my opinion, when it comes to getting a direction in the markets. And if there is some bit of positivity that could come in as well, or even whatever it is, if it's crystal clear as to what's happening, I think we will get some direction. And this is an important statement that we should be picking up right now.
Certainly. Is there going to be a Christmas present this year in the form of a trade deal?
Is Donald Trump going to be the Santa Claus?
I don't know about that. Don't put images in my head. But let's talk about Eureka Forbes. It's doing particularly well after that bullish commentary. And this is commentary talking about an outlook for the next several years. Let's find out what the management is saying, and then we'll get a view on whether you should bet on this stock or not. We've got Varsha joining in to talk about some of those numbers. Varsha, what stands out to you?
Well, thank you for that. I was hearing the conversation wherein you were talking about vacuum cleaners and air purifiers. Well, both are the growth drivers when it comes to Eureka Forbes, and they're targeting 2x of revenue and over 3x of EBITDA till in FY30. Now, let's see what is the if you see the industry total addressable market is rising when it comes to water purifiers, vacuum cleaners, and air purifiers, and service is a major growth driver which will actually boost long-term customer revenue. SKU count is being cut from 60 plus to just 5 kits. This is to simplify the operations, and the AMC penetration, if you see, is less than 25%, shows big potential. Talking about the vacuum cleaners, so they expect vacuum cleaner sales to grow 6x by FY30, and air purifiers see strong demand. The stock is out of season. Now let's see what MK is saying, because MK is super bullish when it comes to Eureka Forbes. They say that the turnaround is behind growth acceleration ahead, and heavy lifting and cleanup of the past 2 years has been done now. They say that this sets up the business for accelerated growth towards achieving its FY30 guidance, which is 2x of revenue and over 3x of EBITDA, and for which they see upside potential of 17 to 18% of revenue CAGR for FY25 to 30, and because of this they have reiterated with unchanged target price of 775.
All right, Varsha, thanks so much for that. One of the stocks of the day, Eureka Forbes, 8% up. Do you remember what the theme song for Eureka Forbes was? Any kids from the 90s maybe? Let us know in the comment section. And maybe I'll check with Sharad whether he knows. I think he might just be too young to remember.
No, I'm not young anymore. I have been buying these air purifiers. Now I'm married.
There you go. But you got to tell me what the song is for Eureka Forbes. I'll test you on that. But we were talking about the Commerce Secretary, Rajesh Agarwal, and the comments that he was making with regard to a bilateral trade agreement, the possibility of one with the US. Here's what he had to say.
There was a commitment to see that the first tranche of India-US BTA is completed by fall of this 2025. However, things have changed and moved a lot from 13th February onwards. When we got into a BTA negotiations, we were on the path to deliver a good aspirational first tranche by the fall of 2025. But in between, we have found a lot of changes in the global trade landscape. One of the key has been in the US landscape, where we came out with reciprocal tariffs which were imposed on all the trading partners in order to see that the trade deficit with the trading partners can be evened out, and also maybe overall create a revenue stream for the government of United States. So with that new change in the overall landscape, the BTA has also gone through some articulation, some changes, wherein right now we are engaged with not only negotiating a bilateral trade agreement, which definitely with a country like United States will take a lot of time, because trade agreements are very wide-ranging agreements these days with a lot of issues, not only market access issues, which are negotiated under the umbrella. But at the same time, we are also engaged in a protracted negotiations on a framework trade deal, which will try to address the reciprocal tariff challenge that the Indian exporters today face.
An interesting commentary coming in from the Secretary. But joining us, Amardev Singh from Angel Loan. A very good afternoon to you, Amar. Bulls are taking a pause, it looks like, and technically it's decent levels also. But what are the key levels from here? Because now we know the important resistance levels, they have moved up. So the next leg of rally, if it comes in December, what would be the key levels to watch out for, Amar?
Yeah, a very good afternoon, and thank you for having me on the show. So see, we have been seeing that overall Nifty's trend and the benchmark indices trend have been positive. We did witness some sort of consolidation, some sort of profit booking, but again, the indices have inched up higher and they're trading close to those record levels of 26,200, 300 zone. That's a zone to be looked at. But the trend is positive, and the best part, what we've seen is that the banking space has really held very firm. So that has helped significantly. That's trading at record levels. If you look at the overall advanced decline ratio, also that also has been overall positive to a certain extent. So I would say that on the upside, sustaining of the current levels, 26,200, 300 zone, markets are poised to rally towards the 26,500, 26,700 zone. Now 25,800, 26,000, that should act as an immediate zone of support. We've been bullish on the market for a very long time, and we've always been seeing that it's a buy on dips. But yes, one thing is very clear, that you have to be very choosy in terms of which stocks to buy, because it's not that all stocks are moving up. So that's one catch, definitely.
Amar, good afternoon to you. And what stocks do you like this afternoon?
Yeah, so the first one is Bandhan Motherson. This is one stock we've been liking, because what we are seeing is that the stock was in for consolidation. Earlier, it had witnessed a significant rally, then it had corrected, and it went in for consolidation for a very long time. I would say roughly around 20 weeks or more. It went in for consolidation. Now, what we've seen over the last few trading sessions, I would say around 8 to 10 trading sessions, is that the stock has broken out of a key zone of resistance, so which was around 110 or so. And also the volumes and delivery quantity both have been on a higher side when we compare it with the last 20-day, 30-day or even 50-day average. So that clearly says that there is a lot of buying interest which has happened in this stock. So this is one stock one can look at buying at the current levels with a stop loss of 107 and a target of 129 on the upside. And the second stock which I like is from the pharmaceutical space. This we've been talking about for quite some time, Sun Pharmaceuticals. What we are seeing here is that the stock was in for consolidation on the weekly charts. It did correct, but again, the long-term structure remains strong and positive. So currently it's around 1825 odd levels. It has rallied from 1700 levels once breaching that level, and we are seeing that it continues to be strong and firm. So this is one stock one can look at the current levels for an upside target of 1915 with a stop loss of 1765.
Okay, so those are the topics coming in from Amar Dev Singh as well. But moving on, it's that time of the show where Somit Sarkar gets us all the chatter in the dealing room, because there's absolutely no chatter in the markets right now. Pretty flat, but hopefully he brings in some excitement now. Over to you, Somit. What do you have for us?
The volume action, if you look at it, is quite on the lower side, and hence, yes, we are not seeing much of an action in the market. But when it comes to dealing room, few stocks that remain on radar. Firstly, it's Varun Beverages. Now, dealers are indicating that there are buy flows on FI desk on this counter, and this is on expectations of a strong Q3 volume recovery is what dealers have indicated. In fact, Q3 is a seasonally weak quarter for beverage industry, and in that, they're expecting strong numbers to come in, at least on the volume front. When it comes to AkzoNobel, there are sell flows on the large HNI desk. There is a buzz of a potential block deal that could happen soon in this counter. Yatharth Hospital is another counter where we did see a block deal that happened today in trade, and what sources have indicated is that the promoter has sold some stake, and there was strong interest that we have seen from the mutual fund side on this block deal. This block deal happened at a price of around 720 odd rupees. When it comes to Saregama, there has been selling pressure on this counter, but dealers have indicated that the selling pressure would likely be over very soon, and the stock could see a bounce back from the current levels. For Max Financial, there are buy flows at lower levels seen on the institutional desk. Both foreign and domestic institutions have been buying this counter. For JSW Steel, there are buy flows on large HNI desk on expectations of a positive announcement that could come in the next 1 week. And lastly, when it comes to Hoodco, dealers are indicating that a prominent investor has been accumulating this trade in this counter in trade today.
Thank you very much, Somit, for that. And in this list itself, Yatharth is something which is I found very interesting. Yesterday, Amansa Holdings had a sell in this counter, but that is something which we'll be looking at. Also, Amar, what would be your technical views for Yatharth here? Will we see a bounce back here? Yeah, Amar, if you can unmute.
Yeah, sure. So see, what we are seeing in Yatharth is that the stock has been On the selling side, we witnessed some sort of selling pressure from almost 800 levels. Currently, it's around 700 odd or so. But if we look at it from a medium-term perspective, it seems that a top has been made for now. So the recent highs should act as a key zone of resistance because if you look at the recent high was somewhere around the 840, 843 odd levels. From there, it has corrected. But these are levels where the stock could ideally meet with a very strong buying interest because these are levels. So somewhere around, I would say 680, 700 is very crucial and important support zone for the stock. But the stock will definitely go in for consolidation. It wouldn't be a V-shaped recovery. It could witness some sort of consolidation because some of the technical indicators from an intermediate term perspective are also pointing towards consolidation in stock.
All right, so that's a view on Yatharth Hospitals. Nirav, very quickly, I'll come to you. We didn't come to you after we discussed Eureka Forbes. I wonder if you have an opinion on this one. Quite the optimistic outlook that they've provided the street with. And the street is lapping it up, 8% higher.
I think this company has been lying low in terms of its profile. But yesterday's presentation was quite exhaustive and quite insightful in terms of strategy. What is the strategy with respect to the different products? And it also spells out that, of course, there is a 15 to 16% CAGR growth in revenues, which is being targeted till FY30, and 23% growth in EBITDA on a CAGR basis till FY30. So that's quite impressive. And it also gives an insight into the type of products because typically Eureka Forbes has been identified with water purifiers, vacuum cleaners and air purifiers, but there's also another dimension to this business, that is the filter business as far as the water purifier is concerned. And this is where there is a very strong chance of making thick margins. At the same time, there is a good scope to penetrate into the vacuum cleaner business and the robotics, which is gaining a lot of traction. And the third important category is the air purifier. With the air quality index being so poor, there is a huge addressable market out there. So I think the prospects are looking quite attractive as far as this stock is concerned, and this stock should be accumulated with a long-term perspective.
All right, Eureka Forbes can be accumulated from a long-term perspective, despite the fact that it's up as much as 9% in trade, is Nirav's view on the fundamentals. Now, I want to talk to you about a couple of stocks that are in focus. The city gas distributors, and so this is Gail, of course, but I'm talking about the city gas distributors, which are gaining as a result of the PNGRB, which has allowed for a hike in the pipeline tariffs for Gail that were lower than what the street had anticipated. Let's find out what the prospects are for these entities, and we'll also tell you about what happened with Gail. Somit's standing by to talk about this. Somit, from the perspective of these gas distributors, the input cost reduces, and so therefore it's a positive, isn't it?
Not for all gas distributors, actually, the input cost is coming down. Now, if you look at what PNGRB has done, they have increased the gas pipeline tariff by around 12% from 58.61 MMBTU. The prices will now be hiked to 65.69 MMBTU. Now, this hike is lower than what the street was anticipating, and hence it's a negative coming in for Gail. But what's the impact on the city gas distribution companies? Now, what is expected is that post this move, PNGRB will accelerate the implementation of the new zonal structure. Now, under the new proposed structure, there will be only 2 zones and not 3 zones, and because of this reduction in zone, and whatever gas that will be supplied or will be provided to CNG and for PNG purpose will be charged as Zone 1 tariff. So let's look at what the tariffs are now, or what the proposed tariff could be. For Zone 1, they're expecting the tariff to be anywhere between 50 to 52 rupees per MMBTU as against 41 rupees. For Zone 2, the tariffs are expected to be around 90 rupees per MMBTU as against 81 rupees per MMBTU, that was the earlier tariff. And Zone 3, where they are charging currently around 107 rupees per MMBTU, will be completely moved out. Now, for whom does this benefit? It benefits majorly for IGL, and that is the reason why the stock is up in trade, because at this moment, IGL stands in the second zone. and that's the reason it's paying around 81 rupees per MMBTU for the gas that is being transported via these pipelines. And this tariff will come down to 50 to 52 rupees per MMBTU, which could lead to a cost saving or margin benefit for the company of anywhere between 1.3 to 1.7 rupees per SM, and that's the reason why IGL is up in trade. Now, when it comes to Mahanagar Gas and Gujarat Gas, for them, they are currently paying a charge of around 41 rupees per MMBTU because they are in the zone 1, and for them, this charges increases from 41 to 50 to 52 rupees. This will lead to a higher cost for both the companies, but the impact of that is expected to be very low at around 0.3 to 0.4 rupees SCM, and analysts believe that they can easily pass on this increase in cost to consumers. So it won't be much of a negative impact for the Mahanagar Gas and Gujarat Gas, but a big positive coming in for IGL.
Got it. All right, thanks so much, Soumit, for that. You know, incidentally, Soumit spoke with the management of Gail earlier today to find out what really the implication was and why there was such a big gap between what Gail asked for and what the PNGRB approved. Listen in.
And the tariff order has only been issued yesterday night. And our submission of tariff was around 78 rupees per MMBTU, and we were expecting the tariff should be around 72 rupees per MMBTU. But that was supposed to be a final kind of order. But PNGRB, we are experiencing first time issued an interim relief kind of order, which is saying the tariff is 65 rupees 69 paisa. In fact, they have not moderated our claims. They only said that as an interim relief for two parameters, that is system used gas and the pipeline capacity determination they are giving, and the balance will be available to us from April 28, and we will be filing tariff in 27-28. In fact, deferment of tariff is if you see from Gail's point of view, we get 15% return on deferment because the tariff is calculated on discounted cash flow methodology, and any delay in processing of tariff or any delay in considering the parameters which are not being considered will give Gail 15% return.
All right. So the stock under pressure today, the question is, what would you do with this? Nirav, on the fundamentals, would you avoid Gail at this moment? And what about the city gas distributors? What's the opinion there?
Well, I think the city gas distributors have been through a turbulent phase in the recent past. It's a highly regulated business in many ways, where the margins are predetermined. And I think with the cut in the volumes, I think the volumes which are allocated to the city gas distribution companies, these companies were under a lot of pressure, but hopefully I think there should be some relief for these companies because Gail has been allowed only a moderate price hike by the Petroleum and Natural Gas Regulatory Board. So I think in the near future, one can expect Gail to be under pressure. So sentimentally, this is a negative as far as the stock is concerned. But at the same time, it's a positive as far as IGL and MGL are concerned.
With regards to IGL, MGL, and the reason why you're seeing Gail react the way it is only because the price hike expectation is lower than what the street was actually anticipating. But moving on, an important day. GDP print is going to be out this evening, plus you have the RBI press conference as well at 5 o'clock. So a lot that would be brewing on the macro front. As per the Bloomberg reports, GDP is expected to grow at a strong pace of around 7%. And this expansion may come in despite the mixed signals that you've seen from the financial markets is what the report is indicating. Let me get in Aditi Nair, Chief Economist at ICRA. Aditi, good afternoon and welcome to the show here on the side. Always a pleasure to speak to you and good to have you as well after really long. My question to you is, first up, your expectations in terms of the key print today and what should you be watching out for?
Thank you so much. Always a pleasure to speak with you. So today, as you said, is a very important day. We have the Q2 GDP growth print which is coming out, and our expectation is that it is going to come in at a robust 7%. Although this is going to be a slower pace than the 7.8% that we got in Q1 of this year. And, you're right, there are conflicting signals. I think all the data has not pointed in the same direction. It was an interesting quarter, with the monsoon the way that it was, with excess rainfall at the end. and a lot of turbulence caused by the US tariffs, a lot of uncertainty related to that. And then, of course, we got the GST announcement in the middle of the quarter and a very quick implementation after that at the start of the festive season. So lots of mixed cues. I think two of the reasons that we're expecting to see the growth print slowing down from Q1 to Q2. One is that the pace of government spending itself slowed down on an elevated base. So that's one reason. And then the tariff-related uncertainty, and very specifically, we also saw the growth in services exports slowing down. So that's probably going to play another factor. However, with the GST-related positivity, with the restocking ahead of the festive season, the manufacturing volume growth did improve. And we expect that this quarter, actually, industrial GVA growth is going to outpace services after a few quarters. And that industrial GVA growth is going to come in at a 5-quarter high.
Okay. Aditi, hi. Good afternoon. Alex here. I want to actually ask from the perspective of corporates, because a lot of people tuning in now more concerned about corporate earnings and the implications of the inflation print that we've seen in the recent past, what that means for nominal GDP and the projections for this year, because you have corporate earnings that would be tied to that. What are your own projections for FY26? And do you see it improving heading into FY27? And also, what are you factoring as far as the rate cuts go? Because you have one just in a couple of weeks' time, actually next week. Yeah.
So on the nominal GDP side, both for Q2 and for Q3, the deflators are going to be very, very low, because we have WPI that's marginal, and we have the CPI inflation that is also extremely low at this point in time. So there'll be a very low gap between the nominal and the real GDP growth in Q2 and in Q3. And then from Q4 onwards, as the inflation prints normalize, particularly for the CPI, we'll see the deflators starting to head back to relatively normal levels. So for FY26 as a whole, we're looking at a real GDP growth of around 6.8% and a nominal GDP growth of maybe around 8.2 to 8.5%. So certainly lower than what we usually, what we expect for the Indian economy. For FY27, as of now, growth could print in a pretty wide range. I'm just going to say 6.5%, as an anchor. Obviously, what happens with things like the US tariffs on both goods and on services would have an impact on where growth ends up. But I'm going to use 6.5% as an anchor for the real GDP growth for FY27 for now. We would expect the CPI inflation to head upwards of 4% and average around 4.2%, 4.3% in FY27, particularly given that the base is going to be quite low. The WPI inflation may still be in the range of 2 to 3% only. So for next year, definitely the nominal GDP growth would be a bit higher than what it is in FY26. But generally speaking, I mean, if we're going to end up with inflation that's on the lower side, and if real GDP growth is going to be in the 6.5 to 7% mark, then nominal GDP growth may not necessarily be in double digits in all years.
Aditi, this is Sharad here. We spoke about a lot about consumption also kicking in, especially with the festive season. Also, one question is there, is the rate of transmission. How has actually gone down in the ecosystem? Because RBI had stated that October, November will be the best time where you will have all your economic data saying that the consumption is going to pick up, your interest rates are going to come down, and that transmission will happen. So will we see that inflection point happening in the coming months?
See, on the consumption side, I think, it's not going to be a one-size-fits-all answer. What we saw with the GST rationalization at the beginning of the festive season was that you got this big boost towards, consumer durables. We saw a lot of white goods seeing very high demand. We also saw some amount of pent-up demand coming through in the auto sector. And I think that for some sectors, you will see a trend of restocking that will continue through the rest of Q3, but maybe not for all sectors. So for the auto sector, for instance, where the inventory levels were very, very high, we may not see that same trend of restocking coming through the way that it would for other white goods. So it's going to be a bit of a mixed bag in terms of what kind of volume growth sustains across different sectors. I would think that after the kind of concentrated demand that we've seen in the festive season, in any case, there'll be a little bit of a lull in terms of big ticket spending in the rest of this quarter. and then maybe things will normalize in Q4. For consumer non-durables, I think it's going to be a little bit of a different trajectory. The initial impact of the GST cuts was probably felt more on the durable side. But on the non-durable side, I think the benefit is probably going to start showing up a little bit later. Once households sort of, relook at their household budgets and how much their normal, purchases cost, possibly the savings, once they start to become more apparent, you could see a trend of either higher volumes or premiumization through a lot of categories.
Got it. All right. Aditi, thanks so much for setting that up for us. An absolute pleasure as always speaking with you.
Thank you.
Now we have to slip in a very quick break, but before we do, take a look at this. The new kid on the block, Sudeep Pharma, made a strong market debut today. By the way, that issue was oversubscribed by as much as 90 times, if not more. It's up as much as 30% as we speak right now. Let's listen in to the management. That is Shanil Bhayani, who's a whole-time director of the company, break down the key factors that help drive margin expansion for Sun Pharma.
So I think the margin expansion happened primarily because of two reasons. One is again the specialty ingredients, which as a category has a much stronger margin profile. So from 22 is when we started the business vertical. Today it's a third in terms of revenue contribution. So that has helped expand the margins for the business. In addition to that, our strength and our penetration in the infant nutrition segment has grown significantly in the last couple of years. Some very critical customer approvals came, which typically take 5 to 7 years to achieve. So that has also contributed to the growth of the business, which has also led to a expansion in the margins. I think again we are very comfortable to say that I think the business will continue to deliver a very similar margin profile, going forward as well, if not further strengthen.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first.
Right.
You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101, go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her?
No.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market. Now
Welcome back to India Market Close. Let's just quickly pull up Nifty 50 and Bank Nifty on the screens and see what the markets are doing, whether they continue to remain as flat as a bread or a chapati, as you know, Alex was mentioning. And there you go, exactly where we started off is where we are in terms of Nifty 50. But one space that is buzzing in trade today is the chemical pack. A lot of stocks that are buzzing in trade, from a Sigachi Industries to a Tanfac, Beer Corp and SRF. I'll talk about the others, but SRF, that's the one we've chosen to be the bull versus bear candidate. Let's understand what are both the cases telling you, because the stock's seeing some smart moves to the tune of around 3% in trade. Varsha, my colleague, is standing by to tell us more. Varsha, what is stronger, bull or bear for a SRF right now?
Currently, looking at the stock reaction, I would say a bull one, because one of the reasons also being Axis Securities has, upgraded SRF to buy, and let's see what is working for the company and also what are the risk or disadvantages that this company has. Starting with the bull case, wherein company will see a strong growth which will led by specialty chemical and refrigerant gases. Now, do remember refrigerant gases are used in your ACs. Next, onto the bear case, if I were to talk about the packaging films and technical textile recovery may remain slow. That's one of the bear case that the company has. But moving on, let's see onto the refrigerant gases. You have R32 and R25 prices rising, and every $1 of rise in R32 refrigerant gas adds almost 240 crores of profit to SRF. But fear of oversupply in these refrigerant gas capacity will hurt SRF in long term. Talking about the new products, so 5 to 7 new AIs or new products can add almost 3,000 crores of revenue for the company. But US tariffs and the weak macro demand may delay agrochemical demand. We all know the pressure in the agrochemical demand that overall industry is going on, and SRF is a no exception to that. But tight HFCs, now HFCs are nothing but your hydrofluorocarbons, and a tight supply and good demand because of winter will aid margins for SRF. But overall the squeeze in margin and slow fluorochem ramp up is the I would say the bear case that the company has. So overall lots of things are actually working for SRF, be it refrigerant gases, be it fluorochemicals, and the strong growth in chemicals that the company is eyeing on.
Thank you so much for that. In fact, few of the other companies that we're talking about is a Sigachi Industries. That stock is seeing some smart moves, and this is on the back of the shareholder approval, where they've passed a couple of special resolutions, and the first one includes extending the IPO fund utilization timeline to March 31st, 2027, and increasing the borrowing limits as well. The stock seeing gains of nearly 11.5% in trade. Tanfac Industries, they've got a contract for supply of high purity diluted hydrofluoric acid, on the back of which the stock is up nearly 4%. And a Bayer Crop Sciences, that stock has actually snapped a 2-day losing streak, seeing some good momentum, along with the SRF that Varsha just bought to us as well. In fact, let me head across to our guest. Nirav, what are your views when it comes to the chemical space? Few of the counters seeing some good momentum for a whole host of reasons. Anything that you want to add and you would prefer buying at this stage?
Well, I think there has been a slight improvement as far as the specialty chemical space is concerned, because this entire space was under a lot of pressure in the recent past, and the destocking exercise has been completed, and the restocking is taking place at the lower prices, and hopefully the prices should recover going forward. So selectively we are seeing some improvement in the prices of specialty chemicals. That's what is reflected already in the results of SRF. So I think there's nothing really new over there. Because as far as the Q2 results are concerned, we've already seen a good improvement in the specialty chemicals division, and the refrigerants have been doing quite well. And I think the stumbling block at this point of time is the relatively muted performance of the other two divisions, which is a technical textiles, which is fortunes are related to the tire sector, nylon tire cord fabric, and the excess capacity which is there in the packaging films business. Overall, I think the balance sheet continues to be quite healthy and strong as far as SRF is concerned, but I think valuations look quite rich at this point of time.
Valuations are stretched with SRF. So is it time to book profits in today's session for a SRF or a Sigachi? Amar, what would you say? I mean, time to book profits in any of these chemical names, or are you seeing further momentum pick up?
I would say as far as Sigachi Industries is concerned, the stock has corrected. It seems to be in for consolidation, and today is a very strong day. So I would say rather, if anyone is long in Sigachi, they should definitely hold on to it. The stock has an upside resistance somewhere around the 40-42 level. If that is taken out, then the stock could rally towards the 50-odd levels. And looking at the other stock which you mentioned, SRF. So if I look at SRF, SRF is clearly has been in for consolidation because we've not seen much happening in this particular stock. Last couple of days, we've seen some upside move. But the stock is likely to run into some wall of resistance around the 3,050 levels. If that is taken out, then it could witness a rally towards the 3,150, 3,200 levels. Otherwise, the stock is clearly indicating consolidation.
Select chemical companies which we are discussing, but focusing on the pipe companies as well. Astral and Supreme Industries are in focus. The PVC resin price has been cut by another 4 rupees per kg. PVC prices continue to remain under pressure. Of course, we had mentioned you earlier around 1 or 2 weeks ago where the Reliance had actually taken this pricing move. Already 10 rupees per kg cut has been seen in the third quarter. The landed import prices, they remain a key factor causing downward pressure. Both of these stocks are down in trade as well, and significant selling pressure was there earlier in the Astral counter. These stocks are generally in the F&O segment, and a lot of action happens based on these news flows. Amar, the question is for you. Is there a good time to take in some kind of a positional bet in this if you're seeing any kind of a value buy, or is it going to be a much more shorting in from these current levels?
So which stock you're referring to? Astral Limited?
Astral and Supreme Industries, both of these stocks. Both of them are seeing selling pressure today.
Okay, so first talking about Astral. See, Astral is clearly in a consolidation. So I wouldn't say that there's much to read into it at the current levels. The stock is around the 1430, 1440 levels. It has corrected from almost the 1550 levels. So it's in for consolidation. I don't see any trend in this. If I look at the other stock which you mentioned, Supreme Industries. So Supreme Industries also been in a bear trend, honestly. If you look at from a long-term perspective, also the stock has been witnessing selling pressure. So I would say rather one should wait it out than enter. If I go back in time and look at Supreme Industries somewhere around the 3,100 odd levels, the stock had bounced from those levels earlier, in April, mid of April of this year itself, and from there it had bounced back towards the 5,000 level. Again, it is back to somewhere around the 3,000, 3,100, 200. That could be a zone where one can look at Supreme Industries, provided it consolidates around that level, not at the current levels.
Okay, all right. So that's a view on a couple of these pipe companies. Let's talk about the movers and shakers of the day, though. Let's wind things up. We've got Jasmeet joining in to tell you about which stocks are in the Friday party mood and which are down in the dumps. Jasmeet, over to you.
Well, Ray, thank you for that. I'll start off with the Friday party mood, the gainers in the trade today. Well, these stocks are gaining on the back of news as well as the volume. If you look at the first one, it's car trade. The company seeing a large buy from the Capital Group. The Goldman Sachs has dumped 10.7 lakh share, but the small cap World Fund has bought 14.4 lakh shares, showing a positive up move in the particular stock. If you look at the next counter, it's Wellspun Living. Well, the stock has hit a 4-month high in intraday today. While if you look at the overall performance, the volume are up 20 times on a 30-day average. But for this particular particular stock being in textile, tariff is something which will be in focus going forward for the performance of the stock. The third counter is Eureka Forbes. While again the stock is buzzing on the back of a news, we see something like MK, which has retraced the buy rating and has maintained a positive stance on the company with the unchanged target price of rupees 775. And the company has also come up with the investor day presentation where they reiterates the guidance of reaching a revenue of 5,400 to 5,600 crore by FY30 and an EBITDA range of 800 to 850 crores. While in terms of next counter, I have IIFL Capital Services, which is buying uptake seeing after a constant selling pressure in this particular stock, and the volumes are 3 times on a 20-day average. While last gainer for today's list is Newland Labs. While this particular company has seen positive up move over last year and it's up nearly 22% on a Y20 basis. While in terms of the last 5 days, the stock has rallied by 6% and is gaining in trade again even today. Now let's quickly talk about the stocks that are losing in trade today. While first one is KIOCL, the stock hit an intraday high yesterday in trade and today it's seeing a selling pressure. If you look at the overall volume, they're 3 times the 30-day average, and over last year the stock has remained flattish. While in terms of the next one, it's Walchandnagar, it's seeing a selling pressure again where it's down by 9% on a annual basis. The stock has been under pressure for last 1 year. While in terms of the other aspects, the particular counter has touched the 6-month intraday low in today's trade. The third counter is TBO Tech. The current volumes are at 51% below the 20-day average. That's why the selling pressure and the stock is in red today. It's down almost 3%. While if you look at the other aspects, the FIIs have reduced their stake in the company to 30% from earlier 43. So we see selling pressure on both the sides of this particular counter. While fourth one, I have Credit Access. The FIIs have maintained their stance, but the DIIs are losing their interest in this stock as they've reduced their stake in this particular company. If you look at the 1-month performance, the stock is down 9%. Last counter is Nuvoco Vista Corporation. While the stock is down 17% over a month, and today also it's seeing a pressure. If you look at an annual performance of this particular stock, it's hardly up 3%, which is almost flattish. So these are the counters which are gaining and losing in trade today.
All right, thanks so much for that, Jasmeet. I want to ask about a couple of these losers. Amar, from the broader markets, transformers and rectifiers, currently one of the stocks that is losing ground, down about close to 5%, 4.7% at this point. Do you see the possibility of further downside, or where would you cap it, and where would you say that it's a good opportunity to get into the stock?
See, if you look at this particular stock, the stock has more than halved from its record highs and currently it's around the 270 mark, and it has been consistently trading on the downside. So now where does the support for those stock lie? So that would be somewhere around the 250, 260 level. It's approaching that level, which could be a strong support zone. And earlier also, if you see, the stock had sharply corrected from almost the 470 levels. But on the 11th of November, volumes were exceptionally high. The day there was a lot of buying interest which had come in the stock, but the stock is very close to trading around those levels. So that clearly tells me that the stock is in for consolidation, could trade lower towards the 250, 260 level, and then there could be a pullback from there, provided there's some positive triggers or fundamentals in this particular stock.
Got it. Nirav, let me come to you very quickly on whether you have an opinion on this. Transformers and Rectifiers Limited. It's come off quite sharply, as we've seen from that chart, 50% or 45% or thereabouts from those heady levels that it saw. On the fundamentals, do you see a reason to get in right now?
No, I would stay away from these smaller transformer players like Transformers, Rectifiers or Voltem, because they are relatively small in terms of the industry requirements. And I think the focus and the preference would be towards Hitachi Energy, GE Vernova and Siemens Energy.
Okay, so Hitachi Energy and Siemens Energy is up nearly 1.5% in trade. GVT&D, though trading slightly under pressure. In fact, before we move ahead, Amar, and what will your BTST, STBT call be for Monday?
I would say one stock that can be looked at is the Ramco Cements. So this is one stock which had corrected, but currently is witnessing some strong move today. And also the last few days, the stock has moved from almost the 980, 1000 levels. Currently it's trading around the 135. So this is one stock one can look at buying at the current levels for an upside target of 1097 with a stop loss of 973.
All right, the small cap stocks are buzzing in trade, and Anushi is joining us with us. Anushi, what are the stocks you are picking up today?
Well, interesting names that we are seeing in today's trading session. Now, this is something like a Reflex Industries along with 63 Moons Tech are seeing volumes of over 93 times. In fact, what we are seeing is that Reflex Industries have procured an order from a large Indian conglomerate, and this is for an order value of around 100 crore is what we are seeing. Scope of order would include excavation loading for ash-related works is what we are seeing with execution in the next 4 months. While for 63 Moontechs, it's a big overhang which is now behind them, and it's a 12-year-long closure that was awaited for this. NCLT has approved a one-time settlement scheme between National Spot Exchange and specified creditors, and this settlement includes about a 1,950 crore of payment to the traders that are there. So this is an important update. We're seeing a strong up move after this decision. While for Stallion India Fluoro, while the trading volumes are not that high, it's the stock performance in particular which is a major concern for the street. The stock is down 14% in the last 5 days, while in the last from its all-time high levels, it's down 60%, and in 6 months also it's seen about a 42% of a correction. So these are the 3 stocks on radar in small cap buzzers.
Is Reflex Industries in your coverage? Because yes, so positive momentum is coming in this segment, and they are also going in the taxi services also. I think it's there as well. I've visually seen that in Chennai. What are your views on this stock, and fundamentally how much risk-reward ratio is there?
Well, I think Reflex has
Nirav, please unmute yourself.
Okay, we've lost his audio then. Yeah, we'll have to go back to him at some point. You were asking about Reflex. It's up about 7.8%. Amar, in the meanwhile, shall we talk about whether there is a prospect here? Would you buy at this level?
So if we look at Reflex, the stock has witnessed a correction quite significantly from almost the 600 levels to cut around 340, 345. And what we are seeing is that, yes, the stock has approached very crucial support zone. So there is a possibility that the stock could move up higher towards the 370, 380 levels. So from a shorter term perspective, that's the level to watch out for. Only sustaining of the 370, 380 levels, then you could expect the stock to rally towards the 425, 450 levels.
Okay, so there is going to be some bit of consolidation that you will have to watch out for in a Reflex. Stay with us. In fact, the other sector that should be on our radar is the auto segment that will actually give in their auto sales numbers on Monday. And ahead of that, you're seeing the auto index, which is up nearly 0.6%. Puneet, this month is going to be interesting, taking the way October month panned out, and what would that mean for a November now? Because already you're seeing some bit of dips coming in when it comes to Maruti at entry level. What are the key trends that you're picking up?
Well, most certainly it's going to be probably one of the most spectacular months for FY26, and a very interesting one as well, because generally post the festive season, we do see a slump in the next month, and that are some of the historical trends suggest. And also that November last year had some of the festive dates as well. So you have a very high base and a very high base in the previous month also on a year-on-year and month-on-month basis. Despite that, we are expecting a very strong month for auto sales in the month of November. And a big surprise here, it's not by two-wheelers or four-wheelers, it's actually the truck segment that is going to lead the growth. We are expecting mid-double-digit growth for Ashok Leyland and Tata Motors in the CV space. But let me first, get out the two-wheeler names first, because they are expected to do decently well. But the likes of TVS will drive that momentum up almost 20% in growth. While for Eicher, we are expecting a fall in this particular month, and that's because of a large base as well of what I spoke about in December last year. And hence you're seeing a YOY fall for this. But TVS will definitely be a key outlier in this particular month. When you look at the four-wheeler segment, the growth is largely spread out, because in the same time last year, while it was a Diwali month, we saw the sales largely being subdued in FY25. Hence you're seeing Maruti, someone like Tata Motors and Mahindra & Mahindra have over 15 to 18% growth, while Hyundai will also come in the high single digits. The commercial vehicles is definitely a key surprise, because while the GST rate cut benefit does help all of the truck makers, it is seen with higher demand because of the GST rate cuts in other sectors. So utilization of fleet operators has gone up dramatically, and you're seeing almost a 22% growth for someone like a VECV, with a high 15 to 18% growth for Ashok Leyland and Tata Motors, and tractors are expected to continue the momentum, a high single digit of 8 to 9%, and will get that fillip because of M&M raising the industry growth guidance to 9% versus 7% earlier. So multiple players will be in focus on Monday, but watch out for the truck makers this time.
Watch out for truck makers. Thank you, Puneet, so much for that. Amar, any strategy when it comes to an automaker for investors to look at from a Monday perspective?
Yeah, I would say that Ashok Leyland stock one can definitely keep a close watch on, because the stock has been very strong on the charts. It has witnessed a sharp rally, and currently it's trading at record highs. And if you look at the trend of the stock and some of the technical parameters, they also continue to be very strong. But yes, buying at the current levels, the risk-reward ratio might not work. But this is one stock. Any correction in the stock towards the 150 odd levels can be a very good buying opportunity for an upside target of 165, 170, and the stop loss needs to be below the 140 level.
So that's interesting. Ashok Leyland, in fact, good run up it saw in yesterday's session. Here are two stocks that we want to talk about. Alex is Hindalco and Vedanta, and this is on the back of the surge that silver has been seeing. If you see both of these counters, Hindalco also went to the day's highest levels, has cooled off slightly. A similar trend with Vedanta, 1.5% up move. With the way silver has been panning out, Aman, would you be a buyer of Hinzinc and Vedanta as well?
So if I look at Vedanta in particular, see, Vedanta continues to be very strong. There's no doubt about it. If we go back in time and look at the stock made a high of almost 526 odd levels, and that's where the stock earlier met with resistance, and from there it had corrected towards 400 level. Again, it has breached that 525 odd level, so it needs to sustain above this level. So, and the earlier high the stock had made on 11th of November, I would say 13th of November, somewhere around the 535 odd level. So that's a zone of resistance, but the stock is strong on the chart, so one can look at this stock. And the second, which you mentioned, Hindustan Zinc. So if I look at Hindustan Zinc, this is one stock which is really hasn't gone anywhere. So if you look at it, it has been in for consolidation, not moving up significantly.
Thanks, Amar, for that, your views and giving the entire technical perspective. But moving on, markets are at their close. Today was a day where we saw flattish movements happening with a kind of a bias on the negative side, but nothing to worry much about. Largely, we would say the action is there in the put space. Let's bring in the constituents in the Nifty index, how they have actually panned out, and largely we see it's a small range. Be careful of these auto stocks. They have been doing really wonderful, especially ahead of the November sales. M&M leading the pack, followed by Adani Group of stocks as well. But some selling coming in the financials. Look at this SBI Life, Shriram Finance, which are the stocks where we'll be focusing on. Sectorally speaking, let's see where the action is. And largely, there is a distribution happening across the segment, but not major movement. This, if you can pull out the sectoral gainers and losers, largely auto and pharma leading the pack, but selling is still on in the CPSC and the oil gas segment. Advanced decline ratio to pull out to see what's the action looking like. It is still even Stevens 1:1 ratio. Let's pull up the mid cap and the small cap 250 index, where we are seeing largely not major support coming in, but the volumes are thinning down. So this is the important setup coming in. BSE contributions, let's see where the actions is. It's largely stock specific, but there is a hint in Welspun Living that we'll be tracking whether the trade deal is going through or not. And of course, the Privy Specialty, that's also up almost 4% on broking upgrades. Selling happening, stock specific news flows from Gail, MCX, and even Supreme Industries as their pricing announcements are coming in. But what should be on your radar for this next week? That's very much important. IIP data, India GDP data comes in today in the evening itself. You should track that. And of course, the exit lock-in shares include the names such as Office and Vikran Engineering as well. But of course, next week, the board meeting would be there for Lenskart, and NSCL fundraise is also there, and RBI MPC is something which we will be watching out for as well. So this is the entire picture, what we are expecting for the next week. But today is Friday, and like always, Shreyansi gets her favorite segment, Popcorn Pulse. And Shreyanshi, I must say something. So there was a very, very important series, Stranger Things, and I tried to get into the Netflix. It crashed.
Well, you've hit the nail right on its head, Sharad, because that is also something that makes it to my list. And I hope you're a Shraddha Kapoor fan, because she is, of course, the voice of Judy, and that's also something that I'm going to be talking about. But let's get right into it. The first one, of course, is Zootopia 2. Like I mentioned, it's Shraddha Kapoor who's the voice of Judy. This is the one that you should be watching out for, and it's gotten a 10 on 10 review when it comes to some of the responses coming in on social media. Of course, the first one you did have, that was already very popular, and the sequel is being touted as something that is very special, something that is very popular as well on social media. So keep an eye on this one, and it's being labeled as Disney's best sequel thus far. So that's the one to watch out for. The next one that we should be looking at is this movie called Eternity, and you do have the afterlife being featured in this one, and it's a very difficult choice that the lead has when it comes to this particular movie, because she has to choose between two people. She has to choose between where she should be living, and she's got just 1 week to do that in the afterlife, to be making that choice. And that is a choice that is going to be made in this comedy and romance movie. So that's something that you should be watching out for. And the next one that Sharad, in fact, also talked about is, of course, on Netflix. The platform did crash for him, but here's hoping it does work for you, because this one is, of course, quite popular. Stranger Things Season 5 Volume 1, and this is something that's also getting rave responses when it comes to this particular sequel, this particular Volume 1 of Season 5. So keep an eye on this one as well, and we do hope that you like all of these suggestions. But that was Popcorn Pulse for you. Thank you so much for tuning in.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people, because India was the last place where somebody would rent furniture.
I think you disrupted your own life first. Right. You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101, go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education, my mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her.
No.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's dive straight into the show and let's see how the markets have fared today. So the markets have pulled back since, they hit that much awaited all-time high. It's the Nifty that has ended near the 26,200 levels. Sensex also shut shop mildly in the red. Now this is about the day gone by. Let's take a look at the week gone by. Now on to a stock that was buzzing away in trade, Reflex Industries is starting the quarter strong, announcing a significant new contract win. The company has received an order worth 100 crore rupees from a large business conglomerate. So this new contract is for the specialized work of loading and also transporting bottom ash. That is a key segment of the industrial logistics business. So while the value is substantial, the timeline is quite aggressive. The entire project must be executed within 4 months, and this will provide a sharp immediate boost to their revenue over the next 2 quarters. So importantly, this win actually adds nearly 10% to the company's existing order book, which stood at 1,200 crore rupees as of the second quarter. Now moving to the power and capital goods sector, where Voltamp Transformers has secured a significant order in its core business segment. The company has received a letter of intent worth 85 crore rupees from the Gujarat Energy Transmission Corporation. This order is for the supply of various ratings of power transformers, which is a vital component for energy transmission and also distribution infrastructure. So if we talk about the deal, so it is notable for its execution speed. The company has a tight deadline with an execution period of just 6 months, ensuring quick revenue recognition in the next term. So this new 85 crore contract is a strategic win, adding to Voltamp's already healthy order book, which stood at about 1,129 crore rupees as of the end of September. Now moving to the logistics sector, viewers, where all cargo logistics is seeming a sharp rebound in trade, bouncing back after 5 straight days of losses. So what is the catalyst? A detailed clarification on the cost split for its recent demerger. The company has released an official document, and this aims to clear up the investor confusion over the complex separation of its express and also contract logistics businesses, and the numbers are now clear. So according to the filing, all cargo logistics will retain 87.94% of this overall business value, and only a small portion, that is of 12.06% of the value, has been transferred to the newly created entity All Cargo Global. Now moving to the oil and gas sector, where the regulator has delivered a key decision affecting Gail India's natural gas pipeline tariff. The Petroleum and Natural Gas Regulatory Board, or the PNGRB, has approved a modest tariff increase for the company. So they have allowed a hike of 12%, setting up the new unified tariff at 65.69 rupees per MMBTU. So the crucial context here is the comparison to expectations. Gail has initially claimed a much higher tariff of 77.98 per MMBTU. Furthermore, the final tariff is also slightly lower than street expectations, which range between 67 and 70 rupees per MMBTU. Now, Adani's aviation ambitions are clearly taking flight, moving beyond airports to mastering the skies themselves. The conglomerate's arm is making a strategic acquisition in the critical training infrastructure space, also announcing a deal for the Flight Simulation Technique Center, or the FSTC. So the group is acquiring a controlling 72.8% stake in FSTC. Now, this is a significant investment valued at an enterprise level of approximately 820 crore rupees. Now moving to a major upgrade on the street today, putting the spotlight squarely on Paytm. So global investment bank Goldman Sachs has significantly raised its view on the stock, upgrading it from a neutral to a decisive buy rating. So this call comes with a massive price target hike. Goldman Sachs has more than doubled its target to 1,570 rupees, and this is up sharply from the previous 705 rupees. So the bullishness is driven by two core factors. First, that they see a big positive surprise in the company's ability to execute cost controls, which is also expected to drive the EBITDA margin to more than double over the next 3 to 4 years. And second is Goldman Sachs projects a further recovery in the market share, particularly if we talk about in the payment space. Now moving to the consumer technology space, viewers, where the eyeglasses retailer Lenskart is the subject of a major new call from a global brokerage house. So Jefferies has initiated coverage on the company with a decisive buy rating and also set a price target of 500 rupees. The bullish view is firmly rooted in the company's strong growth potential and also its operational model. Jefferies highlights Lenskart's vertically integrated omni-channel model, noting that the structure ensures excellent cost efficiency across its operations. The core of the business remains the Indian market, which Jefferies calls the bedrock, contributing over 85% of the company's EBITDA. So what's also important to note is that the brokerage sees highly attractive unit economics driving the growth. Now on to an update from the banking space. One bank that has been in focus is Bandhan Bank. Of course, the asset quality seems to be stabilizing, but in what seems to be largely a cleanup exercise, the bank's board has cleared the sale of a significant portfolio of the stressed assets worth 7,000 crore rupees to asset reconstruction companies, or the ARCs. So the total portfolio comprises two parts. Roughly 3,212 crore rupees in existing non-performing assets, or the NPAs, and another 3,719 crore rupees in loans that have already been written off. So the assets on the block are primarily high-risk loans from its core segments, including microfinance, agricultural, and small business loans. So the sales strategy involves two different auction routes. That is, the live NPAs will be sold via the Swiss auction route, which is a highly transparent process, and the written-off accounts, meanwhile, will be sold via a normal auction. Now moving to the pharma sector, where Zydus Lifesciences has secured a crucial regulatory milestone for a major diabetes treatment. The company has received a tentative approval from the US FDA for its generic version of empagliflozin and also linagliptin tablets. So this combination drug is a generic version of the branded product Glyxambi, which is marketed by Eli Lilly. So the drug is highly effective, used to improve glycemic control in the patients with type 2 diabetes, and the market is substantial. The pre-branded product currently has annual US sales of approximately $215.8 million. While the approval is secure, the commercial launch will have to wait, as the key patents for Glyxambi are expected to expire in April 2027. Now moving to the railway sector's viewers, where Rail Vikas Nigam, or the RVNL, has secured a new contract further bolstering its infrastructure order book. The company has received a work order from the East Coast Railway. So this is a specific infrastructure contract valued at 9.6 crore rupees. The project involves the critical task of commissioning a comprehensive video surveillance system across the railways network, and this is enhancing the security and also operational oversight. So the execution timeline is relatively swift, and this is requiring completion within 180 days, or roughly 6 months, ensuring a steady near-term revenue stream for the segment. So while the individual order value is small, the win adds to RVNL's massive infrastructure pipeline. The company's order book remains robust, standing at an impressive 90,000 crore rupees as of the end of September. Now moving to the textile and manufacturing sector now, where Bombay Dyeing and Manufacturing has announced a temporary operational update. So the company is undertaking essential maintenance work at its manufacturing facility in Patalganga. So as a result of this scheduled maintenance, the company is temporarily shutting down the plant. So this will lead to an anticipated production shortfall of approximately 7,500 metric tons of the material. However, the company's management has moved swiftly to reassure the market. They are confident about having sufficient inventory reserves to manage the situation. Now, moving to the hospitality sector, Lemon Tree Hotel is executing its expansion strategy, particularly in the key regional markets. So the company has announced the signing of 2 new properties, one each in Gujarat and Uttarakhand. So this move strategically strengthens the company's portfolio in states known for both business and leisure travel. Together, if we talk about the 2 new properties, will increase the company's total room count by an additional 170 rooms. So this expansion underscores the aggressive growth of the Lemon Tree brand, which is focused on the mid to upscale segment. So the company now operates over 120 hotels spanning more than 80 cities across India. Next up, we have the Indian Energy Exchange, or the IEX, where India's largest power exchange has approached the appellate tribunal for electricity, or APTEL, against 2 orders passed by the Central Electricity Regulatory Commission, or the CERC. So the issue stems from the fact that from India having just 1 exchange in 2008, the sector now has 3. So IEX says that while rules were repeatedly relaxed for the other 2 exchanges, CERC suddenly wants market coupling, meaning one single price and one single algorithm for all the exchanges instead of free exchange-wise price discovery. So IEX says that this could actually reduce their market dominance, and APTEL announced that the next hearing will be on the market coupling dispute, and that will take place on January 6th of 2026. Viewers, let's look at HAL. That share price has, rebounded after Hindustan Aeronautics Chairman and Managing Director DK Sunil has said that there is absolutely no problem with Tejas aircraft, terming that recent Tejas crash in Dubai as an unfortunate incident. He said that its safety record is the best in the world. His statement comes after a Tejas aircraft crashed during Dubai Air Show 2025 on November 21st, claiming the life of Wing Commander Namansh Syal. Now, moving on to a newly listed player in the fintech space, Grow is under investor scrutiny today due to notable selling pressure from its employees. So data shows that the company employees have sold nearly 11.4 lakh shares since the listing. So this heavy selling comes even as the company has delivered overall, strong sequential Q2 numbers showing impressive profitability and also cost control. So the context is crucial here. The stock saw an aggressive post-listing rally, leaving it up over 21% since debut, but it has corrected sharply, now trading roughly 18% down from its all-time high. Next up, we have Seagull India, viewers, that has emerged as the lowest bidder for 1,089 crore road project awarded by the Madhya Pradesh Road Development Corporation. So the contract covers the construction of a greenfield 4-lane corridor between Indore and Ujjain, which is a key connectivity upgrade for the region. The project is expected to be completed within 24 months according to initial timelines. The order further strengthens Seagull's presence in the state road infrastructure development. Now, moving to the consumer durables and health sector, where Eureka Forbes has laid out a highly ambitious growth roadmap. The company is targeting to double its revenue by the financial year 2030, and this is driven by strategic transformation. So the core of this strategy involves optimizing its product mix. Management is aggressively cutting its stock keeping unit, that is the SKU count, from over 60 down to just 5. So this is a move designed to improve the efficiency and also focus resources on the best sellers. So the major growth driver is the service segment, which the company believes has vast untapped potential for annual maintenance contract, or the AMC penetration. So service revenue typically aids customers' retention and also provides highly stable, high margin income. Now, beyond the water purifiers, the company is betting big on the new categories, projecting its vacuum cleaner sales to grow 6-fold and also noting strong demand in the air purify segment. And viewers, since we are talking about air purifier sales rising, let's also tell you why this is happening in the very first place. So Delhi today woke up to even worse air quality. Levels have crossed 500 in select areas. Neighboring cities have fared no better. So other metros like Mumbai still is grappling with poor to severe AQI. Now, just to give you more context, living in Delhi right now is the equivalent of smoking 23 cigarettes. Mumbai is anywhere between 12 to 16 cigarettes on an average. E-commerce platform Meesho is set to launch its much-awaited initial public offering on December 3. The Bengaluru-based online marketplace competes with companies like Amazon and Flipkart to sell a range of products. Meesho IPO will comprise a fresh issue of shares worth 4,250 crore rupees and an offer for sale of 175.7 million shares by existing investors. So the price band for the IPO has been fixed between 105 to 111 rupees per share. The Meesho IPO lot size is 135 equity shares and in multiples of 135 equity shares thereafter. US Sudeep Pharma Limited, this is listed on the National Stock Exchange on Friday at 730 rupee a piece and a premium of 23% over its issue price of 593 a piece. So Sudeep Pharma was subscribed over 93 times on the third day and final day, led by the demand from large institutions and also non-institutional investors. So the retail portion was also overbooked. The IPO includes a mix of fresh issues of shares worth 95 crore rupees and also an offer for sale of 1 crore shares by existing shareholders. The price band for the issue is set at 563 to 593 rupee per share. Reliance Industries has received a 56.4 crore penalty order from Joint Commissioner CGST Ahmedabad. So the penalty has been issued interpreting that the input tax credit falls under blocked credit without considering how the service provider has classified the services. The company has said that it will challenge the order. It intends to file an appeal against the decision and also defend its position on the treatment of the input tax credit. So the financial impact of the order is limited to the penalty amount. The company has clarified that there is no effect on its operations or other business activities due to this order. Now, in its ongoing effort to strengthen the coal sector and also bring India closer to the vision of Atmanirbhar Bharat, the government has taken an important step aimed at speeding up the exploration of coal mines. So the government has aided another 18 agencies to carry out prospecting operations for the exploration of coal and lignite. Now, by expanding the pool of authorized prospecting agencies, the government aims to harness private sector resources, also promote efficiency, competitiveness, and the technological innovation in the explorations ecosystem. So this step is expected to significantly accelerate the pace of exploration and also enable early enhancement of mining, contributing to faster resource development and also enhance coal and lignite availability for the country. US social media platform X has rolled out a major update to its following timeline, introducing AI-powered ranking through its in-house chatbot Grok. So users will now see posts from people they follow sorted by engagement and also relevance. The new update means that posts from people you allow are prioritized based on what Grok predicts will be more engaging or interesting to you. However, users can switch back to the traditional chronological feed anytime via the menu. So the update aims to personalize the experience while keeping the focus on accounts users follow instead of random content. Now, government is also considering extending hallmarking to bullion to ensure jewelry manufacturers receive authenticated raw material. Officials say that the move follows strong uptake of gold hallmarking and the recent rollout of voluntary hallmarking for silver. So the Consumer Affairs Ministry is also working on a framework to help buyers distinguish between natural diamonds from lab-grown ones, aiming to strengthen transparency and also consumer protection. So at a CII conference, the ministry said that the industry will be given time to adjust before any further mandates are introduced. The broader effort is aimed at building long-term credibility across the gems and jewelry ecosystem. Now, viewers, onto some national news now. Cyclone Ditwa is heading towards North Tamil Nadu, Puducherry and South Andhra Pradesh coast, prompting the Indian Meteorological Department to issue red alerts in several coastal districts. So the storm currently over the southwest Bay of Bengal near Sri Lanka is forecast to bring heavy to very heavy rainfall, strong winds and also dangerous sea conditions by November 30. Residents have been warned of possible flooding, rough seas and also disruption to daily life, particularly in vulnerable coastal and delta areas. So authorities have asked fishermen to stay out of the sea, have urged people to avoid flood-prone zones and are preparing emergency response ahead of the landfall. And Vladimir Putin will pay a state visit to India on December 4 and 5 to 2025 to attend the 23rd India-Russia Annual Summit. So the government has confirmed this. The visit comes at the invitation of Narendra Modi and will also include talks between the Russian President and the Indian Prime Minister, as well as the banquet hosted by India's head of state. The discussions are expected to review the bilateral progress and also chart a renewed vision for the special and privileged strategic partnership covering trade, defense, energy, and global regional issues. Viewers, in an exciting development for adventure enthusiasts and also tourists, Delhi has successfully conducted trial runs for a hot air balloon ride with public flights expected to launch soon. So this initiative aims to boost ecotourism and also offer a unique aerial view of Delhi's restored green zone. The service is expected to roll out between November and February when the weather is ideal for flying. Ticket prices are likely to be around 3,000 rupees plus tax, with flights lasting 7 to 12 minutes for up to 4 people. Now on to some global news. US President Donald Trump has announced a permanent pause on migration from what he termed third world countries, blaming recent violence near the White House on foreign-born individuals. The move includes halting new immigration admissions and also reviewing asylum cases and green card approvals from dozens of developing countries. Trump also proposed ending federal benefits for non-citizens, some immigrants, and also deporting those deemed public charges and all the security risk. So the pronouncement triggered immediately after concerns with many questioning its legality and also humanitarian implications. Viewers, the number of people killed in the devastating Hong Kong apartment complex fire has risen to 128, with as many as 200 missing. So firefighters finally brought the blaze under control 42 hours after it ignited. At least 79 people were injured in the inferno that rapidly spread through multiple buildings in a public housing estate in the city's Tai Po neighborhood, as you can see on your screens right now. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first. Correct. You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101, go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her?
No.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money.
Here on NDTV Profit, we are looking at this blockbuster GDP number, and that's the breaking news right now. 8.1%. The GDP growth is being reported at 8.2%, and this is versus the 7.8% that was reported in the first quarter of this financial year. So it is a blockbuster number. There is no doubt about it. The RBI was projecting it to be around the 7% mark, but now look at this number, 8.2%. We have experts joining us. Economist Gaurav Sengupta is with us, Chief Economist at IDFC First Bank, and Kanika Pasricha is the Economist at Union Bank of India. Good to have you both with us. Just to be able to understand, Gaurav, from your perspective, and we're looking for more color to come in on 8.2%, that big number. But this is beating most estimates, isn't it?
I think this is beating all estimates, not most estimate. We were at 7.3. I think this is second consecutive quarter where we've had a massive pickup in GDP. Sorry about that. We've had a massive pickup in GDP, which has been higher than consensus estimates. When looking at the breakdown from the GVA perspective, manufacturing clearly much higher than expected. Services, again, a very good number, another 9% plus number. We had expected some moderation in services because government expenditure had slowed, but it has, again, better than our expectation. Basically, this print easily means that your full year GDP will be 7% plus, 7.5% plus, even without a trade deal. If we get a trade deal, then the full year annual GDP is likely to be higher. So very comfortable position from RBI perspective, especially on the growth front.
From your perspective, Kanika, looking at this kind of number, 8.2%, what do you subscribe this kind of number to? Because where the expectations are and where the number has come in, yes, government capex, that has remained a crucial pillar in supporting the Indian economy. Now the effectiveness in the crowding in of private investment, tell us what you think are the biggest drivers right now, because despite the kind of tariffs that the Americans have put on us, we are still seeing an 8.2% number.
So, thanks a lot for having me on the show, and I completely agree with what Gaurav also said. See, frankly, when it comes to the impact of US tariffs on our GDP growth numbers, we think that because of front loading of exports this year, we've not seen too much impact of tariffs. In fact, even in the current quarter, GST-led consumption boost is helping out. But there are, a couple of indicators that I would want to wait for and watch out for. And that's most importantly nominal GDP growth. Where did the number actually settle? Because on a real basis, the deflator was playing a role in statistically boosting the real growth numbers. And that's been the case in first quarter. It's the case in the second quarter as well, when WPI was in the negative zone and CPI also was a subdued 1.7%. So important to see where nominal GDP growth has settled. That said, completely agree 8.2% is a very good number to go with. It just shows that underlying momentum is more than expectations, because even RBI for this number was closer to 7%. So good number. Of course, trade deal deferred trade deal impact not seen because of front loading of exports. Third, while statistical effects have played a role, it shows that the underlying momentum across key segments was positive, and including that led by government capex spend as well. Thanks.
So that point that you made about nominal GDP growth, I just want Gaura to weigh in on that as well, because yes, nominal GDP has moderated. There has been softer inflation. So from a fiscal standpoint, Gaura, how do you think that changes the revenue outlook for the government and the kind of future spending we can expect to?
Would you have the Q2 nominal GDP? I think with this sort of a print, even with a slower deflator, it would have been higher.
Right. No, we're waiting for that number. I haven't got it with me right now, and I'll ask our producers to pull it out. But in general, when you see the kind of role that nominal GDP is playing, how exactly do you think this is likely to pan out now, going ahead from here?
So from a nominal GDP perspective, the fact that the real growth rate right now is 8.2, even we had a deflator estimate of around 0.6 for the quarter. So it slowed down even more from Q1. Going ahead in Q3, the deflator will actually turn negative because your WPI inflation has gone into deflation. So that basically means in Q3, your nominal GDP was most likely to undershoot your real GDP. For the year as a whole, we are tracking close to 8% with this sort of real growth rate. Even though there is a slowdown in the deflator growth, I think nominal GDP growth will be closer to 8%, which is in line with what the central government budget had penciled in on FY 2025 actuals. The constraint that you are seeing at the center level is the fact that the income tax targets, they were ambitious to begin with because we got a very large, generous tax cut under the new income tax. And over and above, now we are beginning to see the impact of GST cuts. GST cut is more of an issue for the states. They tend to have 70% of the burden compared to the center. But we did see the October GST collection numbers, which is just a start. It slowed down to around 4% growth. So there will be a challenge, but from a fiscal perspective, we don't expect the center to slip. They will meet the 4.4 target.
So the number on nominal GDP has come in at 8.7%, Gaura.
That's slightly better than last quarter, if I remember correctly.
Yes.
So because the real outperformed, so it has countered the slowdown in the deflator for now.
Correct.
For the full year, we'll be comfortably in line with the union budget, which was around 8%.
Correct.
But we will have a challenge. For example, in our estimate, net tax collection for the center will be lower than target levels by around 1.5 trillion.
Yes.
But center has a lot of levers. For example, they've got RBI dividend. We've got non-tax revenues that are doing better. Center can also is also saving money on the revenue side thanks to the just-in-time cash management. So overall, the center will meet the 4.4. We do expect states to slip. For example, our state fiscal deficit is tracking at 3.5% for the year versus 3.2% of GSDP last year.
Fair enough. Let's get further perspective on this, Gaura and Kanika. I request you to stay with us because let's just walk through all the numbers that are coming through, and we have clarity on the fiscal deficit as well. And I understand we've reached about 52.6% of the target for the current financial year. But Shrimi will tell us more about that as well, including all the highlights coming through from the GDP numbers. Shrimi, you're with us. Tell us exactly how it's panned out for the second quarter, because the headline number is stellar. 8.2% is far beyond the estimates that most economists had penciled in.
Well, absolutely. In fact, if you see RBI projection also for second quarter was at 7%, and it's definitely exceeded the estimation of, all sort of projection which has been made by economists as well. And in fact, to just give in perspective on that, 8.1% is what the Q2 GDP number, and if you see the nominal numbers as well, which is before adjusting the inflation, is also coming, quite better from the previous quarter, which also somewhere indicating that the economic expansion has really been take off during July to September quarter, and that is also somewhere reflecting in the public capex. The number of investment came in from the public capex side. However, private capex has to still sort of match the pace, but public capex, if you see the number, definitely it has added to this Q2 GDP resilient number. And in fact, if you see the monthly economic data as well, the rural demand, the way it has come, however, the GST rate cut has actually implemented from September 22nd, and the effect of that perhaps could be seen in the third quarter of this fiscal. But from July to September, there were, sentiments after Prime Minister has announced the GST, rate rationalization coming in on 15th August, and after that in September, the cut has been implemented. So clearly a sentiment has been given. And if you see the corporate earning as well, that has also played a huge role in Q2 number for sure. As far as fiscal deficit is concerned, I would say that last quarter, if you see, it has around 36%, which is of course the widening of deficit, and that's why if you see there were a lot of chatter around that government this time should more focus on fiscal prudence, more focus on growth-led budget, and the way fiscal deficit numbers are coming in, which is around 56%, it's also give a clear hint that you see a lot of measure would come balance this fiscal deficit, because government is quite confident of meeting the 4.4% of target which is there for this financial year. So clearly we will see some measure coming in which will show more of a growth-led budget, growth-led trajectory for this fiscal and the next fiscal as well.
Growth-led would be a good estimate to make, Kanika, when you are looking at these numbers. And perhaps, Shrimi, I can ask you to stay on and participate in this discussion that I'm having with our economists joining us on this very important piece of news where you're seeing GDP at 8.2% for the second quarter. Kanika, from your entire understanding of this, where manufacturing and mining, they've shown some mixed signals in recent months, but I was just looking at the kind of numbers coming through on manufacturing and construction. They look quite promising. So in that sense, how do you think the sectoral trends are shaping up to kind of tell us about the underlying strength in the kind of numbers that we are seeing on the GDP front this time?
So, first of all, it looks like where did we see the maximum surprise compared to our numbers, which was around 7.5% for the quarter. See, manufacturing last time also was very strong, around 7.7, 7.9, but it's around 7.7. It's actually printed 9.1 this time. Yes, corporate earnings were robust, but in our view, they were elevated at similar levels. They were elevated, but at similar levels compared to previous quarter, which shown a big jump up from 7.7 to 9.1, a very positive number. So that's playing a role. Maybe probably some role of deflator here because corporate earnings were relatively flat, but it's a very strong number. Second number that's caught us by surprise is financing and real estate. See, what happened is that it's actually exceeded the 10% threshold. Very interesting. We thought the number will stay robust, close to 7.5%, 8% levels. It's again exceeded 9.5% as well. Now, very strong number. It looks like while banking sector had seen some uptick in credit growth, it's the real estate sector boom that's showing up much more here. Last but not the least, because Srini, was talking about the fiscal numbers. Last year, first half was an election, because it's an election year. First half, RevX was growing at a fast pace. So this year, first half, RevX has shown a contraction YOY, especially when you adjust for interest payments and subsidies. Despite this, public admin growth is at a 9% threshold, higher from last time. It's showing not just government spending, but other services in the economy, which are partly led by consumption, are booming. That's a big positive. It shows even before GST rate cuts, we had seen consumption momentum sustain in the economy, in fact, show an uptick in this quarter. Partly, in my view, this number is led by deflator as well, which was even more subdued in this quarter. But overall, these are good numbers and they promise a higher nominal GDP, higher than expected nominal GDP for this quarter at 8.7, higher than even last quarter. So good numbers.
Yeah, so Kanika, Shrimi here, hi. Just wanted to understand that as we know that the India and US deal has been going on, the talks has been going on for quite some time. And in fact, we have not seen any impact on the first quarter. It was robust enough. And now the second quarter, where there were a lot of confusion around it. However, the deal hasn't finalized yet. How do you assess the third quarter? And do you see that government is also in a wait and watch mode in terms of, coming up with any measure, around tariff? And do you expect any impact in the third quarter number of GDP?
So Srini, thanks for the question, because see, what's important to understand is that the government, and not just the government, the RBI as well, in the last few weeks, the kind of stimulus that we got, the export promotion measures, 25,000 crores, then another round of credit guarantee scheme, 20,000 crores, then RBI came with a whole host of measures, including credit restructuring, specifically aimed at US-India trade deal delayed segments. It will affect MSMEs, specifically textiles, gems and jewelry, etc. So both RBI and government, cognizant of the delay in finalization of the deal, have tried to support these subsegments. Now, in terms of impact on GDP growth, we may see some impact in the second half. And that's likely because once the front loading of exports has started to subside, we have seen the share for US in our overall goods exports come down from around 24-25% to around 21-22% as per latest numbers for September. We think some impact will be there, but the compliments are to government to have rightfully provided with that GST booster in this quarter. It will soften the blow from trade deal, in our view.
It's an important point because the kind of impact that would have played out because of the higher tariffs, is that getting offset by the consumption boost through the GST cuts that were announced? Do you think that has played out in the second quarter, and can we expect more in the third, Gaura?
Actually, in the Q2, the drag from the trade deal is not much because we had the tariffs, the 50% bilateral tariffs that was August end. So effectively, we had 1 month where India's exports to the US declined by around 11-12% year on year. That was also in nominal terms. Overall, what has happened is, at least in H1, we've had massive front loading of exports to the US till the month of July. Even in August, when we had 25% bilateral tariffs, India's exports to US in nominal terms grew at 7%. So the front loading was around 20 to 25% growth that we saw from January to July on a consistent basis. So what it has done is, effectively for FY26, if let's say we didn't have these tariff issues, there was no front loading, there was no decline that you can build in for the remainder of the fiscal year, a large part of the negative impact of the 50% bilateral tariffs, which we will feel more in Q3, Q4, if let's say we don't get a trade deal, let's say by December end, which is not our base case, but just let's say assume we have 50% bilateral tariffs till March, then even then, the impact on the GDP because of the front loading, at least in FY26, is much lesser. It is more a story for FY27 if the tariffs persist. Now, what will happen is, there's another factor which has helped. It's not just, I agree, there is domestic consumption. If you look at the numbers, it's showing you that the consumption cycle is working. It's showing you the investment cycle is working. There's another factor which has helped. The other part is the fact that India's services surplus, which has been a steady $20 billion per month averaging, has also reduced a lot of the drag that we are getting from our merchandise trade deficit, which has widened to an historical high in the month of October. So net, the negative impact for FY26 because of the front loading, as well as the fact that services surplus has really held up, has really mitigated. The question is when we get the deal. If we get the deal by December end, suppose, then you will have Q4, which will be very, another strong quarter. Then your annual growth rates can easily be, let's say for FY26, closer to an 8% if we get a trade deal by December. If we don't get a trade deal, your full year real growth rate numbers with this sort of stellar performance will be around 7.5% easily, even after you build in some slowdown in the fourth quarter. So the other part that I want to highlight is if you look at the consumption numbers that we've got for Q2, it clearly shows Q2 has got the support from rural, which was expected, with rural indicators picking up. But urban also must have come in, because you cannot get a almost 8% growth on consumption without the urban side also contributing. And this is ahead of the GST cuts.
Mm-hmm. Gaurav, just for the clarity and for understanding for our viewers, wanted to understand, as we've been seeing the numbers on the tax collections, and you see the corporate collection has been, slowed down, at least so far. And in fact, there are chatter that government may not meet the target. On the non-tax revenue side, there are the growth is quite substantial, of course, thanks to RBI dividend as well. Wanted to understand, with current fiscal deficit, standpoint, you think that now this Q2 number give government more room to, fiscal consolidation for FY26?
There is a challenge on revenue. That challenge is, it's not just the nominal GDP slowdown. So now, because we got such a good real GDP number of 8.2, the nominal GDP growth actually picked up, I think around 8.7, which was better than the previous quarter. For the full year, we will easily reach the 8%, which was budgeted in the union budget. The challenge on the revenue collection front for the center is because the income tax target was ambitious, because we got a very substantial cut in the new income tax scheme, and its impact we are seeing. For example, the income tax collections will be below target levels. So corporate tax is currently tracking below government estimates, but it's a much softer shortfall. The majority of the shortfall is on the income tax. GST overall impact for the center will be minimal. It'll be more a challenge for the states. So as per us, in the net tax collection front, we do see a shortfall of around 1.5 trillion rupees for the center, but they will still meet their fiscal deficit target of 4.4, and they will meet it without having to compromise too much on the capex side. The reason being is, as you mentioned, they have the RBI dividend. They also, if you look at the non-tax revenues that they, let's say, get from government services, spectrum, etc., it's tracking much better than the target estimates. PSU dividends, the budget estimate was very conservative. It's easily going to beat budget estimates. The government of India had also hiked excise duty tax in April. That will boost excise duty. They had boost excise duty tax in petrol and diesel in April. So that will boost the excise duty collections. So, and there's also the fact that there's this just-in-time cash management that the center has implemented for the last couple of years, which is basically in response to transfers to states for certain expenditure on schemes, where the center for the last few years has been saving money, because they are now have all the expenditure is tracked. Fresh funds are only released to state governments if the past funds have been utilized. So even incorporating both tax, non-tax, expenditure saving that can happen on the revenue side, we still feel they can spend close to the targeted amount on capex and still meet the 4.4 fiscal deficit target. But the challenge is really for the state governments.
Well, that challenge remains, and we'll have to see now what happens in the December meeting of the Monetary Policy Committee, because the RBI is going to be watching these numbers. The industrial production numbers should be out on the 1st of December. They've been deferred. I want to thank both our economists for joining us and giving us insights to the big number that we are looking at for the second quarter on the GDP front. Gaura and Kanika, thank you very much, and Shrimi for joining us as well. Of course, we've got our eyes and ears peeled for all the developments on the macro front, and we'll keep you updated and we'll keep getting you insights. But for the moment, this is where we are wrapping it up with that 8.2% as the big number for the second quarter on the GDP front. I'm Vikram Oza from me and the team. Thank you so much for joining us this evening.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
This is not about creating a brand. You had to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first. Right. You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101, go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her?
No.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can. But
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, where this show we get you in the next 30 minutes all details about the company, why we are getting them, and also the management as well. Of course, we will be talking to this company which is Pearl Global. It's of course a textile player, but the question remains is why are we actually calling this company in our segment? Textile industry has been in focus, especially of the US tariffs, the exports which we will talk about. There is an overhang and the commentary has been coming from the industry players, and even the industry is trying to help this sector. So this is the most important talk. Is the overhang of US tariff agreement with India going to be over? And if that happens, will we see the depressed sentiments for the textile industry go up? The second question, of course, will be that what's the relevance on company's global business model? Is it surviving the stress which is coming in from the tariffs? And if yes, how it is doing it and how it is different from its peers? And that's my third question as well. What is the moat? Others are also bleeding. They are also bleeding, but lesser. Why? Is there a moat to it? Is there a kind of a support coming in the back end? Also, client concentration risk. They are having some revenue concentrations to the bigger clients. Is that a risk? Or actually it's a favor? Why? Because of the customer stickiness. Also lastly, the further expansion of capex plans which the company might be having going ahead once the clarity comes in for the US tariffs. Also, let's look at about the company, why it's important. We discuss the questions with you, but about the company. This was founded in 1987 by Deepak Kumar Shah. That's where the history starts. And the key focus areas being sustainability, quality and innovation. Apart from this, Gurugram is where their headquarters are. It's an NCR based company. And let's look at the core business of Pearl Global, what it actually is. It's into apparel manufacturing and supply chain. Also, it's a partner for global fashion brands as well. That's where the high margins also kick in if you compare them with its peers. 25 units, 93 million pieces capacity. And there's a tech advantage also where they include new things. That's 3D design tools and QR tracking, but most of the industry players are also doing it. It's not very much new also. FY25 revenue, that is good numbers, 31% up. Look at the numbers. They are walking the talk when it comes to delivering the number 4506 odd crore rupees. But you must be wondering what's the product breakup looking like. This is a roughly, you could say 72% is from knits and 28% is coming from the woven fabric segment. Also the other products, lesser contribution, design services with 75 global designers, and when you have services, that means your margins are on the heavier side. Activewear, sleepwear, denim and children's wear. Upcoming areas where you see imports, the exports going very high, and OECO Tex certified. These are the sustainability numbers, not that important, but the revenue model, that's the most important. And there's a concern also. 99% of that is exports. And that's the major overhang which the industry wants to ask us, this company is that over, or if it is fighting it, how it is fighting it. Also, the overall numbers, if you look at the revenue, that's coming 73% rest of the world, 27% India. So that one question we'll be asking the management is, will you have an hedge when it comes to the exposure in the domestic markets? So enough about the company and why we actually want to get the company. But before we start the parameters, I'll just explain you what are the important parameters which are important when we judge a company in KYC. So we have 8 rating parameters. To start with, income statement, balance sheet, cash flow. This is the holy grail of financial statements. This is the first and the most important thing when you should judge a company in fundamental basis. Then comes return ratio. Have the stakeholders actually made money or not? Shareholding, street cred, that's also important. And valuation, comparing it with its historical averages and also nearest peers. And lastly, but the most important, the future looking statements, the outlook. That's where the stock market gives you your value. So these are the important rating parameters where we'll judge the company. So let's move on. First one is income statement. And net, we see there's a very strong growth coming in. Look at the numbers, FY24-25 and the 3-year CAGR. Top line 18% but the magic is happening in the EBITDA segment. That's 42% CAGR coming in. Margins, net are stable, and net profit, that's a significant jump coming in. But you must be wondering, these are the FY25 number. What's the most recent number? And that is the Q2 numbers. Q2 numbers did have some impact on the tariff impositions, but it was not that bad as what the street had feared. And that is why I liked the company's performance in Q2 as well. Our revenue was 9% up, not much, but EBITDA and net profit. That is where the cost efficiency programs might have kicked in for the company. And during trying times when a company achieves operational efficiency, that is where the margins start going up, going ahead. So that is something which I really liked, and that's why that reason we see a 120 basis points up move coming in, and margin trajectory is going towards that aspirational 9.5 to 10% mark. And for a player like this or an industry thing, this is industrial higher average margins coming in. So net, I will be giving a thumbs up to the income statement aspect for this company. Up next, balance sheet. Balance sheet, the numbers, they are stable. Not much changes happening, but you should be looking at the borrowing numbers. There's a significant spike coming in. Company is looking at expansions as well, but those expansion plans are of course subject to what happens globally, because you remember 73% revenue comes globally. So that's a very big moving factor when it comes to this export play in the textile space. Cash and bank balance, that has significantly gone up from 366 crore. This amount is at 566 crore rupees. So it's a wait and watch. It's not that shareholders might be getting rewarded for non-expansion policies, but if the company expands, if the capacity comes back, if the global demand comes back, then the company will have a good cash reserve to deploy as well. So that is a very good strategy coming in from the company, but the debt levels are a concern to me a bit as well, and that happens. So there is a push and a pull, so I'll give a neutral rating for the balance sheet. Cash flow, that's also very much important. Net, we see there are divergent trends happening here as well. The cash flow to PAT, that has come down significantly, and that at times hurts the liquidity ratio of a company, and you can see that on the screen as well. Net cash flow, however, on the other side, that has gone up almost 174 odd crore rupees. It's just not the operating part, but there are other ways also where the cash flows go up from investing and financing, and that is why you're seeing a very high number. So divergent trends coming, so I'll still give it neutral because it hasn't passed that cash flow test. And of course, this won't be able to do also company because of the current geopolitical scenarios. That's why company is doing their liquidity management works as well. A return ratio we'll focus on now after giving a neutral rating to cash flow. The return ratios, looking at these numbers, they're pretty healthy when it comes to the FY25. Generally, when you have a barometer of 15% plus ROC, ROE, that is where the magic happens. And let's just pick up both ROC and ROE. That has been a significant value creation for the long-term shareholders as well for Pearl Global. Avoid the short-term aberration. This has been a good multi-bagger as well. So from the return ratio perspective, for both capital employed and ROC, I will be giving a thumbs up to the company. 4 parameters are done. We are halfway through our ratings. 5th one is the shareholding pattern. Shareholding pattern largely has been stable. Promoters have been stable at roughly 63% coming in, but FIs, slight selling coming if you compare that with March numbers to the September numbers, and the DIs, they have lapped up. So any sale which has happened in the market, DI lapping has been very strong, be it from the public counter or even the FI counter. Look at that number from 11.6%. A value buy increase is coming in at almost 14% stake by September quarter. For shareholding pattern, I will be giving this a neutral rating. Up next is street cred. Street cred is nothing but way the stock has moved from the long-term perspective and short-term perspective. 1 month it's up 27 odd %. Maybe the market is digesting in that the India and US trade agreement is near the counter, and the 6-month share price and year to date has been decent. 1 year it's 40%. So the medium-term shareholders have actually benefited from this company, and this is despite the volatility coming in the global markets. 5-year share performance has been a big multi-bagger for the investors, 110%. This looks like a birth date if you look at that 5-year share performance, but it's very interesting. But net, this has kept all sets of shareholders happy. So I'll give this company a neutral rating for this as well. But let's move on to valuations. Is it very expensive yet, or a minor correction has made it attractive? That's the question you will be wondering. And also they have a peer that's called Gokuldas Exports. Just look at the valuations. It looks like it's on the cheaper side. FY27 is just 22 times the price to earnings. Industry ratio is roughly around, you could say 28 to 35. And currently Gokuldas Exports, look at that, that's their peer. That is almost double when it comes to the valuation. So it's certainly looking cheap when it comes to the valuations front. So I will be giving this company in this rating a thumbs up. So we have done 7 KYC ratings and our last rating, but it's very much important and it's very forward looking. That's why I say outlook is the most important thing going ahead. Over here, we see there is a diversification happening in manufacturing and sales. So that slowly company is trying to reduce their US dependency going ahead. And value add mix, that we need to understand the company also, that which are these products which will give you higher margins going ahead. Also the question is Australia, Japan, UK, EU and Spain. These are the categories which generally becomes a hedge against the US markets. So that will be something which we'll be watching out for as well. And H2 growth numbers, generally they are always on an upward trend. That means there's a lumpiness there for these textile export players, and generally it is on the positive side. And lastly, FY26 margins slightly better despite India tariffs. That means company is doing something. Despite so much negativity around their export play, they are able to maintain their margins. That means there must be some kind of an internal process setup or some cost efficiency moves happening, and that's why the margins are actually going up. And maybe it can touch that 9.5 to 10% marks, and that's one of the key questions we'll be asking to the management. But before we go to the management, I have compiled the entire KYC ratings for you so that it becomes very easy for you to understand how we have gone through the show. Let's pull up the KYC ratings chart for you. Income statement has been good. Q2 numbers on the good side despite what we saw, the tailwinds coming in from the US-India trade tariff issues. Balance sheet cash flows, nothing much to share right now because the company is holding up the cash flows for deployment. And lastly, we can say the shareholding street cred has been neutral. Valuation still attractive because of the cheapness compared to Gokuldas Exports. And lastly, outlook also we say you could say it's a kind of a positive to neutral impact coming in. But net, despite the company being in a tailwind sector right now, it's expected that this will go up going ahead, and I've given this company 5.5 out of it. That's on the higher side of the ranges and the averages we generally give in our show in Know Your Company. But now we know a little bit about the company, whatever we could get. Let's get a little bit more about the company, and for that joining us is Pallab Banerjee. He's the MD at Pearl Global. A very good afternoon to you, Pallab. We can see the entire industry itself is waiting, not just from the government, that they'll be getting some kind of incentives because of US-India trade issues. But the burning question is, how do you first survive? Because you have a history of thriving. So how will you be surviving this sector, issues which are coming in, and later on what happens next? Good afternoon, Pallab.
Yeah, good afternoon, good morning. In fact, so I think, yes, US tariff is a concern at this point of time for the India market. But overall, as a company, we have about 27% exposure in India, as you just mentioned in your charts. So the rest of the markets that we are manufacturing and exporting from, there we're not seeing any disadvantage. In fact, we are seeing some advantages.
To make this into more, kind of a more information for viewers, because most of the viewers who have messaged me, they have stated that Sharad, the entire discussion is overhang coming in the tariff issues. So company must have made some safeguards during this time. You are trying to reduce your dependency in US as well. Can you give us, in a brief setup that how have you been doing that? I'm sure last 4 to 6 months there has been a change in strategy. So what is that?
So you see, this journey not started in 4 months back, but it's been continuing for some time. In 2021-22, we found that our US exposure is very high, almost about 86% plus. And that's the time we started developing the other markets as well. And today, when we look at the data, it's our US exposure is less than 50% as a group. And that doesn't mean that US has shrunk. In fact, our business in US has grown from $180 million in 2021 to almost about $300 million, as a running rate for this year. Whereas the other markets have also come in, which used to be about $15 million. Now it has gone up to almost close to about $300 million. So that's the kind of change that we have been undergoing since 2021-22. And yes, this particular year is a completely roller coaster because, first of all, US implemented this whole tariff across all the countries of the globe. So that means the US customers, the brands and the retailers, they have to shell out more tariff as the goods goes into US. So that has got some kind of repercussion in the US market. And especially after August, when we got to know that India has got almost about 50% tariff, additional tariff from what used to happen during the MFN duties that we used to pay. So that's resulting in some kind of, change in strategy. India, if all of us are hopeful that this tariff situation will resolve very quickly, and if it doesn't resolve, then we have to have a backup plan. So this is something that we are undergoing at this point of time. In India also, the exposure to the US market was close to about 60% till last year. This year we are seeing a significant drop in that. And the other markets like Japan, Australia, Canada, European Union, UK. So all these markets are taking a major share in India as well.
And Pallab, the word which you have used is the backup plan, and everybody needs to have that in life, be it stock markets, but your industry has been taking the brunt a lot. Could you just give us some strategic views, not number necessarily, but what's the backup plan looking like? The dependency angle is also there, but is there anything else to it as well?
So first of all, if you see the industry, we are in garment industry. So we manufacture garments and fashion for all the major retailers across the globe. Yes, US has been a large market. They import almost about $80 billion plus of garments from across the globe. But there are other markets like European Union does about $90 plus billion dollars. And then, of course, Japan, UK, Australia, Canada, these are also good markets. And Asia region, like, for example, China, India, they are also growing significantly. As human beings, all of us wear clothes. And whatever is the scenario, like this is a consumption that doesn't go down. In fact, if you look at it, even US market is growing at the rate of almost about 4 to 5% annually. I'm talking about the apparel or the garment sector. Now, keeping this in mind, how you built up the business. And mind you, one more thing, this India has not been playing a very major role in the garment or the apparel sector. If you talk about globally, the largest players have been China, which exports almost about $180 billion of garments few years back. It has come down a little bit because of all the geopolitics that is going on at this point of time. Followed by, and the top gainers from China reduction has happened in Bangladesh and Vietnam. Those are the two countries have significantly grown in the last 5 to 7 years. Followed by Indonesia, Germany, some European countries which makes a lot of manufacturing, and India comes in the rank of almost about 7 in terms of garment exports number if you're looking at. So if you talk of Pearl Global now, Pearl Global also we have a global strategy. We are present in some of these major garment manufacturing and exporting markets. We have a big setup in Bangladesh. We have a reasonably big setup in Vietnam, Indonesia.
Yes, Pallab, one more question is there on this margin front. Value-added product is something which the company is adding in their product line as well. Yes. What are these products? And on a blended basis, what we can expect for the margins? It's currently at 9% on the higher side, and it's still maintaining despite the issues in the trade tariff segment. So what are you doing, first of all, that these margins are going up? Is it some internal efficiency measure, or is it the value-added product?
Absolutely. See, as China continues to lose the market share, and the countries which are also gaining are like, Indonesia, Vietnam. Those are the places where the high value product we have been focusing upon. And, one more fact that I must tell you is that if you talk of the global consumption, there is a huge amount of almost 70%, 75% plus comes from the man-made fibers, where India has been lacking, but these other countries like China had the biggest share, and now also Vietnam and Indonesia are gaining. So that's where we are seeing a huge advantage that is Pearl is getting, as we're getting those high value items in the synthetics, like the high altitude outerwear jackets, or the fashion jackets in terms of down jackets, or polyfill jackets. So those are things, a big number that we produce, and for better quality of brands. Like if you have the market pyramid, the top end like Polo Ralph Lauren, Tommy Hilfiger's, and of course there are Walmarts and the Targets of the world. So if you go up the ladder, and if you are servicing those customers who are paying higher value, that's something like we do quite a lot out of our Indonesia, Vietnam kind of facilities. So that's where you're seeing this change, that our value is definitely the margins. Our goal has been to be in the range of 10 to 12%. We are almost there. We are just crossing that 9 to 10% mark at this point of time. If you take out the effect of the tariff that we paid in the Q2, some kind of discounts and some sharing that we had to do with the US clients, and a couple of our new projects which are just taking off. So there have been some initial losses that comes in. So if you take out those, then we are almost touching 10 or going beyond 10.
And Pallab,
is to go to 12.
And Pallab, there's an important thing. We spoke with some of the industry peers of yours also, and they stated that your company's business model is a bit different, and there's some kind of a moat to it. Now, it's very technical at times, so if you could just give us a kind of a simplified version for our viewers, what's your exactly moat, when it compares to your Indian peers here?
So compared to the Indian players, we are, as I say, like 5 different countries of manufacturing. We have almost 7 different categories of product, including right from synthetics, the outerwear jackets, activewear, athleisure, sleepwear, then of course the denim wear, so children's wear. So like those are the kind of various categories of products that we do to the customer, and we have a huge design offices across US, UK, Spain, where we are almost negotiating and designing together with the clients. And also the diversified market, I would say, is another strength of Pearl Global. Almost, as I told you, 50% of the business, or just below 50% of the business is coming from US market. The Spain and Japan has gone up to almost 34-35%. So like that, this diversification is also very important, followed by the UK, Australia, Canada, this kind of markets as well. We have not been in the domestic market so much, but this is one of the instances that happen in which we are now exposing ourselves to the domestic market in India as well. So that number also will go up in future.
So right now it's around 25 to 27%. So I can expect 35 to 40% in next 12 to 18 months, Pallab?
So of the total turnover of or the sales of Pearl Global, around 25-27% is coming from India. And there also we had zero exposure in the domestic market earlier. So that is one thing that is, I think this is one of the tipping point when US pressure came in. So that has started also happening. We are supplying to the domestic brands as I speak. And overall, the growth that you will see for Pearl Global will be across all these regions. So
yes.
Countries like Vietnam.
Yes, we are a little bit of short on time. Just need your fast answer to it. There's a concern regarding the concentration risk in the revenue terms for even large clients. How will you address that?
So I think we are in a very good position out there. If you see today, our top 5 or top 6 customers is close to about 40 to 50% of our sales. Now that is, if you look at it from one side, it looks like a risk. But we are not only there, they are not only our top customers, but we are also their top suppliers. So we have a very strategic relationship with those, and that's where like we come in with a plan of 2 to 3 years in advance with this kind of customers. So that's the stickiness, or that's the kind of very strategic, strong relationship that we have been able to build up.
Thank you. Pallab, thank you very much for your time on that. And that was a concern which a lot of investors had asked me to pose these questions to you. Thank you very much, Pallab, for joining in, and best of luck for the future. But to wrap it up, there were some important key considerations for this discussion in KYC. And the first and foremost, the management has stated that overall the repercussions are still there in their US business due to the tariff. So that's the major overhang, and it still remains until and unless India-US tariff agreement, we don't get much clarity, because 50% tariffs is something, it's still hurting the company. And now the second important thing which the management has stated is, of course, there is a divergence happening in newer markets they are going in, but there is a big scope of growth. India is not playing major role in garment supplier sector. There is a huge potential there, and the high margin products demands have started coming in. Green shoots are coming in Asian markets such as synthetics, which are basically your wears in the wind cheaters and sports jackets as well, to simplify it. But this is the entire picture of Pearl Global, where the company is putting up a brave face in the adversity, and hopefully a turnaround will be there, and that's why DIs are also supporting the counter. That's all for today. Thank you very much for watching KYC and NDTV Profit.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people, because India was the last place where somebody would rent furniture.
I think you disrupted your own life first. Correct. You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101, go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her?
No.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities.
Volatile or volatility. It's a term that can be used in many respects. In the case of a substance, say acetone or ethanol, it's used to describe something that evaporates relatively quickly at low temperatures. In the case of a person, it's used to describe somebody who has a short temper. And in the stock market, it's used when a stock or the market as a whole is moving sharply in either direction. The thing is, it is also used as a measure of risk in your investment portfolio. They say that if volatility is high and it's described with standard deviation, then you have too much risk. The question that I'm asking today is whether that is an appropriate understanding of risk in your portfolio and how you should read it. What should your approach be when you look at your portfolio? Because ultimately, volatility is not necessarily a bad thing. You actually need a certain amount of volatility for you to make money in the equity markets. How should you use it to your advantage? That's the question I'm asking today on MoneyWise. Joining me in studio is Santosh Joseph. Santosh, thanks so much for taking the time. I've never been called a volatile individual, but then I've heard volatility a lot. In the equity markets, there is a measure called the VIX, the volatility index. In your portfolios, mutual funds, and particularly, you look at a mutual fund scheme and its standard deviation, which is how much it has fallen or risen over a period of time compared with its long period average or the compounded annual growth rate. Is this appropriate when you say that this is the value of risk in your portfolio?
See, volatility measured in standard deviation is just an indicator. Yeah. Now, if you pay too much attention to it, then you'll miss out the bigger picture of why you're investing. So the standard deviation helps you understand how is the degree of variability of the returns of the instrument. It could be the fund or it could even be the stock.
Say that again.
It's the degree of variability of performance.
Degree of variability of performance.
So let me break it down further.
Sure.
You're going on a flat road, right? Or maybe let's take the metro. It's on flat surfaces. You can travel at any speed, fast or slow, but it's just going on a straight line.
Sure.
The same experience at the same speed, if I put you on a roller coaster, the experience is tangentially different.
Yeah.
Now, the speed here doesn't matter. What matters is the ups and the downs. Now, if the ups and downs are there, then the speed accentuates the ups and the downs. So volatility is actually telling you what is the variation that you're going to go through, both in the ups and the downs. Now, does that mean it's standalone risk? It's not. And if you also look at it a little more deeply, it is an indicator and not necessarily a cutoff to invest or not to invest, because sometimes you'll realize that that may give you an entry point. And if you're an investor, if you're going to be a consistent and a long-term investor, this entire concept of volatility becomes your friend. And that's why I like to say volatility is your friend. Maybe not with another human, but with investments, it's a great advantage.
So give me instances. Like, for example, even if you look at the market right now, volatility is relatively low as compared with long period average, certainly. And if you compare it with certain time frames where it's risen to, and I'm talking about the volatility index, which has risen to 20 or above, right now it's at sub 12, if I'm not mistaken. So you've seen a period where the equity markets have been in a pretty tight range. The question I'm asking is that advantageous? Because if you think about it long term, say 3 years, 5 years, 7 years, 10 years down the line, then this is a great opportunity for you to accumulate more units of the same thing at a price that is appropriate. It may not be the most attractive valuations, but at least it's not a market that keeps rising.
So again, we say volatility is your friend. Let me further break that down and say that if there was no volatility, every purchase that you make is only going to be higher.
Yes.
Now, because there's volatility, you have the object purpose that where you can buy it lower. Second thing is, just imagine if you're the one who's collecting units or the number of shares, every time there's volatility and you buy more, we know rupee cost averaging is happening, and also you're collecting more number of units. Now, when the price is just going one way up, generally there's a propensity not to buy more because the price is going up, you're enjoying the benefit of it riding up. But if you have conviction either in the fund or in a particular stock and your objective is to collect more number of units, then the volatility helps you buy more. It's literally increasing your purchasing power. Now, if there was no volatility, your purchasing power won't increase. That is to get more units or more number of shares. So that's why I say it's your friend. It will happen time and again, sometimes at a greater variation, sometimes at lesser variation. And that's why the people who are seasoned long-term investors appreciate volatility.
Okay, so, but then the question that I have for you is, why is it that people, particularly when they're speaking to relatively new investors, speak about standard deviation or speak about volatility and speak about risk in the same breath? Based on what you're saying, that's not appropriate.
You're right. So for many investors, the reason they see this as risk is when you made an investment and the investment dips below the initial investment value, they get a little bit worried. Now, let's take this as an example. If you got conviction and you invested, if the price dips, it's actually not risk. It's an opportunity to buy more and you're going to keep it for some time. Now, when the people have a fear that when the investment value dips a little bit, there is a fear of loss or a fear of failure, which is as powerful as fear of missing out, FOMO. Now, when people have a fear of loss or fear of failure, that's when they term this as risk. On the contrary, if you're convinced and you know you're going to be holding this asset and when you're convinced that what you bought was right, if you get it cheaper, you're going to buy more and you're going to hold for longer. So therefore, for the person who's starting to invest off, who's yet learning the ropes of being a consistent long-term investor and understanding how volatility works, it's seen as risk. But the minute you graduate from that level and realize that every volatile patch that you go through is an opportunity to double down on your conviction and buy more, then it changes from being just risk to an opportunity.
Okay, so let's then ask you the next question, which is, and we'll circle back to this in a bit to use it, as you've said, as a friend. But how do you then judge risk in your portfolio, right? Because there is risk of loss of capital. And if there is no risk of loss of capital, then there is no potential significant gain of capital either, which is why the saying is no risk, no reward, or high risk, high reward, right?
See, I think traditionally we should understand that equities or the investments that we make a lot of money on are called actually risk assets.
Yes.
Now, the reason we call them risk asset is it also has got a underlying return potential which is far greater than the risk-free rate. Now, even standard deviation is measured.
What is this risk-free rate?
The risk-free rate is the return that you would normally make without taking any risk on the loss of capital.
And the example of that would be?
For example, today in India, our risk-free rate would be largely either the GSEC or the FD rate, which is when I put my money there.
The government bond.
The government bond or even FD, because in India, largely that's also kind of a guaranteed outcome.
So that's like about 6.5%, right?
Between 6 and 6.5% is what we normally call the risk-free rate. Now, the question is, in risky assets, are we going to make more than 6.5? So the answer is yes.
Yeah.
That's why we call them as risky, because even the 6.5% is not guaranteed. But the returns that you will make is definitely far greater than the 6.5% return. Therefore, the way you look at it and the way you approach it actually solves much of your problem, and then you don't worry about volatility, because if something is not giving you 6.5 but going to give you much more than 6.5, if ever there was a dip, then, you know, just 2 and 2 makes 4, that you realize that, okay, I'm getting an opportunity here to buy something which is a risky asset, but it's got the potential to give me a higher than risk-free rate.
Is the time frame important here? Because ultimately you should be, as you're pointing out, and here we're talking about equity versus maybe a government bond, a fixed deposit, right? Because by nature equity has more volatility. There is potential that if you're holding for a year, you could lose capital. And so therefore, what you need the money for, you don't have enough money for, effectively. And so, as you pointed out, if you hold for slightly longer, there will be opportunities in this time frame, say 3 years or 5 years, ideally, where that volatility and that fall in the prices will give you the best opportunity to buy more.
That's absolutely true. What you just said summarizes that when you're buying, when the fall happens, you actually not only recover, not only average, but you will also make more. But coming to the point of time,
yeah,
let's assume that you are rushing to the airport. Now, we are definitely going to get to the airport at, let's say, a given time. But if you have lesser time, risk increases because you're now worried whether you will make it or you won't make it. But if you have no quantity of time, you're going to comfortably reach the airport, then you have no risk. It's a very uneventful journey. Likewise, that's why anytime when you make an investment, you're asked to tie down the investment to the goal or the time. Because the goal or the time, in essence, tells you, hey, listen, don't worry about the variability of return. Your end will justify the means that you're taking. Because more often than not, why do people drop ship or drop their investments at the sight of the first level of risk that they experience is because they're not sure. The minute you know your time frame, the minute you know what is the goal, you don't worry about volatility. That's when you have the courage to go and buy more, and you will come to the outcome where either you'll average or you'll buy cheaper.
So then let me ask the question again. How do you measure or identify risk in your portfolio?
Good point. See, we have already the standard deviation there. Some people even look at the beta. Now, standard deviation is to tell you the variability of return. Beta will tell you the sensitivity of your investment against the broader market.
So explain.
Okay.
In a scenario, let's talk about an example.
Okay. By and large, the fundamental reason we invest is we want to make money and we want to make more than risk-free rate. So we discussed the 6 to 6.5% being risk-free rate. Now, when you look at the beta, you're saying, I've invested in a security, maybe a mutual fund, maybe a stock. What is my investment outcome there against the market in general? For example, today we had a good day in the market. Market gave you, let's say, a percentage return. Did you do more than 1 or did you do less than 1? Now, if you did more than 1, that means your beta is that it's capped. If your beta is 1, that means you did just the market. If the beta is 1.1, you did more than what the market did. But if your beta is 0.9, you'll do less than what the market did. The same applies when the market falls. If the beta is 0.9, you will fall lesser than the market. Mind you, even that is a return. Losses not incurred also is a gain. Similarly, if the market went up and the beta is 0.9, you will make that much lesser return. Now, standard deviation is not connected to the market, but it's connected to the variability of return. One is the sensitivity to the market, the other one is the variability of the return within the sphere of your investing. Now, our goal is to beat the market, try and do better. Our goal is also to have lesser variability in return, because what happens is the degree of risk is used to measure so that you have conviction to stay the course in an investment, because we are believing that over time this investment will make money. Question is, do you have the courage to stay through the time?
So, okay, so then would you say that a standard deviation is better used to compare two instruments in the same bucket? To say, for example, in an equity mutual fund, let's take a flexi cap fund, to say that a Parag Parikh flexi cap fund has lower standard deviation compared with another flexi cap fund in the same category, but achieves similar returns. So I'm better off going with a fund that gives me the return that I desire, or maybe even better than what I desire, at a lower standard deviation. Is that the way to look at it?
Absolutely. You're right in the question itself, that when you have 2-3 funds in the similar peer group or the similar category, that's when standard deviation becomes essential. You got 2-3 funds. So the standard question is asked, there are 2-3 funds all given the same or similar return. Then what is the measure that you use to figure out how to arrive at selecting one or two of the funds into your individual portfolio? That's when standard deviation becomes extremely helpful. So you got one at standard deviation, let's say at 20, another at standard deviation 15. And if the returns are by and large similar, I will take the one with 15, because then I will go through lesser variability of return. Because the one with a higher variability return will not make me comfortable through the journey. The one with a lower variability return, not only will it make me comfortable during the journey, it's going to give me the same outcome. So building a portfolio with lesser standard deviation is great. Now, at a larger portfolio construct, when you put different portfolios, the outcome why people tell you to diversify, do asset allocation, is interestingly to reduce standard deviation. So the minute you put equity, fixed income, commodities, what you are essentially doing is reducing standard deviation, because assets perform differently over different points of time. And actually at a portfolio level, standard deviation makes far greater sense than just an individual security level.
Okay. Let me ask you this then. We spoke about the same return profile and higher or lower standard deviation. But what if a particular mutual fund scheme
is taking a more aggressive route and so therefore seeing more volatility, but is giving you 5 percentage points more, or is significantly beating the category average, what should make you decide to choose this over that? And this may be true for a lot of sectoral funds, right? Where you might have a significant standard deviation, but in any given year, Santosh, you will have a sectoral or thematic mutual fund scheme that is top of the charts.
Off the charts, actually. So this happens regularly, and therefore if you notice that any diversified fund is actually a combination of 10 to 12 sectors.
Yes.
It's very evident over there. In fact, I am of the belief that even though today's sectoral and thematic have become very big in the marketplace, there is no express need to play a particular theme or a particular sector standalone unless you have deep double down conviction, because in a diversified fund they have captured
have
well.
allocation.
You have allocation, therefore it reduces your standard deviation. Now in this context that we are speaking over here, the selection of securities should actually eventually help you drop the standard deviation, because even if the fund is aggressive, it gives you higher return. The question is, what are you doing to invest? If you're an SIP investor, or if you're doing a systematic transfer plan, or if you're going to be a long-term investor, then you don't mind that high standard deviation at a particular fund, because you are very clear right now, the standard deviation alone doesn't make or break my choice. But I will maybe select a high standard deviation because I'm going to be a systematic and a consistent investor. It changes. The stuff that you feared now becomes your best friend.
And a high standard deviation does not necessarily equate to a higher return profile, right?
Definitely no. So high standard deviation tells you the degree of variability. Remember, you could also get caught in the lower end of the spectrum within that. Therefore, the general stance for people is go with something which is predictable, then even though you get extra return but little less predictable. We don't like that uncertainty. So uncertainty is now categorized as volatility, and volatility, you're willing to take lesser return than take higher return, but uncertainty is what you don't like.
So now we're coming to the crux of it. You know that you need to take risk in order to get return, but relative risk you judge using tools like standard deviation, right? Or relative volatility or relative uncertainty, whatever you put it as, you judge using tools like standard deviation. Is there a space in your portfolio for for schemes or investments that could potentially have higher risk, higher volatility, but potentially higher return?
In fact, most portfolios, we got the strategic part and we got the tactical part. Within
or the core and the satellite as it's called.
Yes, core and satellite. And within that, you notice that most of the people who you interview and even you meet on the place, if there's an aggressive fund, got a high standard deviation, they'll say, don't allocate more than 10 or 15%. What they're trying to say is that we need that extra return, but we do not need the extra risk. So if you keep 10 or 15%, you will get that extra return by the way of that exposure, but you don't want to put the whole portfolio at variability or risk.
Because ultimately you're trying to protect your downside.
Exactly.
In that, if there is a situation that you don't want to arise and the risk of whatever you thought could happen has happened, then your entire portfolio is not bearing the brunt of it.
Absolutely. So you must go back to the genesis of standard deviation. The reason we have standard deviation is it's not necessarily upside optimization. It's downside protection. So if you're coming into an asset class purely only with downside protection, then maybe standard deviation is a great measure. But then if you're going to be investing for the upside participation, and most of us come into risk assets because we want better than not only risk-free, but the peer group returns. So therefore you will realize then it's a good tool. It's an indicator, but then the indicator itself will not take you anywhere. It's also the choice that you make. It's also the way you build your portfolio.
Okay. So and I understand that this entire conversation has been relatively theoretical, but my attempt has been, and to you, viewer, if you've listened to this point, for you to understand the theory behind constructing a portfolio if you're doing it yourself. And this is important even if you're getting advice, because you know the right questions to ask. And so I do want to ask the next part, which is, we've spoken about volatility, in that you can have volatility if you're rising very quickly, if you're falling very quickly as well. But there are measures to tell you whether you're falling less or more than the market and whether you're rising less or more than the market. You talked about beta, but there are more measures in a mutual fund portfolio, and you have downside capture ratio and upside capture ratio. So you've talked about standard deviation, you've talked about beta. Where do these two metrics fit?
So when you are finding it difficult to choose between standard deviation and beta, and for many investors, I know this is not an easy decision to make. But one of the things that is now publicly available in many domains is, how is your fund doing with respect to the upside and downside? So let's break it down. The upside capture ratios, when the fund is doing well, how much of the market's return has it captured in the fund? Similarly, when it's going down, how much is the participation in the negative rate? For example, if the market fell 10%, did your fund or security fall more than 10% or less than 10%? Now, similarly, when the market gave you a 10% positive return, did you just make 10 or 11 or 12? Now, for many investors, that's a good enough indicator, and not only for one patch of time. You'll have to see this over maybe 1 year, 2 year, 3 year. And it's very
1 year seems like a very short time frame.
1 year is very short, but I'll tell you what happens is that today you have many investors, for them, they look at the immediate past 1 year return to make a judgment for their fresh investment.
Which is not correct.
Which is not correct, but the point is, I think we have to be honest that many people, when they look at a fund, the only measure they look at is what is a 1 year, 3 year, 5 year performance, and at some level they try to triangulate. If 1 year good and 5 year good, then I like the fund. If 1 year is good and 5 year is bad, then maybe you don't select.
But the danger of that is that in the entire time frame, you talked about variability of return. It could well be that that moment in time is the worst possible time for that particular strategy, and the upside is what you want to continue and capture.
Well, that's the biggest reason why we're discussing this.
Exactly.
Because if you were to look at a 5 year, 10 year period and you got an upside more than 100%, you already have a winner at hand. Now, you have a long time frame and you have some fund which is captured consistently above 100%. That's the fund you want to be in with. And again, another fund that, okay, over a 5 or 10 year period is captured less than 100% of the downside ratio. You know, you got a degree of comfort saying that if the market falls, I'll be protected. If the market goes up, I'll capture.
So far we've spoken primarily about equity mutual fund schemes, but I think a lot of our viewers would want to also understand how they should relate that to hybrid schemes in the mutual fund space, whose role effectively is to balance the portfolio. And in a very simplistic sense, when equity markets are high, they will reduce allocation to equity and move towards fixed income so that the downside is protected. If the market falls dramatically, they will increase allocation to equity. In multi-asset funds, they will also look at assets like gold, etc. So is it normal to assume that the volatility in these schemes should be significantly lower than equity?
Yes, you're absolutely right. So even within the hybrid schemes, right, you have the ones that are conservative and there are ones that are aggressive. In the conservative hybrid schemes, equity and fixed income will be well balanced and there'll be a dynamic formula that they do that. But the primary objective of the fund manager or the scheme will be to maximize the downside protection. Right? Their logic is that the fixed income bit will give its income and accrual and the equity will do its bit. I have to protect a sharp downside or a downside which the investor can manage. In the aggressive hybrids, there they play to capture at least 105 to 110% of the upside and a little bit downside protection. Because I think they have very clearly positioned the fund for the type of investor that comes into the fund. That's why it's always time and again kind of repeated saying that please know the fund that you're getting into, because even in hybrids, even in like a balanced advantage or even in like an equity savings, there are guys who are positioned aggressively and there are guys who are positioned conservatively. The conservative one is on capital protection, the aggressive one is little low on the capital protection, but they want to capture the upside.
The last point, it's said quite often, and I don't necessarily think this is appropriate, that time and consistency is the foil or counter to a bad selection. Is that true or is it not? In the context of what we've spoken, can you invest in a scheme with a high degree of volatility and not necessarily the best performance and still get fantastic returns or outcomes over a very long period of time?
First, a bad selection can never be made good, whether it's time or degree of variability. I think you should do a good selection. But, you know, time and again we've realized, if you look at today's good performers, even on a 5 year basis, right? Or 10-year basis. If you went back 5 or 10 years ago, that fund would have not figured in your list of actually selecting that.
The rotation
fund
takes place.
because the rotation happens. Therefore, as long as you are reasonably sound in your selection approach, you have to be okay with the degree of volatility. So what we are trying to say is that we may not always be able to pick winners ahead of schedule, but we can pick good quality instruments and let them ride. Could be highs, could be lows. Eventually you will make money because of good quality selection. So in risk or in time, quality is never a compromise.
So basically increase the probability that the selection that you have made will spend a little more time under the sun.
Absolutely.
Shall we say?
Absolutely.
Okay. On that note, I think Santosh, you wanted to make a point?
No, I'm saying this is almost like saying, how do I bulletproof my portfolio? When you make a good investment and you leave it, that's when it gives you the luxury to hold the portfolio for much longer, not worry about the volatile or the variability of the fund. That's where the most amount of money is made.
Absolutely. Thanks. On that note, for joining me and pleasure having you. This conversation, I must admit, was a little technical, but I think that it's geared to getting you to understand the procedure to construct a portfolio in more detail. Thanks so much for listening in. This is NDTV Profit.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first.
Right.
You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101. Go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her?
No.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio.
A very special guest, Aditya Suresh, Managing Director, Head of India Research at Macquarie Capital, joins us right now on the show. Aditya, great having you. As always, thanks for taking the time out. And Aditya, tell me if I got it wrong, but I got a hint that the tone and texture of the note that you recently wrote a day ago seemed a lot more constructive than what you may have been for a better part of this year. Is that fair assessment?
Yes, there has been a shift. And I think, so the tone has kind of turned a little bit more positive from our side. Now, just in terms of contextualizing that note again and kind of the framework, just taking you back in time a little bit, was that the concerns which we had going into 25 were around earnings, what is already kind of in expectations, point one. Consumption, as you know, has been kind of really weak. Foreigners have been selling. So these type of aspects, right? And even in terms of the on the supply side, you could see a lot of this kind of primary activity, which is at least in our mind problematic. But the domestic liquidity, a lot more is going to these thematic kind of funds. So those are some of the aspects, right? But I think through the year, what has really kind of played out is that we have seen earnings cuts across the board, right? Across sectors, which have kind of come through. So forward expectations at the start of the year too high, and across sectors we've seen that moderation in consensus estimates. Because that what had happened was that from a broader emerging markets perspective, for most of say 25, what we've seen is that typically India's growth premium to emerging markets is about say 500 basis points, like 2 year forward. That had shrunk to basically zero, right? So we were trading at this kind of high multiple despite this no growth premium. Where we are today, Neeraj, and that I guess the main point of the note was that we do feel on a bottom-up basis that this entire kind of process of cuts has largely is largely now done, and therefore, to the extent that India were to actually deliver on, let's say, a mid-teens kind of pace of growth, and some of the other parts of emerging markets are going to see, who had seen kind of a big kind of bump up in earnings expectations due to cyclical aspects, that does not kind of play out. Then our growth premium starts to re-emerge, which wasn't the case for the past 12 months, and that I guess is a specific point which keeps us excited here, or the reason for the pivot. And in turn, I guess the dynamic which we're thinking about is, one is this growth premium starting to re-emerge, point one. And because that foreigners coming back to the market, whether it be because of that growth premium or even if it be just that India as a beta to global markets now say 0.4, right? So maybe it's just as a hedge, we see some inflows as well. And also kind of the other piece on foreign flows that when you think about fund flows to market cap, more as a technical aspect, that's now, whenever you've been at these levels, we've seen a fairly meaningful bounce. So I guess the broad theme, I guess we should think about is that earnings growth coming back and then growth premium kind of starting to re-emerge. Foreigners kind of coming back to India as a market, domestic liquidity remaining supportive. And a combination of those three aspects is the reason for that pivot towards a more optimistic stance on the outlook for India as a market.
It's a dramatic change from when we last spoke, Aditya. Hi, Tamanna here. And, you've entailed the reasons quite clearly. One of the things in your note that really struck is that the base case for the Nifty now shifts to 30,000 at the end of 2026, by the end of 2026. What do you think powers that move, or which are the spaces that you think power that move?
So we don't really call out a specific target here, Tamanna, on any of these indices, but the broader theme was that we're feeling more optimistic that we go towards that kind of level in the next, say, 12 months. In terms of the what gets us there, for us, it's still a very bottom-up driven answer, rather than it being saying that it's going to be driven by, say, financials or consumer discretionary. I don't think it's more that. I think it's still going to be more bottom-up driven. So when you think about some of the larger companies, we're optimistic on, say, Reliance. We're optimistic on, say, a Bharti Airtel and the outlook there. We're optimistic on, say, an HDFC Bank. And so it is going to be fairly specific bottom-up kind of ideas. But yeah, we're feeling more optimistic on the path here incrementally.
Hi, Aditya. Alex here. And I was looking at your note as well. So 152 companies that are in your coverage, and 40% beat, 40% miss. So therefore, glass half full is the way that I'm reading it. And you've described that you're more optimistic. But I'm just wondering, you've seen companies on a blended basis miss your revenue estimates. So I'm wondering whether you are shifting your forecast for the second half higher in any pockets. And you've described also the sectors that you anticipate will continue to outperform and those that you think will lag. But on a blended basis, what is your expectation for the second half? And does it move up materially in the next financial year?
So I think the broader theme, first to take away, is that when you look at the first half and the prints in itself, when you look at revenue growth for, let's say, MSCI India, which is a broader kind of list of 160 stocks, revenue growth in itself was about, say, 5-6%, right? So we look at trailing 12 months year on year. Underneath that, you had seen margin erosion. So PAT growth was underneath that 5%, right? So I think the first thing to just acknowledge is that the first half was really soft. And that's kind of excluding all these kind of one-off kind of items. The point, though, and in response to that weak print in the first half in the past couple of quarters, forward expectations, which I think is a more relevant metric rather than being just second half. So what we tend to look at quite closely is how rolling 2-year forward expectations are moving across the different sectors. But in response to the kind of weak numbers in the past few quarters, we have seen meaningful cuts to forward expectations across these different sectors. And so the real crux of the kind of the message is that we're feeling more optimistic in terms of where the forward expectations now sit. That wasn't the case, say, 12 months back. And where forward expectations now sit still points to an aggregate sense about a 15% kind of growth for India as a market over the next, say couple of years.
In the manufacturing sector, which is also shown 9.1%, this has continued from the first quarter, despite global headwinds. The organized sector, both the public and private corporate sectors, have significant growth. I already mentioned about steel and cements, but garments, automobiles, automobile components and tires, each one of them have registered good growth. And the different interventions done both by the central government and the RBI would no doubt have helped in this. Next. Yeah. On the expenditure side, the private financial consumption expenditure, which has a share of more than 60%, has recorded a growth of 7.9%. And we must remember that nearly 50% of the PFC is services, and therefore the consumption of services has also been at that same level. On the gross fixed capital formation, which has a 30% share, too has grown by 7.3%. If you look at construction sector, it is 7.2%. Central government capex has grown significantly at 31%. And while imports of goods and services in general has increased by 8.4%, there's been a double-digit growth in imports of machinery and equipment at 15.8%. And even other services and on consumption side, we look at whether transport and steel consumption, they've all been very, very positive. Next.
So I'll just end out here on this, just to highlight the inflation numbers, because obviously there is the gap between the nominal and real GDP growth has significantly narrowed to 0.5%. And that's due to the kind of prices we have seen both for the producer and the consumer. And even if we look at it sectorally, there are significant areas where it's actually been negative. So I'll stop here and Ananta, please go ahead.
Thank you, Dr. Garg, and for setting the stage for my portion of this presentation. Good evening, ladies and gentlemen, friends from the media who have come to this conference. As Dr. Garg has clearly pointed out, we have had a growth rate of 8.2%, which was outside the range of many, even the most optimistic estimates. And that shows the cumulative effect of the policies that are being put in place since the government returned to office in June 2024, including the significant direct tax relief in February budget, and the employment-linked incentive schemes announced and implemented since the July 2024 budget, etc. So that kind of has laid the foundation for continued performance of the Indian economy. I also maintained in recent public appearances that sometimes it's difficult to put a cause and effect in an econometric sense between the supply side infrastructure investment that this government has made since 2014. But over time, naturally, we begin to see the impact, because the supply side investments, whether it is in electricity generation, the length of kilometers of highways laid, the number of airports opened, the improvement in logistics, the reduction in turnaround time in Indian ports, etc. All of these things have removed the supply side constraint on the Indian economy. Bank balance sheets and corporate balance sheets are in good shape, and the digital public infrastructure has also opened the doors for loans to individuals, and the various credit guarantee schemes and schemes like Swami loans for affordable homes and Swanidhi loans, etc., have also channeled credit to hitherto individuals and small businesses that were not deprived of credit. So all of that at some stage begin to percolate down to the real economy and supports the economic activity. So we don't really take cognizance of these measures, because establishing one-to-one correspondence between these measures and actual growth rate in a quantitative sense is difficult, but over time they all accumulate, they all add up to create a dynamism in the economy, and that is what we are seeing. And naturally, in a global comparison, we are doing quite well in terms of the annual real GDP growth rates. As Dr. Garg pointed out, the agricultural growth rate was 3.5%. Both manufacturing and services have done very well. And the manufacturing numbers accord very well with the second quarter bottom-up corporate data we have seen in terms of top line and bottom line recovery as well in manufacturing companies. And as the slide shows you, export share is the highest in the last 8 quarters, and the consumption share of GDP is at 62.5%. So India remains an important market for other countries as well, where India's growth actually supports the growth of other countries, because our consumption share is high and we continue to import products as well. So in that sense, India's growth is a net positive contributor to global growth as well. And what about the coming quarters and how things look? And that is the next part of the presentation. Agricultural activity remains robust. Rabi crop, it is driven by higher sowing in major crops such as wheat and gram. So you can see that year-on-year growth rate is 19.9%. Gram is about 8.9%. And all the green color bars are either the same or higher than the bar for for calendar year 2024. The final estimates for agricultural production in 24-25 indicate a record output of food grains led by rice, wheat, maize, and moong. Rice procurement for the current Kharif marketing year has exceeded last year's levels. The availability of inputs remains comfortable. The record high reservoir levels also naturally are augur well for Rabi sowing, which is what we have seen on the left side. Now, how is the momentum in the economic activity looking now that we have 2 quarters under our belt? And as MOSPI's data show, the first half of the financial year have recorded a real GDP growth of 8%. So now we can state comfortably that the full year growth will be either 7% or to the north of 7% rather than to the south of 7%. There is basically, we are saying growth rates will be at least 7% in real terms for the full financial year 25-26. Now, if you look at the numbers for October 2025, e-way bill generation has grown 8.2%, although it is lower than the pre-COVID average, or for that matter, FY 24-25. I think it is still a healthy growth rate. Non-food bank credit, which was in single digits in recent months, has begun to pick up at 11.1%, higher than the pre-COVID average, but below 24-25, but comfortable level of 11%, higher than the nominal GDP growth rate. Electricity consumption was lower because summer months were not that hot and there was excessive monsoon rainfall, and also now we have a fairly early setting in of cooler weather. So electricity consumption is something that we need to watch out, but it could also signal energy efficiencies beginning to come through. And petrol and diesel consumption is kind of growing at rates which are not too far lower than the long-term average and the near-term average, because it also includes the fact that prices have remained stable. So it is entirely driven by volume growth, which is not a bad thing. So overall, I think the picture looks one of steady growth into the third quarter. And if you look at other indicators such as PMI and fleet activity also signal ongoing momentum. PMI manufacturing is at 59.28. Core industries growth rate was flat in October, but in Q2 it was 4.5%. PMI services higher than last year, higher than the last 4 years average pre-COVID. Port traffic is growing at a very healthy rate. Domestic air cargo was down in October. Railway freight traffic in line with the pre-COVID average, roughly. Hotel occupancy rate not yet available. So overall, I think, again, as I pointed out, even in the manufacturing sector, which we saw in the second quarter numbers, backed up by bottom-up corporate data, these indicators can augur steady growth as well. In the services side, we'll come to the fact that merchandise exports were lower year-on-year by 12% in October. I think there is an impact on the of the higher tariff by the United States imposed on Indian goods, and naturally, despite the stellar efforts by exporters to find other markets which have offset the tariff impact, but there is naturally still a residual negative impact, which is what you see in the merchandise export growth rate of minus 11.8%. And the same thing can be mentioned in the case of non-oil, non-gems and jewelry exports, which are slightly better than the overall merchandise export contraction. Total import numbers signal a healthy growth rate, and Dr. Garg also pointed out import of machinery equipment was in double-digit growth. Net inflows in terms of services, again, very positive. Steel consumption, 2.6% in October, but first and second quarter growth numbers were very good. So naturally, there is some sort of consolidation or pullback there. Cement production continuing the good trend of the first 2 quarters. And the same is the case with the construction and infrastructure goods, which grew at a healthy rate on a quarterly basis. We don't have monthly numbers here. Rural demand remains very resilient based on available indicators. And as the GST rate cuts begin to filter through to the economy, we basically have to make sure that the full impact of GST rate reductions will come through in the data for the coming months as well. Three-wheeler vehicle sales, after 9.8% growth, is recording a 5.9% growth in October. Tractor sales doing very well after 2 very good quarters as well. So overall, I think rural demand remains resilient. When it comes to urban demand, it is gaining traction post-GST rationalization in terms of UPI transaction growth, passenger vehicle sales, domestic air passenger traffic. These are beginning to recover after contraction in the second quarter, partly in anticipation of the GST rate cut expected after the announcement was made on 15th of August. In terms of investment spending, as Dr. Gail pointed out, the union government's capex grew 30.7%, and the overall investment rate more than 30% in the economy. GFCF, the gross fixed capital formation, if you look at the expenditure-wise data, that is also showing a healthy number north of 30%. IIP capital goods 5.3%. Similar, more or less in the same ballpark as last year's numbers. Capital goods imports, healthy rate of 5%, and sales of listed private non-financial companies recovered and to an 8% growth rate in second quarter in the fiscal year compared to 5.5% in the first quarter, and also compared to 5.4% last year. In terms of inflation, October inflation was 0.3%. Food inflation was -5%. We haven't seen these numbers in a very, very long time. Core inflation rate is well below 5%. It's 4.3%. And the Naukri Jobs Peak Index in October showed a contraction after 2 very decent first and second quarters this year compared to the last year, second quarter, which was very anemic at 1.3%. So overall, I think the employment situation remains steady. Now, obviously, we are also not reckoning with the major economic reform measures and policy measures announced by the government. The repeal of the various quality control orders, which augur well for small and medium enterprises, the relief package for exporters in terms of working capital management announced a couple of weeks ago, including a 5-year plan to help promote geographical diversification of exports. A total package of 45,000 crores was announced for exporters. And then there was the most important announcement in terms of sentiment and psychology for both workers and employers and for job seekers. The non-government decision to notify the labor codes with rules being framed before the end of the calendar year. These are measures that are meant to create the right balance between workers, job seekers, and the employers, with lots of benefits for workers in terms of codifying the minimum wages, taking care of occupational safety and wellness, etc. It is simple. It is safe, strong worker protection across wages, social security, working conditions, and dispute resolution support. Affordability, because it balances the compliance costs, which are predominantly borne heavily by small and medium enterprises that actually in the past have discouraged formal hiring, and therefore, tilting the balance more towards contract labor hiring. And now that is restored to a better balance and should encourage formal hiring and discourage informalization in terms of reducing compliance costs, because it is a micro, small, and medium enterprises that do the bulk of job creation in any developing economy. Now, there is a mandatory appointment letters have to be issued to all workers. Return proof will ensure transparency, job security, and fixed employment. Social security coverage, all workers, including gig and platform workers, will receive social security coverage, including provident fund insurance and other benefits. All workers to receive a statutory minimum wage payment, preventive health care, provide employers to provide all workers above the age of 40 years with a free annual health checkup, and it is mandatory for employers to provide timely wages, ensuring financial stability, reducing work stress, and boosting the overall morale of the workers. Women workforce participation, women permitted to work at night and in all job types with equal opportunities to earn higher incomes in high-paying roles, because one of the reasons behind the low women labor force participation rate in the Indian economy was that several states had restrictions on the occupations that women could actually work in, which was becoming increasingly anachronistic. And those will be now removed, and women will be able to work in all job types and all occupations. Employee State Insurance Corporation coverage and benefits available nationwide, voluntary for establishment with fewer than 10 workers and mandatory for those with one or more employees in hazardous processes. In terms of compliance burden, single registration, pan-India single license and single return, simplified processes and reduction in compliance burden. And on top of that, we also have seen from RBI data that the net household savings flows in FY25 showed a very big increase compared to the previous 2 years, 4.95% of GDP to 5.3% to 6.03% in FY25. So that kind of tells us that not only employment generation is good, or entrepreneurship opportunities are good, and they also are contributing to higher income growth, which is resulting in higher savings accruing to households. So household balance sheets are in good shape. And household investments in mutual funds and equity increased more than 2x and 3x respectively during FY23. But in the overall investment in financial assets went up from 7.3% of GDP 2 years ago to 15.1%. And financial liabilities of households decreased from 5.9% of GDP in FY23 to 4.7%. So there is a balance sheet improvement as well, apart from higher income leading to higher savings, financial savings, and also diversification of assets by households as evidenced in the RBI data. So in terms of outlook, the recently released the Article 5 economic assessment by the International Monetary Fund states that strong performance of India's economy is anchored in sound macroeconomic policies and sustained structural reforms. Ongoing structural reforms continue to enhance efficiency and competitiveness, such as implementation of labor code, GST rationalization, new personal income tax regime, deregulation initiatives, both at the state level and in the union government. That is important to underscore that. Growth momentum, as I discussed, is a cumulative effect of structural reforms pursued since 2014. It is firm, it is sustained, and it is driven by a robust expansion in manufacturing and services. If you look at the production side, and if you look at the expenditure side, it is supported by consumption and investment spending, both doing quite well.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The best app to use is the...
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first.
Correct.
You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
Just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101, go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her?
No.
Ajit, thank you so much for joining us.
Thank you so much for inviting me over here.
On the disruptor, yeah. So, truly, when we look at companies that have disrupted how business is done or how consumers behave, I would say furniture rental is definitely one of them.
I believe so too.
New relatively in India, but not so much around the world.
And hence the disruption by itself. And it was so hard to convince people because India was the last place where somebody would rent furniture. Because India used to be an owning country, saving country. My mother was not believing in this particular idea. So this is the last country where rental furniture would have worked. It should have worked in US first, it should have worked in Europe first, but it worked in India first. So yeah, it is absolutely disruptive.
Yeah. So tell us how the idea came about, Ajit, because I think you disrupted your own life first. Goldman Sachs, Morgan Stanley, Infosys. You had the career that a lot of people aspire to. And then you give it all up and say, okay, I'm going to build a business renting furniture.
Correct. And mainly because I thought that I was not fitting into that mold. The corporate world was not for me. And, you need to be that extremely smart. And I thought I was not smart enough. So moved back to India back in 2010 with Goldman Sachs. I was working with them for a year. And as I was moving back, I realized that when you are in the state of flux, when you're moving into a new city, you're in 100% sure about how you want to settle up. You for sure know that the house that you're moving into is not the last house. So how are we so sure about the furniture that we are going to be getting into that particular house? So same thing happened to me. I was in the US, so coming back to India, I was not sure whether I'm going to stay back in India or move back to the US. I had that option. So had Furlenco happened then, I would have definitely rented from them. But it was not there, and hence the idea was born. So it is just pure serendipitous. somebody had to create that in India.
No, I want to go back to the bit where you're saying you left this corporate lifestyle and corporate path because you thought you weren't clever enough. Something that is not ringing right, because you thought, I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business where in a market where one doesn't exist.
Let me explain, Tamanna. I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. It is not an IIT 3-hour exam or a CAT 3-hour exam that you need to crack it and you need to get 99 percentile. No. Neither did I crack IIT nor did I crack CAT. Right? This is about doing the same boring thing again and again and again and again, and you will finally succeed. That's what I mean. It took me 14 years. 2011 is when I started this. It's 2025. Now we're profitable and going places. But it takes that kind of a time. So there will be a lot of hurdles. You will lose your hair. You will not be able to pay salaries. You will find yourself very, very lonely at times. It is not a 3-hour exam. You need to be smart. You can't be stupid. Of course, you can't be stupid. You can't be naive. That I agree. But you don't need to be super clever. Because at least this business, my business is not about artificial intelligence, let me be honest. The person who's coding for artificial intelligence, yeah, he is particularly smart. This kind of a business, what I call is the first world businesses, where physical goods are being delivered. It's more about perseverance and patience. I mean, that's what I learned.
So what was that sort of initial period of convincing investors? You had to start with your own money, I'm sure. Because no one would invest in this for a while.
Absolutely, nobody.
Till they figure out कि ये business है क्या भाई? आप बनाओगे furniture, खरीद के दोगे, क्या करोगे?
Yeah, I mean, I started this when Flipkart was just beginning to rise up. The easier business would have been to take offline furniture sales online, which is where companies like Urban Ladder and all that got funding.
Yeah.
We were way ahead of the times when we started this, right? So it was not meant to be per se. Because here's the difference. This is not about creating a brand. You have to create the category first. It is like saying that there are only owned homes in the city, you are starting rental homes. The concept didn't exist. So you have to go and tell people that, hey, we exist and you need rental furniture. The natural question is, who rents furniture? Even now, I do get the question, who rents furniture? But then now we have about 1.5 lakh homes renting from us. Over 10 lakh homes have used us and given back furniture to us. So absolutely there is a use. But just that, this is the way I explain to people. Are you thinking about going to the moon right now? You're not, because there is no viable way to get to the moon. Similarly, when the concept didn't exist, people were not thinking about renting furniture. You can't go and ask them, will you rent furniture? The concept doesn't exist. So how will you rent furniture? If you put a viable option in front of the person and then ask, hey, here is your situation and here is a brand which is reliable, would you like to rent furniture?
So then which brings me back to one of my initial questions. Why the idea of renting furniture and not selling furniture maybe online, maybe second-hand furniture online? Because if you want to address the affordability issue...
Which is where I was not clever.
Okay, that's what you would do.
But I was lucky. Okay. I may not have been clever, but I was lucky because if I had been clever and smart enough and gone for short-term gains, that would have been the approach. Take furniture sales online. But all of them have died since then, those companies. This is the company which actually disrupted at the end of the day because this concept didn't exist. So this is a blue ocean strategy. Taking offline furniture online was not a blue ocean strategy. It comes down to competing with offline, the margins, the same game. Me, I'm standing out. Here is a company which is renting furniture. I just didn't have any competition. Even now, it's just a duopoly at best. So you start creating a larger moat.
Yeah, but it's also an asset-heavy kind of a model. Because you have to make your own furniture, you have to store it, and then you have to hope that enough people want to rent it out.
Absolutely. And that is the biggest game of this, right? Not just that. What you just described is the first end of it. I also have to predict when are you going to return the furniture back, right? I don't know. Which city, which customer is going to return back what sofa is something I can't predict. I can predict that I'm going to go after a particular set of customers. I have 1,000 sofas to rent out, so that's under my control. But I can't predict that 1,000 sofas are going to be returned back by XYZ customers in these locations, in these cities. And hence, how do you manage the inventory back in because you have 1,000 sofas going out, you have 200 sofas coming back. So literally you need only 800 sofas extra. So you have to manufacture only 800. How do you predict that? Those are the algorithms that we have cracked in the past 14 years. And that's a very difficult algorithm to crack. And hence the moat.
Okay. So the moat is there. Let's talk a bit about the origin story and the journey over there, especially from a funding perspective. When you have to start and go out and make this furniture, how did that begin? Did it begin as an experiment and let's see if it works or not?
Yeah, so what I did was, because it was well ahead of its time, right in the early days, I quit Goldman on September 30th, 2011. October 1st is the foundation day of Furlinco. Huddled into a room and then this first checked, who do I go and approach? What do I do now? Who will rent furniture? And I don't even have furniture at that time. You need to have furniture, you need to have a showroom, you need to have customers. All of this has to come together. So what I did was I called up all these relocation companies, the ones who get expats from abroad to India. I just randomly called their sales head, their account managers and said, hey, you know what? I'm this new boy in town who's actually renting furniture. So they, by the way, used to rent furniture from these local shops in each city. Rental furniture did exist in India, but as a very small concept, not as a brand, very, very niche kind of a business. We made it into a larger brand per se. So I'll just call them up and say, hey, you know what, I'm a new kid in the block. I have good furniture. I speak English. Would you like to rent furniture from me? Simple as that. So they were taken aback by the fact that I just speak English because all those rental furniture companies were all bhade pe dene wale thing, right? So they entertained me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
Yes, PowerPoint presentation. I just showed them the thing. This is the furniture. This is some designs that I had made. This, you will get it. And the next thing was, we want to see this in your store. I don't have a store. I don't have furniture. So it was funny. Somehow managed to convince some of them. For some of the others, I had to create some space where I could create some furniture and show them. And those were all very, very interesting times because I had no idea whether I'm going to get these orders or not. But managed to convert the first company, then managed to convert the second company. I started getting regular expat orders. These are high-end orders, 1 lakh, 2 lakh, 3 lakh. It's literally the rent of the furniture is equal to, what you would buy it for, literally of that kind of a nature. So slowly started.
So that quality of furniture.
That quality of furniture and lots of furniture, huge villas. So very different clientele, right? It is not India renting. It was expats renting, foreigners renting, right? It is a completely different thing. So that's how I started. 2011, so I put in my...
You need some domain expertise as well.
I had none.
Okay. And now I'm understanding your first statement.
Not being clever, right? So you get it. Yes.
No. I'm saying you need you need to know how furniture works, to design it, something.
Let me explain. I don't have an MBA. I don't have any furniture background. I come from a South Indian family, which is only into education. My mother still thinks this is the biggest mistake that I've made of starting.
You've still not managed to convince her?
No. It's been 14 years and it's a fairly large company, but still no. She thinks business is not for us. So you see, it's not even in the community. We are not Madhus, we are not Agrawals. It's just not in the community at all. So it was a shocker for them that I got into this. So everything that you can write me off as not going to work was there as a tick mark for me, that it's not going to work. Which is why I'm saying that this game is not about being clever.
What is your latest turnover number last year?
Last year we did 240 crores and profitable. This year we are going to clock about 370 crores and 10%.
You should tell your mum it worked out.
She doesn't care. She cares money spoils is what she thinks. It is a very different philosophy altogether. And that debate will continue for the rest of the life, I guess.
Yeah. Okay, so you managed to, this is what you're describing is essentially jugaad. okay, what we know as jugaad.
Correct,
You
yes.
turn up with a PowerPoint presentation.
Yes, it is.
You say, okay, I have some design. You don't even have AI to make
What
those
AI? Nothing.
make those presentations
No
for
AI.
you. So
Oh,
you have to
absolutely
create
not.
those. Then you have to actually go and make some furniture.
I
right?
did make some furniture, and I had to take the furniture, put it into an empty house, and get a photographer to photograph it, create those pictures, make a catalog of some sorts. Yeah, all of those things, right? So, and I don't have any furniture background. So what furniture works well for rental? Rental furniture is not the same as the normal furniture.
Explain that.
The entire business is about repetition of furniture. What goes into your house will come back for sure at some point of time. It should be refurbished and should be sent to the next house. And this cycle has to repeat practically forever. The longer it repeats, the more profitable your business is.
Yeah.
Normal furniture, which is sold in the market, they are not meant for installation and uninstallation again and again. They break. And they are not of the quality to be refurbished either. So they don't last. So we had to design, and we have won 12 national awards for having designed furniture for rentals, which basically means they can be installed and uninstalled hundreds of times without any problems. They are refurbishable again and again. They are like Duracell battery. They keep coming back to life every time it goes to the next time it goes to the customer's house. And they last forever. That is a moat. That is the crack that is a design thing that we cracked in the furniture itself. That is rental furniture for you. Normal furniture cannot undergo that wear and tear that rental furniture undergoes. So we go in with the assumption that it's going to be abused. The furniture is going to be abused. So it should take that entire thing for the rest of its life. So
the design component becomes very, very important in your business.
So we design our own furniture, we manufacture our own furniture, and that gives us a huge advantage over, and that's why the business is profitable now.
So is that when things started taking off, when you had that team in place, where you have the right people to design, you figure out the interface, you figure out how to reach your customers, and then you have the money coming in, or how did it go?
Tamanna, there's no one silver bullet. Everything has its time. The initial first few years was about creating the category itself. Why should you rent furniture? It starts from there. Somewhere people start accepting it. Then, which brand should you go with? That is where the design of the furniture, the quality of the furniture, you should feel, rental furniture shouldn't make you feel coming down. Rental furniture should make you go up. You should be proud of showing our furniture. That is when you really achieved it, So what's the difference between a bad hotel room versus an Oberoi or a Taj? Because you know that you're walking into a nice room. So when we thought about Furlenco, we said you should love our furniture. It should elevate you as a person, right? So those are some of the elements that we brought into the business. So that was the second stage of it. But then this is an asset-heavy business. For every incremental sofa, every incremental bed, I need to find the money. Let's say the sofa is 20,000 rupees. I have to put in the 20,000 rupees from my side. You will give me a fraction of that as a per month rent. Who will fund this 20,000 rupees? So you take Finance 101, go and take debt. The biggest mistake I made in my life.
Yeah?
Yes.
No, but you should talk about it, because a lot of people watching the show right now might be on their journey or planning their journey to entrepreneurship.
Debt is not for the initial stage of a startup, even if it is an asset-heavy company. Put in your equity. If you're going to die, you're going to die. That's it. But with debt, it's a sure shot death. Otherwise, with equity, there is a chance that you can survive. Had I run this business only with equity and not taken debt, see, what I'm not questioning is, I'm sure a lot of audience, they're experts in finance. Yes, this business needs to be run on debt. I have debt right now. There is a debt. It's ultimately a bank where money is turned into furniture and lent out. Yes, this is a debt business. But not until you're making money, not until you're profitable. So your initial capital has to be equity. Make your business through that, reach a particular point, get the bottom line cash, then leverage that to actually raise debt. We did not. I was wrongly advised, because this business, unlike any other business, see, most businesses that they have to create the brand, Because the business already exists, you just have to create the brand and probably disrupt it in a particular way. This particular business, we had to create the category, which needs money. We had to create the brand. We had to create the infrastructure. It's a very expensive thing to actually have warehouses and logistics.
Why are other companies who can also be well-funded, there's enough money out there, not doing this?
It's a very difficult business to execute in the initial days. Here is the only business which has got, a lot of businesses deliver, but here's a business which has 100% pickup. 100% furniture is picked up. Most businesses fail because of the returns. We have to deal with return is a way of life for us. That's one. Two, which means, imagine this, right? So I am a seller of a sofa. The truck guy is going to ask me X amount of money. The people who are picking up the sofa will ask Y amount of money. Those costs are the same for rental furniture also. Upar se, on top of it, I also have to pick it up. The same truck guy again have to pay when the furniture is picked up. Again, the same champs have to be paid. So two time expenses. Then, when the furniture comes back, the expense that doesn't happen with a seller of a furniture, I have to refurbish it. Again, put it back in. Again, that's expense.
What was the innovation in that process? Because if you are going to send refurbished furniture, it should not seem refurbished.
Correct. I was very sure from day one, and because of influences that I had early in my life, early in the career itself, that rental furniture should look top-notch. And I was just giving an example of when you walk into a Taj or an Oberoi, you don't know who has slept in that particular bed yesterday, but it looks perfect, right? That is what we want with our furniture. So it should look perfect. It should be like, wow. As experts, we ourselves cannot distinguish between which is old and which is new.
You're also attempting to sell the furniture, at least on your interface. You always have that option. I never understood why.
I'll tell you. There is a section of the society which thinks that if your furniture is of this quality, that means I should be able to buy it as well. Our furniture is of top-notch quality. Because it has to be repeatable. We have created these products for our benefit, which means they're of top quality, which means that if you're interested in quality, Furlenco is the place to come. You can have the best quality. So there is a tiny fraction of customers who actually come and buy from us. But because the brand is not known for selling, we're not getting hordes of customers coming. Brand is known for rental. So we stand for rental.
Why the name Furlenco?
I called it first as Rent Your Dunia.
Okay.
It didn't sound like $1 billion company.
Yeah.
So then we did an exercise. We hired an agency. They came up with this name. It's Furniture Lending Company.
So it's short for Furniture Lending
Yeah, but we never use that.
Yeah.
It's Furlenco.
Okay. If you didn't end up doing this, did you have a backup plan of what business you do?
Nope. It was complete. I came back from the US. 50% of my money was thrown into this. I would have gone back to the corporate, thrown back into the corporate thing. I don't know. I have no idea. I never thought about it.
So it wasn't as if you decided one day I'm going to be an entrepreneur. You decided one day that I should have a solution for a problem that I'm facing. That's how it's begun.
People who have seen me about more than 17 years ago would have not put their money on me. In India, to really create a business, it takes about 15 years. And we are proving that particular point. And most companies would fail in the first year. A lot of companies would fail in the third, fourth year. The 1,000-day mark, they'll fail. Then there's that to really pick up. It takes from the third year to the 15th year. Now is when we have reached an inflection point where things have started exploding. And that, you were asking what all worked.
Yeah.
One is after COVID, I think the mindset has changed a little bit in people. They finally realize that furniture can be a liability. Furniture is actually a liability. It is not an asset for you. House probably can be an asset, but furniture is a liability, especially if your life is constantly changing. Because you have to take it from one house to the next house, right? So hence it becomes a liability. And during COVID times, you are running to your hometown and flight opened up and you just rushed to the airport. What are you going to do with the furniture? So many people who bought their furniture, the owners had to throw out the furniture because they were not coming back from the hometown. So there was a lesson learned in a lot of people. They realized that life is a little uncertain. Why spend lakhs when you can just spend 3,000, 4,000, 5,000? So that was one of the reasons. Second was finally a good chunk of equity came in. Sleepwell, Sheela, parent company of Sleepwell, Sheela Foam, is a major investor in ours. They put in 400 crores into this business. And that is finally when we came out the debt trap, reduced our debt. Moment we reduced our debt, money remained in the system. We invested it back, created a manufacturing plant, invested in infrastructure, and that started creating efficiencies and money started pouring in. And as of today, every month we are generating bottom line of $1 million.
Okay.
Bottom line.
Where are the categories growing? Where is this company growing? Is it just more and more SKUs, more categories that you will be selling on your site, or where do you go from here?
So one of Furlenco's ambitions is to slowly premiumize it. When this business and even our competitor, they try to cheapen the entry level. 300 rupees sofa, 400 rupees sofa. While it's okay, I'm not saying it's, I mean, you should create a category where, you know, for entry level, for let's say for the Gen Z, somebody who is just in college or something, you don't want to spend that much. There should be a category like that. But what we want is something like what Maruti did as a strategy. As the economy is growing, keep premiumizing it. Show them better furniture. Show them that you could live your life like this. You will not be buying an Italian sofa at age 28. It costs a lot of money, but can you rent it from us? And let's say, so right now for about 5,000-6,000 rupees per month, you can furnish your entire 3-bedroom hall kitchen, including appliances. Now that, according to me, in India right now, in the top 100 million, it is affordable, right? So, but can I push that boundary a little bit? Maybe a 7,000 or 8,000. Can I get you a 65-inch TV in your house? Can I get an Italian sofa in your house? You know, start premiumizing it. So that's one angle. The other angle, we recently launched Kids. Kids is, so rental furniture is more of life constantly changing, so why get stuck with furniture? That's the idea of rental furniture. Kid is definitely going to grow, outgrow. Why buy the crib and the cradle and the bunk bed, which they deserve it. You should give it to them. But you try buying all of them. What are you going to do after they grow? They will outgrow. My kids outgrew them, you know, at some point of time. So why buy into them? And so join the kids program of Furlenco. Take the crib first, then the cradle or whatever. Then there are a lot of interesting, you know, furniture. We have created a small little sofa for the kid to sit and, you know, draw on the table. You know, create all these things. And they will be done with it after some point. They will not use it after some time. Give it back. Take it. Now the second kid is born. Get a bunk bed. You know, create a kids program slowly but surely. So kids is something that we're getting into more and more. And then something that we think about is senior citizens. They need a different kind of furniture, you know, at the end of the day, you know, back support, lumbar support, people who need intensive care. And they can't be in the hospital all the time, right? So you need, the normal furniture is a problem at times. They need a little more higher up bed, things of that nature. So we're thinking in that direction as well. So yeah, more SKUs for sure. We will get into, so we are a furniture company. So we are good at furniture. So we would like to enter into any and every different kind of furniture which will help people's life. Here in Mumbai, space is a problem. Can we get you multi-usage furniture for you, multifunctional furniture for you? So these are all the directions that we are thinking.
Okay.
Still work in progress.
Exciting. From someone who thought they weren't smart enough to top the corporate world to running a business yourself, that's fantastic. I think you're hiring right now a lot of MBAs or people in the position that you were in. So yes. I think it worked out well.
Yes, that is true. It worked out very, very well.
I hope you can convince your mom. Thank you so much, Ajit, for coming down and speaking with us today.
I really appreciate it, calling me for this. Yes, I really appreciate it.
Thank you.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first. Correct. You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101, go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her?
No.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Welcome, you're watching Market Express and I'm your host Himakshi Bahuguna. Now let's dive straight into the show and let's see how the markets have fared today. So the markets have pulled back since, they hit that much awaited all-time high. It's the Nifty that has ended near the 26,200 levels. Sensex also shut shop mildly in the red. Now this is about the day gone by. Let's take a look at the week gone by. Now on to a stock that was buzzing away in trade, Reflex Industries is starting the quarter strong, announcing a significant new contract win. The company has received an order worth 100 crore rupees from a large business conglomerate. So this new contract is for the specialized work of loading and also transporting bottom ash. That is a key segment of the industrial logistics business. So while the value is substantial, the timeline is quite aggressive. The entire project must be executed within 4 months, and this will provide a sharp immediate boost to their revenue over the next 2 quarters. So importantly, this win actually adds nearly 10% to the company's existing order book, which stood at 1,200 crore rupees as of the second quarter. Now moving to the power and capital goods sector, where Voltamp Transformers has secured a significant order in its core business segment. The company has received a letter of intent worth 85 crore rupees from the Gujarat Energy Transmission Corporation. This order is for the supply of various ratings of power transformers, which is a vital component for, energy transmission and also distribution infrastructure. So if we talk about the deal, so it is notable for its execution speed. The company has a tight deadline with an execution period of just 6 months, ensuring quick revenue recognition in the next term. So this new 85 crore contract is a strategic win, adding to Voltamp's already healthy order book, which stood at about 1,129 crore rupees as of the end of September. Now moving to the logistics sector, viewers, where all cargo logistics is seeming a sharp rebound in trade, bouncing back after 5 straight days of losses. So what is the catalyst? A detailed clarification on the cost split for its recent demerger. The company has released an official document, and this aims to clear up the investor confusion over the complex separation of its express and also contract logistics businesses, and the numbers are now clear. So according to the filing, all cargo logistics will retain 87.94% of this overall business value, and only a small portion, that is of 12.06% of the value, has been transferred to the newly created entity All Cargo Global. Now moving to the oil and gas sector, where the regulator has delivered a key decision affecting Gail India's natural gas pipeline tariff. The Petroleum and Natural Gas Regulatory Board, or the PNGRB, has approved a modest tariff increase for the company. So they have allowed a hike of 12%, setting up the new unified tariff at 65.69 rupees per MMBTU. So the crucial context here is the comparison to expectations. Gail has initially claimed a much higher tariff of 77.98 per MMBTU. Furthermore, the final tariff is also slightly lower than street expectations, which range between 67 and 70 rupees per MMBTU. Now, Adani's aviation ambitions are clearly taking flight, moving beyond airports to mastering the skies themselves. The conglomerate's arm is making a strategic acquisition in the critical training infrastructure space, also announcing a deal for the Flight Simulation Technique Center, or the FSTC. So the group is acquiring a controlling 72.8% stake in FSTC. Now, this is a significant investment valued at an enterprise level of approximately 820 crore rupees. Now moving to a major upgrade on the street today, putting the spotlight squarely on Paytm. So global investment bank Goldman Sachs has significantly raised its view on the stock, upgrading it from a neutral to a decisive buy rating. So this call comes with a massive price target hike. Goldman Sachs has more than doubled its target to 1,570 rupees, and this is up sharply from the previous 705 rupees. So the bullishness is driven by two core factors. First, that they see a big positive surprise in the company's ability to execute cost controls, which is also expected to drive the EBITDA margin to more than double over the next 3 to 4 years. And second is Goldman Sachs projects a further recovery in the market share, particularly if we talk about in the payment space. Now moving to the consumer technology space, viewers, where the eyeglasses retailer Lenskart is the subject of a major new call from a global brokerage house. So Jefferies has initiated coverage on the company with a decisive buy rating and also set a price target of 500 rupees. The bullish view is firmly rooted in the company's strong growth potential and also its operational model. Jefferies highlights Lenskart's vertically integrated omni-channel model, noting that the structure ensures excellent cost efficiency across its operations. The core of the business remains the Indian market, which Jefferies calls the bedrock, contributing over 85% of the company's EBITDA. So what's also important to note is that the brokerage sees highly attractive unit economics driving the growth. Now on to an update from the banking space. One bank that has been in focus is Bandhan Bank. Of course, the asset quality seems to be stabilizing, but in what seems to be largely a cleanup exercise, the bank's board has cleared the sale of a significant portfolio of the stressed assets worth 7,000 crore rupees to asset reconstruction companies, or the ARCs. So the total portfolio comprises two parts. Roughly 3,212 crore rupees in existing non-performing assets, or the NPAs, and another 3,719 crore rupees in loans that have already been written off. So the assets on the block are primarily high-risk loans from its core segments, including microfinance, agricultural, and small business loans. So the sales strategy involves two different auction routes. That is, the live NPAs will be sold via the Swiss auction route, which is a highly transparent process, and the written off accounts, meanwhile, will be sold via a normal auction. Now, moving to the pharma sector, where Zydus Lifesciences has secured a crucial regulatory milestone for a major diabetes treatment. The company has received a tentative approval from the US FDA for its generic version of empagliflozin and also linagliptin tablets. So this combination drug is a generic version of the branded product Glyxambi, which is marketed by Eli Lilly. So the drug is highly effective, used to improve glycemic control in the patients with type 2 diabetes, and the market is substantial. The pre-branded product currently has annual US sales of approximately $215.8 million. While the approval is secured, the commercial launch will have to wait, as the key patents for Glyxambi are expected to expire in April 2027. Now, moving to the railway sector's viewers, where Rail Vikas Nigam or the RVNL has secured a new contract, further bolstering its infrastructure order book. The company has received a work order from the East Coast Railway. So this is a specific infrastructure contract valued at 9.6 crore rupees. The project involves the critical task of commissioning a comprehensive video surveillance system across the railways network, and this is enhancing the security and also operational oversight. So the execution timeline is relatively swift, and this is requiring completion within 180 days or roughly 6 months, ensuring a steady near-term revenue stream for the segment. So while the individual order value is small, the win adds to RVNL's massive infrastructure pipeline. The company's order book remains robust, standing at an impressive 90,000 crore rupees as of the end of September. Now, moving to the textile and manufacturing sector now, where Bombay Dyeing and Manufacturing has announced a temporary operational update. So the company is undertaking essential maintenance work at its manufacturing facility in Patalganga. So as a result of this scheduled maintenance, the company is temporarily shutting down the plant. So this will lead to an anticipated production shortfall of approximately 7,500 metric tons of the material. However, the company's management has moved swiftly to reassure the market. They are confident about having sufficient inventory reserves to manage the situation. Now, moving to the hospitality sector, Lemon Tree Hotel is executing its expansion strategy, particularly in the key regional markets. So the company has announced the signing of 2 new properties, one each in Gujarat and Uttarakhand. So this move strategically strengthens the company's portfolio in states known for both business and leisure travel. Together, if we talk about the 2 new properties, will increase the company's total room count by an additional 170 rooms. So this expansion underscores the aggressive growth of the Lemon Tree brand, which is focused on the mid to upscale segment. So the company now operates over 120 hotels spanning more than 80 cities across India. Next up, we have the Indian Energy Exchange, or the IEX, where India's largest power exchange has approached the appellate tribunal for electricity or APTEL against 2 orders passed by the Central Electricity Regulatory Commission, or the CERC. So the issue stems from the fact that from India having just 1 exchange in 2008, the sector now has 3. So IEX says that while rules were repeatedly relaxed for the other 2 exchanges, CERC suddenly wants market coupling, meaning one single price and one single algorithm for all the exchanges instead of free exchange-wise price discovery. So IEX says that this could actually reduce their market dominance, and APTEL announced that the next hearing will be on the market coupling dispute, and that will take place on January 6th of 2026. Viewers, let's look at HAL. That share price has, rebounded after Hindustan Aeronautics Chairman and Managing Director DK Sunil has said that there is absolutely no problem with Tejas aircraft, terming that recent Tejas crash in Dubai as an unfortunate incident. He said that its safety record is the best in the world. His statement comes after a Tejas aircraft crashed during Dubai Air Show 2025 on November 21st, claiming the life of Wing Commander Namansh Syal. Now, moving on to a newly listed player in the fintech space, Grow is under investor scrutiny today due to notable selling pressure from its employees. So data shows that the company employees have sold nearly 11.4 lakh shares since the listing. So this heavy selling comes even as the company has delivered overall, strong sequential Q2 numbers showing impressive profitability and also cost control. So the context is crucial here. The stock saw an aggressive post-listing rally, leaving it up over 21% since debut, but it has corrected sharply, now trading roughly 18% down from its all-time high. Next up, we have Seagull India, viewers, that has emerged as the lowest bidder for 1,089 crore road project awarded by the Madhya Pradesh Road Development Corporation. So the contract covers the construction of a greenfield 4-lane corridor between Indore and Ujjain, which is a key connectivity upgrade for the region. The project is expected to be completed within 24 months according to initial timelines. The order further strengthens Seagull's presence in the state road infrastructure development. Now moving to the consumer durables and health sector, where Eureka Forbes has laid out a highly ambitious growth roadmap. The company is targeting to double its revenue by the financial year 2030, and this is driven by strategic transformation. So the core of this strategy involves optimizing its product mix. Management is aggressively cutting its stock keeping unit, that is the SKU count, from over 60 down to just 5. So this is a move designed to improve the efficiency and also focus resources on the best sellers. So the major growth driver is the service segment, which the company believes has vast untapped potential for annual maintenance contract or the AMC penetration. So service revenue typically aids customers' retention and also provides highly stable, high margin income. Now, beyond the water purifiers, the company is betting big on the new categories, projecting its vacuum cleaner sales to grow 6-fold and also noting strong demand in the air purify segment. And viewers, since we are talking about air purifier sales rising, let's also tell you why this is happening in the very first place. So Delhi today woke up to even worse air quality. Levels have crossed 500 in select areas. Neighboring cities have fared no better. So other metros like Mumbai still is grappling with poor to severe AQI. Now, just to give you more context, living in Delhi right now is the equivalent of smoking 23 cigarettes. Mumbai is anywhere between 12 to 16 cigarettes on an average. E-commerce platform Meesho is set to launch its much-awaited initial public offering on December 3. The Bengaluru-based online marketplace competes with companies like Amazon and Flipkart to sell a range of products. Meesho IPO will comprise a fresh issue of shares worth 4,250 crore rupees and an offer for sale of 175.7 million shares by existing investors. So the price band for the IPO has been fixed between 105 to 111 rupees per share. The Meesho IPO lot size is 135 equity shares and in multiples of 135 equity shares thereafter. Here's Sudeep Pharma Limited. This is listed on the National Stock Exchange on Friday at 730 rupee a piece and a premium of 23% over its issue price of 593 a piece. So Sudeep Pharma was subscribed over 93 times on the third day and final day, led by the demand from large institutions and also non-institutional investors. So the retail portion was also overbooked. The IPO includes a mix of fresh issues of shares worth 95 crore rupees and also an offer for sale of 1 crore shares by existing shareholders. The price band for the issue is set at 563 to 593 rupee per share. Reliance Industries has received a 56.4 crore penalty order from Joint Commissioner CGST Ahmedabad. So the penalty has been issued interpreting that the input tax credit falls under blocked credit without considering how the service provider has classified the services. The company has said that it will challenge the order. It intends to file an appeal against the decision and also defend its position on the treatment of the input tax credit. So the financial impact of the order is limited to the penalty amount. The company has clarified that there is no effect on its operations or other business activities due to this order. Now, in its ongoing effort to strengthen the coal sector and also bring India closer to the vision of Atmanirbhar Bharat, the government has taken an important step aimed at speeding up the exploration of coal mines. So the government has aided another 18 agencies to carry out prospecting operations for the exploration of coal and lignite. Now, by expanding the pool of authorized prospecting agencies, the government aims to harness private sector resources, also promote efficiency, competitiveness, and the technological innovation in the explorations ecosystem. So this step is expected to significantly accelerate the pace of exploration and also enable early enhancement of mining, contributing to faster resource development and also enhance coal and lignite availability for the country. US social media platform X has rolled out a major update to its following timeline, introducing AI-powered ranking through its in-house chatbot Grok. So users will now see posts from people they follow sorted by engagement and also relevance. The new update means that posts from people you allow are prioritized based on what Grok predicts will be more engaging or interesting to you. However, users can switch back to the traditional chronological feed anytime via the menu. So the update aims to personalize the experience while keeping the focus on accounts users follow instead of random content. Now, government is also considering extending hallmarking to bullion to ensure jewelry manufacturers receive authenticated raw material. Officials say that the move follows strong uptake of gold hallmarking and the recent rollout of voluntary hallmarking for silver. So the Consumer Affairs Ministry is also working on a framework to help buyers distinguish between natural diamonds from lab-grown ones, aiming to strengthen transparency and also consumer protection. So at a CII conference, the ministry said that the industry will be given time to adjust before any further mandates are introduced. The broader effort is aimed at building long-term credibility across the gems and jewelry ecosystem. Now, viewers, on to some national news now. Cyclone Ditwa is heading towards North Tamil Nadu, Puducherry and South Andhra Pradesh coast, prompting the Indian Meteorological Department to issue red alerts in several coastal districts. So the storm currently over the southwest Bay of Bengal near Sri Lanka is forecast to bring heavy to very heavy rainfall, strong winds and also dangerous sea conditions by November 30. Residents have been warned of possible flooding, rough seas and also disruption to daily life, particularly in vulnerable coastal and delta areas. So authorities have asked fishermen to stay out of the sea, have urged people to avoid flood-prone zones and are preparing emergency response ahead of the landfall. And Vladimir Putin will pay a state visit to India on December 4 and 5 to 2025 to attend the 23rd India-Russia Annual Summit. So the government has confirmed this. The visit comes at the invitation of Narendra Modi and will also include talks between the Russian President and the Indian Prime Minister, as well as the banquet hosted by India's head of state. The discussions are expected to review the bilateral progress and also chart a renewed vision for the special and privileged strategic partnership covering trade, defense, energy, and global regional issues. Viewers, in an exciting development for adventure enthusiasts and also tourists, Delhi has successfully conducted trial runs for a hot air balloon ride with public flights expected to launch soon. So this initiative aims to boost eco-tourism and also offer a unique aerial view of Delhi's restored green zone. The service is expected to roll out between November and February when the weather is ideal for flying. Ticket prices are likely to be around 3,000 rupees plus tax, with flights lasting 7 to 12 minutes for up to 4 people. Now on to some global news. US President Donald Trump has announced a permanent pause on migration from what he termed third world countries, blaming recent violence near the White House on foreign-born individuals. The move includes halting new immigration admissions and also reviewing asylum cases and green card approvals from dozens of developing countries. Trump also proposed ending federal benefits for non-citizens, some immigrants, and also deporting those deemed public charges and all the security risk. So the pronouncement triggered immediately after concerns with many questioning its legality and also humanitarian implications. Viewers, the number of people killed in the devastating Hong Kong apartment complex fire has risen to 128, with as many as 200 missing. So firefighters finally brought the blaze under control 42 hours after it ignited. At least 79 people were injured in the inferno that rapidly spread through multiple buildings in a public housing estate in the city's Tai Po neighborhood, as you can see on your screens right now. With that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
very special guest, Aditya Suresh, Managing Director, Head of India Research at Macquarie Capital, joins us right now on the show. Aditya, great having you. As always, thanks for taking the time out. And Aditya, tell me if I got it wrong, but I got a hint that the tone and texture of the note that you recently wrote a day ago seemed a lot more constructive than what you may have been for a better part of this year. Is that fair assessment?
Yes, there has been a shift. And I think, yes, the tone has kind of turned a little bit more positive from our side. Now, just in terms of contextualizing that note again and kind of the framework, just taking you back in time a little bit, was that the concerns which we had going into 25 were around earnings, what is already kind of in expectations, point one. Consumption, as you know, has been kind of really weak. Foreigners have been selling. So these type of aspects, right? And even in terms of the on the supply side, you could see a lot of this kind of primary activity, which is at least in our mind problematic. The domestic liquidity, a lot more is going to these thematic kind of funds. So those are some of the aspects, right? But I think through the year, what has really kind of played out is that we have seen earnings cuts across the board, right? Across sectors, which have kind of come through. So forward expectations at the start of the year too high, and across sectors we've seen that moderation in consensus estimates. Because of that, what had happened was that from a broader emerging markets perspective, for most of say 25, what we've seen is that typically India's growth premium to emerging markets is about say 500 basis points, like 2 year forward. That had shrunk to basically zero, right? So we were trading at this kind of high multiple despite this no growth premium. Where we are today, Neeraj, and that I guess the main point of the note was that we do feel on a bottom-up basis that this entire kind of process of cuts is largely now done. And therefore, to the extent that India were to actually deliver on, let's say, a mid-teens kind of pace of growth, and some of the other parts of emerging markets are going to see, who had seen kind of a big kind of bump up in earnings expectations due to cyclical aspects, that does not kind of play out, then our growth premium starts to re-emerge, which wasn't the case for the past 12 months. And that, I guess, is a specific point which keeps us excited here, or the reason for the pivot. And in turn, I guess the dynamic that you're thinking about is, one is this growth premium starting to re-emerge, point one. And because that foreigners coming back to the market, whether it be because of that growth premium or even if it be just that India as a beta to global markets now say 0.4, right? So maybe just as a hedge, we see some inflows as well. And also kind of the other piece on foreign flows is that when you think about fund flows to market cap, more as a technical aspect, that's now, whenever you've been at these levels, we've seen a fairly meaningful bounce. So I guess the broad theme, I guess we should be thinking about is that earnings growth coming back and then growth premium kind of starting to re-emerge. Foreigners kind of coming back to India as a market, domestic liquidity remaining supportive. And a combination of those three aspects is the reason for that pivot towards a more optimistic stance on the outlook for India as a market.
It's a dramatic change from when we last spoke, Aditya. Hi, Tamanna here. And, you've entailed the reasons quite clearly. One of the things in your note that really struck is that the base case for the Nifty now shifts to 30,000 at the end of 2026, by the end of 2026. What do you think powers that move, or which are the spaces that you think power that move?
So we don't really call out a specific target here, Tamanna, on any of these indices, but the broader theme was that we're feeling more optimistic that we go towards that kind of level in the next, say, 12 months. In terms of the what gets us there, for us, it's still a very bottom-up driven answer, rather than it being saying that it's going to be driven by, say, financials or consumer discretionary. I don't think it's more than that. I think it's still going to be more bottom-up driven. So when you think about some of the larger companies, we're optimistic on, say, Reliance. We're optimistic on, say, a Bharti Airtel and the outlook there. We're optimistic on, say, an HDFC Bank. And so it is going to be fairly specific bottom-up kind of ideas. But we're feeling more optimistic on the path here incrementally.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first.
Correct.
You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101, go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her?
No.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV Profit has come a long way.
You are the new schools and colleges.
India registers fastest GDP growth in second quarter at 8.2%. Manufacturing and spending power the growth engine. Nominal GDP grows at 8.7%. Low inflation narrow the gap between nominal and real growth rates. Chief Economic Advisor Anant Nageswaran shares an optimistic outlook on India's economic growth, tells NDTV Profit that full-year GDP estimate for FY26 is likely to be revised up to 7% from the current target of 6.5%. April to October fiscal deficit widens to 8.25 lakh crore as it reaches 52.6% of the FY26 target. Total expenditure stood at 26.25 lakh crore rupees, which is 51.8% of the FY26 goal. RBI gives a major push to ease regulatory compliance, cancels over 9,400 circulars and consolidates rules into 244 master directions across 11 sectors. Market ends higher for third consecutive week after Nifty hits an all-time high and closed above the 26,200 mark. Sectoral indices closed on a mixed note. Mid and small cap indices underperformed the benchmarks for the week. Russian President Putin will visit India on the 4th and the 5th of December for the 23rd India-Russia Annual Summit. The visit is expected to provide an opportunity for the leadership of both the countries to review progress in bilateral relations. President Trump threatens to pause migration from third world nations permanently, says he would terminate all of the millions of illegal admissions, including those he claims were approved through Sleepy Joe Biden's auto pen. Hello and welcome. A very good evening, viewers. This is Profit 360 on NDTV Profit. It's 7 p.m. sharp and I'm your host Mallika Mishra. Along the next half an hour, we'll be taking you through some crucial updates when it comes to markets, national as well as international news. But the big story of this evening is definitely the stellar GDP number. India's economy posted fastest strong performance in 6 quarters, with GDP expanding by 8.2% in the second quarter. The numbers beat the estimate of 7.4%, driven largely by manufacturing and the services sector. What's also notable is that lower inflation helped narrow the gap between real and nominal growth. Nominal GDP grew 8.7%, slightly higher than the 8.3% recorded in the same quarter last year. For more insights on what's powering this momentum and what it means for the road ahead, my colleague Shrimi Chaudhary joins us with all the details.
Absolutely robust Q2 number, on a real-term basis after adjusting inflation. And this is quite encouraging because if you see July to September quarter, the steep 50% tariff have been imposed, and despite that, it's a stellar Q2 number which we are seeing. And if you see even the first half of the year, from April to September, the growth is 8% on real-term basis. Even the nominal GDP number, it's showing 8.7%, clearly reflecting the economic expansion, and it is somewhere also indicating the fact that government capex, which has risen to 31%, is clearly giving and reflecting on the Q2 number as well. However, there are certain slowdown in the October month, but that is mostly due to festivity on the capex side, despite the fact that private capex remains subdued. Other than that, if you see the headline numbers, the key numbers from this GDP coming out, the manufacturing growing at 9.1%, plus the construction also going on 7.7%. So those are actually led this stellar and the robust number. And this is also important because tertiary sector like financial services as well showing a pretty robust figures, which was not there in the same period last year. In fact, while speaking to media on Q2 numbers, the India top economist C.A. Nageshwaran emphasizes the fact that India outlook remains strong, robust, and it is supported by stable macro policies and ongoing structural reforms, including your GST rate rationalization, new labor code, which came out as quite a balanced and streamlined one, and in fact, personal income tax cut has led this momentum, and he's pretty confident on the fact that this momentum will continue even in the upcoming quarters, and that is why he's estimating that the overall growth outlook will go to 0 to 7% from the current projection of 6.5%, and that is something very important key takeaway of CA press briefing. And in fact, he did underline the fact that there are certain concerns remain, especially the tariff uncertainties, but he is kind of clear and quite confident on the fact that the way real GDP and the nominal GDP narrowing down, it's clearly showing indication that economy is strong, and export will see clearly positive number going forward.
And in an address to the media, Chief Economic Advisor Anant Nageswaran said that the full year GDP estimate for FY26 is likely to be revised up to 7% from the current target of 6.5%. Let's listen into his remarks.
Now that we have 2 quarters under our belt, and as MOSPI's data show, the first half of the financial year have recorded a real GDP growth of 8%. So now we can say comfortably that the full year growth will be either 7% or to the north of 7% rather than to the south of 7%. There is basically, we are saying growth rates will be at least 7% in real terms for the full financial year 25-26.
And apart from India's robust GDP growth, the other area that we're focusing on this evening is Russian President Vladimir Putin's India visit. He will visit India on December 4th and 5th for the 23rd India-Russia Annual Summit, following an invitation from Prime Minister Narendra Modi. To gather more on the story, let's go across to my colleague Aditya Rajkol. Aditya, this meet is extremely crucial for India. How are you viewing it, and what has the government said about this key bilateral meeting?
Officially announced the visit of Russian President Vladimir Putin to India. The Russian President Putin will be visiting India between December 4th and 5th. This will be a landmark visit of the Russian President, coming at a time when there has been a lot of developments taking place around the Russia-Ukraine war. Trump has been trying to resolve the crisis, to bring in peace, but also in the last couple of years, Prime Minister Narendra Modi has played a significant role in bringing in peace to Ukraine by meeting both Putin as well as Zelensky in Ukraine as well as in Russia. Indian Prime Minister perhaps is the only Prime Minister who has good relations with Zelensky and Putin both. India has very robust cooperation with Russia as well as with Ukraine. But this particular visit will focus on the strategic collaboration between Moscow and New Delhi, talking about not just the defense ties and collaborating that further, but also on the trade and the oil and energy that India purchases from Russia. That will certainly get a significant boost. This visit also comes at a time when India has significantly used Russian defense equipment, including the S-400, in the recent Operation Sindhu against Pakistan, which was a mighty success. There will be, of course, the chemistry between Modi and Putin, the friendship that will be spoken about, and there will be a lot of color and a lot of important developments in that two-day meeting between Prime Minister Modi and Putin. We are also learning that apart from the annual 23rd cooperation meeting between Russia and India, the Indian President, Draupadi Murmu, will also be holding a banquet for the Russian President. This visit also comes at a time when the US President has cancelled his visit to India and the Quad Summit is not happening. But New Delhi and Moscow will look forward to take the relationship forward in this particular significant and historical meeting.
And to help us unwrap and understand the significance of this crucial meeting between one of the world's two most powerful leaders, which is Russia's President Vladimir Putin and Prime Minister Narendra Modi of India, we have Veena Sikri, former Indian diplomat and High Commissioner, joining us. Thank you so much, Ms. Sikri, for giving us your time. My first question to you is, Putin's state visit to India amid Trump tariffs is very, very significant, and it does catch global attention. What, according to you, is going to stand out this time?
Well, there are two things. First of all, you're right. Yes, it is a very significant visit, and it will grab global headlines. It's the first visit that President Putin is making to India since the start of the hostilities between Ukraine and Russia. And in that sense, it's a visit coming after many years. But it's also the 23rd annual summit between the Indian Prime Minister and the President of Russia. And it signifies a strong continuity in the relationship between India and Russia. And certainly this visit will build upon the earlier strengths and good points and achievements of the India-Russia relationship. So, sir, I think that first of all, the whole visit will be focused on the economic aspects, because there's a strong interest and need from both sides to develop the economic relationship between India and Russia, to strengthen the trade between India and Russia. India has opened 2 new consulates in Russia to diversify our presence there and to give more focus on trading with the individual provinces of Russia. So I think this is a very important point of the trade and economic relationship that will be there between India and Russia. And this trade relationship also includes the energy relationship and the energy security and the question of India's purchases of Russian oil. There have been sanctions recently which have brought down the purchase of Indian oil, but I think that this will be discussed, because we've seen, for example, that China continues to purchase Russian oil in very large amounts without any kind of sanctions or any kind of stoppages of any kind. So I think this energy security will also be discussed. But I think the defense cooperation, the defense relationship, the question of Make in India, transfer of technology, and the defense cooperation based on transfer of technology will be a very significant part of the relationship. We do know that the S-400 air defense systems that India has purchased from Russia have proved to be very useful and very effective during Operation Sindoor. So certainly India will be placing a larger order for these. But here in this, there is also the question of delays. So we want that delays should not be there. We want that there should be priority in supplying these systems to India. And India is also discussing, that delays, because we've seen even in the question of the engines for the Tejas aircraft, that there have been delays from the American side as well. So, India is thinking of how we should go ahead and make sure that once India contracts for purchase of any equipment, then there should be no delays. And if there are delays, there should be a penalty or some provision for it, or even a cancellation. So I think this question of delays will come up. There's also the additional question of purchase of Sukhoi 57, which is the Russian stealth aircraft, on par with the F-35 that India has also been asked to consider by the American government. So I think the Sukhoi 57, where India wants to buy more than one squadron, 2 or 3 squadrons. The question of transfer of technology is all important. The question of how quickly they can be supplied. So certainly this will also be a very important aspect of discussion between President Putin and Prime Minister Modi. We do know that there will be a formal banquet by President Draupadi Murmu, and this is a great gesture for President Putin. So this will be a very important and significant visit, and I do see that it will mark yet another milestone, an important milestone in the special and privileged strategic partnership between India and Russia. And the outcome of this visit will be a key determinant for the next few years. What we decide on the S-400s, on the Sukhoi 57s, on the trade relationship, on building up this trade relationship. All this is very important.
Right, Ms. Sikri. Ms. Sikri, so just taking it slow, you have broken down many possible outcomes of this crucial meeting, and you've highlighted technology cooperation, defense cooperation, whether it is also the energy partnership that India and Russia have maintained even during such turmoil times. But from the perspective of diplomacy, I'd like to ask you, in a world where soft power has so much influence on how geopolitical relationships work, and especially because since the time Trump has become president of America, he's been very frank about what he feels about India and Russia's relationship. And that has been also used, our energy purchase from Russia has been used as a key reason for penalty tariffs on Indian products and Indian exports. Now that this meeting is happening between India and Russia, and Putin is coming to India, how do you think, what message does it give to global leaders such as Trump, according to you?
Well, I think this is a very strong signal of India's strategic autonomy, that we are very keen and determined to maintain strategic autonomy in our foreign policy, and foreign policy will be guided by India's own security interests, diplomatic interests, political interests, and this will be the sole guide. We have always maintained strategic autonomy. We believe in developing relationships with different countries based on India's own strategic interests and the mutual benefit with that country concerned. So I think President Putin's visit is a very strong signal in that direction. We do know that President Putin, after the ICC judgment, has really restricted his travel. So he doesn't travel to many countries at all. So the fact that he's going to be welcomed in India and full security will be provided, I think this is a key moment for President Putin and for India. And I think that the question of the conflict, the Ukrainian-Russian conflict, will certainly figure also, because India has played an important part in talking to both sides. And we have always said this is not an era of war. There should be a cessation of hostilities. Both sides should sit together and work it out. We do know that President Trump has a 28-point peace plan on Ukraine. And President Putin has signaled his broad agreement with President Trump's peace plan. But of course, we do know that there will have to be talks between the two sides. So, and we know that Prime Minister Modi has been talking to both sides. He's been in close touch with President Putin, and President Zelensky has also been very keen to talk to our Prime Minister, and other leaders of President Zelensky's government as well have been talking to our External Affairs Minister and to others in India. So all this shows that India does have this key interest. On the one hand is our strategic autonomy, on the other hand is our interest in the finding a good solution, a lasting solution to the Ukraine-Russian conflict. So these are also additional dimensions of the visit.
Got it. Thank you so much, Ms. Sikri. You've put down so many points for us to ponder upon. And yes, of course, as the world fixes its binoculars on this strategic meeting, it will be interesting to see the outcome of Mr. Modi and Mr. Putin's meeting in India after all. But thank you so much for bringing us your perspective to the table.
Thank you. Thank you.
And moving on, viewers, India's auto sector is set to report November sales figures, and GST-driven demand boost may most likely lift growth. In fact, the trucks are expected to lead the charge this time. Let's bring in my colleague Puneet for a brief preview of the auto sales this month.
Well, most certainly it's going to be probably one of the most spectacular months for FY26, and a very interesting one as well, because generally post the festive season we do see a slump in the next month, and that are some of the historical trends suggest. And also that November last year had some of the festive dates as well, so you had a very high base and a very high base in the previous month also on a year-on-year and month-on-month basis. Despite that, we are expecting a very strong month for auto sales in the month of November, and a big surprise here, it's not by two-wheelers or four-wheelers, it's actually the truck segment that is going to lead the growth. We are expecting mid-double-digit growth for Ashok Leyland and Tata Motors in the CV space. But let me first get out the two-wheeler names first, because they are expected to do decently well, but the likes of TVS will drive that momentum up almost 20% in growth, while for Eicher we are expecting a fall in this particular month, and that's because of a large base as well of what I spoke about in December last year, and hence you're seeing a YOY fall for this. But TVS will definitely be a key outlier in this particular month.
Thanks for those key highlights, Puneet. The markets ended lower today, with benchmark indices slipping into the red. The Nifty closed at the 26,200 mark, down 12.6 points, while the Sensex ended 13.71 points lower at 85,700 at the close of business hours today. Among the top gainers were M&M and Sun Pharma. Sectoral performance was mixed, with Nifty Auto standing out as a top gainer, and Nifty Oil and Gas, though, extended its losses as the weakest performer, in stark contrast to that index. Speaking about market performance this week, the Nifty hit a fresh all-time high and managed to close above the 26,200 level. Nifty Pharma led the sectoral charts for the week, boosted by strong moves seen in counters to the tune of Glenmark Pharma and Laurus Labs. Meanwhile, Nifty Oil and Gas declined for the second straight week. But moving on, the Reserve Bank of India, viewers, has undertaken a major regulatory cleanup. RBI has scrapped more than 9,400 circulars and streamlined them into 244 master directions across 11 sectors. Deputy Governor Shirish Chandra Murmu said at the press briefing that the overhaul will bring sharper and simpler compliance. Commercial banks will now operate under just 32 master directions. Let's bring in our banking editor, Vishwanath Nair, for the key takeaways from that important press conference.
April of 1944, at that point in time, the RBI released a circular which had actually dealt with advances against government securities. Now, we are in November of 2025, and that's when the RBI has decided to repeal that circular. Now, not just that, in fact, a cumulative 9,446 circulars have been repealed as part of a regulatory consolidation exercise. All of these circulars have now been sort of put together into the form of 244 master directions of the Reserve Bank of India. These 244 master directions will be split amongst 11 categories of regulated entities which currently exist in the RBI's regulated universe. This includes, of course, commercial banks, small finance banks, payments banks, local area banks, urban cooperative banks, a bunch of other even non-banking finance companies, as well as all India finance institutions. So 11 different categories of regulated entities will now be governed using these 244 master directions. Now, the regulation that I mentioned earlier, now what the RBI's justification for this is that the process of regulatory consolidation began some point in June of 2025. At that point in time, the RBI's intent was to create a unified regulatory framework, a easy to access regulatory framework. In fact, under RBI Governor Sanjay Malhotra, the focus has been to come out with specific guidelines, specific regulation, which is easy to access, easy to understand, and as well as it's easy on the compliance that these regulated entities have to follow. As part of this exercise, of course, the RBI has put together all of these guidelines, 244. From here on, what is going to happen? Whenever the RBI comes out with a new set of regulations, they will come out in the form of circulars and eventually will be merged into these 244 master directions, which are split amongst these 11 entities. Now, let's say in the future, at some point in time, the RBI's regulatory universe expands and more entities come under the RBI's regulatory ambit, more categories of companies come into RBI's ambit. At that point in time, these 244 master directions will be expanded further on a need-be basis. But as things stand today, 244 master directions, which will govern 11 categories of regulated entities. And as of now, 9,446 circulars have been repealed. Either they have been subsumed into these master directions or have been repealed because these guidelines have now become obsolete.
And moving on, the Adani Group CFO Jogeshinder Robbie Singh said today that the Adani Group would be interested in foraying into the nuclear sector. Now, this remark comes just after PM Modi's announcement yesterday that the government is planning to open up India's tightly regulated nuclear power sector to the private space. Now, this will help strengthen the country's energy security further.
If the government can find out a public-private partnership model, then we will be, of course, very much interested. And I think if the liability laws are settled, then we'll be able to do it a lot better than. So currently, like for example, EDF is doing with French government is doing a nuclear reactor in India. We can also do it.
Meanwhile, Adani Group is also planning to raise 90,000 crore of debt to fund 1.57 lakh crore in capital expenditure. Adani Group CFO Jogeshinder Robbie Singh said that the rest will be funded through internal approvals and equity. He also broke down how the company's debt would be subdivided. Let's listen in.
We are doing 1.57 of capex, so roughly about 90,000 crore. Have we already done about 80,000 crores total capital? We'll do another, internal will be another 36, so we'll do another about say 44,000 crore of external capital, debt and equity. Total would be? Total we'll raise about exactly the same number as our capex, 157, 1.57 lakh crore.
And the Adani Group is working towards increasing the domestic share of its borrowing. Robbie Singh believes that Indian pension firms will increasingly have the appetite to fund longer-term debt, maturity of over 20 years. And in a sharp remark, Donald Trump has linked a recent violent incident in Washington to what he calls a terrorism threat, claiming the National Guard's effectiveness has driven crime down to record lows and suggesting the attacker acted because he couldn't practice crime. Responding to a question on Afghan asylum seekers, Trump insisted he does not blame all Afghans, but alleged that many who arrived during evacuations were criminals who came without proper checks. Let's listen in to the president.
No, but we've had a lot of problems with Afghans because they had a lot of them coming in on these planes. Again, I show you this picture. We had a lot of them coming in on these planes that are, look at them. There was no checking. They just poured into the plane. And many of these people are criminals. Many of these people are people that shouldn't be here. And many of them have been gotten out. I mean, we've gotten out a lot of the people that, we've taken a lot of them out of here.
And that brings us to the end of this edition of Profit 360, viewers. But do not go anywhere, as we have a lot more action-packed news lined up for you right on the other side of this very short break. So stay tuned and keep watching NDTV Profit. This is Malika Mishra.
This is not about creating a brand. You have to create the category first. And it was so hard to convince people because India was the last place where somebody would rent furniture.
I think you disrupted your own life first.
Correct.
You had the career that a lot of people aspire to.
The corporate world was not for me. I thought I was not smart enough.
I'm not clever enough to work in a structured environment, but I am clearly clever enough to start a business.
I don't think business and entrepreneurship is about being clever. I think business and entrepreneurship is about perseverance and patience. There will be a lot of hurdles. You will lose your hair.
Let's talk a bit about the origin story and the journey over there. How did that begin?
I called up all these relocation companies, the ones who get expats from abroad. They entertain me. So I went to them with a PowerPoint presentation. I did not have furniture.
It's just the presentation.
So it was funny. Somehow managed to convince some of them.
What was that sort of initial period of convincing investors?
Finance 101. Go and take debt. The biggest mistake I made in my life. Debt is not for the initial stage of a startup.
You need some domain expertise as well.
I don't have an MBA. I don't have any furniture background. I come from a South Indian family which is only into education. My mother still thinks this is the biggest mistake that I've made.
Still not managed to convince her?
No.
On the open fairways, under a vast sky, a new chapter in golf was written. The inaugural NDTV PGTI Golf Pro-Am Tournament, uniting business leaders and the best of Indian professional golf for a day of strategy, skill and pure sporting spirit. From booming drives to clutch putts, catch the action at these times.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, where this show we get you in the next 30 minutes all details about the company, why we are getting them, and also the management as well. Of course, we will be talking to this company which is Pearl Global. It's of course a textile player, but the question remains is why are we actually calling this company in our segment? Textile industry has been in focus, especially of the US tariffs, the exports which we will talk about. There is an overhang and the commentary has been coming from the industry players, and even the industry is trying to help this sector. So this is the most important talk. Is the overhang of US tariff agreement with India going to be over? And if that happens, will we see the depressed sentiments for the textile industry go up? The second question, of course, will be that what's the relevance on company's global business model? Is it surviving the stress which is coming in from the tariffs? And if yes, how it is doing it and how it is different from its peers? And that's my third question as well. What is the moat? Others are also bleeding. They are also bleeding, but lesser. Why? Is there a moat to it? Is there a kind of a support coming in the back end? Also, client concentration risk. They are having some revenue concentrations to the bigger clients. Is that a risk? Or actually it's a favor? Why? Because of the customer stickiness. Also lastly, the further expansion of capex plans which the company might be having going ahead once the clarity comes in for the US tariffs. Also, let's look at about the company, why it's important. We discuss the questions with you, but about the company. This was founded in 1987 by Deepak Kumar Shah. That's where the history starts. And the key focus areas being sustainability, quality and innovation. Apart from this, Gurugram is where their headquarters are. It's an NCR based company And let's look at the core business of Pearl Global, what it actually is. It's into apparel manufacturing and supply chain. Also, it's a partner for global fashion brands as well. That's where the high margins also kick in if you compare them with its peers. 25 units, 93 million pieces capacity. And there's a tech advantage also where they include new things. That's 3D design tools and QR tracking, but most of the industry players are also doing it. It's not very much new also. FY25 revenue, that is good numbers, 31% up. Look at the numbers. They are walking the talk when it comes to delivering the number 4506 odd crore rupees. But you must be wondering, what's the product breakup looking like? This is a roughly, you could say, 72% is from knits and 28% is coming from the woven fabric segment. Also, the other products, lesser contribution, design services with 75 global designers, and when you have services, that means your margins are on the heavier side. Activewear, sleepwear, denim and children's wear, upcoming areas where you see imports, the exports going very high, and OECO Tex certified. These are the sustainability numbers, not that important, but the revenue model, that's the most important. And there's a concern also, 99% of that is exports. And that's the major overhang which the industry wants to ask us, this company is that over, or if it is fighting it, how it is fighting it. Also, the overall numbers, if you look at the revenue, that's coming 73% rest of the world, 27% India. So that one question we'll be asking the management is, will you have an hedge when it comes to the exposure in the domestic markets? So enough about the company and why we actually want to get the company. But before we start the parameters, I'll just explain you what are the important parameters which are important when we judge a company in KYC. So we have 8 rating parameters. To start with, income statement, balance sheet, cash flow. This is the holy grail of financial statements. This is the first and the most important thing when you should judge a company in fundamental basis. Then comes return ratio. Have the stakeholders actually made money or not? Shareholding, street cred, that's also important. And valuation, comparing it with its historical averages and also nearest peers. And lastly, but the most important, the future looking statements, the outlook. That's where the stock market gives you your value. So these are the important rating parameters where we'll judge the company. So let's move on. First one is income statement. And net, we see there's a very strong growth coming in. Look at the numbers, FY24-25 and the 3-year CAGR. Top line 18 odd %, but the magic is happening in the EBITDA segment. That's 42% CAGR coming in. Margins, net are stable, and net profit, that's a significant jump coming in. But you must be wondering, these are the FY25 number. What's the most recent number? And that is the Q2 numbers. Q2 numbers did have some impact on the tariff impositions, but it was not that bad as what the street had feared. And that is why I like the company's performance in Q2 as well. Our revenue was 9% up, not much, but EBITDA and net profit. That is where the cost efficiency programs might have kicked in for the company. And during trying times, when a company achieves operational efficiency, that is where the margins start going up, going ahead. So that is something which I really liked, and that's why that reason we see a 120 basis points up move coming in, and margin trajectory is going towards that aspirational 9.5 to 10% mark. And for a player like this or an industry thing, this is industrial higher average margins coming in. So net, I will be giving a thumbs up to the income statement aspect for this company. Up next, balance sheet. Balance sheet, the numbers, they are stable. Not much changes happening, but you should be looking at the borrowing numbers. There's a significant spike coming in. Company is looking at expansions as well, but those expansion plans are, of course, subject to what happens globally, because you remember 73% revenue comes globally. So that's a very big moving factor when it comes to this export play in the textile space. Cash and bank balance, that has significantly gone up from 366 crore. This amount is at 566 crore rupees. So it's a wait and watch. It's not that shareholders might be getting rewarded for, non-expansion policies, but if the company expands, if the capacity comes back, if the global demand comes back, then the company will have a good cash reserve to deploy as well. So that is a very good strategy coming in from the company, but the debt levels are a concern to me a bit as well, and that happens. So there is a push and a pull, so I'll give a neutral rating for the balance sheet. Cash flow, that's also very much important. Net, we see there are divergent trends happening here as well. The cash flow to PAT, that has come down significantly, and that at times hurts the liquidity ratio of a company, and you can see that on the screen as well. Net cash flow, however, on the other side, that has gone up almost 174 odd crore rupees. It's just not the operating part, but there are other ways also where the cash flows go up from investing and financing, and that is why you're seeing a very high number. So divergent trends coming, so I'll still give it neutral because it hasn't passed that cash flow test, and of course this won't be able to do also company because of the current geopolitical scenarios. That's why company is doing their liquidity management works as well. A return ratio we'll focus on now after giving a neutral rating to cash flow. The return ratios, looking at these numbers, they're pretty healthy when it comes to the FY25. Generally, when you have a barometer of 15% plus ROC, ROE, that is where the magic happens. And let's just pick up both ROC and ROE. That has been a significant value creation for the long-term shareholders as well for Pearl Global. Avoid the short-term aberration. This has been a good multi-bagger as well. So from the return ratio perspective, for both capital employed and ROC, I will be giving a thumbs up to the company. 4 parameters are done. We are halfway through our ratings. Fifth one is the shareholding pattern. Shareholding pattern largely has been stable. Promoters have been stable at roughly 63 odd % coming in, but FIs, slight selling coming if you compare that with March numbers to the September numbers, and the DIs, they have lapped up. So any sale which has happened in the market, DI lapping has been very strong, be it from the public counter or even the FI counter. Look at that number from 11.6%. A value buy increase is coming in at almost 14% stake by September quarter. For shareholding pattern, I will be giving this a neutral rating. Up next is street cred. Street cred is nothing but way the stock has moved from the long-term perspective and short-term perspective. 1 month it's up 27 odd %. Maybe the market is digesting in that the India and US trade agreement is near the counter, and the 6-month share price and year to date has been decent. 1 year it's 40%. So the medium-term shareholders have actually benefited from this company, and this is despite the volatility coming in the global markets. 5-year share performance has been a big multi-bagger for the investors, 1910%. This looks like a birth date if you look at that 5-year share performance, but it's very interesting. But net, this has kept all sets of shareholders happy. So I'll give this company a neutral rating for this as well. But let's move on to valuations. Is it very expensive yet, or a minor correction has made it attractive? That's the question you will be wondering. And also they have a peer that's called Gokuldas Exports. Just look at the valuations. It looks like it's on the cheaper side. FY27 is just 22 times the price to earnings. Industry ratio is roughly around, you could say 30, 28 to 35. And currently Gokuldas Exports, look at that, that's their peer. That is almost double when it comes to the valuation. So it's certainly looking cheap when it comes to the valuations front. So I will be giving this company in this rating a thumbs up. So we have done 7 KYC ratings, and our last rating, but it's very much important and it's very forward looking. That's why I say outlook is the most important thing going ahead. Over here we see there is a diversification happening in manufacturing and sales, so that slowly company is trying to reduce their US dependency going ahead. And value add mix, that we need to understand the company also, that which are these products which will give you higher margins going ahead. Also the question is Australia, Japan, UK, EU and Spain. These are the categories which generally becomes a hedge against the US markets. So that will be something which we'll be watching out for as well. And H2 growth numbers, generally they are always on an upward trend. That means there's a lumpiness there for these textile export players, and generally it is on the positive side. And lastly, FY26 margins slightly better despite India tariffs. That means company is doing something. Despite so much negativity around their export play, they are able to maintain their margins. That means there must be some kind of an internal process set up or some cost efficiency moves happening, and that's why the margins are actually going up. And maybe it can touch that 9.5 to 10% marks, and that's one of the key questions we'll be asking to the management. But before we go to the management, I have the compiled the entire KYC ratings for you so that it becomes very easy for you to understand how we have gone through the show. Let's pull up the KYC ratings chart for you. Income statement has been good. Q2 numbers on the good side, despite what we saw, the tailwinds coming in from the US-India trade tariff issues. Balance sheet cash flows, nothing much to share right now because the company is holding up the cash flows for deployment. And lastly, we can say the shareholding street cred has been neutral. Valuation still attractive because of the cheapness compared to Gokuldas Exports. And lastly, outlook also, we say you could say it's a kind of a positive to neutral impact coming in. But net, despite the company being in a tailwind sector right now, it's expected that this will go up going ahead, and I've given this company 5.5 out of it. That's on the higher side of the ranges and the averages we generally give in our show in Know Your Company. But now we know a little bit about the company, whatever we could get. Let's get a little bit more about the company, and for that joining us is Pallab Banerjee. He's the MD at Pearl Global. A very good afternoon to you, Pallab. We can see the entire industry itself is waiting, not just from the government, that they'll be getting some kind of incentives because of US-India trade issues. But the burning question is, how do you first survive? Because you have a history of thriving. So how will you be surviving this sector, issues which are coming in, and later on what happens next? Good afternoon, Pallab.
Yeah, good afternoon, good morning. In fact, so I think, yes, US tariff is a concern at this point of time for the India market. But overall, as a company, we have about 27% exposure in India, as you just mentioned in your charts. So the rest of the markets that we are manufacturing and exporting from, there we're not seeing any disadvantage. In fact, we are seeing some advantages.
To make this into more, kind of a more information for viewers, because most of the viewers who have messaged me, they have stated that, Sharad, the entire discussion is overhang coming in the tariff issues. So company must have made some safeguards during this time. You are trying to reduce your dependency in US as well. Can you give us, in a brief setup, that how have you been doing that? I'm sure last 4 to 6 months there has been a change in strategy. So what is that?
So you see, this journey is not started in 4 months back, but it's been continuing for some time. In 2021-22, we found that our US exposure is very high, almost about 86% plus. And that's the time we started developing the other markets as well. And today, when we look at the data, it's our US exposure is less than 50% as a group. And that doesn't mean that US has shrunk. In fact, our business in US has grown from $180 million in 2021 to almost about $300 million, as the running rate for this year. Whereas the other markets have also come in, which used to be about $15 million. Now it has gone up to almost close to about $300 million. So that's the kind of change that we have been undergoing since 2021-22. And yes, this particular year is a completely roller coaster because, first of all, US implemented this whole tariff across all the countries of the globe. So that means the US customers, the brands and the retailers, they have to shell out more tariff as the goods goes into US. So that has got some kind of repercussion in the US market. And especially after August, when we got to know that India has got almost about 50% tariff, additional tariff from what used to happen during the MFN duties that we used to pay. So that's resulting in some kind of, change in strategy. India, if all of us are hopeful that this tariff situation will resolve very quickly, and if it doesn't resolve, then we have to have a backup plan. So this is something that we are undergoing at this point of time. In India also, the exposure to the US market was close to about 60% till last year. This year, we are seeing a significant drop in that. And the other markets like Japan, Australia, Canada, European Union, UK. So all these markets are taking a major share in India as well.
And Pallab, the word which you have used is the backup plan, and everybody needs to have that in life, be it stock markets, but your industry has been taking the brunt a lot. Could you just give us some strategic views, not number necessarily, but what's the backup plan looking like? The dependency angle is also there, but is there anything else to it as well?
So first of all, if you see the industry, we are in garment industry. So we manufacture garments and fashion. for all the major retailers across the globe. Yes, US has been a large market. They import almost about $80 billion plus of garments from across the globe. But there are other markets like European Union does about 90 plus billion dollars. And then of course Japan, UK, Australia, Canada, these are also good markets. And Asia region, like for example China, India, they are also growing significantly. As human beings, all of us wear clothes. And whatever is the scenario, like this is a consumption that doesn't go down. In fact, if you look at it, even US market is growing at the rate of almost about 4 to 5% annually. I'm talking about the apparel or the garment sector. Now, keeping this in mind, how you built up the business. And mind you, one more thing, this India has not been playing a very major role in the garment or the apparel sector. If you talk about globally, the largest players have been China, which exports almost about $180 billion of garments few years back. It has come down a little bit because of all the geopolitics that is going on at this point of time. Followed by, and the top gainers from China reduction has happened in Bangladesh and Vietnam. Those are the two countries have significantly grown in the last 5 to 7 years. Followed by Indonesia, Germany, some European countries which makes a lot of manufacturing, and India comes in the rank of almost about 7 in terms of garment exports number if you're looking at. So if you talk of Pearl Global now, Pearl Global also we have a global strategy. We are present in some of these major garment manufacturing and exporting markets. We have a big setup in Bangladesh. We have a reasonably big setup in Vietnam, Indonesia.
Yes, Pallab, one more question is there on this margin front. Value-added product is something which the company is adding in their product line as well. Yes. What are these products, and on a blended basis, what we can expect for the margins? It's currently at 9% on the higher side, and it's still maintaining despite the issues in the trade tariff segment. So what are you doing, first of all, that these margins are going up? Is it some internal efficiency measure, or is it the value-added product?
Absolutely. See, as China continues to lose the market share, and the countries which are also gaining are like, Indonesia, Vietnam. Those are the places where the high-value product we have been focusing upon. And, one more fact that I must tell you is that if you talk of the global consumption, there's a huge amount of almost 70%, 75% plus comes from the man-made fibers, where India has been lacking, but these other countries like China had the biggest share, and now also Vietnam and Indonesia are gaining. So that's where we are seeing a huge advantage that is Pearl is getting, as we're getting those high-value items in the synthetics, like the high-altitude outerwear jackets, or the fashion jackets in terms of down jackets or polyfill jackets. So those are things, a big number that we produce, and for better quality of brands. Like if you have the market pyramid, the top end like Polo Ralph Lauren, Tommy Hilfiger's, and of course there are Walmarts and the Targets of the world. So if you go up the ladder, and if you are servicing those customers who are paying higher value, that's something like we do quite a lot out of our Indonesia, Vietnam kind of facilities. So that's where you're seeing this change, that our value is definitely the margins. Our goal has been to be in the range of 10 to 12%. We are almost there. We are just crossing that 9 to 10% mark at this point of time. If you take out the effect of the tariff that we paid in the Q2, some kind of discounts and some sharing that we had to do with the US clients, and a couple of our new projects which are just taking off. So there have been some, initial losses that comes in. So if you take out those, then we are almost touching 10 or going beyond 10.
And Pallab, yes. 12. And Pallab, there's an important thing. We spoke with some of the industry peers of yours also, and they stated that your company's business model is a bit different, and there's some kind of a moat to it. Now, it's very technical at times, so if you could just give us a kind of a simplified version for our viewers, what's your exactly moat, when it compares your Indian peers here?
So compared to the Indian players, we are, as I say, like 5 different countries of manufacturing. We have almost 7 different categories of product, including right from synthetics, the outerwear jackets, activewear, athleisure, sleepwear, then of course the denim wear. So children's wear. So like those are the kind of, various categories of products that we do to the customer. And we have a huge design offices across US, UK, Spain, where we are almost negotiating and designing together with the clients. And also the diversified market, I would say, is another strength of Pearl Global. Almost, as I told you, 50% of the business, or just below 50% of the business, is coming from US market. The Spain and Japan has gone up to almost 34-35%. So like that, this diversification is also very important, followed by the UK, Australia, Canada, this kind of markets as well. We have not been in the domestic market so much, but this is one of the instances that happen in which we are now exposing ourselves to the domestic market in India as well. So that number also will go up in future.
So right now it's around 25 to 27%. So I can expect 35 to 40% in next 12 to 18 months, Pallab?
So of the total turnover of or the sales of Pearl Global, around 25-27% is coming from India. And there also we had zero exposure in the domestic market earlier. So that is one thing that is, I think this is one of the tipping point when US pressure came in. So that has started also happening. We are supplying to the domestic brands as I speak. And overall, the growth that you will see for Pearl Global will be across all these regions. So
yes.
Countries like Vietnam.
Yes, sir, we are a little bit of short on time. Just need your fast answer to it. There's a concern regarding the concentration risk in the revenue terms for your large clients. How will you address that?
So I think we are in a very good position out there. If you see today, our top 5 or top 6